News when you want it with Bloomberg News Now. I'm Doug Krisner. We begin with tariffs and what appears to be a new U.S.-China trade war. President Trump's threat of a 10% blanket U.S. tariff on Chinese goods is now in effect as a deadline has passed. The president linked this move to China's failure to stop the flow of fentanyl into the U.S., and Beijing was given an ultimatum to take action. Well, now China has responded with a levy tax on some products imported from the U.S. This would include a 10% tariff on coals and LNG. China is also imposing a 10% tariff on oil and agricultural machinery from the U.S. And on top of that, China will probe Google over alleged antitrust law breaches. In the States, earlier on Monday, the U.S. delayed applying tariffs on imported goods from Mexico.
Afternoon traders, आज है 4th of February 2025. Welcome once again to this live analysis. स्टार्ट करते हैं आज का सेशन. फिलहाल देखोगे नेचुरल गैस को कल के लेवल पर ही ओपन हुआ था. न्यूट्रल ओपनिंग थी, फ्लैट ओपनिंग इसको हम कह सकते हैं. कल एक सेलिंग का ट्रेड बना था, वहां पर एक एफईजी था. प्राइस थोड़ा बहुत रुका था इस एफईजी पे. कल याद होगा क्लोजिंग होते होते एक सेलिंग का ट्रेड अच्छा मिला था. वहीं से मार्केट ने वो एफईजी ब्रेक कर दिया. देखते हैं थोड़ा और नीचे आता है तो. बाकी क्रूड ऑयल थोड़ा सा फ्लैट ये भी ओपन था. थोड़ा बहुत सेलिंग आई इसमें भी. अगर हल्का सा एक पुल बैक आता है, ठीक है, तो यहाँ से एक सेलिंग का प्लान रहेगा. एंड नीचे देखो एक सपोर्ट है 6446 444 के अराउंड. बट ये लेवल ऑलरेडी 4 बार टेस्ट हो चुका है इसी लेवल पे, ठीक है. 1 टाइम, 2 टाइम, 3 टाइम और एक बार पीछे भी हुआ है 4. तो ये 4 बार ऑलरेडी टेस्ट हो चुका है. जैसे 5th टाइम ये इस लेवल पे आएगा तो थोड़ा क्या काफ़ी वीक होना चाहिए इस लेवल को. बट ये है अभी भी. इसके नीचे एक ठीक ठाक सपोर्ट आपको 6157 के अराउंड देखने के लिए मिल जाएगा. वहां पर फिर एक बाइंग का प्लान वहां पर रखेंगे. नीचे डाउन साइड पे ऊपर एक एफईजी बन चुका है और फिर एक कल का जो हाई लेवल वाला रेजिस्टेंस था 6550 वाला, वो अभी भी इंटैक्ट है. डेटा की बात करें, मुंबई सेशन अभी फिलहाल ऑलरेडी ऑन है. 9 AM पे ऑन हो जाता है. हमने कल बात करी थी नया सेशन ऐड करेंगे मुंबई सेशन. लंदन सेशन 1:30 पे अभी ओपन हो जाएगा. न्यूयॉर्क सेशन 6:30, यूएस मार्केट 8 PM. जॉब ओपनिंग का डेटा 8:30 पे गोल्ड और सिल्वर के लिए मोस्ट इंपॉर्टेंट रहने वाला है. की बात करें और न्यूज़ की, तो कल जो टैरिफ लगाए थे परसों एक्चुअली ट्रम्प ने कनाडा पे और मेक्सिको पे, कल न्यूज़ आ चुकी थी. रात को ही हमने बात करी थी कि जो टैरिफ हैं मेक्सिको पर वो 1 मंथ के लिए डिले हो चुके हैं. और उसके बाद फिर से न्यूज़ आई कि कनाडा पर भी जो 25% टैरिफ लगने वाले थे वो 1 मंथ के लिए डिले करें. हटाए नहीं है, डिले कर दिए. 1 महीने तक अभी नहीं लगेंगे अगर वो कुछ एक्शन लेते हैं तो. बाकी चाइना पे 10% जो टैरिफ थे वो ट्यूसडे मतलब कल से लागू हो चुके हैं. इसके रिटेलिएशन में चाइना ने भी कुछ लगभग 10% टैरिफ लगा दिया है यूएस से आने वाले कुछ प्रोडक्ट्स पे. एंड इसके अलावा शायद उन्होंने 2-3 चीज़ें और करी हैं. जो गूगल है उस पे कुछ प्रोब स्टार्ट कर दी है. इसके अलावा कैल्विन कैलिन जो ब्रांड है उसको उन्होंने अनरिलायबल एंटिटी लिस्ट में डाल दिया है. तो थोड़ा बहुत वहां से हमें देखने के लिए मिल रहा है. इसके अलावा अगर देखोगे इंडियन रुपीस तो प्लंज करता ही जा रहा है. यूएस के जो प्रेसिडेंट हैं उन्होंने इंडिया के प्राइम मिनिस्टर को वॉशिंगटन में इनवाइट किया है व्हाइट हाउस में. देखना पड़ेगा कब उनकी मीटिंग होती है. तो ये फिलहाल के लिए न्यूज़ इन डेवलपमेंट है. कुछ और न्यूज़ निकल के आती है तो वी विल सी दैट.
And Canada for 1 month. Now, that shift occurred after new commitments came on border security from both countries. Here is former U.S. Trade Rep Carla Hills.
What he needs to do is to sit down and figure out what are his complaints with, for example, Canada, He's already agreed with President Sheinbaum of Mexico to have a pause for 30 days and to work something out. But what is his plan? I think it's very confusing for our trade partners not to know what it is that he wants and then talk about how they could accommodate that.
That is Carla Hills, former U.S. trade rep. We go to U.S. deportation policy next. Secretary of State Marco Rubio saying that El Salvador has offered to accept criminal deportees from the U.S. who come from anywhere in the world, and that would include American citizens now imprisoned in the U.S. Here is Rubio.
He has agreed to accept for deportation any illegal alien in the United States who is a criminal from any nationality, be they MS-13 or Tren de Aragua, and house them in his jails.
That's Secretary of State Marco Rubio speaking there. Now, a U.S. official said the Trump administration has no current plans to try to deport American citizens, although the offer from El Salvador was significant. Now, this will likely be met with legal challenges since the U.S. cannot deport American citizens. Israeli Prime Minister Benjamin Netanyahu is set to meet President Trump today. CBS News reporting that Trump will do a press conference with Netanyahu. Bloomberg's Amy Morris has a preview from Washington.
Israeli Prime Minister Benjamin Netanyahu says being the first world leader to visit the White House and meet with the president since his inauguration sends a strong signal.
I think it's a testimony to the strength of the Israeli-American alliance.
The meeting comes as U.S. and Arab mediators begin brokering the next phase of a ceasefire agreement. Netanyahu plans to discuss with President Trump critical issues facing Israel and the region, including victory over Hamas, achieving the release of the remaining hostages in Gaza, and dealing with the Iranian axis. Amy Morris, Bloomberg Radio.
We go to business news next. After the bell, Palantir Technology released a revenue forecast for the full year that was above estimates. More from Bloomberg's Charlie Pellet.
CEO Alex Karp cites what he calls untamed organic growth in demand for its artificial intelligence software. Derek Yan is senior investment strategist at Crane Funds.
We see Palantir has the potential to become the go-to operating system for enterprises in the AGI world.
A reference to artificial general intelligence. Best known for its national security work and more recently its AI platform, Palantir's stock surged 340% last year. In New York, Charlie Pellet, Bloomberg Radio.
And shares in Palantir up more than 23% in late U.S. trading. Alphabet will report quarterly earnings after the closing bell. Bloomberg's Tom Busby has more on the latest Mag 7 tech company to report.
Google's parent company expected to deliver another quarter of solid growth for ad sales and profits, but investors will be closely watching its cloud computing unit and any update on its Gemini 2.0 AI initiative, especially after China's DeepSeek rattled the tech industry last week. And although Google remains under a lot of regulatory and antitrust pressure, Bloomberg consensus calls for revenue of $96.62 billion, earnings per share of $2.13. Tom Busby, Bloomberg Radio.
And that is news when you want it with Bloomberg News Now. I'm Doug Krisner, and this is Bloomberg.
Congratulations, Mr. President.
Well, he's back. And guess what he's talking about?
We will tariff and tax foreign countries to enrich our citizens.
This is a surprise to no one because it's one of his favorite subjects.
I do like tariffs. Tariffs, tremendous tariffs that are massive. To me, the most beautiful word in the dictionary is tariff.
Trump has ordered federal agencies to investigate the impact of tariff policies, or in his words, recommend appropriate measures, like global tariffs, to fix these deficits. The topic was low on boardroom agendas under former President Biden, but since Trump's election in November, talk of tariffs has spiked.
The new president has promised to put tariffs on goods coming to the U.S. from all around the world, not just from trading rivals such as China.
He's seeing tariffs as a leverage point to get other people to do what he wants.
In his first week back, Trump threatened to enact 10% tariffs on China, 25% tariffs on Mexico and Canada, and to use them as a tool to try to stop the Russia-Ukraine war.
Trade policy under President Trump has the potential to send shockwaves through the global economy.
Even if Trump's threats don't materialize, The mere thought of a trade war is already upending international relations and forcing companies to prepare for the worst.
I feel like a pawn in a big game of chess.
Let's start with what we know. Tariffs are government-imposed taxes on imported goods and services which increase the cost of imports. And that's the whole point, to make them less competitive compared to domestic products in a bid to help or protect local industries. Their use in the United States declined dramatically after World War II.
More and more, the cargo ships of the great trading nations are making New Orleans a regular port of call.
And in the globalized 90s, they became a dirty word.
No country can escape the global economy, and the greatest, largest, most powerful country in the world cannot escape the global economy.
Broadly speaking, everyone agreed that the freer flowing of goods and services lended to prosperity for all. But that kind of economic thinking has been turned on its head when it became clear that there are not just winners, but there are also losers from globalization. President Trump wants tariffs to raise revenue for the government. He wants tariffs to bring manufacturing back to the US. And of course, he wants tariffs to level the books with key trading rivals around the world.
While Trump frames his tariffs as a way of raising trillions of dollars to pay for tax cuts, it's worth taking a look at the numbers. The blue line is what the government is estimated to collect from existing tariffs over the next 4 years. Only a drop in the bucket compared to the black line, which shows revenue from income tax. Of course, we shouldn't forget that we have been here before.
President Trump's first term, when he implemented tariffs, it sent shockwaves around the world because it was breaking with convention.
Front page of every newspaper in the country right now, a dive on the Dow because of this trade war.
In Trump's first trade war, the scope of the tariffs was targeted toward capital goods and intermediate goods from China, and it was not a very large increase in tariff rates. So overall, it took average tariff rates from 1.5% to about 4.5% on overall U.S. imports. During that second half of 2019, the trade policy uncertainty was clearly having an impact on dampening business investment. So it de-escalated in late 2019 when the U.S. and China signed the Phase 1 agreement.
In the Phase 1 deal, China promised to buy at least $200 billion more in U.S. goods and services. But that didn't happen. Now, Trump wants to change that and cut a new deal with the Chinese government.
Until I came along, China never paid 10 cents to this country. They ripped us off and they never paid anything.
Even before Trump's Inauguration Day memo calling for a fresh look at U.S.-China trade relations, companies in China have been bracing themselves for a second trade war by chasing new markets and offshoring production to neighboring countries. The memo also singled out Canada and Mexico, using tariffs as leverage to achieve domestic policy goals.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people to come in, and fentanyl.
Whatever the motivation, it's American companies that could suffer the most.
U.S. auto industry has a very long supply chain that is very complicated, that takes many parts from many countries. A lot of this supply chain and auto parts came from Canada and Mexico. So imposing tariffs on Canada and Mexico basically effectively would be imposing tariffs on GM and Ford's production.
If he goes ahead with the kind of threats that he's talking about, then you would see question marks over how will that impact inflation, how will that impact where business puts their investment, how will it impact the flow of goods around the world.
Many U.S. businesses are trying to wargame what's coming next.
During the first Trump presidency, when tariffs were enacted, it was the biggest strain our company has ever seen. 100% of our products are manufactured in China. It took us 24 to 36 months to adjust the supply chain. I would estimate the spend to be around $30 million. If new tariffs are enacted, the costs are going up. And if our cost of goods sold goes up, unfortunately, the cost for everybody goes up. This is not a tax on other countries. This is a tax on you.
And that's really only the first layer of the onion, as you can't have a trade war without retaliation. something that on the surface the U.S. might have an upper hand in.
China has more to lose than the U.S. because U.S. imports about 450 billion of goods from China, but China only imports 150 billion of goods from U.S. So even if China wants to retaliate against the U.S. tariffs, there's only 150 billion of U.S. goods to retaliate.
But China's intrinsic role in global supply chains could offer fresh methods of retaliation.
China dominates the production of some important metals such as germanium, gallium, and these are metals that are very critical to build semiconductors. So if China were to impose export controls on these crucial minerals, that will have knock-on effects in U.S. ability to build up the AI industry or build up semiconductor plants.
I'll bet it all.
And as with any fight, things can get personal.
So in the first Trump administration, EU, in retaliation to the U.S. steel and aluminum tariff, imposed 25% tariffs on U.S. bourbon from Kentucky, with the explicit goal of making Mitch McConnell, the Kentucky senator, unpopular. And similarly, China decides on what to retaliate in order to hit at the red states, the agriculture centers in the U.S. And so the industry that could suffer from a retaliation from our trade partners could range from agriculture, winemakers, and automakers.
But like all policy, the devil is in the details, something the international business community anxiously awaits. The how and the when and for how long all remain unknown, and that uncertainty takes its toll on the economy.
The challenge becomes, are you protecting against the risk of tariff? Or are you protecting against the risk that expected tariffs are not going to be put on?
It's been found that when uncertainty on trade policy increased, what you have in a couple quarters down the line tends to be economic slowdown.
When Trump was last in office, news coverage of trade policy uncertainty was high. It dropped under Biden and stayed low, but now that Trump's back, so is the uncertainty.
I can't tell you if our cost is going to go up by 0%, 10%, or 25%. I have no idea what's coming. And when you're having vague conversations with your big customers, they don't like it.
Ultimately, how this trade war impacts both the US and global economy will depend on the specifics. We'll have a long way to go before we can truly count the costs and the benefit of it.
Amount that you're committed. Right. We should move on, guys, shouldn't we?
Let's go back to UBS. I think it's probably worth doing that.
Absolutely. Let's do that. Bloomberg's Francine Lacroix has been speaking to the UBS CEO, Sergio Ermotti, and started by asking how he feels about the 2024 results.
I'm very happy. 2024 was a successful year for us, and we delivered on all our key priorities, not only in terms of the integration, where we saw major mergers of operating legal entities being successfully executed. We started migrating de facto 90% of the clients booked outside Switzerland successfully, and we also de-risked our balance sheet, and now we are also making very good progress in our asset gathering businesses, in wealth management and asset management. We are gaining market shares in the investment bank in all areas where we want to compete. And we continue to be a reliable partner for the Swiss economy, to households and businesses by granting 70 billion of new loans, which makes our outstanding balances at 350 billion. And we are investing for the future. So it's very important for us to think about next. And so we are investing in AI, in new capabilities, new products to stay competitive.
Sergio, when you look at the integration, I mean, it's full speed ahead. You're about 6 months ahead. Is there one month that seems more critical than the others?
No, look, the most critical part of the integration has been always going to be the migration, the data migration. We are migrating in total 110 petabytes of data. 15 have been migrated outside Switzerland. The big chunk of migration is going to start in a few months in Switzerland, where we migrate the balance, around 95 petabytes in 3 tranches, basically in spring, late year, and the beginning of 2026. And this is definitely a journey that requires a lot of planning and a lot of good work, and the team is on top of it, but we cannot be complacent. So it's a very big task.
If you look at the regions, how are you satisfied with the progress in Asia?
Very good. I mean, in Asia, if you think about the fact that we have been growing very fast, but most importantly, we have been doing that while going through the migration, and so all our colleagues front to back have been somehow distracted by that, but at the same time they were able to stay close to clients, grow assets, grow our business, and be a reliable partners. So in that sense, I'm also pleased to the progress we make in the US, both in the investment bank and also in wealth management, where we are now executing on our plans to restore a good level of profitability, and in the investment bank we are gaining market share.
There's a lot of optimism of banking in the US. How will you take advantage of that?
Look, I think that we are in the U.S. is a very important market across the board for us. Is the largest wealth management market in the world. We are an important player there. We want to enhance our capabilities. We want to enhance our profitability. And in terms of the investment bank, we see a good momentum in the pipeline building up. Having said that, if you look at year-to-date volumes and activities in capital markets is down 26% year-on-year. So while it's a very promising pipeline, the truth of the matter is that the year has started in a rather slow way compared to last year.
The UBS Group CEO Sergio Amotti speaking to our colleague Francine Lacroix, of course, and much more, of course, in that conversation available on the Bloomberg terminal and on the website, Guy.
We'll get back to Francine very, very shortly. We've got some other great guests coming up on the show as well. Let's talk about who they are. Anthony Gardner, President Obama's ambassador to the EU, will be giving us his views on what is happening with the tariff story. Anne Doe, Julius Baer, portfolio manager, talking about how you should position around this. How do you deal with this volatility? How should you think about it? Aditya Babe, Bank of America's global research senior US economist. So much to talk about there. How is he factoring in the latest decisions by the Trump administration into his models? Malte Heiner, Hamburg Chamber of Commerce CEO, is going to be joining Ollie Crook a little bit later on. We'll be talking trade. We'll be talking the German elections in that conversation.
OK, lest we forget about the data, we will have some data later on today. 3 p.m. UK time, US factory orders. We'll get durable goods from the States as well. Bit of geopolitics in the mix. Netanyahu visits Trump in D.C., so that could be a relationship to watch, of course. Earnings in focus then, Guy. We have Alphabet coming up, Spotify, AMD, PepsiCo also, but Alphabet really of interest. We've already seen Google being hit by a tariff from, by an investigation by the Chinese, seemingly in retaliation for what we've heard on tariffs. I mean, symbolism, plenty of symbolism in this, because Google doesn't have much of a business in China. But still, that's going to be something that we'll be watching, and cloud, whether they maintain momentum, and AI.
What's been really interesting in the sell-off that we've seen around tariffs is that you would have thought that tech would be relatively immune from what we see. Maybe the hardware companies get a little bit of an impact, but nevertheless, you would have thought services would be largely immune from this. But tech has sold off really quite aggressively. And does that tell us a lot about kind of market positioning and about how people feel about the extension of the move that we've seen around these stocks over the last few weeks?
Or is it the point that you made earlier, which is that there's still the DeepSeek theme, and we're still trying to get our heads around that and wrestle with what that means in terms of the amount of capital expenditure businesses at all parts of the supply chain need to dedicate themselves to deliver this. And Palantir was interesting, thinking about AI and what it delivers. I mean, this is incredible language, isn't it? Untamed organic growth. They supply to the government, of course, but a lot of this is around AI and just the ability to use that word untamed in reference to organic growth.
But they are users, not producers of the products, and that's really interesting as well. And the DeepSeek story is about reducing costs and making this more available at a lower cost to more businesses and people. And in some ways, Palantir is going to be at the kind of the leading edge of that. And certainly the numbers suggest that. Nvidia's not had a great start to this year. To your point about actually kind of this could be something of a longer term effect. What else do we need to know this morning? Let's run through the details. With less than 20 days until the German election, the Conservative frontrunner Friedrich Merz is refocusing his campaign proposals on reviving the economy after a clash over tougher immigration rules. Last week, Merz provoked outrage by accepting votes from the far-right's AfD, Alternative for Deutschland party, for a draft law on tightening immigration rules, which, in the end, didn't pass. Merz is now ruling out cooperation with the AfD and stressing his party's commitment to supporting Europe's largest economy. The UK Treasury has told government departments to prepare for their budgets to be frozen in cash terms ahead of a major spending review planned in June. The ruling Labour Party has previously pledged to avoid a return to austerity, but the public finances are under pressure from high borrowing costs and the stagnant economic growth story. Unprotected areas like justice, culture, trade and local governments are at risk of being squeezed. And the French government is facing a no-confidence vote after the Prime Minister bypassed the lower house of Parliament to force the adoption of his budget for this year. The far left has said it will file a no-confidence motion and a vote is expected Wednesday, tomorrow. But Francois Bayrou's government could survive if the socialist MPs follow guidance not to support it.
Coming up on the programme, Trump's tariff threats risk driving a wedge between the EU and the UK, just as Prime Minister Keir Starmer looks to reset relations across the Channel. We'll be live in Brussels with those details. Plus, we'll bring you some of our interview with the Infineon CFO, Sven Schneider. That's coming up later in the programme. There was an upgrade to guidance, a lot of that driven by FX and a weak euro, so that could have an impact on trading at the start of our trading day. Up next, we'll bring you a conversation with Lars Machenil, the CFO of BNP Paribas, after the French bank reported a better than expected net income. If you want to get involved in any of these conversations, IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything. Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Seventeen minutes past the hour. Welcome back. You're watching the opening trade. Let's talk more about the bank earnings that we've seen drop onto the Bloomberg terminal this morning. We've talked about UBS. We've heard from Sergio Amossi. Let's now hear from BNP Paribas. The bank has this morning delivered some strong numbers. Fixed income trading beats significantly. Equity trading beats significantly. We've got a new share buyback. We've got a higher than expected dividend. Lars Machenil, the CFO of BNP Paribas, joins us now. Lars, the numbers look good. Certainly the market, I think, will be happy to hear about the returns that we are going to be getting. Is this kind of performance sustainable? Trading is really strong at the moment. It's driving your numbers. But with volatility must come volatility.
Yeah, well, if you look at it, you know, our CIB at this stage is firing on all cylinders. You've seen it basically up 20%. And if you look at global markets, both debt and equities are doing very solidly and up 30%. So there is this volatility, and we aim to serve it. Now, let's not forget, we are diversified, yeah? So maybe at some day there is more demand in one product, or there can be others in another one. So we feel comfortable, and the Q4 shows that we are right on track. We've shown that the bottom line has grown by 15%. We've stepped up our dividend. We even introduced an interim dividend to be paid in September of this year. So from that point of view, we feel that everything is on track and our platforms are delivering.
You're firing on all cylinders. The CIB is firing on all cylinders. How do you improve on firing on all cylinders?
Yeah, so by firing on all cylinders and basically having all products available, we increase our market share. And by increasing our market share by all of the products we have, that basically means we step up market share while retaining margins high. So we are in very high value-added services. We take market share, and that is what we continue to do.
Lars, good morning. I wonder how you feel about the year ahead, the lack of visibility we might have, given tensions around trade, global trade tensions, very clear to see this morning, and yet some optimism about what the US economy can deliver. How does that leave you positioned?
Yeah, listen, if you overall look at it, we at BNP Paribas, we support and are able to grow faster than the intrinsic economy. So if you look at the US and even if you look at Europe, there are different roads ahead. So there is some volatility that we've seen in the US, but there's also plans of growth and stimulating growth in Europe. If we look at what the new European Commission is thinking about their compass, yeah, the project that basically goes around three axes: innovation, competition, and also security. And if you look at competition, if they really can bring down barriers intra-Eurozone, that could have an impact. It's an illustration, right? But imagine that they bring down some of the barriers within the Eurozone, and that trade within the Eurozone would go up 2.5%. 2.5%. That would be the equivalent of a lowering of the trade with the US by 20%. Just to show you the kind of levers that Europe has.
OK, so Europe can employ some self-help measures then, perhaps, in terms of its competitiveness. Thinking about that transatlantic relationship, we might see reduced regulation on the banking sector in the United States, Lars. What would you like to see in Europe?
I take it, and that's the discussions we're having, that there has to be a level playing field in some of the global activities. And so that is what we assume that Europe will go for. Yeah, there will always be difference between the two, but on the key elements that matter, there should be a level playing field. Let me give you the example of the everything that is market related, where there is a regulation called FRTB that Europe has postponed to observe what the US and the UK is doing. So from that point of view, I observe that Europe is wanting to have the right balance in the products and the services where it matters.
Lars, let's talk a little bit about M&A. and the structure of the business. Is the commercial and the retail operation a drag on BNP Paribas at the moment? You can see evidence of that within these numbers. So is it a drag, and what are you going to do about that? Is kind of a structural change a possibility? You have been, in some ways, at the forefront of it. Sorry, let me answer. Let you answer that question.
No, well, there's two things to that. If you look at the three divisions we're having, there's basically the CIB and the IPS that are, quote-unquote, firing on all cylinders. And the CPBS activities, they are at the pivotal point. So, indeed, at the beginning of the year, there have been some overhang by what we call the headwinds that have been installed by some nation states and the likes. But these headwinds are basically behind us, and that's the pivotal point you see in the fourth quarter. The fourth quarter, you see CPBS picking up strongly. And that basically means that the headwinds that are falling off will probably become now tailwinds, because the yield curve is probably going to steepen and the likes. So from that point of view, we are at that pivotal point. Having said that, that domain, the retail side, is changing. And so we can do more. On the enterprise side, on the wealth side, we can do better to deepen the wallet that we have with the client. And on the pure retail, we have to continue the digitalization and adapt it. So that's basically what we're doing.
OK, let's look at what else you could do with the business as well. We're obviously all watching what Andrea Orcel is doing and his moves that we're seeing around Europe. You guys have obviously done quite a lot of consolidation. I think you're going to conclude the AXA IM acquisition fairly shortly. Do you see yourself as a consolidator still? Is there more to be done in Europe to make the business and its structure different and better?
Yeah. Well, listen, there are, if you look at it, there are too many banks in Europe, yeah? There are more than 6,000 banks in Europe. That's way too many. So we would have to get to a consolidation. But regulation today totally supports in-country consolidation. And so all the things that you see floating around, that's basically what it is. It allows to capture synergies and to optimize within a country. Now, the countries where we are present, this already happened. We already consolidated in Belgium and in France. So for us, that part in banking is not really on our agenda. For us, it's on the agenda for adjacent activities, like what we've mentioned on AXA IM, so in insurance, or with the wealth management we onboarded in Germany from HSBC. So that's the kind of domains in which we see that consolidation is really going to work and where we can play an important role.
Lars, can I ask you about French politics and the extent to which you expect volatility there in 2025? We're waiting to find out what happens with this budget this week. Any message to the politicians who might be either tempted to pass it or tempted to bring down this government?
Yeah, I think it's like with the regulation we talked about. You have to find that tender balance between addressing the debt to GDP issue and not suffocating the economy. So that's the right balance they have to find. And so if they are on track to make something land that strikes that balance, that is what is needed.
OK, Lars, thank you very much. Thanks for your time. The BNP Paribas CFO, Lars Machenil. And maybe, Guy, we just linger on that point a moment, because we've gone from a point of high tension around France to a place where the market seems to be at least pausing in its level of anxiety and perhaps even reducing that anxiety a little bit. We've seen the spreads over Germany, of course, coming down. And all of this because the socialists say they will not support any no-confidence vote. And so that looks as if maybe Beirut gets to survive.
Beirut's talking about climbing a mountain, and it looks as if maybe he's at least able to establish a kind of base camp at this point. How much more mountaineering he ultimately has to do to continue this government remains to be seen. But this is a big milestone for him. If he can get past this milestone and deliver a budget, maybe no budget, maybe a budget is better than kind of a bad budget is better than no budget, that would be a big milestone for him. And does it just allow a little bit of stability to go forward in France and deal with the other issues like Trump and all the other kind of factors?
There's plenty that is sort of existential, or sort of external rather than the internal.
And potentially existential. We'll see.
Potentially existential. We might get more headlines around this though, because we still don't know what the National Rally's view on it is. I mean, with the socialist support, Beirut is probably safe, but we don't know what Marine Le Pen intends on this front.
No, it is going to be, the French government is going to be volatile until we get new elections potentially later on this year. We'll see whether that is actually a necessity, but that's where we appear to be heading.
We'll see if that comes about by the summer. So coming up on the programme, the trade war between the US and China ramps up. We'll dig into the story with the former American ambassador to the EU, Anthony Gardner. That's next. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
You can have a baby anywhere you want. It's the environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भला के चक्कर में मेरा ही बुरा हो जाएगा.
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
In case you missed it on Balance of Power.
Does Trump
great show, by the way.
Melania coin help to delegitimize serious crypto coins?
Look, meme coins, they have another handle for them, another four-letter word.
I can't say it on the air.
All these meme coins really undermine what is digital properties that can make a huge difference over the long term. But people buy it.
Yeah.
People are interested in it. And I wasn't into Beanie Babies, but perhaps this is digital Beanie Babies.
Don't miss Balance of Power, live every weekday.
Up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Welcome back, everybody. This is the opening trade. 30 minutes until we get that opening trade. So the futures picture looks like this for Europe. Given what has been thrown at these markets, this picture does not look as risk-off as it could have looked. So we've got Euro Stoxx 50 futures actually up a touch this morning. S&P futures pretty flat. NASDAQ futures pretty flat. So on the one hand, we've had the end of the tariff, for now, tariff conversation with Mexico and with Canada. But we do have tariffs on China, and we have Chinese retaliation in the shape of commodities and well-known US brands. So there's plenty to talk about on tariffs still, and further news flow, no doubt. But for the moment, that's what we see on European equity markets. And this is the picture on bonds. Yesterday, of course, we saw yields dropping. There was a lot of haven buying of bonds. And then we overlay on that the French political story. Despite all of that, we've seen the spread coming down. Despite the French politics, we saw the spread coming down of late, as we discussed in the last part of the programme. So this is the picture reversing a little bit of the story of yesterday in terms of the bond market here in Europe.
It's quite the roller coaster we are on right now. The Chinese story looks like it might be a little bit stickier when it comes to the tariff narrative. Beijing already hitting back at Donald Trump's 10% tariffs on Chinese goods with a raft of retaliatory measures on US products. The moves between Beijing and Washington threaten, of course, to reignite a trade war between the world's two largest economies. The US president says he's ready to engage, though, with his Chinese counterpart.
We'll be speaking to China probably over the next 24 hours. China's involved with the Panama Canal. They won't be for long. And that's the way it has to be. If we can't make a deal with China, then the tariffs will be very, very substantial.
What kind of a deal is he looking for? Let's try and figure this all out. Derek Warbank joins us now to discuss. Derek, kind of walk us through where we are. We started yesterday talking about Mexico and Canada. We've moved on to China. Is there a sense that the Chinese story is actually probably going to prove more intractable and difficult to negotiate a deal on, and therefore proves more sticky?
It's a great question. Let me start at the very beginning. When we were going through the campaign, Donald Trump campaigned on tariffs. He said tariffs were going to be a major part of his economic policy. He has talked repeatedly and at length about how tariffs were going to fund any number of things in his domestic agenda, right? So start that out there. Trump had planned on tariffs as a very big thing. He has threatened a fair number of them, right? You mentioned Canada, you mentioned Mexico, China, obviously, the European Union, Colombia. There are others. But right now, this is the first really big one that's actually gone through. He was meant to put on 25% tariffs against Canada and Mexico. Both of those got worked out with a 1-month pause in exchange for not very much. You would call it modest at best. Offsets from both Canada and Mexico, and both of those were sort of on the border side, not on the economic trade side. This one on China has gone through. It was allowed to take effect. Trump did not have it take effect with some fire and fury. He just let it happen. China was instantly ready. They responded with a number of things that are put under tariff. But if you sort of look through this list, it's not a lot of stuff that seems extremely escalatory right now, which is part of what may explain the market reaction that we've seen so far.
Yes, I mean, where do things stand then in terms of talks between the US and China? We heard President Trump there talking about how he wanted to have a conversation with the Chinese leader. Clearly, that didn't produce enough, quickly enough, to not impose tariffs. Tariffs now do seem to be imposed, but the next question will always be for how long? And I wonder where we are in terms of those talks.
Yeah, I think that's a really live question right now. We don't have any indication that those talks have firmly happened as yet, so we're waiting to see when they do happen. How long is that conversation? What comes out of it? Trump does like to give pretty detailed readouts. China will have its own readout as and when those conversations happen. But look, Trump has said that he wants to have tariffs on China. He's blamed China for a whole number of things, fentanyl imports being one of them. So there's a lot at play here, right? Not least of which, as I mentioned in the first question, that Trump has said that he wants tariffs to fund a fairly large part of his domestic agenda, and he has not put on anywhere near the amount of tariffs required to do that. Nor, I should mention, has he put on universal tariffs, which he said he's wanted to do at a level that's much bigger than 2.5%. So, or sectoral tariffs even. I mean, as I say, the list can go on. There are a lot of threats on the table. So that's kind of where we sit there. Interestingly enough, though, I think it bears mention, one country that he has not said is the subject of imminent tariffs is the United Kingdom. Remember, Trump was asked by reporters over the weekend what he thought of the United Kingdom, and he said that there were problems there, but he thought they might be able to be worked out. And he had very, very nice things to say about Sir Keir Starmer, which was a very interesting development, especially considering how Labour and the Trump wing of the Republican Party have not been the best of friends.
Yeah, Derek, thank you very much. Bloomberg's Derek Warbank with the latest on the global tariff themes. Let's get to some of those with Anthony Gardner, who served as the US ambassador to the EU from 2014 to 2017 under President Obama. He's currently a senior advisor at Brunswick Group. Anthony, very nice to have you with us. And I will return to the sort of European dimension on this in a moment, because clearly that's where a lot of your experience lies. But I just wonder, stepping back more broadly, are you able to articulate the aims signs of the Trump administration and its tariffs policy right now? Because on the one hand, they talk about wanting to reduce income tax and providing a different revenue stream. But on the other hand, they're using tariffs as a way of driving change from partners or adversaries or whoever. Do you have a sense of what the tariff policies are for?
Well, look, I'm not in favor of them. I think they're misguided and they're a risk of ripping up the world trading system. But it's clear what he thinks they are. He thinks that they serve as a unique tool for leverage to make countries, as you say, do what he wants them to do, not just in the commercial area, but in a non-commercial area as well. He thinks that there are no downsides. Importantly, also his teams appear to think that there are no downsides, including inflation, which you mentioned, or a weaker dollar. So he thinks, look, the U.S. is such a large market. We depend less on global trade, which is true, than most other countries.
Moving money isn't just transactional, it's personal. With 8.5 billion endpoints across more than 190 markets, Visa Direct helps to make all of it possible.
This is frankly nuts. Canada and Mexico are our two largest trading partners.
The signals he's sending suggest that he sees value using tariffs above and beyond even their negotiating leverage.
There are near-term inflation effects when you're implementing tariffs.
It could change on a dime, but I think once they're on, then it's harder to take them off.
We think that this could actually be highly disruptive to supply chains, potentially inflationary because of that disruption. This could weigh on growth and inflation in a more meaningful way.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Should we get your week started? Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now as we come into Monday confronting the beginning of a trade war. Equity futures on the S&P 500 negative. We're down across the board. The underperformance on the Russell, the small caps negative by more than 2%. One industry with a major cloud hanging over it, the automakers. Stellantis, Ford, GM trading lower. GM hammered last week, hammered this morning, down by 6.5%. The winner from the weekend's action, the US dollar. The best day for the US dollar since the day after the election. The dollar stronger across the board against the Mexican peso, the Canadian loonie. And Europe's going to get it too, apparently. Euro dollar down to 102.44 and negative by more than 1 full percentage point. At least on that currency pair, the low since 2022.
And parity basically is all but a certainty. That's what people are saying heading into the remaining couple of weeks and months ahead. Key question is, are markets right now fully pricing in the idea of these tariffs that were announced over the weekend sticking? And if not, are they really selling off or being disrupted enough to really act as that check on Donald Trump's policies, as so many people believe that they had a seat at the table. Do they?
So the reaction pieces across the week, and I'm sure you've all read them at home. The number one question, your question, how long does this last? Is there scope for negotiation? One thing we do know, after hearing from the president shortly before he got on board a helicopter just yesterday evening, was there's going to be some calls later on today between him and a Mexican leader and the Canadian leader too.
That's right. Trump said he's going to be having both these phone calls today, the Prime Minister, Justin Trudeau of Canada, and also the Mexican president. But then he said this: I don't expect anything very dramatic, Jonathan. We put tariffs on, they owe us a lot of money, and I'm sure they're going to pay. So he's saying he doesn't think there's going to be anything dramatic. That basically signals that these tariffs may come into effect, as he said, just after midnight tomorrow. But when it comes to Canada and Mexico, less so China, is there this scope potentially for negotiation? Goldman Sachs overnight said that while the outlook is unclear, they do think this for those two countries will be short-lived.
This to me is fascinating. Basically, everyone's saying this isn't going to be there for very long. Meanwhile, you talk about the U.S. hit. The U.S. is resilient enough to look past this and avoid recession. That's basically the base case. You take a look at some of the projections from Mexico and Canada. George Saravelos called this something that was a magnitude above Brexit for both what we could see for Canada and Mexico, and that it could really force them into recession in the next few weeks and months ahead.
For the markets, remember the pro-growth story, regulated by the stock market. Remember all of that? This came from Jordan Rochester of Mizuho. This is the first test of Trump is good for stocks, and we might not like the answer. Equity futures right now on the S&P negative by 1.4%. We begin with our top story. President Donald Trump slapping 25% tariffs on Canada and Mexico and 10% on China.
We may have short-term some little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that.
So the trade war begins. Canada planning a 25% levy against $106 billion of American goods. Mexico preparing a response. And China's Commerce Ministry vowing, quote, corresponding countermeasures. The tariff set to go into effect in fewer than 24 hours. Your team coverage starts right now. Bloomberg's Tyler Kendall in Washington. Divya Balji in Toronto. Clayton Harrison in Mexico City. Tyler, first of all to you, a big question for later on today. There will be a series of calls between the President of the United States and the two leaders of Mexico and Canada. What can they do to avoid these tariffs going into effect?
Right, John, the big question, what is the metric of success that President Trump is going to be looking for in order to lift these tariffs? Now, when it comes to reaction here in Washington to what's going on, of course, we've seen allies tell President Trump that they're supporting this because of it will help tackle his immigration agenda and also fentanyl coming over the border. But it's not that easy for all Republicans, particularly when you look at some Republicans that represent top agriculture producing states, such as Senator John Thune, the majority leader, who has said that he would only support tariffs if they were done in a targeted way. I was at Scott Bessent's confirmation hearing on Capitol Hill last week, where another Midwest Republican, Senator Todd Young of Indiana, asked Bessent how he's going to protect American farmers when it comes to tariffs. Bessent said that he was looking into some sort of catch-up provision that would help bring Beijing to the negotiating table when it comes to purchase agreements that they made under the Phase 1 trade deal, which has since lapsed. So big questions there remaining, particularly if these nations can come together when it comes to expanding or addressing these concerns by President Trump.
Divya, when it comes to Canada, we do know that Justin Trudeau announced and promised a retaliatory measure, but it's going to be in a more gradual response. Potentially, is the Canadian government looking for an off-ramp to negotiate right now?
Yeah, I mean, that's what it really sounds like. You know, $30 billion worth of goods right away will be taxed. And then they're going to do a 21-day consultation period to bring on the rest of the $70 billion or more of goods. You know, I think, them having a call today, the fact that there were a lot of Canadian officials visiting Trump and the White House last week, it does sound like they are trying to give some breathing room and some kind of space in order to be able to pull some of this back, or at least negotiate and figure out if anything can really be done. I think the question here really becomes, can something actually be done? Is Trump going to just, stay put and not budge? How much does Canada actually have to in a sense, give in to the White House and to Trump in order to be able to remove this, if even possible, right now?
Creighton, we're expecting to hear from Mexican President Claudia Sheinbaum later this morning about Plan B that Mexico has to really retaliate more specifically. What are we expecting to hear?
Not a lot of hints beyond that there will be some retaliatory tariffs and non-tariff actions, is a phrase she used. So we don't know exactly what that means. There is some indication, perhaps, that she's talking about some of these working groups that she's been proposing on the border and for security measures between the three countries. Again, that would be more of a conciliatory type measure. So we would expect some mix of carrots and sticks here. It's not going to be, necessarily a wholehearted retaliatory effort, but perhaps some mix of some good and bad.
Creighton, it seems to go further in places like Mexico. And I'd love the response from you, just your thoughts on what is developing there, particularly on the foreign relations side. This is an administration that as soon as it set foot into the door, went after the cartels and wanted to deem them as terrorist organizations. Then within the fact sheet we saw over the weekend, it accuses the Mexican government of providing safe havens for those very cartels. Just how quickly is it escalating on that front?
Yeah, very. I mean, that was probably the thing that President Sheinbaum here responded to most forcefully over the weekend, was the idea that the government is somehow giving shelter to the cartels. She was defiant on that point, flatly denied it, and said that was an unfair assertion on the part of President Trump.
Creighton Harrison.
So that's the sort of thing that could really, sorry.
We're going to leave it there. Thank you, sir. Creighton Harrison from Mexico City alongside Tyler Kendall in Washington, D.C. and Divya Balji in Toronto. On that very subject, it feels like there's a lot of tension building there, and I just wonder, I don't really want to wonder too much, just what the next step might be on that front in Mexico.
Well, Pete Hegseth, I believe, said to Fox and Friends that everything pretty much is on the table, potentially even using the U.S. military. Trump has made very clear when it comes to Canada and Mexico, what he is so focused on is illegal immigration and the flow of fentanyl. And if you look at the data when it comes to fentanyl coming from Mexico specifically, we're talking about in 2024, more than 21,000 pounds of fentanyl coming across the border into the United States.
Joining us now to have the market conversation is Laurie Cavacina of RBC. Laurie, good morning to you.
Good morning.
Another interesting Monday morning, very different to the one from last week, but the market pointing in the same direction. You've heard this story a million times over the past 2 months or so, that the president is transactional, there will be scope for negotiation, he's regulated by the stock market. Has that changed?
So, look, I think that there's still some of that in the price right now, right? And so the futures are down. They're not down a ton. And as I've looked across the commentary on the street that, has come out since Friday, there still seems to be a lot of hope that there's still some window for negotiation and that if these tariffs go on, it's going to be short-lived. And I find it interesting, sitting in my seat as a forecaster, I find the confidence that some of these things are low odds, low chances, when they're really more unknowable. I find that really interesting, and I think that's somewhat misleading to investors, to be honest. I think that personally, I think these things are more like 50-50, so they may not be baked directly into my outlook either, but I feel like the risks are much higher than people appreciate.
This is a difficult art, more than a science, but how much more could markets sell off if they took it seriously that these tariffs were here to stay?
So I think there are probably two phases. I think the first phase is what I call sort of a 5 to 10% garden variety pullback. That could be a pullback for any reason. We've had a whole bunch of those since 2022. And I think we're overdue for one of those right now, frankly. And if you look at where valuations are, where positioning has been, and where sentiment was on sentiment surveys late last year, it looks like we've had a setup for that, regardless of it's tariffs or something else. Now, if you go from 10% and you kind of break down more than that, typically you don't sort of stop before you get to 15. 15 to 20% is what I call a growth scare. So if we get to a point, right, where tariffs, are going to happen, the street's expectations are disappointed, they're going to go through, but we don't think that's really going to damage economic growth too much, maybe just hit profit margins, maybe just be painful, maybe just push us down to kind of a level of growth we don't love but isn't recessionary. That's a 5 to 10% drawdown. But if you start to really see investors question the economic growth impacts, that's when you could flip down into the 15 to 20% level. I'm not in that latter category yet, but that's how I think we could get to something worse.
The reason why a lot of people are not in that latter category is because if you look at all the commentary, people are saying the U.S. economy is strong enough and U.S. corporate balance sheets are strong enough to withstand the potential growth impact from any of these tariffs, even if they were to stick based on the earnings that we've seen, based on what you're seeing in terms of the momentum. Do you agree?
So look, I do think the resiliency of the economy and the consumer in corporate America tends to get underestimated. And that's sort of a bug of this post-COVID environment. That's very much a learning that people took from the post-GFC world, when generally forecasters would start out as too optimistic and have to dial everything down. Now these days we start out as too pessimistic and dial everything up. That being said, if you look at company commentary on the tariffs, I do not think that they are prepared for the kind of tariff episode that we are about to start. If you look back in November, we got a lot of comments at conferences, especially from healthcare, consumer discretionary, industrials, materials, where they were talking about the lessons of the China trade war in 2018 and saying, don't worry, we got this. And oh, by the way, we reduced our China footprint. That's fine. But where did that China footprint go, right? It's gone to some of the places that are being targeted now. And so when we've seen the commentary in this reporting season, tariffs are still probably the dominant issue, especially on this policy discussion. But companies are saying more like, well, wait and see. Some companies are saying, well, we've got some teams working on this. But everybody's saying they're going to pass through the prices. And so I think there's a lot of thinking that's being done. I do think we have to give companies credit for managing through crises. Are they prepared for this one today? No. I don't think so. Can they get there? Yes, but it may take a little time to figure that out.
Trump has been saying this for months, though. So why the complacency?
It's really puzzling to me, Anne-Marie. It's just this idea, I think, of, and we did see this somewhat back in 2016, 2017, the idea, well, that's not good for the economy. This can't possibly happen. I think there are other motivating factors here. And I think with the tariffs in particular, what I've seen really is just this idea of, well, they can't possibly do that. It's just a negotiation tactic. They're not going to go through with it. This to me has seemed more like a core belief in terms of this being an appropriate policy tool. I think there's a conflation between economic policy and foreign policy that people don't quite appreciate. And we also have a president that's not up for re-election. So I think that's another thing we have to consider and maybe being missed by markets.
Laurie, you're dead on. It's so different this time. The objectives are different. It was about reciprocity with China. This is about the southern border. I would say the backdrop's very different as well. People make the argument on this programme repeatedly that the economy is more prone for inflation this time around. I think we've got to draw a distinction between, by definition, who pays the tariff, the importer. I think that's settled. Let's not waste any time on that. The debate has got to be about how the cost will be distributed. We know that exporters can drop prices. We know that it could be eaten across the supply chain through margins, or in some cases, depending on the product, might be passed on immediately to the consumer. How are you thinking about margins for corporate America now on the S&P 500?
So margin expectations for 2025, if you look at the Bloomberg data that monitors the bottom-up consensus, they've already been falling since last July. So they're still looking pretty healthy. I don't want to confuse anybody there, but they've been sort of slowly, quietly getting reined in. And even before this tariff issue, companies have already been, I wouldn't say they're raising the alarm bell, but they've been sort of quietly nudging the analyst community and reminding them about all the cost pressures that are already out there. So we're laying this on top. And again, they are making, the one commonality I see in these tariff discussions, we will pass the price along. Now, some companies are other companies' customers, right? So that's going to show up in their margins. But the other thing I've been intrigued by recently is if you look at the consumer sentiment surveys, we've had soft readings on both Michigan and the Conference Board recently. And it's not necessarily what everybody's talking about, but if you dig into those details, inflation expectations among consumers themselves have also been perking up. So that's a problem. The other stat I've been fascinated by is the NFIB Small Business Optimism Index, which has surged. Uncertainty levels have come down a little bit, but are still really, really high versus history. So, I think on Wall Street, we all assume that we all know these things and the average guy on the street isn't aware of them. I know I had a discussion with my in-laws on Saturday night about the tariffs. And one of my colleagues told me his daughter came home from school and she had 6 homework questions on tariffs. So I think the idea that this is not filtering into Main Street, I think we need to sort of check ourselves with that on Wall Street.
Are we knocking on the door of the limits of consumer price tolerance in this country after several years of above target inflation over at the Federal Reserve?
Mohamed El-Erian actually had one of the most salient things to say on this. He said a lot of companies have removed all of those stickers. Remember when they used to have stickers saying the retail price is $2.99, so buy this? They don't exist anymore. And why? Because they all are prepared for dynamic pricing in real time to pass it along.
Laurie, it's good to see you. As always, you're going to be sticking with us. Laurie Cavacina of RBC. Much more still to come on this market. Equity futures on the S&P at the moment, negative by 1.3%. The automakers down across the board. We'll get into that in just a moment. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Good morning, John. It's the main story today. President Donald Trump following through on his promise to put tariffs on America's biggest trade partners. He announced 25% tariffs on Canada and Mexico and 10% on China, all set to go into effect just after midnight tonight. The president admitting American consumers may take a hit. Meanwhile, on the Fed, Trump said the FOMC was right to pause its rate-cutting path last week. Speaking to reporters when he arrived in Washington last night, the president said, "I'm not surprised. Holding the rates at this point was the right thing to do." It marks a shift, with Trump before the decision calling on the central bank to cut rates. And crews are set to begin lifting the American Airlines jet from the Potomac River today, this coming 5 days after the plane and an Army helicopter collided in a fiery crash that left no survivors. The Army Corps said the process could take 3 days to complete. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. I'm next on the program, Trump's tariff confidence.
Tariffs don't cause inflation, they cause success. Cause big success. So we're going to have great success. There could be some temporary short-term disruption, and people will understand that.
The price of those tariffs maybe not as expensive as you might expect this morning. We're down, but not down too hard. We're negative by 1.4% on the S&P. From New York City this morning, good morning. Live from New York City. What a way to start a trading week. Equity futures down across the board. On the S&P, we're negative by 1.4. On the Nasdaq, by 1.6. On the Russell, the small caps down by more than 2%. Under surveillance.
This is frankly nuts. Canada and Mexico are our two largest trading partners.
The signals he's sending suggest that he sees values in tariffs above and beyond even their negotiating leverage.
There are near-term inflation effects when you're implementing tariffs.
It could change on a dime, but I think once they're on, then it's harder to take them off.
We think that this could actually be highly disruptive to supply chains, potentially inflationary because of that disruption. This could weigh on growth and inflation in a more meaningful way.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Should we get your week started? Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now as we come into Monday confronting the beginning of a trade war. Equity futures on the S&P 500 negative. We're down across the board. The underperformance on the Russell, the small caps negative by more than 2%. One industry with a major cloud hanging over it, the automakers. Stellantis, Ford, GM trading lower. GM hammered last week, hammered this morning, down by 6.5%. The winner from the weekend's action, the US dollar. The best day for the US dollar since the day after the election. The dollar stronger across the board against the Mexican peso, the Canadian loonie. And Europe's going to get it too, apparently. Euro dollar down to 102.44 and negative by more than 1 full percentage point. At least on that currency pair, the low since 2022.
And parity basically is all but a certainty. That's what people are saying heading into the remaining couple of weeks and months ahead. Key question is, are markets right now fully pricing in the idea of these tariffs that were announced over the weekend sticking? And if not, are they really selling off or being disrupted enough to really act as that
decision to impose tariffs on Mexico, Canada and China, indicating he's not too concerned about the market reaction. With that reaction, here's Manus Cranny. Good morning, Manus.
Jonathan, good morning. It depends who pays the tariff and for how long. I've gone for GM in the first instance, down 6.5%, a $25,000 car. Chevrolet Montana, $25,000, 25% tariff, $6,250 extra as of today. And you can be pretty darn sure Mary Barra is not paying that. You and I probably will. Not my kind of truck. But to some context for you, the US imports 3.6 million cars, including pickup trucks, 22% of the total from south of the border. But the big company that really took the pain is VW. 43. This is a European company. They bring in their cars from Mexico, and that is where 43% comes from. This is Ford down 3.97%. Apple. So what happens to Apple? Do they get a carve-out from China? Do they get a carve-out in terms of any other exceptions? Right now, this is about operating margin. BI have run the numbers. About 200 basis points of operating margin are up on the consideration here. So there's lots of different ways to think about these tariffs, the potential for them. Do they get a carve-out from China? 16% of their sales come from China. Jonathan, good morning.
Manus, good morning. Thank you, sir. More from Manus Cranny later on this morning. Check out the automakers. Stellantis, Ford, GM, down across the board here. Laurie Calvasina is back with us. Laurie, let's start with the automakers. Are there certain sectors that will be on the edge of uninvestable for the next few months because of what's happening here?
Look, I think that this, my colleague Amy calls this the paddling duck market, right, where we price in all these risks under the surface and you don't quite see it translate to the broader index. And I think that's what the market's doing right now. I don't know if I would quite use the word uninvestable. I might have said that about healthcare a few months ago, and it's actually been, doing pretty decently so far this year. So maybe just with heightened policy risk or just heightened risk for quite some time is how I would think about it.
Where is that risk? I mean, we were talking about the auto manufacturers, but I was looking at some of the retaliatory tariffs coming from the likes of Canada and Mexico. They are targeted. Things like whiskeys from Kentucky, oranges from Florida, appliances from South Carolina. What do these all have in common? They are all red states. They're also talking about a Harley-Davidson plant in Pennsylvania. How seriously do you have to take that?
I think you do have to take it seriously. And, we put in our piece this morning, we said, here are the things we're watching. And one of the things we're watching is the vibes. Those are corporate vibes and those are consumer vibes. And I think, again, going back to these sentiment surveys, we just haven't seen this big pop in excitement that we might necessarily have been led to believe we were going to see this year. And I think all of this does weigh. So I don't know if it's any one industry in particular, but I do think it's that vibes thesis that we have to be really careful about going forward.
Well, sticking on vibes, Trump is not just all sticks. He's also carrots. And I know a lot of market participants are very excited about the fact of tax cuts. How do you weigh both of these issues?
Well, look, there's just not a lot of information out there right now, right, on what this tax bill is going to look like. And, we kind of know some vague things from the campaign, right? No taxes on tips. We know that they want to extend the tax cuts. How much more exactly is coming? I'm not quite sure. I will tell you that, again, as I go through sort of the company commentary, I'm seeing a lot of excitement on regulation, things like M&A, again, going back to this anticipated uptick in the vibes, a lot of concern on tariffs. Very few companies are mentioning tax. So I think that's where there's really some opportunity if we can get some interesting news there.
Anne-Marie, I'm pleased you bring this up because I think it's really important. The tariff story is one piece of the overall policy platform. The rest of it is kind of complementary. This is what they're trying to do. And you can sit here and disagree with it. You can say it's the wrong thing to do. You can say it's going to have negative consequences. But ultimately, they've said everything they want to do. They want to put the walls up. They want to run things really hot domestically. And to achieve that, you tell people that if they want to sell in America, they've got to be in America. And to entice that, you've got to drop corporate taxes pretty aggressively. And he said repeated on the campaign trail, they would do that, come down to 15%. And alongside that, there would be a domestic production target. That if you want 15%, you've got to produce the goods here. So I think you've got to see a much fuller policy platform to really think about the economic consequences of what they're doing here.
Also, about the consequences of these tariffs. Are they a negotiating tool or used as a national security concern, or are they going to be used as an offset and a revenue raiser for this package that they want to get through Congress? If they're a revenue raiser, they might be here to stay.
Then there's no scope for negotiation here whatsoever if this is to offset tax cuts later this year.
Well, and if that is actually something that could work, I am curious about whether the U.S. has the people to manufacture some of this. I'm curious about the labor market required to achieve the policy goals that you laid out. It might be there, and it might actually be something that people are pricing in and seeing this rearrangement as being a hiccup, but then leading to growth. This is one of the key questions.
It takes a long time to engineer the supply side of the economy. If you want to ignite that supply side response, it's going to take years, not months.
So what is the adjustment period, and how is this country going to ameliorate that at a time when the borders are increasingly closed?
Laurie, it's good to see you. Great to catch up. Big week ahead of us all, I think. Laurie Calvasina there of RBC. The conversation continues. We'll catch up with the former chair of the Council of Economic Advisors under President Obama. Jason Furman is just around the corner from New York with equity futures down by 1.4%. This is Bloomberg.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Tobin Marcus, Wolf Research, put out a note over the weekend. Markets may now need to take the rest of Trump's tariff agenda literally rather than just seriously. We're taking it literally this morning, kinda. Equity futures down across the board. We're down by 1.4% on the S&P, on the Nasdaq down by 1.6%. It's the small caps that take much of the pain. We're down by more than 2%. But check out the bond market. Spend some time on this. 2-year, 10-year, 30-year. So what makes the move? We recalibrate things at the front end of the curve. Yields are higher by 8 basis points. The why? Fed's not cutting interest rates anytime soon. If these stay on, maybe even has to consider hiking interest rates later this year if Adam Posen is to be believed. But at the long end of the curve, what do you do with a 10-year yield, Lisa? 454.
Honestly, how do we understand this? Number one, you could say this is just not a stock market that's selling off that significantly. So the risk-off move isn't that great. The bid into the long end isn't that great. That is sort of the cop-out way of not giving really any credence to this whatsoever. There is another way of reading this, which is that a lot of people do not see this as much of a growth hit to the U.S. economy as people expected, and that longer-term inflation could remain elevated. And you could see that in break-even rates, and that could be on the margins what's happening to the 10-year. We need a couple more weeks before we can start to say that.
I would say there's a tug-of-war taking place right now, and there's a lot of tension in the long end of the bond market. A tug-of-war between a demand shock and a supply shock that could lead to inflationary consequences. And I think we've got to figure out what the future might look like if, and it's a big if at the moment, if these stay on.
That's a much more diplomatic way of saying it, the tug of war. People just have no clue. It is, though, notable. The dollar is a haven. The bond market is not. And that is something that you have to take notice of because the moves are big enough in other places that you normally would get a bid into this particular security.
The dollar is getting bought big time. The dollar is stronger against the Mexican peso, as you might expect, against Canada. Europe. Can spend some time on Europe too. Europe's going to get it as well. This is what President Trump has said repeatedly. Europe doesn't need any more problems. Could have an extra one. Euro dollar down to 102.38, and I've just seen a string of analyst notes saying parity, parity, parity. And let's face it, parity is just around the corner.
Look, we're looking at the lowest levels going back for the euro to 2022. What would hold Donald Trump back? And right now, given the fact that you see that inflation came in higher than expected, what ammunition does ECB have to really combat this?
Under surveillance this morning, our top story worldwide. In this market, President Donald Trump ramping up tariff threats to the European Union, saying levies will, quote, definitely happen. So far, the president not specifying a level or a timeline for any actions against the European Union. For China, the Commerce Ministry reacting to Trump's tariffs, vowing, quote, corresponding countermeasures alongside a WTO lawsuit. China has a range of tools to respond to the levies, including export controls on critical minerals and market access restrictions to some American firms. So we're waiting to see what they do, also waiting to see what Mexico does as well. That's going to be a big one a little bit later today, possibly.
Yeah, Claudia Sheinbaum, the president of Mexico, coming out with Plan B and outlining it. That might be more salient than China, considering the fact they don't want to blow all their ammunition now when this is just ramping up.
Wanted to squeeze this story in. If we weren't talking about trade, we probably would have opened the programme with this. Elon Musk saying his Doge team is shutting down some Treasury Department payments to federal contractors. The move suggesting Musk may have access to sensitive systems used at the Treasury. Musk posting on X, quote, the corruption and waste is being rooted out in real time.
So there's a lot of questions surrounding this, and even if Doge has authority to do this, of course, it is Congress that mandates about the money that gets spent. But in this tweet, he's talking about the fact that he has gained access to some of this. I would also say he also sketched out plans for aggressive cuts overnight to U.S. aid. And then he was also talking about assuaging some concerns of bond investors and saying that he and Jamie Dimon are going to be discussing that this week.
More on that story a little bit later. Let's get back to our top story. President Trump set to speak with leaders of Canada and Mexico today, ahead of tariffs going into effect tomorrow, as he ramps up threats against another key ally, the European Union. Jason Furman of the Harvard Kennedy School writing, it's hard to decide if tariffs are worse economic policy or foreign policy. We'll see if Trump caves to the market. Jason joins us now for more. Jason, welcome to the programme, sir. Thanks for making time for us. Let's just start here. How different these actions are compared to what we saw in Trump's first term.
Oh, yeah, look, I thought there were too many tariffs in Trump's first term. I thought they were too poorly designed. But this is just at a massive scale relative to those. And these are against close allies. And this is less than, this is basically 2 weeks in to the administration. And he's promised us he's just getting started.
Jason, it seems like on Wall Street, people believe that the U.S. economy is strong enough to withstand the growth hit from these tariffs. Do you agree?
First of all, it doesn't look to me like Wall Street has priced in these tariffs going into effect on a sustained basis. And by the way, I hope Wall Street's right about that. Some things are crazy enough that you touch the hot stove and you pull your hand away. And I think that's what Wall Street thinks would happen. So you can't look at the market right now to infer what would happen if over the next year we keep these tariffs on, escalate them in response to their responses, add tariffs to the European Union, add a universal tariff. All of that, I have no doubt, would be quite a big hit to growth.
Jason, as you know, though, of course, USMCA is up for renegotiation next year. How much are these tariffs a part of that carrot and stick approach for that renegotiation with Canada and Mexico?
USMCA was President Trump's trade agreement. And look, it's sort of ironic. In 2016, he campaigned on tearing up NAFTA, and he ended up doing a renegotiation of it that was pretty good and that got everyone on board. This time around, he actually did not campaign against NAFTA or USMCA, did not really campaign against Mexico and Canada, and he's straight out of the gate with tariffs on them. I don't really see this as part of a ploy to have a better USMCA negotiation. I don't quite know what we're looking for in the USMCA negotiation.
Well, he did campaign, though, on making sure that he put a halt to illegal immigration and stopping the fentanyl flow. If you look at our own drug enforcement data, 21,000 pounds was seized at the southern border of fentanyl, 43 pounds of fentanyl from Canada. 2 milligrams of fentanyl is lethal. There's more than 450 milligrams in a pound. If that is the direction that Trump is taking and it comes to national security, do you see this administration using tariffs, say, prior administrations might use things like sanctions?
First of all, you just said the number for Canada was tiny compared to the number for Mexico. And by the way, fentanyl goes from the U.S. border to the Canadian border as well. Do you think they should be putting tariffs on us to stop that flow of fentanyl? Absolutely, we need to put pressure on Mexico, but it's not like they have a switch that they could choose whether or not to push. This has been a big issue for them. It's undermined a lot of their country, the drug trade as well. And by the way, destabilizing the Mexican economy is going to increase the amount of immigration to the United States, not reduce it.
Jason, there's a larger theory here that the U.S. needs to produce more of its goods at home, both for national security reasons and also to give jobs to people in areas that got beaten up during a lot of the globalization shifts that we saw in the economy. What do you think it would take to bring production back? Do you think that's a feasible goal? And how long would it take?
Yeah, I think what it would take to bring production back is to have an integrated market in North America where inputs for American manufacturers can come in tax-free, where auto parts can go back and forth across the border multiple times. That's the way you have an American auto industry. You don't make every single piece that goes into the car. You have, a lot of the value added, a lot of the key stages of the process, but you spread production out around the world. That's what makes the American economy so incredibly successful. Look at U.S. productivity growth compared to any other advanced economy. It's been much higher. Globalization has been a key part of that. This is going to destroy American manufacturing if it continues and escalates.
Jason, couldn't you make the argument that globalization destroyed American manufacturing?
Productivity growth has been the biggest factor in reducing American manufacturing. Manufacturing jobs have fallen in China. They've fallen in Germany. They've fallen in the United States because you can make things with fewer people. And by the way, even if you want more manufacturing jobs, you don't raise input prices for manufacturing. You don't strengthen the dollar to hurt exporters. You don't weaken the economies of our trading partners. You don't encourage them to put tariffs on manufacturing. Every single aspect of this is bad for American manufacturing.
Jason, just a final word in the 1 minute we have left with you, just on prices. By definition, the importer pays the tariff, so let's just put that all to one side. What's your base case on how the costs will be distributed? How do you see this playing out? Will it all get passed through to the consumer? Will it be eaten elsewhere?
There'll be a little bit of it eaten by the Canadians and Mexicans in terms of the appreciation of the dollar, some of it eaten by margins. So I see something like an extra 0.5 point on inflation. And if you go from, 2.5 to 3% inflation, That's a big difference for the Fed.
Big change. Jason, appreciate your input and your insight. Thank you, sir. Jason Furman there at the Harvard Kennedy School. Seen that estimate repeatedly. I think I saw the same thing from Goldman and Morgan Stanley. Big if, of course. If it stays on, it could push inflation up by something like half of 1 percentage point. And for the Federal Reserve, right now in a sticky spot and not signaling they're going to cut anytime soon, that's a significant adjustment for them.
Which is the reason why you're seeing a bigger move at the front end of the yield curve, why two-year yield is actually increasing more than a 10-year yield. That's the cleanest read-through in the short term.
Got to spend some time on energy, haven't we?
Yes.
4 million barrels of oil a day comes from Canada into North America, into the United States, and the bulk of that gets refined in the Midwest. This is going to cause some problems for that region of this country.
And there's some refiners in the Midwest that only take Canadian crude. And it was implicit in the acts that Trump did that he understood this effect because he didn't do 25% across the board for Canadian crude along with the other goods Canada exports into the United States. He brought that down to 10%. You see the market reaction already this morning with U.S. gasoline futures higher. If this starts to hit consumers at the pump, he might have to rethink this.
I think it was the Conservative leader, Polyev, that made the point. And I think it's a really interesting point. And I haven't heard this question asked enough over the weekend or this morning either. Why the tariff was lower for China than it was for the North American neighbours, Canada and Mexico. How do you explain that?
It's a great question. First of all, someone could say it's on top of the 25% tariffs that he previously had implemented. Second of all, he closed a huge loophole. And this has not been talked about enough, where basically packages under a certain amount were exempt from those tariffs. Now your Shein packages and your Temu packages will not be exempt from some of these tariffs. That change would be enough to exert a significant hit to certain Chinese manufacturers.
The de minimis loophole is huge. This means any package under $800 is no longer exempt. This loophole is closed. It's going to hit China e-commerce. And again, once again, this is coming from a Trump administration clearly looking at fentanyl, because there's been a lot of reports that have been done that is how fentanyl is smuggled into this country.
So your $4 T-shirt goes up $1. Is that right?
That's what I hear from home people.
We'll see if they've got the margins to eat it. I'm not sure those companies do. Equity futures right now on the S&P negative by 1.5%. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. President Trump's tariffs against Canada and Mexico are threatening automakers across North America. The duties would immediately hit almost a quarter of the 16 million vehicles sold in the U.S. each year. And Wolf Research analysts are estimating it could raise the average price of a new car by about $3,000. Meanwhile, Panama is promising free passage for U.S. warships through the Panama Canal. This comes after Secretary of State Marco Rubio blasted the government during his visit yesterday. Panama President Jose Raul Mulino also said they will withdraw from China's signature lending program. Still, he reiterated his country won't give up the canal. And Elon Musk, who's running the government efficiency initiative DOGE, is planning aggressive cuts to U.S. spending, including wiping out the U.S. Agency for International Development. Musk claims to have President Trump's blessing to end U.S. aid as a standalone agency and fold what's left of it into the State Department. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, Trump's tariffs hit oil.
Mexico and Canada have never been good to us on trade. They treated us very unfairly on trade. We don't need the products that they have. We have all the oil you need.
The latest on the energy market up next on the program, live from New York City. You're watching Bloomberg TV. Stocks are down across the board here. We're negative by 1.5% on the S&P 500. We're down by 1.7 on the Nasdaq 100. On the small caps, down by more than 2. The stocks to watch, there are many, but I think you've just got to keep one eye on the automakers throughout the session. GM, Ford, Stellantis. GM had such a painful week last week, even though, Lisa, they came out with decent numbers and a half-decent outlook. And the worry was that outlook didn't count for much because we're about to get tariffs. And we got some.
And they actually rely so much more on Mexico. They have moved a lot of their supply chain to the north of Mexico, away from China, away from other areas that were hotspots, which is the reason why they're now getting penalized by 25% tariffs on Mexico.
That's the automakers. We need to talk about energy as well. Under surveillance this morning, Trump's tariffs strike oil.
Mexico and Canada have never been good to us on trade. They treated us very unfairly on trade. And we will be able to make that up very quickly because we don't need the products that they have. We have all the oil you need. We have all the trees you need, meaning the lumber.
Do we have the kind of oil we need? Here's the latest. Oil prices jumping as President Donald Trump places tariffs of 10% on energy from Canada, the measure affecting 4 million barrels of crude from the northern border. Bloomberg's Michael McKee has more. Morning, Mike.
Good morning, John. You put your finger on the big problem. We have a lot of oil, but we don't have the kind of oil you need in parts of the country, particularly the Midwest. It's heavy crude that comes down from Canada, and PADD 2, the Midwestern area refineries, there's about 23% of U.S. refiners in that area. They use that heavy crude, and it's not easily substituted. Patrick DeHaan of Gas Buddy says that could add 5 to 20 cents a gallon in those regions. And he also adds that there's been a jump in oil prices in the last week or so that hasn't been reflected in the Midwest. And they're likely to see a very large non-tariff related jump over the next week or so. So there's going to be some pain in the Midwest, definitely. Now, there's also a wild card out there, and that is New England. New England gets a lot of power from Canada, New York as well. The grid operators buy power on a daily and hourly market, and this is electricity. It goes through wires. How do you measure it? There's a question of whether it can be tariffed or not. But there's also natural gas, and there's also oil that comes in from Canada. And companies are already saying they're going to raise prices. Irving Oil says they're going to pass the entire cost of the tariffs on to its customers in New England. The Massachusetts governor forecasting as much as $200 million damage to the state's economy from all of this. So energy is a big, big issue, and it's something that's going to play out very quickly in the economy.
Mike McKee, thank you, sir. More from Mike a little bit later on this morning. Amrita Sen of Energy Aspects joins us now to extend the conversation. Amrita, what does a 10% tariff on 4 million barrels of crude a day do to this energy market?
I think, look, the 10% tariff in itself doesn't break U.S. refining, but for sure it adds to the cost. U.S. refining margins are not great to begin with. We've calculated even if Canadian heavies take 70% off the tariff, you still lose about $1 from Midwest margins. I think the critical thing also is to watch for is the Canadian dollar. That's weakened a lot. So that also helps absorb some of the tariffs. But ultimately, yes, you are going to get a hit on U.S. Midwest margins, also U.S. West Coast margins. We're going to see more of the Canadian flow on the TMX pipeline to Asia instead. And U.S. will have to pay up for alternatives. If I may say, I think more than the Canadian one, it's the 25% on Mexico. That's going to be the much bigger problem, given the Gulf Coast imports about 400,000 barrels per day of Mexican heavies and another 200,000 of feedstock, what we would call fuel oil. That's going to be very hard for them to replace, and it's a higher tariff as well, given it's 25%.
Amrita, you mentioned something in there that I want to pick up on, exporting more to Asia. How easy is it for Canada and Mexico to shift its export lines to direct more of it to China in the Southeast Asian Sea rather than the United States?
Well, because Canada now has the TMX pipeline. In the past, they wouldn't have been able to do so, would have been a lot harder. But now with TMX, it actually gives them a lot more optionality. And if I may say so, I think these tariffs have essentially handed a boon to Asian refiners. And it's obviously bullish for PADD 1 margins because PADD 1 is losing product exports from Canada, but it's also boosting European refining margins. It's a win for a lot of the rest of the world, just a massive loss for U.S. refining, which, you know, given that it's meant to be America first, I'm not 100% sure that was the intended consequence, but that's absolutely how this is going to play out.
How long before the United States could produce the kind of crude that would be good for refining? How long before the U.S. can compensate and offset that with the energy that Donald Trump was talking about?
They can't. I mean, the reserves are light shale. It's a geology problem. We can, scream and shout as much as we want about the volume of oil produced, but every refiner on the Gulf Coast and a lot of them in the Midwest are complex refiners. They need the heavier crude. And that's why they were designed, because they had availability of Canadian and Mexican heavies. Gulf of Mexico produces some medium sour crudes, but it's not the heavy material that these refiners need. So it's a geology problem. It's nothing to do with regulation or anything else. U.S. of course has all the oil the refiners require. It's just the wrong type of oil.
So Amrita, where can they import this type of crude if it's not going to be from Mexico or Canada?
So I think the Canadian imports will still continue because, again, like I said, the 10% tariff, again, we'll get it split between refiners and Canada, but I think those will continue. I think the challenge is going to be on the Gulf Coast. We do see more Middle Eastern barrels arriving, potentially from Iraq, even some Saudi Arabia, and other Latin American countries can swing. But it's going to be a tough ask. And by the way, we don't even know if Mexico is going to retaliate. If it does on oil products, which is not our base case, but U.S. Gulf Coast refiners send 850,000 barrels per day of products to Mexico. They will not find a home and they will have to cut runs. That's the one to watch out for.
And Rita, with an uptick in prices right now, we also have OPEC Plus members meeting today. Is this a moment for them to want to add barrels to the market?
Today is a JMMC meeting rather than an OPEC ministerial meeting. The JMMC simply, just take stock of where fundamentals are. We've maintained our view that they will absolutely have to see outright supply disruption, not just trade flow shifts, which is what's happening right now, before they change course. So we maintain the view that, the earliest you're going to start seeing OPEC Plus unwind is April.
Amrita, appreciate your time. As always, Amrita Sen there of Energy Aspects. If you are just joining us, welcome to the programme. Crude up across the board on both WTI and Brent. WTI up by 2.7%, Brent crude up by 1.7%, Anne-Marie at about $77 a barrel.
This is going to be a big deal when it comes to those landlocked Midwest states, these refiners that rely on the heavy crude coming from Canada. Now, Canada, implicit in Trump's 10%, he realized how important that is. And Rita makes a great point. Nearly 500,000 is coming from Mexico, and they're getting the 25% tariff hit. Where do these refiners go? And Rita Sen is talking about maybe as far as Iraq. Can't really go to Venezuela. There's sanctions there. Maybe Brazil. They're going to have to get creative when it comes to these trade routes if they want that heavy sour crude.
The pass-through can be pretty immediate in some cases, depending on what goods you tariff, and this might be one of those where it's pretty fast.
Which is the reason why it was just a 10% tariff rather than the full 25% on Canada. Key question will be, will Canada turn to these exports to the United States and have retaliatory tariffs in a significant way? That would be the nuclear option, certainly, that Trudeau has not pulled out of the hat yet.
You know who I want to hear from? I want to hear from the NEC Director, Kevin Hassett. I want to hear from the Treasury Secretary, Scott Bessent. But who I really want to hear from? Governor Waller at the Federal Reserve, who believes that these tariffs won't be inflationary, won't change the course of monetary policy for the Federal Reserve. I'd love to know if he still thinks the same thing after what we heard over the weekend, if, of course, these stick.
Well, I don't see him speaking today, so you're going to have to just wait. My guess is he would say it's too early to say. And a lot of people are saying that it's sort of equal measures growth hit as inflationary hit, which is what the 10-year is saying, that tug of war. And he might defer into that. But I did think it was interesting that Trump said they made the right decision. So maybe he's on board with everything.
I still think there's a bias in this market that all of this gets negotiated away.
100%.
It's a 1.5% move on the S&P. Stay tuned. Up next on the programme, Jay Pulaski of TPW Advisory, the former NEC Deputy Director Kellyanne Shaw, the former St. Louis Fed President Jim Bullard. That and a whole lot more from New York City, the second hour of Bloomberg Surveillance. Up next.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
This is frankly nuts. Canada and Mexico are our two largest trading partners.
The signals he's sending suggest that he sees values in tariffs above and beyond even their negotiating leverage.
There are near-term inflation effects when you're implementing tariffs.
It could change on a dime, but I think once they're on, then it's harder to take them off.
We think that this could actually be highly disruptive to supply chains, potentially inflationary because of that disruption. This could weigh on growth and inflation in a more meaningful way.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now. Here are the scores. Equities down across the board. We're negative 1.4% on the S&P. Make it 1.5 on the Nasdaq. We're down as well. Likewise on a Russell. The Nasdaq 100 this morning negative by 1.7%. The small caps down by more than 2. You want some single names? Let's pick out 3. The automakers, Ford, Stellantis, GM trading a whole lot lower. General Motors having a terrible losing streak. Make it day 5. GM's down by more than 7%. The winner of all of this, the US dollar. Its best day since the day after the election. Even Euro is getting in on the act. Euro dollar negative by more than 1 full percentage point. 102.52, the lowest level we've seen going back to 2022. And here's the big take, and I think it's important to say this. For a lot of people in this market, they still believe this will be negotiated away. Goldman Sachs, Jan Hatzius and the team over the weekend. While the outlook is unclear, these tariffs are likely to be short-lived.
Basically, this is not a market that is actually pricing in these tariffs. They are pricing in the idea of tariffs. They didn't believe that they would actually go into effect on February 1st. They did. Now they don't believe that they're going to stick. There was a theory heading into 2025 that the market would act as a check on Donald Trump. Right now, if that is the case, the stock market isn't reacting with enough of a tantrum to be that check. And there's a real question about whether that put really is still there.
So the fireworks might actually happen tomorrow if the tariffs stay in place. Trump said last night, this morning, he's getting on a call with the leader of Canada, the leader of Mexico. So there is potentially the market baking in this hope that they can walk this back, like we saw him do when it came to Colombia. But if not, how much lower will we see on these markets come tomorrow morning? Because we are talking about broad-based tariffs, 25% from Canada, 25% from Mexico. What I have been hearing is that he is in negotiating mode when it comes to these two countries. Less so when it comes to China, but they only got 10%.
We've repeated this repeatedly through this morning again. The president, for so many of you, is pro-growth. You'll see deregulation, regulated by the stock market, wants good things for investors. Do you question that this morning after the weekend?
Absolutely. And you're seeing that pretty much across the board. Neil Dutta basically came out and said this just shows that the Trump put isn't as big as people had thought. And if this is as much of the market freaks out, well, is it really checking any of these policies or basically saying that it's not that big of a hit to growth?
Lori Calvasino made a good point, though. This is a president who came in with a mandate on immigration, and he's not running for re-election again. This is his last final 4 years and also a lot to get done before the midterms, potentially. So maybe they do stick because he has been talking about immigration and fentanyl for months, and that's what he's talking about when it comes to these sanctions and national security concern.
Equity futures on the S&P negative by 1.5%. Let's begin with our top story. President Donald Trump slapping 25% tariffs on Canada and Mexico and 10% on China.
We may have short-term some little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that.
So for many of you, the trade war begins right now. Canada planning a 25% levy against $106 billion of American goods. Mexico preparing a response, and China's Commerce Ministry vowing, quote, corresponding countermeasures. The tariffs set to go into effect in fewer than 24 hours. Your team coverage continues. Joining us now is Bloomberg's Tyler Kendall in Washington, Derek Decloet in Toronto, and Creighton Harrison in Mexico City. Tyler, I want to go straight to you. We talked about the calls that will take place between the U.S. leader and his Mexican and Canadian, but also for the companies affected by this, will there be any carve-outs?
Right, John, these are still some of the questions that remain to be seen. We're waiting for what that benchmark of success is that President Trump needs to see when it comes to progress to address immigration over the border and also fentanyl that is coming in. Now, the White House did circulate to us reporters here a memo touting some of their potential benefits when it comes to tariffs and downplaying inflationary concerns after President Trump suggested that Americans could feel a little bit of pain. Notably, the White House seems to be trying to hone in on this idea that these tariffs will help boost U.S. manufacturing, something that President Trump campaigned heavily on. But not everybody agrees, John. The National Association of Manufacturers, which represents about 14,000 U.S. businesses, in a statement obtained by Bloomberg News, said that this would have, quote, severe ripple effects for its members.
Creighton, when it comes to Mexico, Claudia Sheinbaum's talking about her Plan B. She's telling her economy ministry that she wants to enact the Plan B in terms of retaliation. What does that involve?
Well, I wish I could tell you a straight answer. They've been behind closed doors for most of the weekend. It's a long weekend here in Mexico. Today's a federal holiday. But we know that it's some mix of retaliatory tariffs and what she has referred to as non-tariff actions. We think that may be sort of gestures toward cooperation on security and closing the border. But we should hear more details in the coming hours as Claudia Sheinbaum rolls out her plan and her finance minister meets with investors.
Meanwhile, Derek, we have seen some response in terms of retaliatory tariffs coming from Canada, in particularly some goods from red-leaning states. What do we know about that, and what potentially could be to follow should the tariffs go into effect and stay there for a while?
Yeah, I mean, there's two phases to the Canadian response. One is on Tuesday, there will be tariffs on about $30 billion worth of goods, a lot of consumer goods, as you say, things from red states, orange juice from Florida and so on. But then there's a second phase, a much larger phase, that is Canadian $125 billion. That includes the really big ticket items like cars and steel and aluminum. But there's a 3-week process for Canada between now and when those tariffs would come on. And that is both to allow companies some time to adjust, but also perhaps gives time for a bit of an off-ramp if there are to be negotiations. I think in Ottawa, that is very clear what those negotiations, very unclear what those negotiations would look like at this point.
What could Canada offer as a potential off-ramp? Justin Trudeau will get on the phone this morning with President Trump.
It's a good question, and I think you can summarize that Trudeau and his cabinet are somewhat frustrated because the evidence on fentanyl and illegal migration coming from Canada into the U.S. is fairly thin, to be honest. There is some, of course. There's drugs that move both ways across the border. There are guns and so on. It's not that there are no issues at the border, but they are seen as relatively minor, and they have offered a security package, quite a visible security package, to sort of beef up some of the weak spots in the border, particularly around Quebec and New York State. So I think that there's a bit of frustration that they don't know what they can offer at this point.
You can sense that frustration. Derek, appreciate your time alongside Creighton and Tyler there. This note just dropped from Torsten Slock over at Apollo. Goods imports make up 11% of US GDP. 43% of imports come from Canada, Mexico and China. Torsten goes on to say this means that 5% of US GDP is directly impacted by these higher tariffs. This is meaningful when annual GDP growth is normally around 2%. It can make a big difference.
It could make a big difference. It makes an even bigger difference, though, for Canada and Mexico, where about 80% of their exports they send to the United States. And I keep going back to what George Saravelis of Deutsche Bank wrote, which is for Canada and Mexico, we see this trade shock, if sustained, as being far larger in economic magnitude than that of Brexit on the UK, and would expect both countries to enter a recession in coming weeks.
Hearing the same thing across the board. The likes of Mexico, Canada plunging into recession, and also this from Capital Economics too. The door just slammed shut on a rate cut anytime soon from the Federal Reserve.
You're seeing that priced into short end of the yield curve. What this does long term, no one has a clue. And you could see that from stasis at the long end. That said, there wasn't really pressure for them to cut rates. And Donald Trump doesn't seem to be pressuring this Federal Reserve to cut rates anytime soon, saying they made the right call.
I noticed that yesterday evening. That was probably the most surprising thing we heard from the weekend. The fact that the president thinks the Federal Reserve made the right call last week.
I was shocked, and it shows that he actually cares about inflation. And he wants to tamp down long-term inflationary expectations, make the University of Michigan sentiment survey great again.
Yeah, OK. We'll leave that one there. For those of you just tuning in, maybe not familiar with Bramo's sarcasm, very sarcastic. Jay Pawlowski of TPW Advisory joins us now for more. Jay, good morning.
Tough to match that sarcasm,
hey,
but it's impressive. 7 a.m. Impressive.
It's a big change over the weekend. The day after the election, and we caught up with you, we were pricing in a positive growth shock, positive demand shock off all these things we'd see from the incoming administration. Are we now pricing in a negative supply shock? And how different is that?
Well, you know, John, I think, first of all, there's no surprise here, right? Everyone knows that President Trump is going to put tariffs on. So we are adopting at TPW Advisory what we call the Stoic strategy, right? Back to the ancient Greeks, imagine all scenarios, be surprised by none. And so we do not pay attention to what President Trump says. He says anything at any time. We want to pay attention to how he acts. What are the actions? And so, you know, we don't often find ourselves in agreement with the Wall Street Journal op-ed page, but their title, The Dumbest Trade War in History, I think really applies here. But there are three keys as we see it. First, we think these tariffs are going to stick. Okay? Trump needs money. This is a money grab, period, to fund the tax cuts. These are going to stick. But there's going to be a furor around them, right? As you just pointed out. Growth down, inflation up. So this is probably it for tariffs. Not going to have any more bigger ones, additional ones, in my view. And secondly, China now knows what's going to happen, so it can act, right? We're focused very much on a global growth long cycle where stimulus from Europe and Asia extends and broadens out the global growth cycle, which supports global equities. And so we want to pay attention not to the news, but to the reaction to the news. And this reaction is muted. And there's a reason for that, because it's not a surprise. And therefore, what we care about are earnings. And what I think this does is this does reduce the growth shock, the upside to earnings. We have no room for multiple expansion. The U.S. is priced for exceptionalism, needs to have earnings growth. So we have been of the view single-digit S&P returns this year, double-digit non-U.S. returns. And I would just say that year-to-date through January, non-U.S. is outperforming the U.S., led by Europe and China.
So this is the key point. How does that continue if right now the rest of the world is treating and investors are treating tariffs put on by the United States as a much bigger growth shock for the rest of the world than the United States?
Because I think that's wrong. That's just going to be wrong. And the reason, again, is simple. Because the rest of the world has the ability to act. Who has fiscal space in the global economy, right? Germany's debt to GDP, 63%. China's debt to GDP, 65%. U.S. debt to GDP, 120%. We have no room. And the other thing where we disagree strongly with the consensus is the view that this is dollar positive. We think this is setting up for potentially the big fear that we have is a crack in the dollar, right? The U.S. is putting gates up and barriers up and breaking deals with the rest of the world at a time when there is no country more exposed to international capital flows reversing themselves than the U.S. The U.S. has never had more foreign money invested in treasuries, corporate credit, U.S. equities. If that money starts to go elsewhere, so we think capital repatriation is going to be a big term over the course of this year. Money is going to go back to fund Japan's stimulus, go back to fund China's stimulus, go back to fund Europe's growth. And that means dollar down. And that means if it starts to get going, that's big action.
If dollar's down, then what wins? Gold?
What wins? Commodities, right? And so what just broke out over the last month? Commodities. Commodities are the best performing asset class year to date, outperforming equities, outperforming bonds. Emerging markets, China. Okay, for all the negativity on China, and we've talked about this for over a year or more, and we've been constructive, bullish, and exposed, and China is outperforming the U.S. in equities. For all the negativity, and look, DeepSeek was a week ago, right? I mean, stuff comes fast. It was a week ago, DeepSeek. China tech is completely underowned. There is a massive rotation trade out of U.S. tech into China tech. China tech is world class, yet sells at a 50 to 75% discount to the U.S.
Because the state might take it over at any minute.
Well, what might happen here?
And more export controls
come
might
on.
come down on China.
What happened to GM today? What did the state just do to GM, right? Just knock the heck out of it. I mean, it's not really any different, in my view.
You think these tariffs hold?
I'm sorry?
You think these tariffs hold? You think these tariffs hold? They stick?
Yes, yeah. I mean, it's a money grab. Trump needs money for tax cuts. It's that simple.
You don't think
that's why it's coming now?
They can't negotiate it on a call a little bit later this morning.
If they do, big deal. Then that means that the tax cuts don't happen, and that's probably not all that negative, right? Because that means that inflation and rates probably are not that bad, and therefore the economy is okay, and earnings are okay. What Trump's trying to do is thread a needle, right?
Jay, you said that you look at what Trump does, not what he says.
Yes.
What he did, at least what we've seen in this iteration of his administration, is he threatened tariffs when it came to Colombia, but then he didn't use them because Colombia ended up taking the deportation flights out of the United States. Isn't there a chance for an 11th hour deal here?
Oh, yeah, sure. But in which case, status quo ante, big deal. Our view is we want to be in the non-U.S. equity markets. We think we're at the beginning of a multi-year move out of the U.S. into non-U.S. Commodities breaking out supports the idea of global growth upcycle, and expanding. And what we want to see now is non-U.S. equity breaking out to support the idea that that's where the action is going to be. And they're all right there. Yep. They're all right there. Europe, China, emerging markets, all at important technical levels. If they break up, and probably not today, given the action, but going forward, they break up and out, then the money that's going to follow that is going to be tremendous because absolutely nobody is invested.
Jay, you're going to stick with us. I'm pleased to say Jay Pawlowski there of TPW. Equity futures down by 1.6% with an update on stories elsewhere. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. President Donald Trump says he will have separate calls regarding tariffs today with Canadian Prime Minister Justin Trudeau as well as Mexican President Claudia Sheinbaum. Trudeau has already pledged 25% retaliatory tariffs on more than $100 billion worth of U.S. goods. He says Trump's actions risks job losses and higher prices for Americans. A U.S. citizen was one of the 3 hostages released by Hamas over the weekend. The release was part of a 4th hostage prisoner swap, with Israel releasing 183 Palestinian prisoners in exchange. Israeli Prime Minister Benjamin Netanyahu is meeting with President Trump tomorrow at the White House. And DeepSeek, which you just were talking about, is the most downloaded mobile app globally, with India accounting for the biggest percentage of new users. That's according to app figures. Still, its total users pale in comparison to ChatGPT, and there may be more hurdles for growth as companies and governments weigh risks associated with the Chinese AI app. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, the risks of Trump's tariffs.
If over the next year we keep these tariffs on, escalate them in response to their responses, add tariffs to the European Union, add a universal tariff, all of that, I have no doubt would be quite a big hit to growth.
That's the debate so far this morning. Equity futures negative across the board. From New York City, you're watching Bloomberg TV. Equities are down across the board here. We're negative 1.6% on the S&P. On the Nasdaq, we're down by 1.8 on the Russell. We're down by 2 percentage points. Europe, of course, not spared. The Euro Stoxx 50 so far in the session is down about 1.7%. Under surveillance this morning, the risk of Trump's tariffs.
It doesn't look to me like Wall Street has priced in these tariffs going into effect on the system.
This is frankly nuts. Canada and Mexico are our 2 largest trading partners.
The signals he's sending suggest that he sees values in tariffs above and beyond even their negotiating leverage.
There are near-term inflation effects when you're implementing tariffs.
It could change on a dime, but I think once they're on, then it's harder to take them off.
We think that this could actually be highly disruptive to supply chains, potentially inflationary because of that disruption. This could weigh on growth and inflation in a more meaningful way.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Should we get your week started? Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg surveillance starts right now as we come into Monday confronting the beginning of a trade war. Equity futures on the S&P 500 negative. We're down across the board. The underperformance on the Russell, the small caps negative by more than 2%. One industry with a major cloud hanging over it, the automakers. Stellantis, Ford, GM trading lower. GM hammered last week, hammered this morning, down by 6.5%. The winner from the weekend's action, the US dollar. The best day for the US dollar since the day after the election. The dollar stronger across the board against the Mexican peso, the Canadian loonie. And Europe's going to get it too, apparently. Euro dollar down to 102.44 and negative by more than 1 full percentage point. At least on that currency pair, the low since 2022.
And parity basically is all but a certainty. That's what people are saying heading into the remaining couple of weeks and months ahead. Key question is, are markets right now fully pricing in the idea of these tariffs that were announced over the weekend sticking? And if not, are they really selling off or being disrupted enough to really act as that check on Donald Trump's policies, as so many people believe that they had a seat at the table? Do they?
So the reaction pieces across the weekend, I'm sure you've all read them at home. The number one question, your question, how long does this last? Is there scope for negotiation? One thing we do know, after hearing from the president shortly before he got on board a helicopter just yesterday evening, was there's going to be some calls later on today between him and the Mexican leader and the Canadian leader too.
That's right. Trump said he's going to be having both these phone calls today, the Prime Minister, Justin Trudeau of Canada, and also the Mexican president. But then he said this, I don't expect anything very dramatic, Jonathan. We put tariffs on, they owe us a lot of money, and I'm sure they're going to pay. So he's saying he doesn't think there's going to be anything dramatic. That basically signals that these tariffs may come into effect, as he said, just after midnight tomorrow. But when it comes to Canada and Mexico, less so China, is there this scope potentially for negotiation? Goldman Sachs overnight said that while the outlook is unclear, they do think this for those two countries will be short-lived.
This to me is fascinating. Basically, everyone's saying this isn't going to be there for very long. Meanwhile, you talk about the U.S. hit. The U.S. is resilient enough to look past this and avoid recession. That's basically the base case. You take a look at some of the projections from Mexico and Canada. George Saravelos called this something that was a magnitude above Brexit for both what we could see for Canada and Mexico, and that it could really force them into recession in the next few weeks and months ahead.
For the markets, remember the pro-growth story regulated by the stock market? Remember all of that? This came from Jordan Rochester of Mizuho. This is the first test of Trump is good for stocks, and we might not like the answer. Equity futures right now on the S&P negative by 1.4%. We begin with our top story. President Donald Trump slapping 25% tariffs on Canada and Mexico and 10% on China.
We may have short-term some little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that.
So the trade war begins. Canada planning a 25% levy against $106 billion US dollars of American goods. Mexico preparing a response. And China's Commerce Ministry vowing, quote, corresponding countermeasures. The tariff set to go into effect in fewer than 24 hours. Your team coverage starts right now. Bloomberg's Tyler Kendall in Washington. Divya Balji in Toronto. Clayton Harrison in Mexico City. Tyler, first of all to you, a big question for later on today. There will be a series of calls between the President of the United States and the two leaders of Mexico and Canada. What can they do to avoid these tariffs going into effect?
Right, John, the big question, what is the metric of success that President Trump is going to be looking for in order to lift these tariffs? Now, when it comes to reaction here in Washington to what's going on, of course, we've seen allies tell President Trump that they're supporting this because of it will help tackle his immigration agenda and also fentanyl coming over the border. But it's not that easy for all Republicans, particularly when you look at some Republicans that represent top agriculture producing states, such as Senator John Thune, the majority leader, who has said that he would only support tariffs if they were done in a targeted way. I was at Scott Bessent's confirmation hearing on Capitol Hill last week, where another Midwest Republican, Senator Todd Young of Indiana, asked Bessent how he's going to protect American farmers when it comes to tariffs. Bessent said that he was looking into some sort of catch-up provision that would help bring Beijing to the negotiating table when it comes to purchase agreements that they made under the Phase 1 trade deal, which has since lapsed. So big questions there remaining, particularly if these nations can come together when it comes to expanding or addressing these concerns by President Trump.
Divya, when it comes to Canada, we do know that Justin Trudeau announced and promised a retaliatory measure, but it's going to be in a more gradual response. Potentially, is the Canadian government looking for an off-ramp to negotiate right now?
Yeah, I mean, that's what it really sounds like. You know, $30 billion worth of goods right away will be taxed. And then they're going to do a 21-day consultation period to bring on the rest of the $70 billion or more of goods. You know, I think, you know, them having a call today, the fact that there were a lot of Canadian officials visiting Trump and the White House last week, it does sound like they are trying to give some breathing room and some kind of space in order to be able to pull some of this back, or at least negotiate and figure out if anything can really be done. I think the question here really becomes, can something actually be done? Is Trump going to just, you know, stay put and not budge? You know, how much does Canada actually have to, in a sense, give in to the White House and to Trump in order to be able to remove this, if even possible, right now?
Creighton, we're expecting to hear from Mexican President Claudia Sheinbaum later this morning about Plan B that Mexico has to really retaliate more specifically. What are we expecting to hear?
Not a lot of hints beyond that there will be some retaliatory tariffs and non-tariff actions, is a phrase she used. So we don't know exactly what that means. There is some indication, perhaps, that she's talking about some of these working groups that she's been proposing on the border and for security measures between the three countries. Again, that would be more of a conciliatory type measure. So we would expect some mix of carrots and sticks here. It's not going to be, necessarily a wholehearted retaliatory effort, but perhaps some mix of some good and bad.
Creighton, it seems to go further in places like Mexico. And I'd love the response from you, just your thoughts on what is developing there, particularly on the foreign relations side. This is an administration that, as soon as it set foot into the door, went after the cartels and wanted to deem them as terrorist organizations. Then within the fact sheet we saw over the weekend, it accuses the Mexican government of providing safe havens for those very cartels. Just how quickly is it escalating on that front?
Yeah, very. I mean, that was probably the thing that President Sheinbaum here responded to most forcefully over the weekend, was the idea that the government is somehow giving shelter to the cartels. She was defiant on that point, flatly denied it, and said that was an unfair assertion on the part of President Trump.
Creighton Harrison.
So that's the sort of thing that could really, sorry.
We're going to leave it there. Thank you, sir. Creighton Harrison from Mexico City alongside Tyler Kendall in Washington, D.C. and Divya Bauji in Toronto. On that very subject, it feels like there's a lot of tension building there, and I just wonder, I don't really want to wonder too much, just what the next step might be on that front in Mexico.
Well, Pete Hegseth, I believe, said to Fox and Friends that everything pretty much is on the table, potentially even using the U.S. military. Trump has made very clear when it comes to Canada and Mexico, what he is so focused on is illegal immigration and the flow of fentanyl. And if you look at the data when it comes to fentanyl coming from Mexico specifically, we're talking about in 2024, more than 21,000 pounds of fentanyl coming across the border into the United States.
Joining us now to have the market conversation is Laurie Cavacina of RBC. Laurie, good morning to you.
Good morning.
Another interesting Monday morning, very different to the one from last week, but the market pointing in the same direction. You've heard this story a million times over the past 2 months or so, that the president is transactional, there will be scope for negotiation, he's regulated by the stock market. Has that changed?
So look, I think that there's still some of that in the price right now, right? And so the futures are down. They're not down a ton. And as I've looked across the commentary on the street that, has come out since Friday, there still seems to be a lot of hope that there's still some window for negotiation and that if these tariffs go on, it's going to be short-lived. And I find it interesting, sitting in my seat as a forecaster, I find the confidence that some of these things are low odds, low chances, when they're really more unknowable. I find that really interesting, and I think that's somewhat misleading to investors, to be honest. I think that personally, I think these things are more like 50-50, so they may not be baked directly into my outlook either, but I feel like the risks are much higher than people appreciate.
This is a difficult art, more than a science, but how much more could markets sell off if they took it seriously that these tariffs were here to stay?
So I think there are probably two phases. I think the first phase is what I call sort of a 5 to 10% garden variety pullback. That could be a pullback for any reason. We've had a whole bunch of those since 2022. And I think we're overdue for one of those right now, frankly. And if you look at where valuations are, where positioning has been, and where sentiment was on sentiment surveys late last year, it looks like we've had a setup for that, regardless of if it's tariffs or something else. Now, if you go from 10% and you kind of break down more than that, typically you don't sort of stop before you get to 15. 15 to 20% is what I call a growth scare. So if we get to a point, right, where tariffs, are going to happen, the street's expectations are disappointed, they're going to go through, but we don't think that's really going to damage economic growth too much, maybe just hit profit margins, maybe just be painful, maybe just push us down to kind of a level of growth we don't love but isn't recessionary. That's a 5 to 10% drawdown. But if you start to really see investors question the economic growth impacts, that's when you could flip down into the 15 to 20% level. I'm not in that latter category yet, but that's how I think we could get to something worse.
The reason why a lot of people are not in that latter category is because if you look at all the commentary, people are saying the U.S. economy is strong enough and U.S. corporate balance sheets are strong enough to withstand the potential growth impact from any of these tariffs, even if they were to stick, based on the earnings that we've seen, based on what you're seeing in terms of the momentum. Do you agree?
So look, I do think the resiliency of the economy and the consumer in corporate America tends to get underestimated. And that's sort of a bug of this post-COVID environment. That's very much a learning that people took from the post-GFC world, when generally forecasters would start out as too optimistic and have to dial everything down. Now these days we start out as too pessimistic and dial everything up. That being said, if you look at company commentary on the tariffs, I do not think that they are prepared for the kind of tariff episode that we are about to start. If you look back in November, we got a lot of comments at conferences, especially from healthcare, consumer discretionary, industrials, materials, where they were talking about the lessons of the China trade war in 2018 and saying, don't worry, we got this. And oh, by the way, we reduced our China footprint. That's fine. But where did that China footprint go, right? It's gone to some of the places that are being targeted now. And so when we've seen the commentary in this reporting season, tariffs are still probably the dominant issue, especially on this policy discussion. But companies are saying more like, well, wait and see. Some companies are saying, well, we've got some teams working on this. But everybody's saying they're going to pass through the prices. And so I think there's a lot of thinking that's being done. I do think we have to give companies credit for managing through crises. Are they prepared for this one today? No. I don't think so. Can they get there? Yes, but it may take a little time to figure that out.
Trump has been saying this for months, though. So why the complacency?
It's really puzzling to me, Anne-Marie. It's just this idea, I think, of, and we did see this somewhat back in 2016, 2017, just the idea, well, that's not good for the economy. This can't possibly happen. I think there are other motivating factors here. And I think with the tariffs in particular, what I've seen really is just this idea of, well, they can't possibly do that. It's just a negotiation tactic. They're not going to go through with it. This to me has seemed more like a core belief in terms of this being an appropriate policy tool. I think there's a conflation between economic policy and foreign policy that people don't quite appreciate. And we also have a president that's not up for re-election. So I think that's another thing we have to consider and maybe being missed by markets.
Laurie, you're dead on. It's so different this time. The objectives are different. It was about reciprocity with China. This is about the southern border. I would say the backdrop's very different as well. People make the argument on this programme repeatedly that the economy is more prone for inflation this time around. I think we've got to draw a distinction between, by definition, who pays the tariff, the importer. I think that's settled. Let's not waste any time on that. The debate has got to be about how the cost will be distributed. We know that exporters can drop prices. We know that it could be eaten across the supply chain through margins, or in some cases, depending on the product, might be passed on immediately to the consumer. How are you thinking about margins for corporate America now on the S&P 500?
So margin expectations for 2025, if you look at the Bloomberg data that monitors the bottom-up consensus, they've already been falling since last July. So they're still looking pretty healthy. I don't want to confuse anybody there, but they've been sort of slowly, quietly getting reined in. And even before this tariff issue, companies have already been, sort of, I wouldn't say they're raising the alarm bell, but they've been sort of quietly nudging the analyst community and reminding them about all the cost pressures that are already out there. So we're laying this on top. And again, they are making, the one commonality I see in these tariff discussions, we will pass the price along. Now, some companies are other companies' customers, right? So that's going to show up in their margins. But the other thing I've been intrigued by recently is if you look at the consumer sentiment surveys. We've had soft readings on both Michigan and the Conference Board recently. And it's not necessarily what everybody's talking about, but if you dig into those details, inflation expectations among consumers themselves have also been perking up. So that's a problem. The other stat I've been fascinated by is the NFIB Small Business Optimism Index, which has surged. Uncertainty levels have come down a little bit, but are still really, really high versus history. So, I think on Wall Street, we all assume that we all know these things and the average guy on the street isn't aware of them. I know I had a discussion with my in-laws on Saturday night about the tariffs. And one of my colleagues told me his daughter came home from school and she had 6 homework questions on tariffs. So I think the idea that this is not filtering into Main Street, I think we need to sort of check ourselves with that on Wall Street.
Are we knocking on the door of the limits of consumer price tolerance in this country after several years of above target inflation over at the Federal Reserve?
Mohamed El-Erian actually had one of the most salient things to say on this. He said a lot of companies have removed all of those stickers. Remember when they used to have stickers saying the retail price is $2.99, so buy this? They don't exist anymore. And why? Because they all are prepared for dynamic pricing in real time to pass it along.
Laurie, it's good to see you. As always, you're going to be sticking with us. Laurie Cavacina of RBC. Much more still to come on this market. Equity futures on the S&P at the moment, negative by 1.3%. The automakers down across the board. We'll get into that in just a moment. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Good morning, John. It's the main story today. President Donald Trump following through on his promise to put tariffs on America's biggest trade partners. He announced 25% tariffs on Canada and Mexico and 10% on China, all set to go into effect just after midnight tonight. The president admitting American consumers may take a hit. Meanwhile, on the Fed, Trump said the FOMC was right to pause its rate cutting path last week. Speaking to reporters when he arrived in Washington last night, the president said, "I'm not surprised. Holding the rates at this point was the right thing to do." It marks a shift with Trump before the decision calling on the central bank to cut rates. And crews are set to begin lifting the American Airlines jet from the Potomac River today, this coming 5 days after the plane and an Army helicopter collided in a fiery crash that left no survivors. The Army Corps said the process could take 3 days to complete. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. I'm next on the program, Trump's tariff confidence.
Tariffs don't cause inflation, they cause success. Was big success. So we're going to have great success. There could be some temporary short-term disruption, and people will understand that.
The price of those tariffs maybe not as expensive as you might expect this morning. We're down, but not down too hard. We're negative by 1.4% on the S&P. From New York City this morning, good morning.
What is the economic impact of land degradation? Land provides us with 50% of the wealth that we have today. Without healthy land, we cannot have healthy business. The question is, how can we find the balance? It is not only feasible, but it is economically viable.
$1 invested in land can give us a return of $7 to $30. We need to really change our business models to secure a sustainable future.
Live from New York City. What a way to start a trading week. Equity futures down across the board. On the S&P, we're negative by 1.4. On the Nasdaq, by 1.6. On the Russell, the small caps down by more than 2%. Under surveillance this morning, Trump's tariff confidence.
Sir, are you concerned about the market reaction around tariffs?
No. Tariffs. The word tariff is a very misunderstood word. You've heard me say. I say it kiddingly, but it's one of the most beautiful words in the dictionary. Tariffs don't cause inflation, they cause success. They cause big success. So we're going to have great success. There could be some temporary short-term disruption, and people will understand that.
So here's the latest this morning. President Trump doubling down on his decision to impose tariffs on Mexico, Canada and China, indicating he's not too concerned about the market reaction. With that reaction, here's Manus Cranny. Good morning, Manus.
Jonathan, good morning. It depends who pays the tariff and for how long. I've gone for GM in the first instance, down 6.5%. A $25,000 car. Chevrolet Montana, $25,000, 25% tariff, $6,250 extra as of today. And you can be pretty darn sure Mary Barra is not paying that. You and I probably will. Not my kind of truck. But to some context for you, the US imports 3.6 million cars, including pickup trucks. 22% of the total from south of the border. But the big company that really took the pain is VW. 43. This is a European company. They bring in their cars from Mexico, and that is where 43% comes from. This is Ford down 3.97%. Apple. So what happens to Apple? Do they get a carve-out from China? Do they get a carve-out in terms of any other exceptions? Right now, this is about operating margin. BI have run the numbers. About 200 basis points of operating margin are up on the consideration here. So there's lots of different ways to think about these tariffs, the potential for them. Do they get a carve-out from China? 16% of their sales come from China. Jonathan, good morning.
Manus, good morning. Thank you, sir. More from Manus Cranny later on this morning. Check out the automakers. Stellantis, Ford, GM, down across the board here. Laurie Calvasina is back with us. Laurie, let's start with the automakers. Are there certain sectors that will be on the edge of uninvestable for the next few months because of what's happening here?
Look, I think that this, my colleague Amy calls this the paddling duck market, right? Where we price in all these risks under the surface and you don't quite see it translate to the broader index. And I think that's what the market's doing right now. I don't know if I would quite use the word uninvestable. I might have said that about healthcare a few months ago, and it's actually been, doing pretty decently so far this year. So maybe just with heightened policy risk or just heightened risk for quite some time is how I would think about it.
Where is that risk? I mean, we were talking about the auto manufacturers, but I was looking at some of the retaliatory tariffs coming from the likes of Canada and Mexico. They are targeted. Things like whiskeys from Kentucky, oranges from Florida, appliances from South Carolina. What do these all have in common? They are all red states. They're also talking about a Harley-Davidson plant in Pennsylvania. How seriously do you have to take that?
I think you do have to take it seriously. And, we put in our piece this morning, we said, here are the things we're watching. And one of the things we're watching is the vibes. Those are corporate vibes and those are consumer vibes. And I think, again, going back to these sentiment surveys, we just haven't seen this big pop in excitement that we might necessarily have been led to believe we were going to see this year. And I think all of this does weigh. So I don't know if it's any one industry in particular, but I do think it's that vibes thesis that we have to be really careful about going forward.
Well, sticking on vibes, Trump is not just all sticks. He's also carrots. And I know a lot of market participants are very excited about the fact of tax cuts. How do you weigh both of these issues?
Well, look, there's just not a lot of information out there right now, right, on what this tax bill is going to look like. And, we kind of know some vague things from the campaign, right? No taxes on tips. We know that they want to extend the tax cuts. How much more exactly is coming? I'm not quite sure. I will tell you that, again, as I go through sort of the company commentary, I'm seeing a lot of excitement on regulation, things like M&A, again, going back to this anticipated uptick in the vibes. A lot of concern on tariffs. Very few companies are mentioning tax. So I think that's where there's really some opportunity if we can get some interesting news there.
Anne-Marie, I'm pleased you bring this up because I think it's really important. The tariff story is one piece of the overall policy platform. The rest of it is kind of complementary. This is what they're trying to do. And you can sit here and disagree with it. You can say it's the wrong thing to do. You can say it's going to have negative consequences. But ultimately, they've said everything they want to do. They want to put the walls up. They want to run things really hot domestically. And to achieve that, you tell people that if they want to sell in America, they've got to be in America. And to entice that, you've got to drop corporate taxes pretty aggressively. And he said repeated on the campaign trail, they would do that, come down to 15%. And alongside that, there would be a domestic production target. That if you want 15%, you've got to produce the goods here. So I think you've got to see a much fuller policy platform to really think about the economic consequences of what they're doing here.
Also, about the consequences of these tariffs. Are they a negotiating tool or used as a national security concern, or are they going to be used as an offset and a revenue raiser for this package that they want to get through Congress? If they're a revenue raiser, they might be here to stay.
Then there's no scope for negotiation here whatsoever, if this is to offset tax cuts later this year.
Well, and if that is actually something that could work, I am curious about whether the U.S. has the people to manufacture some of this. I'm curious about the labor market required to achieve the policy goals that you laid out. It might be there, and it might actually be something that people are pricing in and seeing this rearrangement as being a hiccup, but then leading to growth. This is one of the key questions.
It takes a long time to engineer the supply side of the economy. If you want to ignite that supply side response, it's going to take years, not months.
So what is the adjustment period, and how is this country going to ameliorate that at a time when the borders are increasingly closed?
Laurie, it's good to see you. Great to catch up. Big week ahead of us all, I think. Laurie Calvasina there of RBC. The conversation continues. We'll catch up with the former chair of the Council of Economic Advisors under President Obama. Jason Furman is just around the corner from New York with equity futures down by 1.4%. This is Bloomberg. Tobin Marcus, Wolf Research, put out a note over the weekend. Markets may now need to take the rest of Trump's tariff agenda literally, rather than just seriously. We're taking it literally this morning, kinda. Equity futures down across the board. We're down by 1.4% on the S&P, on the Nasdaq down by 1.6%. It's the small caps that take much of the pain. We're down by more than 2%. But check out the bond market. Spend some time on this. 2-year, 10-year, 30-year. So what makes the move? We recalibrate things at the front end of the curve. Yields are higher by 8 basis points. The why? Fed's not cutting interest rates anytime soon. If these stay on, maybe even has to consider hiking interest rates later this year if Adam Posen is to be believed. But at the long end of the curve, what do you do with a 10-year yield, Lisa? 454.
Honestly, how do we understand this? Number one, you could say this is just not a stock market that's selling off that significantly. So the risk-off move isn't that great. The bid into the long end isn't that great. That is sort of the cop-out way of not giving really any credence to this whatsoever. There is another way of reading this, which is that a lot of people do not see this as much of a growth hit to the U.S. economy as people expected, and that longer-term inflation could remain elevated. And you could see that in break-even rates, and that could be on the margins what's happening to the 10-year. We need a couple more weeks before we can start to say that.
I would say there's a tug-of-war taking place right now, and there's a lot of tension in the long end of the bond market. A tug-of-war between a demand shock and a supply shock that could lead to inflationary consequences. And I think we've got to figure out what the future might look like if, and it's a big if at the moment, if these stay on.
That's a much more diplomatic way of saying it, the tug of war. People just have no clue. It is, though, notable. The dollar is a haven. The bond market is not. And that is something that you have to take notice of because the moves are big enough in other places that you normally would get a bid into this particular security.
The dollar is getting bought big time. The dollar is stronger against the Mexican peso, as you might expect, against Canada. Europe. Can spend some time on Europe too. Europe's going to get it as well. This is what President Trump has said repeatedly. Europe doesn't need any more problems. Could have an extra one. Euro dollar down to 102.38, and I've just seen a string of analyst notes saying parity, parity, parity. And let's face it, parity is just around the corner.
Look, we're looking at the lowest levels going back for the euro to 2022. What would hold Donald Trump back? And right now, given the fact that you see that inflation came in higher than expected, what ammunition does ECB have to really combat this?
Under surveillance this morning, our top story worldwide. In this market, President Donald Trump ramping up tariff threats to the European Union, saying levies will, quote, definitely happen. So far, the president not specifying a level or a timeline for any actions against the European Union. For China, the Commerce Ministry reacting to Trump's tariffs, vowing, quote, corresponding countermeasures alongside a WTO lawsuit. China has a range of tools to respond to the levies, including export controls on critical minerals and market access restrictions to some American firms. So we're waiting to see what they do, also waiting to see what Mexico does as well. That's going to be a big one a little bit later today, possibly.
Yeah, Claudia Sheinbaum, the president of Mexico, coming out with Plan B and outlining it. That might be more salient than China, considering the fact they don't want to blow all their ammunition now when this is just ramping up.
Wanted to squeeze this story in. If we weren't talking about trade, we probably would have opened the programme with this. Elon Musk saying his Doge team is shutting down some Treasury Department payments to federal contractors. The move suggesting Musk may have access to sensitive systems used at the Treasury. Musk posting on X, quote, the corruption and waste is being rooted out in real time.
So there's a lot of questions surrounding this, and even if Doge has authority to do this, of course, it is Congress that mandates about the money that gets spent. But in this tweet, he's talking about the fact that he has gained access to some of this. I would also say he also sketched out plans for aggressive cuts overnight to U.S. aid. And then he was also talking about assuaging some concerns of bond investors and saying that he and Jamie Dimon are going to be discussing that this week.
More on that story a little bit later. Let's get back to our top story. President Trump set to speak with leaders of Canada and Mexico today, ahead of tariffs going into effect tomorrow, as he ramps up threats against another key ally, the European Union. Jason Furman of the Harvard Kennedy School writing, it's hard to decide if tariffs are worse economic policy or foreign policy. We'll see if Trump caves to the market. Jason joins us now for more. Jason, welcome to the programme, sir. Thanks for making time for us. Let's just start here. How different these actions are compared to what we saw in Trump's first term.
Oh, yeah, look, I thought there were too many tariffs in Trump's first term. I thought they were too poorly designed. But this is just at a massive scale relative to those. And these are against close allies. And this is less than, this is basically 2 weeks in to the administration.
Staying relatively elevated around
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Volatility grips Wall Street as tariff uncertainty takes center stage. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Alex Steele. One word for you, FUD.
What?
Fear, uncertainty, and doubt.
Okay.
There we go. That's what's on the market here. That from Scott Rubner over at Goldman Sachs. It's a good acronym, really, for what we've seen over the last 24 hours within the market. All of that trickling through the S&P. We're right around now the highs of the session. Consider where we were in the futures market, say, just 20 hours ago. An unbelievable turnaround here. The VIX, though, is staying relatively elevated around 18. Gold hitting another record high. The 2-year yield continues to sell off, up by about 6 basis points. Obviously, you take a look at the dollar and the different crosses. There's so much to talk about, Romaine, but fear, uncertainty, and doubt. That's what you see in the market.
And that's all because Donald Trump becoming the first president since the Nixon shock of 1971 to make economic emergency powers to slap tariffs on Canada and Mexico. And the scale of Trump's threat, it represents the largest act of protectionism since Smoot-Hawley in 1930. Bloomberg Economics estimates that if Trump follows through, the average U.S. tariff rate will more than triple, knocking 1.2 percentage points off of GDP and adding about 0.7 of a percentage point to core inflation.
The lesson from before was that the growth effects are large or can be large, and that would tend to dominate any one-time increase in the price level.
And that concern best reflected in the FX market. Implied overnight volatility for the Bloomberg Dollar Spot Index jumping to the highest since just after the U.S. election. A massive weakening in the Mexican peso flipping to strength. This after Claudia Sheinbaum made concessions to get Trump to delay tariffs on her country by 1 month. Canadian Prime Minister Justin Trudeau spoke with Trump earlier in the day and was scheduled to have another call at 3 p.m. Washington time. Nevertheless, the loonie having its widest price swing versus the dollar since 2022. As for stocks getting hit, there are too many to go through right now, but think of it like this. U.S. trade with Mexico and Canada, heavy on cars and automotive parts, heavy on energy and minerals, heavy on electrical and industrial components. That's why solar company Sonova plunging as much as 11% today. GM down as much as 6%. Avocado grower Mission Produce down as much as 5%. And Caterpillar was down as much as 3%, Alex.
So let's take a broader look maybe on where those tariffs kind of land us here. This is a great chart that I saw today from our Big Take story. You should definitely check it out. This is the tariff rate. This red line here is historical data. The blue line is where Bloomberg Economics predicts it will be based on previous experience. Now, the orange dot right here is what was announced today, February 1st. Those tariffs on Mexico and Canada at 25% and China at 10%. It does not take into account the pause on tariffs on Mexican goods. Now, if we get 60% tariffs on China as well as 20% on the rest of the world, we're looking at effective tariff rate here total of about 25%. This is a huge spread. And this is a huge jump. And what it means for growth and then prices and inflation and then for the Fed and for earnings, the question marks in the models, Romaine, must be under massive amounts of confusion.
Well, let's see what our next guest has in his model. Seth Carpenter joins us here in Studio 2, Chief Global Economist at Morgan Stanley. All right, Seth, the question that I'm sure you're being asked repeatedly today, how should we look at economic growth and the potential impact based on these tariffs, assuming Trump goes through with them?
Yeah, well, I mean, I think the last part of your question is absolutely key, assuming he goes through with it. So we put out a piece, a bunch of colleagues in research coming into Asia Open for Monday, and it was, let's game out 3 different scenarios for what might happen if it's mostly a head fake, if the tariffs go on and then they come off after a fairly short period of time, and then if they're there for the duration. And we tried to think through all the different scenarios because guess what happened over the news flow this morning? We saw the announcement about the delay in the tariffs from Mexico by something like a month. That seems like it should leave open the door for further discussions, further negotiations, and so maybe we really are. And so the short answer is you have to start with the way you ended that with, assuming they go on. But what we've said is, you know, a range of views, lots of uncertainties, but it could be a percentage point or more off of growth this year. And remember, we're coming into this year with a pretty strong growth rate in the economy in solid places. We thought it would slow down because we thought tariffs on China would gradually ramp up over time. If we get this front-loaded, really aggressive tariffs on 2 of our big trade partners, you could be talking about a percentage point and possibly more.
I know it's hard to model that side of it, which is probably the more hard number that you would use. I am curious just about the uncertainty and how that could potentially affect economic activity, because let's say he does it, then he removes them, or he reduces them, or he raises them. Is this something that companies, manufacturers, consumers for that matter, can sort of sort out for themselves over however long this goes on? Or do they just sort of retreat and say, we're just not going to do anything?
Yeah, I think some of all of the above. I don't think you can ignore the uncertainty. It has to be relevant. When I talk to our corporate clients, one of the things that they do worry about is where could we be wrong? Where is the uncertainty? And so that's clearly part of it. We got recently, last week, data on international trade. We saw a big increase in imports to the U.S. in December. Some of that almost surely is a reflection of people trying to front run possible tariffs because they didn't know it was going to go on. So it has to matter. But then the economist in me who plays with data says, let's see if we can find some really good empirical measures. And it's really hard to get everything to be consistent, to get a clear reading. And quite honestly, this kind of uncertainty where it's literally the president of the United States who gets to be the final decider, we don't have a lot of experience. We saw this in 2017, 2018, 2019, but it's not as though we have a dozen episodes where we can draw lessons.
And the difference between that last period is the Fed was hiking, not cutting. So right now you're looking at a little over 40 basis points now priced in for the rest of the year. Does this stay the Fed's hand?
I mean, I think that's another key question. So we've been on the sort of dovish side of things because we see inflation really trending down so far before any tariffs get put in place. And it does seem like, including from Chair Powell's last press conference, that as long as there's clear and convincing evidence that inflation is trending down, they'll be willing to very cautiously nudge down the policy rate some more. But, and it's a very important but, at the December FOMC meeting when they filled out their surveys about their own economic projections, they said risks to inflation are skewed to the upside. I think those risks have been reinforced by the prospect of tariffs coming in maybe sooner than people thought. And the data seem to suggest that inflation does pick up after 2 or 3 months after tariffs are imposed, the Fed will believe they'll have their starting point being that the inflation effects will be temporary, that it'll be a level shift higher in prices. But boy, again, the contrast to 2018, they were raising rates very cautiously, but they were also coming off of a decade where they couldn't get inflation up to their 2% inflation
totally
target.
Different.
Absolutely opposite situation here where they're worried about will things keep coming down. So they have no comfort. They can take no comfort from the idea that it should be temporary.
Something that has held up is the labor market. Do the tariff whipsaw affect business sentiment and then affect hiring or non-firing or temp workers?
I think it absolutely can, but before we even get to the uncertainty side of things, the tariffs themselves, and I think this point is underappreciated. If we look back to 2018 and 19, remember, we import a lot of goods into the United States, but they're not all finished consumer goods where it's just a tax on consumers. To be sure, that's a huge part of it. When we have finished goods coming in, you put a tariff on it, it's a tax on consumption, full stop. But we also import a lot of intermediate goods, capital goods. So tariffs are also a tax on domestic capex spending. Tariffs are also a tax on domestic manufacturing because you're taking in components and doing final assembly here. So what happened in 2018 and 2019? Industrial output fell in 2018 in the second half, and it kept falling in 2019. Manufacturing employment was rising pretty strongly in 2016 and 2017, flattened out in 2018, and then fell in 2019. I do think there's a material downside risk to the employment picture here. And again, we're coming off of 2024 where the economy was just rock solid.
But is that just on the manufacturing side? I mean, we know manufacturing is, at least in terms of employment and even in terms of economic contribution, is a little bit smaller or significantly smaller than what we see on the services side. Is there a potential impact on the services side of the economy?
Yeah, so anytime we see one part of the economy start to slow down, it tends to have a ripple effect and starts to affect other parts of the economy. So as the tariffs that are on consumer goods, that tax on consumer spending, there'll be less spending, and my spending, that's somebody else's income. And so I think that matters for just the broader economy. And similarly, people who might lose their job in manufacturing, well, they go out to dinner, they go to see movies, they go to hotels. And so their reduced spending transmits itself across the economy as well. So this really is an economy-wide phenomenon. I think the first wave will be much more localized where you can see the hit from the tariffs, but then it starts to spread out. That's just the nature of what an economy does.
When we talk about the goods affected, at least and the stuff that consumers are going to be keen to, we also talk about agricultural products. Obviously, avocados could have an impact on certain retail, on certain restaurant chains. You have things like apparel. Obviously, that could have a huge impact on certain retail chains. And then there's this whole issue, and it kind of gets a little bit into the weeds, but it has to do with the e-commerce and that de minimis rule that's basically been in place since like the late 30s or 40s, I believe. Will that have a material impact on our economic activity, or is that more of an impact on, the Sheins and the Temus over there in China?
I mean, I think that's my guess. We've been trying to, again, game out lots of different scenarios and say at a little bit of a higher level. And so they're going to be, the one thing I can guarantee you is that we're going to be surprised in some corner of the world because we are in such an integrated economy globally. We have seen some pulls, sort of the so-called multipolar world where things are spreading out, but I am absolutely sure we're going to get surprised because there's going to be a connection that we just can't anticipate.
Who gets it worse? I mean, assuming Trump goes to it. Is it China? Is it the U.S.? Is it Mexico? Is it Canada?
I think it's a little bit of all of the above. What we said in the note we just put out coming into Asia Open for Monday was that if we really went forward and the tariff stuck, Mexico probably would go into recession. That's a really high probability event. The U.S., because we're coming off of such a strong starting point, that percentage point or so off of growth probably is not enough to tip the U.S. into recession. And I have to say, economies like Mexico have a much more challenging time. So if you think about the central bank there, Mexico, they have seen their currency weaken with the threats of tariffs in the air. Then the announcement of them made it go even more. So they have to worry about, can we lower the interest rate to support the real economy? Well, no, because there's a risk that the currency gets even weaker, which then drives up domestic inflation worse. So they're really caught between a rock and a hard place.
All right, well said. I have to leave it there. Speaking of currencies, we're going to come back after the break with a deeper dive into the FX moves. Our thanks there to Seth Carpenter, global economist over at Morgan Stanley. This is Bloomberg.
The Mexican peso rebounding after 25% tariffs are paused for 1 month, and the Canadian dollar stabilizing with President Trump and Prime Minister Justin Trudeau speaking right now. Here to discuss this massive volatility in the FX market today, Dan Tobin is head of G10 FX strategy over at Citi. Hey, Dan, what is currently in the market when you look at dollar MEX and the loonie?
Yeah, well, obviously a lot of concerns about tariffs, but FX is a pretty efficient market, and I think what's most surprising is that we pretty much have gotten to a fair value for dollar CAD based on these tariffs. So we had actually been saying last week, look, if these tariffs do get implemented, we should see dollar CAD up towards 147. That becomes a new equilibrium, and we should probably trade around there. Well, sure enough, the weekend opened up after the tariff announcements. We went right up to 147, and we've kind of been chopping around there. So that looks pretty fair. I think it's safe to say that tariffs are decently priced in at this point. The difficulty now is, are they going to stay on or not? We got the news about Mexico, and we saw this sharp reaction. Everyone's waiting. We're all watching our Bloomberg terminals on the news feed, waiting for that red headline as to how the call with Trudeau and Trump went, as that's going to give us the next leg in dollar CAD one way or the other.
Yeah. We like the plug, Dan. Thank you very much. And then to that point, what's the spread there? So if we're at your kind of base case fair value, what's the spread to the up and the downside based on these headlines?
Yeah, the risk is still for a stronger dollar for a couple of reasons. The first one is just that this is the beginning, not the end of these trade negotiations and potential for tariffs. As you were showing just a bit earlier, right, there's still potential for bigger tariffs on China, broader tariffs as well. And we're still looking at this April 1 deadline for when we can actually be getting a lot more of these to come. The other thing, too, is the U.S. is still in a good spot in terms of economic growth, and Q1 tends to be good for U.S. labor market data. So that's also going to be another factor that continues to support the dollar, not to mention it still remains a relatively attractive currency from a carry perspective. So you still have all of these positive dollar dynamics where even if we do get a pullback, maybe 2 to 3% on a most extreme scenario, you still want to be buying dollars on those kinds of dips, at least for the next 2 quarters while we're still going through these trade dynamics.
I am curious. I mean, it's interesting you brought up the carry trade, because when you look at some of the moves in FX, I mean, you kind of have to go back to that blow up that we had in August, primarily because of the carry trade. And it wasn't just yen, dollar yen, but of course, a lot of people were using the peso as one end of that trade as well. I am curious as to, assuming the volatility tamps down a little bit, or I mean the volatility in Washington, not necessarily in the markets, that tamps down. Is there a case to be made to use the peso as part of that trade?
Yeah, well, first I would say the market volatility and the DC volatility are probably pretty connected here. So I think for market volatility to tamp down, you kind of need some of that dynamic to tamp down on the other side. I think investors are a little bit more cautious here. I think you want to see a little bit more certainty that we're through the worst of it before you really start seeing carry trades from that perspective come back. If anything, you've kind of been seeing a rotation more towards places like Brazil over Mexico while this has been going on. At the end of the day, it's really about what risk markets do and what volatility does, and it's hard to see this being a positive backdrop for risk markets, and it's more likely that volatility stays elevated. So I think it'll be some time. But at the same time, right, you can still own dollars against euro and against other currencies and actually be picking up carry, right? And so you're not getting as much carry as you do in EM, but you're also getting less volatility, and you're actually aligned in case you do get some risk-off moves.
We only have time for one last quick question, Daniel. I am curious here about the yuan and whether that matters in all of this.
Absolutely, it matters for sure. Right now, I think the most interesting thing has been how quiet the response has been on the China side. Now, a couple of things. One, it's the Lunar New Year, so it's just quieter in general. We do have this potential phone call in the next 24 hours between President Xi and President Trump. Yeah. And it sounds like the dialogue has been better, and certainly the language is less aggressive than it is maybe with Canada, for example. So I think there's a little bit of, I wouldn't say optimism, but more so in terms of the sequencing of where the risks are. Yeah. I think the market's kind of saying China might be something more of a Q2 issue, especially as we get past that April 1st deadline. So I think that's why it definitely matters without a doubt, but we're not seeing it leading the charge in terms of moves at the moment.
All right, Dan, got to leave it there. Dan Tobin, head of G10 FX strategy over at Citi, 7.24 on the renminbi right now, and dollar CAD right now still camped out at about 14559. When we come back, our coverage of the tariff troubles continues with a look at the U.S. auto industry. Our top calls is up next, right here on The Close on Bloomberg.
Truly integrated logistics is the breath of fresh air that brings life to companies, not only to operate, but to grow.
Let's get right to our top calls. The stock's moving on the back of analyst recommendations, and we start off with PVH, the company behind Calvin Klein and Tommy Hilfiger, cut to equal weight at Wells Fargo. The analyst citing concern over weak branding, excess inventory, currency headwinds, and of course, tail risk because of China and the potential political risk and impact to its supply chains. Those shares down 7% on the day. Next up, Lifetime Brands, the company behind Farberware, KitchenAid, and other cookware lines, getting cut to neutral at D.A. Davidson because of material exposure to new tariffs. The analyst also says Lifetime hasn't made enough progress improving profitability in Europe, making the company's sales target for the fourth quarter, quote, unrealistic. Those shares down 11%. And finally, auto parts company Aptiv downgraded to market perform at Raymond James. The analyst cites ongoing auto industry challenges such as tariffs. He also notes that two of Aptiv's largest clients, Volkswagen and Stellantis, have the most supply chain risk from those new levies. Those shares down 2%. And those are some of our top calls. We stay in the automotive industry as shares of car makers are on the back foot as a lot of folks try to assess the impact, the cost to those car makers, and more importantly, the cost to car buyers. Dan Levy joins us right now, senior equity research analyst over at Barclays. And Dan, our own internal economists and analysts here at Bloomberg say, look, this could add at least $3,000 to the cost of a car, could add $60 billion to the cost to the auto industry overall. What do you think?
I remain, and Alex, thank you so much for having me. Yeah. Any way you cut it, any tariffs that stick, any sort of increased content requirements for U.S., it's going to add more cost to the auto industry. So it'll vary by automaker. It'll vary by product. The $3,000 is roughly correct when you consider that roughly half of the parts that are in U.S. vehicles are from Canada and Mexico. That's what a 25% tariff does. And anything that you do moving supply chain, that's incremental cost as well.
Hey, Dan, the car industry is lean when it comes to margins anyway. How much could this squeeze margins?
You're right. The car industry is lean when you think about it. The typical contribution or gross margin on a vehicle is roughly 20%. So if you put a 25% tariff, you could see how that wipes away the entire profit. In fact, our back of the envelope math is that the full 25% tariffs with no offset for the D3, Ford, GM, Stellantis would wipe away all of their profitability.
I mean, it's interesting to see kind of the big car makers move on this, but you are seeing a lot of the auto parts makers move on this as well. And I am curious as to whether you have any sort of optimism with regards to the parts makers being able to weather this in a way that maybe the larger auto makers can.
Yeah, I think that the difference is at least the automakers have the opportunity to get price, right? That's the big opportunity for them. They can work down inventory. All of those pieces can help. The challenge for suppliers is that they operate purely on volume. And to the extent that you don't have that volume, that is an impact for them. Now, the hope would be that they could pass some of that price or cost to the automakers, but there would be a volume impact, which would be a challenge for them.
Hey, Dan, before I let you go, what's your top auto stock right now, considering all of this in the background?
Yeah, GM is the name that we've generally been very optimistic on. We do think that GM has overall been very resilient on earnings. We appreciate that from an EV standpoint, they've been the furthest along, but just really good balanced portfolio We prefer North America, but look, they too are subject to tariff risk like others. And we just say mind the volatility would be the main point, but we think GM has a good opportunity.
Hey, Dan, we appreciate that. Thank you very much, Dan Levy over at Barclays. Thank you. So again, maybe it's like a certain buy the dip opportunity at some point in certain names, in certain sectors based on how good their balance sheet is. But how do you find those?
How do you find that, and how do you sort of weather the uncertainty, right? I mean, the idea is that this ain't over. I mean, even if he doesn't do the tariffs, he can threaten them again. So do you use this as a buying opportunity?
I feel like everything is now a big fan chart. Yeah. Like anything that you look at, it's a fan chart. All right, coming up, we're going to get more insight on the global impact of tariffs from Mary Lovely, Senior Fellow at the Peterson Institute for International Economics. This is The Close on Bloomberg.
.30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. Really an unbelievable turnaround in the equity market. I appreciate we're still down 0.6%.
Yeah.
But you look at the S&P minis, it has been quite 24 hours.
It looked like it was going to be a lot worse. Of course, still in the red, but it's the volatility underneath that has to give people maybe a little bit of pause as to whether you come in and really buy this dip.
Yeah, well, last week they did buy the dip, right? The JP Morgan trading arm was saying that retail came in last week and bought about $2.13 billion. Are we seeing that same buy the dip now, or is it more bifurcated, right? As services versus goods, with goods clearly being more exposed to tariffs?
Yeah, and obviously everyone sort of wants to know exactly if these tariffs are actually going to go into place. Mexico seems to have negotiated a 1-month reprieve. We're told that Justin Trudeau, the prime minister, outgoing prime minister of Canada, is on the phone with Trump now.
And we'll bring you any headlines as they cross. So Trump's economic policy, right? Reduce reliance on income taxes and increase reliance on tariffs. Now, back in May, the folks at the Peterson Institute for International Economics warned that Trump's tax proposals entail sharply regressive tax policy changes, shifting tax burdens away from the well-off and toward lower-income members of society, while harming U.S. workers and industries, inviting retaliation from trade partners and worsening international relations. Joining us now for more on this is Mary Lovely, Senior Fellow at the Peterson Institute for International Economics, one of the co-authors of that paper. Mary, how do you understand the point of tariffs from this administration? Is it to really change the trade deficit, or is it a negotiating tactic?
President Trump seems to see tariffs as kind of an all-purpose tool. He has used it, this weekend to try to negotiate about migration and fentanyl across our northern and southern borders. He has also raised issues of trade deficits that we hold with certain countries. He has even threatened 100% tariffs on BRICS nations for moving away from the US-based payment system. So it's kind of an all-purpose tool for him.
So what's the off-ramp then, from the way you look at it?
Well, we see today that there may be an off-ramp in terms of these countries agreeing to do certain things that President Trump seems to believe they're not doing enough of. Here it would be interdiction of migrants and fentanyl. We'll see as we move forward what else he wants from other nations. Obviously, one of the problems is that the more you threaten something but don't do it, perhaps the less potent that threat becomes. So we'll have to see as we move forward how frequently President Trump continues to turn to the trade instrument, as his threat of choice.
Well, that's what I'm curious about. At some point, I mean, you have to make good on this. Otherwise, it does become the boy who cried wolf. Let's just assume, hypothetically, Mary, that he does go through with that 25, 25, and 10, and you see that average tariff rate go up. What is the impact on regular people? We've talked a lot on the show about the impact on investors and maybe the impact on companies. But when I go to the store in a couple months' time, am I going to see a material change in prices?
If the tariffs are actually levied, Romaine, you certainly will. Kim Costing and I released some new calculations this morning on the PIA website showing that for the average household, it would imply about $100 more a month because of these increased tariffs. So where you would see it would be on wood products, other products that are used in building supplies. So if you're renovating a bathroom or trying to buy a new house, you would see that coming through pretty quickly. At the grocery store, given our reliance on Mexico for fruits and vegetables, you're going to see it in tomatoes, avocados, and other types of fresh fruits and vegetables pretty quickly. We would see it almost immediately in energy prices, as some U.S. utilities have already been alerting their customers that they're going to pass on the proposed 10% tariff on Canadian energy products. So you would see it very quickly in a variety of different fora.
So now let's take the other hypothetical and say that maybe he doesn't go through with this, but he spends weeks, if not months, rattling that saber. So for the average person out there, does that scare you away from maybe buying things? If you're hearing all this stuff out there, do you say, okay, I'm not going to go out and spend, $40,000 on a new car or a couple $1,000s on a new washing machine or even, on something, less expensive like, a new suit or a new dress?
Well, you may defer consumption if you feel that it makes your job less secure. However, it's very difficult for American households to protect themselves from this type of tax. There's only so much stockpiling or moving forward of purchases that we can do. So, for example, I can't buy next week's avocados this week. They'll go rotten. So it's really difficult to see how households can really protect themselves.
The other conversation, though, is that we're going to see tax cuts to offset this at the company level, for example. So the pass-through won't necessarily be to consumers. What do you think about that?
Well, a lot of these taxes are going to be on final goods, so that channel will not be operative. Secondly, what we know from detailed studies is that the tax cuts will mostly benefit people at the upper upper end of the income distribution. And Kim and I show this in our report today. While tariffs fall more heavily on moderate and middle income households. So we're going to see a switch from more reliance on income taxes and corporate taxes to reliance on a tax that's highly regressive. So we like to call this, it's a reverse Robin Hood. You're really shifting the distribution of the tax burden in the U.S.
In your experience, how fast does this pass-through come? From tariff to like my food at the store?
It's a great question, and I think it really depends on the market structure. So many of the things we buy are inputs to production process, and for those goods, it may take longer for us to see the effect of prices. It may be very even difficult to connect the higher price to the tariffs. For others, like when your contractor has to go to Home Depot to buy, some wood, because he's renovating your bathroom, he may tell you, I'm sorry, I made this bid at a certain price, but now there's tariffs and this is just eaten up any kind of reserve funds that you may have built into that contract. I'm having friends experience this right now. And things like fruits and vegetables, you're going to see it very quickly because they're small farmers, low margins. Grocery stores are well known to have thin margins. There's no place else for that tax burden to go except forward to the consumer.
All right, Mary, I always appreciate you taking time for us. Really insightful. Mary Lovely of the Peterson Institute for International Economics, and really encourage everyone to go onto their website there. You can see some of the new updated projections they have for the potential impact of these tariffs. And it's funny, she rattled off some things kind of near and dear to my heart. I eat a lot of avocados, and she's right. You can't really buy those, 3 weeks out.
But if you put them in the fridge, can you, though? I mean, they last a little longer in the fridge.
Yeah, a little longer, but you can't really stockpile those the way you can stockpile, you can stockpile lumber if you have the space.
Yes, could do that, yeah. Can't do bananas, though.
No, not bananas. But this gets to this issue, too, of how consumers navigate this when it does get to crunch time. Just trying to figure out what this is. And there are a lot of people, they don't pay close enough attention to this stuff. So they're not going to know about it until that day when prices finally shoot up and they go to the grocery store and they're wondering why, their favorite item is a lot more than what it used to be.
Well, that's what I was wondering what that pass-through is, like how fast that winds up happening. And if it's just a negotiating tactic like what we saw today with Mexico, maybe you don't feel it at all. This is just a headline at this point.
Absolutely. Yep. All right, coming up here, we're going to continue to dive deeper into the potential impact of our trade relationship And we're going to focus on semiconductors. They're in the red across the board on the back of those tariff announcements by the president. A deeper dive into that sector as part of our Stock of the Hour right here on The Close on Bloomberg.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
Chip stocks getting hit after President Trump's announcement that he plans to impose tariffs in the coming weeks. Joining us to discuss is our chip extraordinaire. Bloomberg's Ian King joined us from out there on the West Coast. And Ian, our screen showing some of the declines on the day, not massive declines, particularly in light of the drops that we saw off of the DeepSeek news about a week ago. That's almost ancient history at this point, Ian. But when I look at these names, NVIDIA, Broadcom, Qualcomm, ARM, TSM, are we importing a lot of stuff from those companies?
Yeah, it's a little bit more complicated than that, as we've discussed. Directly, we're not importing an awful lot, probably single-digit billions. Where this becomes a bit more scary for the industry is if we're talking about the actual devices that semiconductors go into. If we're talking PCs, servers, industrial equipment, cars, all of those kind of things are massive markets for the chip industry. If we're going to make those more expensive, if we're going to hurt demand for those devices, then we've got a problem.
Do you think that we're going to see export tariffs on other countries that actually make more of these chips than we use, like a Taiwan or Korea?
Yeah, I mean, this is obviously the concern that a natural extension would be to these economies that are big importers into the US and big exporters to the rest of the world. Now, as you just pointed out, that would be South Korea for memory chips, or Taiwan for the kind of logic chips that we all need that are the heart of our iPhones. So again, there's this kind of background concern that we're only at the beginning of this program. We don't know how it's going to pan out, but however it pans out, we're dealing with an industry that is a kind of a poster child for globalization, and that anything which starts to throw up barriers is going to be bad for it.
Well, one of the issues that came up when I was doing some research into it this morning wasn't so much the idea of how the U.S. tariffs will affect the chip industry, but how potential retaliatory tariffs could. Some of those names I mentioned, a couple at least, are based in Europe. And obviously, who knows what we're going to do with regards to Asian countries. And maybe they're in a position where they retaliate. Is there any way to sort of factor that into your general outlook, Ian, that if, the Dutch want to hit back on us, or Taiwan, God forbid, want to hit back at us, what type of impact that would have?
Yeah, no, that's a very good question, and there's a deep-seated concern. We've already seen a precedent for that. The U.S. took trade action against China. China then turned around and said, hey, we don't like what your company's doing. We'll take a closer look at them. So a country like China is actually the world's largest market for chips. You look at the Netherlands, they're the biggest producer, the dominant producer of a crucial piece of chip equipment, lithography, that everybody needs. We talk about Korea. We need memory chips from Korea. So this is a very interdependent world. And yes, the US is the biggest creator of semiconductors, owns a vast swath of the technology that goes into semiconductors. But other people have big bats as well, and we need to be careful of them.
Yeah. All right, Ian, thanks a lot. We really appreciate it. Thank you for joining us. Bloomberg's Ian King. And of course, we even saw on the DeepSeek news last week threats about chip curbs, again, from NVIDIA, say, to China.
Yeah. And I think, too, I got this sense coming out of what we heard out of Donald Trump's mouth over the weekend, that this is going to go a lot further than just tariffs itself. There's a lot of other curbs that he's looking at here to, in his words, protect the U.S.
Yep. It's a transactional presidency. So there's lots on the docket there. All right. We're 15 minutes away from the closing bell. A totally different session than we'd have predicted earlier in the morning. We're off the lows. This is Bloomberg.
We got recently, last week, data on international trade. We saw a big increase in imports to the U.S. in December. Some of that almost surely is a reflection of people trying to front run possible tariffs because they didn't know what was going to go on. So it has to matter.
Seth Carpenter over at Morgan Stanley kicking us off to the close 50 minutes ago, a conversation about how corporate fundamentals could be affected by these tariffs.
Yeah, and sort of where in the market you see that. I want to point out we were talking about semis, but also the transportation stocks are getting hit really hard, and we're off the lows, but like not as much as we're off the lows when it comes to, say, the S&P, and tech still down by 1%. So clearly there's certain areas of the market that are going to continue to struggle without that kind of clarity.
Yeah, and we were going through and we were trying to figure out how much cross-border transactions take place with regards to, say, the auto industry. And obviously cars, it's big. Auto components even more. It's something like 80% or something is basically coming across the border from Mexico. And I don't know how you replicate that in even a small degree here in the U.S., and at least in the short term.
And talking to Dan Levy over at Citi in terms of what it means for the automakers, he was saying it could wipe out profits at the end of the day with that kind of intense tariff without being able and passing through. That's something. Yeah.
Well, at least for right now, the market is taking it in stride with about 8 minutes to go until we get to those closing bells. It was an ugly open, and just about an hour into the session, the S&P was down about 2%. Rebounding nicely here as we get to the close, still in the red, but back at that 6,000 level. Steve Soshnick joins us right now, chief strategist with Interactive Brokers. And I do want to start with this bump up that we've seen in stocks. Again, still in the red, but well off the lows, and whether that should be interpreted as an encouraging sign.
It's not a discouraging sign compared to where we were. Okay, so we came into today with 25% tariffs on basically our best friends among trading partners, and so now one of them got postponed in time for the Super Bowl when you need avocados and Corona beer, and so it's definitely better than it was, but we're not out of the woods yet.
Well, so then is there a dip buying opportunity here? I guess my question is more so that if you buy this dip, are you just going to get killed, in 3 weeks when Trump says something else about tariffs, or whatever reprieve that Scheinbaum got today on March 1st, all of a sudden that 25% becomes a reality?
I think it's a very uncertain time. There's a lot of reflexive dip buyers that we see. And, we have very active traders among our customer base, and, their time horizon might be minutes, might be hours. So they're pretty aggressive at buying dips, and it worked great this morning, although quite frankly, the market was sort of plunging when the news came out. So I don't know how many of them did that. But, from a longer term point of view, from a medium to longer term, if you buy, I say buy volatility on dips as well as stocks on dips, because we're seeing this. On Friday, before the news came out, VIX was below 15. And when we opened today, it was nearly 21. So, I would say be aware of where your hedges are. And I think it's important to take advantage when volatility dips, because we're clearly entering a more volatile period.
But to that point, is it better to do that with individual stocks versus the index as a whole? Because you could argue that 18 on the VIX doesn't necessarily represent the uncertainty that we see.
Oh, it definitely, depending on your portfolio holdings, it's probably better to target it more. Obviously, around earnings, there's certain specific characteristics. Last week, we saw it with the big stocks that came out, and I started to look at Google earnings for Alphabet earnings for tomorrow, where it was starting to they're pricing in some real volatility. That gets expensive though, and so that's why I say be optimistic. Sometimes the right move is individual stocks. Sometimes the right move is just index volatility. Depends a lot on your holdings and your bias.
Where are the flows going right now?
The flows continue to be in the names you'd expect them to be. It's very much tech focused.
Really?
Nvidia is by far the #1 most active stock on our platform. A week ago today, I'd never seen that much buying in one specific name on a net basis. Net buying activity was the biggest I could remember. I don't sort of keep the exact number. And we'd seen a lot of activity, let's say, in quantum computing, which has faded because the big name techs came back into play. Perpetually at semiconductors, a lot of activity in double levered single stock ETFs, NVDL, TSLL, that kind of thing. It's Nvidia, it's Tesla, it's semis. It's the names you'd kind of expect that dominate the news flow, dominate the trading cycle as well.
Is there hedging going on out there visibly that we can see?
Yes, there is. I mean, we've seen a lot of option flows as well. Sometimes it's sort of doubling down. Last week in Nvidia, we saw net buyers of calls, net sellers of puts, and net buying of stock, and it did work. Let's say the first day we got a good bounce.
Yeah.
But but basically we are seeing a lot of option activity as well. Option flows in general are skyrocketing. A lot of that has to do with the new shorter expiration cycle, the so-called 0DTE options. But it's gotten people trading options somewhat speculatively. But the strategies are not just let's buy options and go crazy. There's a lot more trying to realize the fact that your options decay the fastest when they're short term. So the trading is more nuanced than just sort of let's buy everything and hold on.
I am curious too, when we talk about, at least with shorter term investors or tactical investors who to a certain extent actually live and breathe off this type of volatility, I do wonder just about if there's enough exposure out there where if something goes against that trade, would it be systemic to the market, or is it just going to be confined to basically those traders and their cohorts?
No, the problem is if it gets bad enough, because the indices are so concentrated, and you've done reporting on this, so you know. But when you have 8 stocks being a third of the S&P 500, or those same stocks being 50% of the Nasdaq 100, if there's a rush to the exits like we saw last week, it can take things down. Now we didn't see a ton of margin trouble on that one because even NVIDIA at its worst was down 16%, and that's below sort of the margin call threshold. But you have people employing, again, when you start getting into heavily leveraged strategies or writing options, it can get into trouble. And if it mutates, if one day the buy the dip doesn't work, and unfortunately some point in the cycle it doesn't, and I can't tell you when that is, that can metastasize because you basically have like sort of a rush to the exits. I'm not calling for that, but that you asked where the risk is, and that is clearly a risk that's out there.
All right, Steve, always great to have you.
Thank you so much.
And I didn't call you Scott once during this whole thing. Steve Soshnick, Chief Strategist with Interactive Brokers. Great insights here as we count it down to the closing bell. It's just 3 minutes to go, Alex, and we talk about an S&P down about 0.7%. But I was looking through the names here. I mean, on a points basis, it's Apple, NVIDIA, Tesla, Microsoft. But you look at a lot of the names that are higher. It's Meta, Costco, AbbVie, MasterCard, Procter & Gamble.
Yeah, so definitely some of the safety plays from that sense.
Yeah.
But you'd also think, and maybe we'll get some commentary on Clorox after it reports, what their risk for tariffs would be. You would think that the consumer staple guys would also be hit on that point.
Yeah, also I was kind of curious you didn't see any kind of real wholesale buying in Treasury space. Like people weren't flocking to that as a safe
A little bit to the back end.
Yeah.
I mean, earlier in the day, and then that kind of flattened out a little bit. But you saw some selling in the front. But you're right, not as much. But gold, as well as the dollar, that's a different story. That you saw some safety bit there.
Gold getting a bid, so too is Bitcoin, the dollar getting a bid as well. The VIX remaining elevated right now, not as high as that 20 that it opened, but 18.5 as we break down all of today's market action in our global simulcast that starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, taking you through that closing bell, a global simulcast. It starts right now. Scarlett Fu in the TV studio, Carol Masser and Tim Stenovic in the radio booth as we welcome our audiences across all of our Bloomberg platforms on yet another Manic Monday.
Yeah, absolutely. Perfectly said. And it just shows the sensitivity to things coming out of the White House. And certainly,
by the way.
The Bengals. I think what's interesting is that you did see selling right at the open, understand because of the tariffs. And then as things rolled back, at least for Mexico, at least for another month, it just shows again how hypersensitive investors are about all of this.
Yeah, I mean, I wonder if we get
any
information when we get information about Canada and the call that the president has had with Prime Minister Justin Trudeau, how that changes the picture, given what we heard from President Sheinbaum of Mexico earlier in today's session and the way we saw that reversal after that information came from her that the U.S. had held off for a month.
Yeah, well, I mean, there's a lot of wait and see moments right now. But what we can say is that a lot of people are flocking to safe havens. Certainly, if you look at the S&P 500, you see that in the sectors that are gaining. And also gold prices are higher as well. And Treasury is getting a little bit of a lift.
Just in that back end. But it was interesting. Last week, JP Morgan Trading Desk said they saw a lot of retail buying. And we did see a buy the dip scenario today. I mean, remember futures yesterday? You look at that intraday chart of the S&P minis for the futures. And that was a huge dip that we've come back from.
Yeah, a little bit of a repeat of what we saw last week, of course, after that deep seek scare. We should point out we do get some earnings after the bell from Palantir and NXP Semiconductors, as well as Clorox. As for the market moves today, we're well off the lows of the day, but still in the red, with the Dow Jones Industrial Average lower by more than 100 points, or about 0.3%. It takes a while for these numbers to settle, but it looks like the S&P 500 is going to settle just below 6,000, down roughly 46 points, or about 0.8%. Though we should point out it was down as much as 2% on the day earlier in the session. The NASDAQ Composite down about 1.2%. The NASDAQ 100 down 0.8%, while the Russell 2000 will close out the day lower by 1.3%.
All right, Romain, going to the S&P 500, most names in the index are lower today. Scarlett, we've got 323 names losing ground today, 179 to the upside.
All right, let's take a look at the IMAP, which shows how the sector has performed. And what you'll see is the biggest sector in the S&P 500, tech, losing 1.8% on the day. Consumer discretionary, which includes automakers, home builders, and retailers, down 1.4%. So those are names, certainly retailers and automakers, that would be affected by tariffs. Industrials also down 1%. Your green slices of that pie include consumer staples, utilities, energy stocks, typically more defensive. They have some dividends to protect them from all the headline risk.
All right, let's get to some of the individual gainers. There's a lot of red on that IMAP chart. So my gainers are not necessarily names we talk about a lot here, but IDEX Laboratories, that one finishing the day with about 11% gain. It's a $38 billion market cap life science and diagnostics company. It makes products for vet offices, so veterinarians. Top gainer in both the S&P 500 and the NASDAQ 100 on this Monday, rallying after posting fourth quarter profit and revenue that topped estimates, driven by the companion animal group diagnostics, reoccurring revenue gains. That's straight from the company. Hey, here's another one.
Animals? That's pets, right?
So basically it's vets and pets.
All right. Yeah.
All right. Just trying to sound, I don't know, whatever. All right. Stratasys. Let's get to that one. Another one. Again, not a name we talk about, but up 21%, rallying the most in more than 3 years. Intraday. It's a small cap company, folks. I will point that out. Makes 3D printers, up after Fortissimo Capital agreed to buy 14% of the 3D printing company. So that was an outperformer here. And then Triumph Group. This one was up almost 34% in today's session. It's a $1.9 billion market cap aircraft parts manufacturer, jumping the most ever. Private equity firm Warburg Pincus and Berkshire Partners agreeing to take the aircraft parts and services supplier private for about $3 billion, including debt. So definitely some outperformance there.
Okay, let's look at underperformance. And we go no further to some of the biggest companies in the S&P 500. Apple shares down 3.4%, actually down this year. Close to 9% at this point. Stocks did sell off, ones that were most exposed to tariffs on Canada, Mexico, and China. They did bounce off their lows after we got the delay on tariffs on goods from Mexico. Apple's certainly one of those companies with a huge exposure to China, not just from the perspective of sales to China. We've been covering that closely over the last few weeks as concerns about iPhone sales have has been an issue there. But also, of course, when it comes to the manufacturing of these products. Bank of America out with a note. Says, though, that they see the potential tariffs on impact as manageable, with limited impact on earnings, saying that they only see a 5-cent EPS impact from the new 10% tariffs imposed on China if we assume that 50% of those devices can be sourced from other countries. Tesla shares falling today by more than 5%. This sort of a double dose of not so great news for Tesla. And the tariff news certainly sending a scare throughout the auto industry. I'm going to talk about GM next. Even though the cars that are made in the U.S. by Tesla are sold in the U.S., there's not a huge impact there. The concern is about retaliatory tariffs about those U.S.-made cars sold in other parts of the world, or perhaps targeted tariffs to cars sold in other parts of the world. Then there was also this news out of California, Tesla registering fewer cars in California in all 4 quarters of 2024. Sales of its Model 3 plunged 36% for the year. It could be, one of the reasons could be the result of the active role of Elon Musk in the U.S. government and during the U.S. election, as people were thinking about their next auto. Speaking of autos, General Motors shares falling today. We did see shares of automakers with big exposure to Mexico, Canada, and China being affected by the tariff threat. RBC came out with a note that said in its worst case scenario that Trump's Mexico and Canada tariffs could result in double-digit earning hits to the big three, including General Motors.
Can I just add another honorable mention on there? Was the drop that you saw in BlackRock today. This news kind of got buried here, but Vanguard Group cutting its fees down to basically next to nothing here, and that really slammed a lot of those big asset managers like BlackRock, State Street, and Invesco.
Was it 7 basis points for Vanguard?
On average, yeah.
Wow.
That's huge. That's huge. All right, going to the bond market, guys. We've been talking about it all day, but you didn't really see that safe haven buying in the back end that you might have expected on a day like today. But that front end really taking a hit because that's where you're going to see the readjustment of Fed policy. We're now pricing in just about 40 basis points of cuts so far for this year, Romain.
Palantir earnings crossing the wire. Their fourth quarter numbers look like a beat here. Adjusted EPS at 14 cents a share. The street was looking for 11 cents a share. Revenue $827.5 million. The street was looking for roughly $776 million. Here's your forecast going forward. The first quarter revenue numbers, $858 million to $862. That's the range. The lower end of that range, well above what the street was looking for on average. And for the full year, 2025, it sees revenue of $3.74 billion to $3.76. The low end of that range, once again, above what the street was looking for. You see those shares getting a nice pop here in the after-hour session, up about 8%.
And worth mentioning that this is a company that's posted revenue growth in the fourth quarter of 36%. So a fast-growing company, but also rich valuations, right? It gained 392% over the past 12 months. And if you look at the valuations, and I know this is a stock that doesn't trade on valuations, but trailing PE 400, forward PE 181. Carol.
Well, that's what I was going to say, right? It was so much about it, and it looks like the company is delivering because you are seeing it really pop here in the aftermarket. But you got right to it. You know, the expectations, the valuations around this one, if it wasn't going to deliver, you could have assumed that investors were going to be pretty disappointed. But that outlook seems pretty upbeat.
And going through the press release, looking for commentary from Alex Karp, who's the co-founder and CEO of Palantir. He says that the business results continue to astound, demonstrating our deepening position at the center of the AI revolution. He says our early insights surrounding the commoditization of LLMs have evolved from theory to fact. Sort of shout out that the software that is on top of the LLMs, an important play for them at least.
Yeah, also just taking a look in terms of their adjusted operating margins in general. Some analysts were highlighting the fact that their margins could be looking at some tough comps. And so thinking about some margin pressure because of that. And also given that customization required for some of their new products. But it doesn't appear that we've seen that so far.
All right. So we got Palantir up about 14% here in the aftermarket. We'll continue to watch any other headlines that come across on that. In the meantime, I'm thinking about the Super Bowl. Excuse me, this weekend. Sorry, I got a little choked up here. But you know what? You kind of don't have to wait for the big bucks because you can kind of find them if you are a high school player, a really standout high school player. And this is a story from the Wall Street Journal. It talks specifically about Adidas naming a star baseball shortstop as his newest big name endorser. This whole story gets into folks that are being pulled out of high school. They're not maybe even eligible to vote, but they're getting named name, image, likeness. They are like signing some really big deals with some really well-known companies.
Yeah, 40 state high school associations in the U.S., according to the Journal, now allow their students to sign these NIL deals. Texas is a holdout, even though high school football is so important in Texas.
Yeah, Friday Night Lights, right? Mm-hmm. Yeah, well, I mean, U.S. sports, youth sports, I should say, just got a lot more cutthroat competitive with NIL at a younger age. The other story we've been tracking, speaking of the Super Bowl, is Robinhood launching Super Bowl event contracts for retail traders. So if you want to place bets on the outcome of the Super Bowl, you want to kind of tune out overall news, political news, even market craziness, here's your chance to go bet on more sports through Robinhood.
Sports.
I just want to eat, nachos and watch the game.
Wait, Carol, you're from New Jersey. Are you rooting for the Eagles? Are you close enough?
No, totally Kansas City.
Also,
are you kidding?
Is it because of Taylor Swift?
No, I'm a giant family all the way. All right, guys, that's a wrap. Palantir up about 12.5% here in the aftermarket, so certainly something to watch into the Tuesday trade. That is our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We call it the closing bell. We'll see you again, same time, same place tomorrow.
Our coverage continues here on Bloomberg Television. A deeper dive into Palantir, a deeper look at AI. Derek Yan, senior investment strategist at Crane Shares. He joins us after the break. This is The Close on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic, right across the screen, but it could have been a lot worse. An S&P 500 that opened down more than 1%. At one point on the lows of the day, down 2%, finishing the day only down 0.8%, as dip buyers did come back into this market, shrugging off some of those concerns about those tariffs that Donald Trump has threatened on Mexico and Canada. A deeper dive into that in just a second. But take a look at a couple of the sectors that did not.
Okay guys, Indian market हो चुका है close. Forex market in the sense of London session opening timing है 1:30, उसी का थोड़ा बहुत वॉल्यूम आ रहा है. न्यूयॉर्क सेशन ओपन होगा 6:30 में, फिर देखते हैं. क्रूड ऑयल थोड़ा सा ये सपोर्ट मैं पहले बता चुका हूँ, यहाँ पर 1 2 3 4 बार पहले टेस्ट हो चुका था. दिस इज द 5th टाइम WSL, मतलब थोड़ा वीक सपोर्ट लेवल है, तो इसलिए थोड़ा सा ध्यान से यहाँ पर जिसने बाई किया हुआ है संभल के, थोड़ा सा इसलिए लिखा भी है थोड़ा रिस्की ट्रेड है. थोड़ा बहुत मोमेंटम आ जरूर गया है, लगभग 42 पॉइंट. अगर पूरा गया तो वेल एंड गुड, नहीं तो थोड़ा सा रिस्की रहेगा. फिर अगर नीचे आता है तो यहाँ पर एक सपोर्ट मिलेगा इन एरियाज़ के आसपास प्राइस को. ये 5वीं बार है प्राइस इस लेवल पे आया है. लास्ट टाइम का थोड़ा सा प्राइस एक्शन देखोगे तो मार्केट ने कोई हायर हाई बनाया नहीं है. लास्ट टाइम यहाँ पर प्राइस आया था, यहाँ एक हाई बनाया था, फिर यहाँ पर आया एक हाई बनाया, फिर यहाँ पर आया, फिर एक और हाई बनाया, फिर यहाँ पर आया, फिर एक और हायर हाई बनाया. लास्ट हाई के कंपैरिजन में हायर हाई है, तो थोड़ा सा बायर बचे होंगे, बट एज कम्पेयर टू प्रीवियस वन थोड़ा सा वीक है. देखते हैं कितने देर होल्ड कर पाता है. बाकी नेचुरल गैस में भी थोड़ा सा एक सपोर्ट था, बट ये देखोगे आया था सपोर्ट एरिया पे 1 PM के अराउंड 4 PM होने वाला है. 3 घंटे से वहीं का वहीं साइडवे चला गया. अब देखते हैं थोड़ा ऊपर आ जाए तो यहाँ पर भी एक सेलिंग का ट्रेड प्लान हो जाएगा, नहीं तो या फिर नीचे एग्जैक्टली सपोर्ट पे आ जाए वो भी चलेगा. लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल, जिन लोगों ने नहीं किया फटाफट से. बाकी 8:30 पे इंपॉर्टेंट डेटा है, उसका ध्यान रखना. कल तो वॉलेटिलिटी थी, आज एक्सपेक्टेड थोड़ा सा प्रॉपर मूव मार्केट कर देगा. कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हो. इंडियन मार्केट बंद है, क्लोज हो चुका है इन द सेंस ऑफ. Guys, come on, don't forget to like the stream.
News when you want it with Bloomberg News Now. I'm Anna Edwards.
And I'm Stephen Carroll.
President Trump has imposed a 10% tariff on all Chinese goods, triggering a series of retaliatory measures from Beijing. China responded immediately after the deadline at midnight in Washington, D.C. had passed, announcing a competition law probe into Google and levies of 15% on imports of U.S. coal and liquefied natural gas and 10% on oil and agricultural equipment. Further measures include export controls on tungsten-related materials and adding the owner of Calvin Klein and Illumina to a so-called unreliable entity list. Bloomberg's Min Lo says there's a lot of scope for things to change form here.
Very precise, very targeted measures, although not extensive, but it shows that China is not going to back down without a fight. Now, some analysts had expected that maybe China will not retaliate so quickly, and clearly this is a very highly choreographed move given that China had waited exactly until after the tariff kicked in at 1:01 p.m. local Beijing time before announcing these series of coordinated measures. And this comes as Trump had said he plans to speak speak with President Xi within 24 hours. That was several hours ago. And he said that if no deal is reached, that the tariffs could be, quote, very, very substantial. So 10% is just the starting point. It could go up or go down from there, depending on how negotiations go.
Analysis from Bloomberg's Min Low there, as the news generated a relatively muted reaction in markets.
President Trump, meanwhile, decided to delay 25% tariffs on goods from Canada and Mexico for 1 month. And that came after new commitments from both countries to combat migration and drug trafficking. The concessions include Mexico sending 10,000 National Guard officers to the border and Canada creating a new strike force with the US to fight organised crime. But Bloomberg's Dan Flatley says Trump's deal to pause tariffs still leaves a number of unanswered questions.
It would seem that he has a victory to declare with this deal with Mexico and Canada at this point, although we really don't know what's to come, what will happen after 30 days. And again, we still have those other two things on the table: revenue, which he needs for the tax cuts, and rebalancing trade, which was one of his campaign promises. So I don't think this is over by a long shot, but this is sort of the opening salvo in what's to come.
Dan Flatley, they're referring to previous comments from Donald Trump when he said he'd use the revenue from tariffs to generate money to pay for tax cuts. The news pulls the three North American trading partners from the brink of a trade war that economists warn will hurt US growth, worsen inflation, and possibly plunge Canada and Mexico into recession.
The Prime Minister, Keir Starmer, says the UK isn't choosing between its alliances with the EU or the United States. That's after Britain appeared to escape tariff threats from Donald Trump, who said measures against the EU are, quote, definitely coming. Starmer was speaking in Brussels, where he attended a meeting of EU leaders last night.
It's early days. And I think what's really important is open and strong trading relations. And that's been the basis of my discussions with President Trump. And I know that intense US-EU discussions are planned.
Keir Starmer speaking during a joint press conference with the NATO Secretary-General. Meanwhile, the pound is being seen as an unlikely haven in the market turmoil provoked by the tariff threats. Doesn't stop it losing more than the euro in this morning's session, though. The UK's services-focused economy and improving relations with the EU and US are contributing to that pound relative resilience.
Austerity may be on the cards in the UK once again. That's as the Treasury has told government departments to brace for spending freezes due to pressure on the public finances. Bloomberg's Tiwa Adebayo reports.
Before taking up her role as Chancellor, Rachel Reeves vowed there would be no return to austerity under a Labour government. But that promise is becoming increasingly difficult to keep as her party contends with high borrowing costs and stagnant growth. Now, unprotected government departments, including justice and culture, are facing significant budget pullbacks, with some modelling flat cash spending plans or 3 to 5% real terms cuts. That's despite a $50 billion uptick in overall spending in last October's budget, which saw most funding reserved for health, education and defence, whose spending is protected. The government's full review, which will determine how the overall amount of cash is shared between departments, will be published in June. In London, Tiwa Adebayo, Bloomberg Radio.
UBS has announced plans to boost share buybacks this year after its profits beat expectations in the fourth quarter. Net income came in at $770 million, boosted by a big beat at the investment bank. UBS now plans to buy back $1 billion of shares in the first half of the year and an additional $2 billion in the second half of the year. The CEO, Sergio Amotti, told Bloomberg how he's viewing the risk from a US trade tariffs.
I can see inflationary pressure coming out of tariff war, and that in turn would mean that central banks would need to stop their easing path, potentially even reverse, something that is not priced in the market.
That was the UBS CEO, Sergio Amotti, speaking to Bloomberg. The shares of UBS, though, trading down by 3.7%, as there are some concerns about capital requirements limiting the ability of the business to continue returning cash. Meanwhile, in the sector, in France, BNP Paribas' fourth quarter profits also beat estimates, coming in at just over 2.3 billion euros. The French lender also announced plans to buy back over €1 billion of shares and a higher than expected dividend.
Well, those are your top stories. On the markets, we're looking at European equities lower on the Stock 600 by 0.4%. The CAC 40 in Paris down by just a tenth, helped by BNP Paribas shares, which are up by 2.7% to lessen the losses there. The DAX in Frankfurt also just a 0.1% lower. On Wall Street, S&P E-mini futures are down by 0.2. NASDAQ futures are a 0.1% lower. That's news when you want it with Bloomberg News Now. I'm Stephen Carroll.
I'm Anna Edwards, and this is Bloomberg.
Today, Trump's tariffs rattle global markets, with China, Mexico and Canada all threatening retaliation. Marco Rubio tells Panama to end what he calls China's influence over the canal, or face US action. Concern over fentanyl deaths at a New Mexico reservation. And Beyoncé and Kendrick Lamar are the big winners at the Grammys. It's Monday, February 3rd. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Tara Oakes in Liverpool.
This is a choice that, yes, will harm Canadians, but beyond that, it will have real consequences for you, the American people.
Canadian Prime Minister Justin Trudeau, following President Donald Trump's ordering of sweeping tariffs that are set to begin on Tuesday. Canada says it will take legal action to challenge them and has called for a boycott of US products. Beijing has denounced the 10% tariff on Chinese imports, but has left the door open for talks. China's also threatened countermeasures, something promised by Mexican President Claudia Sheinbaum, too.
Rechazamos categóricamente la calumnia que hace.
Rejecting as slander the White House's allegation that drug cartels have an alliance with the Mexican government. Trump himself says the sweeping tariffs may cause short-term pain for Americans. He has talks scheduled today with the leaders of Canada and Mexico, but has downplayed expectations that they would change his mind. Europe breaking news correspondent for finance and markets, Alan John, is here with the market reaction so far.
There's been a pretty dramatic reaction in European and Asian trading so far today. Also a pretty clear and sustained reaction really across lots of things. What's been happening is people have been selling shares and people have been buying the dollar against almost every other currency. US S&P 500 futures are down about 1.5%. It's not Armageddon. It's a move we'd see on a dramatic day. So, and then in currencies, probably actually the moves are slightly larger. We've got the dollar's up about 1% on the Canadian dollar. That's quite a big move in currency terms. But also, perhaps most dramatically, that's the Canadian dollar at its weakest against the US dollar in over 20 years. Euro's down about 1%. And again, that's a pretty solid move in a currency.
Why have we seen these reactions today? Trump did talk a lot about tariffs on the campaign trail.
The first and the most important is that the scale of the tariffs are at the top end of what investors were expecting. It feels like it's going to be well over $1 trillion worth of imports to the US that are now going to be tariffed. Secondly, it's investors saying it's a little bit hard to see how negotiations follow from this, and so it feels like they're going to have to live with these tariffs for a while. And probably the third reason is that investors took some optimism from Trump's early remarks, and trade and tariffs didn't appear to be the priority or weren't the focus of those remarks. And so now everyone's suddenly reassessing their reassessment almost, and that's why we've seen this quite large reaction today.
US aid will shut down. That's according to Elon Musk. The world's single largest aid donor is on the chopping block as part of his effort to shrink the federal government. In a conversation on his platform X, Musk said the US Agency for International Development is beyond repair and says his boss agrees with him. FBI officials have been ordered to fill out a questionnaire about any role they played in investigations into the January 6 attack on the Capitol. Their answers are due by 3 p.m. Eastern today. Democrats and other critics say Trump's team is carrying out a purge of FBI and Justice Department officials who worked on the criminal cases against Trump and his supporters. At least 4 Palestinians have been wounded in an Israeli strike on a vehicle on the coastal road in the central Gaza Strip. The Israeli military says they fired on a suspicious vehicle moving towards northern Gaza, outside the inspection route specified by the ceasefire agreement. Hamas has described the incident as a violation of the truce. And Spanish World Cup winner Jenny Hermoso is due to testify today in the trial of a former Soccer Federation boss over the kiss that triggered a national Me Too movement. Luis Rubiales is accused of sexual assault plus trying to coerce Hermoso into saying that the kiss had been consensual. Now, over in Panama, Secretary of State Marco Rubio has used his first visit since taking office to warn the president to end what Trump sees as China's influence and control over the Panama Canal.
Well, China is operating the Panama Canal, and we didn't give it to China. We gave it to Panama, and we're taking it back.
Reporter Simon Lewis has been travelling with Rubio.
I think the message is sort of putting the Panamanian government on notice in terms of Chinese involvement around the canal, basically saying, we think this is a breach of the treaty we signed with you to give you control of this canal, and we want you to do something about it. I think it's not explicit what the US is threatening to do exactly, but Trump has already shown with Colombia and also with tariffs against Canada and Mexico that, he's willing to take quite extreme measures that, experts would say will impact the US economy and US consumers as well, to get countries to do what he wants.
Some Panamanians have protested Rubio's visit. How is President Molino responding to Rubio's threat?
The Panamanian government have said the sovereignty over the canal is not up for talks here. They have said, we'll look at Chinese companies who are involved. We'll review those kind of things. The president, after meeting Rubio, did say that he could bring to an end quicker than expected Panama's involvement in China's Belt and Road Initiative. So that suggests they are willing to show some flexibility. Perhaps Panama knows what it might have to do in order to assuage these concerns that are coming out of Washington.
Curbing the deadly opioid fentanyl is one of the justifications Trump has given for his sweeping tariffs. Across the US, fentanyl overdose deaths have actually dropped significantly in the last year. But for one indigenous reservation in New Mexico, the trend is heading drastically in the opposite direction. Deaths increased by 306% in 2024. And as our reporter Andrew Hay learned when he visited, solving the overdose epidemic there is a complicated situation.
The Alamo Navajo Reservation is extremely isolated. To get there, you have to traverse miles of dirt track that becomes impassable after rain or snow, and it's pretty gnarly. And this is a blessing and a curse. It means that they have kept their culture intact, but this isolation has meant that it became a sort of haven for drug dealing. I talked with one man on the reservation. He's called Manuel Huero, and he is a jeweler and a musician. His grandson, Ambrose, died of a fentanyl overdose 125 yards from his home underneath a tree, and it pretty much nearly took the family apart.
Even though if the other person didn't do it, but I used to blame them.
And the untold story of the epidemic, it's what it does to families. It unravels the social structure of the reservation, which is strong, but is really facing its ultimate test with this fentanyl epidemic.
How is the reservation trying to reverse this trend?
So they're trying to get more detox centers, support for these families that are looking after the children of addicts, treatment centers, and law enforcement. Because really, without any police presence, it is just a sort of haven for dealers who are both tribal members and are from off the reservation. I did find a man who is up in the north of New Mexico, a tribal member called Myron Apachito.
I begin a new life here.
And he has had success. He did 7 months in rehab, and he is now working. And Myron knows that he has to stay away. His family is telling him to stay away from the reservation.
The same thing with all my cousins, like they're on drugs and everything, they say the same thing.
So he doesn't have that access to drugs that he would have immediately if he went back to the reservation.
And to the Grammys in Los Angeles for today's recommended read. The event was revamped to be part award show and part fundraiser for those affected by the wildfires. Many of the performances paid tribute, and the show opened with an all-star rendition of I Love LA. Beyoncé won Album of the Year for Cowboy Carter, and Kendrick Lamar
personal. With 8.5 billion endpoints across more than 190 markets, Visa Direct helps to make all of it possible.
So I certainly think you can think about it from President Trump's point of view in terms of his goals. You know, obviously when he's talking about, you know, our trade imbalance or our trade relationship with Canada and Mexico, he's mentioned 3 things in his Truth Social posts: fentanyl, border security, and the economy. But from the Canadian and Mexican perspective, it's much easier for them to go to President Trump and say, look, we'll do something on fentanyl and border security today. We could take a longer-term approach to the economic imbalance. That's certainly something that President Trump still wants. But from a negotiation perspective, I'm all surprised by this because it was what they could give President Trump in the short term. And we'll see what this meeting with Justin Trudeau today at 3 p.m., maybe Canada has a very similar proposition for the president.
So, I mean, I'm not even sure where to go here, but I guess as you kind of phrased it there, Nathan, this is a president that likes to negotiate, he's transactional. And it seems like if the counterparts are equally transactional, that maybe you could avoid a wider trade war. Is that kind of the expectation for the folks down in D.C.?
Yeah, so if you're part of the bull case, I think, in terms of that, you know, President Trump is a negotiator and so forth, this is fitting into that narrative. I mean, obviously, you do have to prepare for tariffs because we do think tariffs are coming, but it just really depends on the sectors and also the broad impact of those tariffs. So let's just say that if Justin Trudeau, the Prime Minister of Canada, and President Trump make a deal today at 3 o'clock, and it follows the same timeline as Mexico, you get 1 month, President Trump is eventually going to come back and say, okay, well, let's talk about those trade imbalances. Let's talk about, in his Truth Social posts, about making Canada the 51st state. But, you know, again, it's about extracting concessions. So what do we have to do for us in the market side? You certainly have to prepare for it. But also at the end of the game, you know, it's very difficult to call because it's just one man's decision. And so we're just going to have to stay tuned and see what happens.
All right, so that's a great point. Stay tuned. What are you staying tuned for? Like, what are going to be the key phrases, the key words, the key pressers that you're going to be watching out for to tell you what the reality is going to be?
So I'm actually looking for whether or not Canada and Mexico fall through, or at least threaten to fall through, in terms of their export taxes. For example, potash. Not something many people talk about, but 90% of potash in the United States, which is very important for our fertilizer industry, comes from Canada. So if Canada wanted to, put on economic pain on a certain aspect of the American system, and especially a system that has voted for President Trump, I certainly want to look for something like that. Because for me to see the changing of the guard, or at least pressure on the president, I have to see it coming from the trade associations here in Washington. Not the big ones like the U.S. Chamber, but smaller ones like the National Association of Manufacturers, or the fertilizer, or the farmers. They're the ones that can put pressure on their allies on Capitol Hill to go to the White House and say, President Trump, you need to step back. So retaliatory tariffs is not something we talk about here much in the United States in this context, but that's really what I want to see if President Trump eventually would move away from these threats.
Is there any chance that Canada or China could also get out of the tariffs after you struck a deal with Mexico?
Well, nobody's out with Mexico. We had a great talk with Mexico, and we had President Sheinbaum is a woman. I like her very much. We've had good relationships, but we have to stop fentanyl from coming in, whether I like somebody or not, and we have to stop the illegal aliens from coming in. I think we've lost 200,000 people on average a year for many years, much higher than the 100,000, could be even closer to 300,000. And they've agreed to put in 10,000 soldiers permanently, like forever, 10,000 soldiers at their side of the border and stop fentanyl and illegal aliens from coming into our country. They have a big incentive to do. Other than that, we've agreed to talk and consider various other things. We haven't agreed on tariffs yet, and maybe we will, maybe we won't. But we have a very good relationship. I also spoke with Prime Minister Trudeau of Canada, and we had a good talk in the morning, but I did ask him a couple of questions, like, banks aren't allowed to do business in Canada. Canada is very tough. Canada is very, we're not treated well by Canada, and we have to be treated well.
Well, Australian Treasurer Jim Chalmers says Australia is prepared for a global tariff war but is not immune from escalating trade tensions. Canberra, of course, has deep political ties with Washington, and its direct exports to the US only accounted for 3% of total shipments in 2023. The US has a large trade surplus with Australia, while China remains Australia's biggest trading partner. And Sherry, this is sort of the question as to some of the collateral damage that we could see, right? Not just between the US and some of the countries that it's threatening tariffs and trade action on, but what it means for some of these other trade-reliant nations, the likes of Australia, New Zealand, even Singapore within Asia as well. Let's get some views now from Prudence Gordon, who's the Executive Director at the Australian Centre for International Trade and Investment. Prudence, really great to have you with us. And we sort of pondered this question because we know the downside of what could go wrong if the sort of diplomacy side of things isn't handled correctly. We saw that, in years prior, around the time of the pandemic, and how that sort of came to impact Australia through its alliance with the US, but it's also its trade relationship with China. What do you see as the risks this time around?
Oh, thanks for having me on the show. Look, there are so many risks from this move by President Trump, imposing those 25% tariffs on Canada and Mexico and the 10% tariff on China. It really has created, I think, chaos and a far greater level of uncertainty in markets than we've seen, which is surprising considering the amount of uncertainty that's been in markets for such a long time. But in terms of the key, I guess, dangers with this move, it's really undermined faith in the rules that underpin the system. So now businesses who trade, specifically at the moment, businesses in the US who are trading with Canada and Mexico have no certainty about how they should be dealing with the imports that are coming from those countries. It's just multifaceted problems for these companies, but also companies in Australia and around the world who now lack certainty as to how the US is going to treat imports going forward, and then the knock-on effects of those measures that the US has taken.
There's a lot of direct and indirect impact on economies like Australia, as you say. Broadly, we know that in times of more global trade, economies like Australia and New Zealand benefit, and when that pulls back, you see that sort of detriment as well. Is there a way that Australia can sort of position itself to take advantage, perhaps, of the trade uncertainty with the US by sort of leveraging the fact that, we can put forward Australia as a very stable investment environment?
That's obviously an approach that the Australian government took during the last Trump administration, highlighting that Australia obviously has a trade deficit with the US, that we are a reliable ally, that we are a great place to invest. But at the same time, I'm not sure that they're going to be really persuasive arguments this time. President Bush has come in with a much clearer vision for how he wants to use tariffs to progress other policy initiatives. And I think Australia really needs to be preparing for that 20% universal tariff that President Trump has talked about. Because he said, when he says something, he's doing it. However harmful that might be to US consumers and to the global economy, he's progressing those commitments that he made during the campaign.
Prudence, how difficult of a situation is this for Australia, given that we have seen a lot of other third countries that have had poor relations with the United States, for example, getting these tariff threats lean more towards China. But when it comes to Australia, Australia has had its own issues with Beijing and tariffs.
Absolutely. I think I would be surprised if these moves by the US administration push Australia closer towards Beijing. I think what you will see is what Australia with Japan did under the Comprehensive and Progressive Trans-Pacific Partnership Agreement, and that was where the US had pulled out of the Trans-Pacific Partnership, but Australia and other like-minded countries who see the value in trade rules and open markets came together to continue what they'd started with the TPP. And I think you will see more of that, not necessarily moving towards Beijing, but definitely looking to the European Union, for example, to Japan, to South Korea, to ASEAN countries, to really work together over the next 4 years to try and limit as much as possible the damage done by these really erratic implementation of these huge tariffs.
You mentioned the TPP, and of course that has evolved into a whole different framework already. Are these multilateral settings now a thing of the past, especially with the Trump administration?
I think with the Trump administration, yes, absolutely. And it started under President Obama with the US withholding consensus on the appointment of appellate body members, which really disrupted the World Trade Organization dispute settlement system. But obviously under the Biden administration, the US really only progressed the Indo-Pacific framework agreement rather than any, usual kinds of trade agreements that we would see the US engaging in prior to President Trump's first administration. So I think for the US, it would be, really surprising if they were to re-engage on the free trade agreement kind of negotiation. Obviously, President Trump in his first term renegotiated the US's agreements with South Korea and with Canada and Mexico, but even those renegotiated agreements weren't enough to stop President Trump imposing these new tariffs on Canada and in a month's time Mexico. That said, he did negotiate an agreement with China, which identified specific market access requirements that China was meant to comply with. And under the new trade policy, America First trade policy that the President Trump's second administration's just put out, they want to review China's compliance with that agreement. So whether he wants to progress those kinds of agreements, I think that's something that we're likely to see rather than your traditional multilateral or bilateral or regional free trade agreement.
Prudence Gordon, Executive Director at the Australian Centre for International Trade and Investment. We appreciate your time. And we do have more on Australia Ahead. That's every Tuesday at 11:40 a.m. if you're watching in Sydney, 8:40 a.m. if you're joining us from Hong Kong. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. You can find it on Apple, Spotify or Bloomberg.com.
Moving money isn't just transactional, it's personal. With 8.5 billion endpoints across more than 190 markets, Visa Direct helps to make all of it possible.
What could China do to make the same arrangement? The president says he'll be talking with China in the next 24 hours.
I think the real question is, will China do anything to try to make the same arrangement? It's a different cost-benefit analysis from Beijing's standpoint. They're already under significant tariffs that have been in place for, the entirety of the Biden administration and at least half of the Trump administration's first round now. And this is an increase in the tariffs that have been placed on their imports, but it's not it's not the same magnitude of change as what Canada and Mexico were potentially facing.
Well, so is it really just that China would rather face higher
tariffs potentially then stem the flow of fentanyl? Because Donald Trump says that's really what this is about, that this is not a trade war, to use the words of those in his administration, but a drug war. China has no interest in trying to address the drug side of this equation.
Right. And Kayleigh, that's the interesting thing is that, actually, China reached an agreement. When President Biden and President Xi met on the sidelines of met in San Francisco last fall, fall of 2023, and had some deliverables. One of the deliverables was that the U.S. would remove sanctions on this part of their Ministry of Public Security that had been leading the effort to crack down on any sort of illicit shipments. And in return, they would get that part of the ministry back up and running and working on that very issue, trying to stop illicit shipments to the United States, not only of fentanyl, but also of, fentanyl precursors that may have, end users who are intending to make fentanyl with them. From the Chinese perspective, certainly what I was hearing in Beijing earlier this month is that they have seen that data regarding the U.S. fentanyl situation has been improving, but they haven't heard anything from Washington attributing it to their efforts to step up cooperation. So I think they already feel like they've been cooperating. They also feel like this isn't actually their problem to solve. This is a U.S. domestic problem. And they feel like they're not getting credit when they do try to help.
Well, it sounds like Donald Trump might get credit for some of the progress that the Biden administration made on fentanyl. Is that your point?
It's certainly possible. I mean, I guess, every new president can benefit from whatever favorable conditions exist when they come in the door. And the fentanyl epidemic has shown some slight improvement in recent months.
Well, so if we consider the kind of wider picture here on U.S.-China relations under Donald Trump, Anna, what exactly should we be bracing for in terms of volatility in this relationship? As he, on the campaign trail, was talking about 60% tariffs on China. Now what it looks set to go into effect at midnight is just 10. Does that mean that there's only really room for things to get worse, potentially?
I don't think so. I think that, when he was on the campaign trail, he certainly said some inflammatory things regarding what he might do in the U.S.-China policy. But at the same time, his talk about tariffs and trade more frequently emphasized closer U.S. trading partners, geographically closer U.S. trading partners, Western trading partners, developed country trading partners, as opposed to China. There was a marked difference between his China rhetoric during the 2016 campaign and the China rhetoric this time around. He did invite President Xi to attend his inauguration. The Chinese government did send someone to be Xi's representative. I think both sides would like there to be a degree of stability, and it is certainly possible that they can achieve that, or at least prevent things from getting worse. But this approach by the Trump administration, right out of the gate, is probably not going to go over well in Beijing. Although they have pulled their punches so far, they really haven't taken any significant retaliatory action or indicated that they will, other than filing a complaint at the WTO, which is pretty symbolic.
Yeah. Well, Anna, China was certainly watching. Beijing was watching as Secretary of State Marco Rubio made his way to Panama over the weekend. Of course, this had a lot to do with the Panama Canal and, yes, China, as the country has now agreed to pull out of the Belt and Road Initiative. Here's the Secretary of State.
We turned over the canal, we turned it over to Panama. We didn't turn it over to China. So you get there, and the Chinese control both entries to the port. We have a treaty obligation to protect the canal if it comes under attack, but our Navy is paying fees to go through there. I understand that it's a delicate issue in Panama. We don't want to have a hostile or negative relationship with Panama. I don't believe we do. But we had a frank and respectful conversation, and I hope it'll yield fruits and results in the days to come.
We spent a lot of time talking about tariffs today, Anna. The significance of this development in Panama means what to you?
Well, I certainly think that this is something that is easier for Beijing to digest in terms of the geopolitical significance of it and the strategic complaint on the part of the U.S. Furthermore, Panama certainly isn't Beijing's only option when it comes to ports in the region. They've just opened a huge port in cooperation with Peru. So do they really need to use Panama? Do they really need to have Panama as a significant participant in the Belt and Road Initiative? I wouldn't expect this to be the thing that upsets the apple cart in the U.S.-China relationship. And I think that it is a much easier complaint to understand when it comes to assessing U.S. interests and where the U.S. is coming from in its aggressive postures.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
There's an inelasticity on the consumer. We've been through so much. Our capacity to bear more price rises is more limited. So take me through the exposures that need to be trimmed on that risk.
Well, I think you have to look very much stock by stock, sector by sector, because at the moment forecasts for this next 12 months are for gross margins almost across the US market to go up quite materially. The market is expecting around 13% earnings growth across the S&P. Obviously, with names like the Mag 7, that's more like 20% plus forecast earnings growth. And so a number of those numbers would have to be looked at again. But again, the challenge we have right now is the level of detail, because it's not just the tariffs that get imposed, it's obviously the retaliation. You've got those series of negative demand and supply shocks that would start to hit. You know, when we looked, again, very broad brush, a few weeks ago at the likely impact of some broader scale tariffs, we talked about the potential to halve that earnings growth, so from 13% to more like 6% earnings growth this year. And that, of course, would be a pretty big headwind for the market. And one of the reasons why we have got a bear case scenario for the S&P of 5,100, which is significantly more downside than our bull case forecast of 6,900 is upside, is exactly because of these asymmetric risks that you see as a consequence of tariffs and retaliation around the world. And hence our view to clients is to think about being broadly diversified, not overly concentrated either in the US market or indeed with any particular sectors. So I think you have to look pretty carefully, but it should mean at least that it's a good year for stock picking given the complexities of this situation.
This is the Asia Trade. I'm Sherry Ann in Tokyo.
I'm Heidi Stroud-Watts in Sydney, where the market.
Good evening, Venkat Ramesh जी. नेचुरल गैस तो कल की तरह बिल्कुल साइडवे चला गया. मॉर्निंग में थोड़ी बहुत सेलिंग आई थी. सपोर्ट जरूर था. पिछले 4 घंटे से ही रुका हुआ है. 1 PM पे आया था. 12430 हो चुका है. 3 घंटे कह सकते हो. बाकी ये क्रूड ऑयल ने भी एक थोड़ा सा रिस्की लेवल था, वीक लेवल था. वहाँ से मार्केट ने फिलहाल सपोर्ट तो ले लिया है. देखते हैं पूरे टारगेट को देता है नहीं देता. लगभग 45 पॉइंट मूव किया. ट्रेल कर लो अगर जो लोग अभी हैं. ऊपर जाता है तो फिर इस एरिया से कहीं एक सेलिंग का प्लान रखेंगे इन दिस जोन. 80 पॉइंट. बाकी अब 6:30 न्यूयॉर्क सेशन की ओपनिंग है. 8:30 जॉब ओपनिंग का डेटा, विच इज़ वेरी इंपॉर्टेंट एज वेल. ऐसा 6300 पे भी रुकेगा प्राइस. रुकना चाहिए इसको. थोड़ा बहुत ना इस एरिया पे ब्लू कलर की लाइन के आसपास भी रुक सकता है प्राइस. ध्यान रखना. एक्चुअली गाइस देखो ट्राई ऑलरेडी कर चुका है काफ़ी देर से, मैंने ऐसा होता है 3.5 घंटे से रुका हुआ है, आ जाना चाहिए था अभी तक। नीचे भी एक सपोर्ट है, एग्जैक्ट सपोर्ट थोड़ा सा नीचे ही है, अगर वहां तक आ जाए तो और बेटर है। क्रूड ऑयल की इन्वेंट्री कल, आज नहीं है।
Min, what has been announced so far from Beijing?
Well, as you said, that antitrust investigation into Google, as well as a series of tariffs, 10 to 15% on American agricultural machines, as well as oil, coal, LNG. A couple of American companies added to this unreliable entity list, and also export control on tungsten-related materials, materials used for solar panels, semiconductors. Very precise, very targeted measures, although not extensive, but it shows that China is not going to back down without a fight. Now, some analysts had expected that maybe China will not retaliate so quickly, and clearly this is a very highly choreographed move, given that China had waited exactly until after the tariff kicked in at 1:01 p.m. local Beijing time before announcing these series of coordinated measures. And this comes as Trump had said he plans to speak with President Xi within 24 hours. That was several hours ago. And he said that if no deal is reached, that the tariffs could be, quote, very, very substantial. So 10% is just the starting point. It could go up or go down from there, depending on how negotiations go.
Yeah, China and Beijing clearly had a ready-to-bake response, didn't they? Quick, swift and targeted, as you say. Oven-ready response from Beijing. Where do we stand then on those talks between China and the US?
Well, there's really an infinite number of ways that negotiations could go. And one thing that China could do is maybe to return to that starting point of the first trade deal that was struck with President Trump in his first term in office, committing to buy maybe a certain number of, a certain amount of American products in exchange for other things that they want. For instance, more market access into the U.S., or perhaps being able to buy what they want to buy, including advanced semiconductors, for example. President Trump had said that the reason for imposing these tariffs include fentanyl, China producing the ingredients for that. And this is perhaps an off-ramp that could be offered to China, because that is a low-hanging fruit, is something that Beijing could very easily clamp down on if it so chooses to. This is also something that both countries have already began working on. So that's one possible thing. But again, you know, many of these measures, they're not that easy to undo. Once you're on an entity list, it's not that easy to get off it. So it remains to be seen how those negotiations will go. And, you know, it's a really a trade war that could escalate further, and we'll have to see what happens in the next few days.
लाइक करते रहो गाइस, क्रूड ऑयल अटक गया है वहीं पे। एक तो वैसे रिस्की ट्रेड था, हाफ ही लेवल तक गया है। अगर लिया है किसी ने तो ट्रेल कर लेना ऐसे। 6:30 का वेट मत करना। Indian Railway launches new app will offer all train services in one place.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
What went wrong here? What are the issues that need to be resolved when it comes to trade in North America?
I don't think that you can say that there are issues that would make our president understand the full implications of the benefits of trade. You know, he talks about fentanyl and migration with Canada as a problem. Well, the statistics show that the fentanyl coming across the northern border is about 0.2%, and that the migration that is found was about 1.2%. So what he needs to do is to sit down and figure out what are his complaints with, for example, Canada. He's already agreed with President Sheinbaum of Mexico to have a pause for 30 days and work something out. But what is his plan? I think it's very confusing for our trade partners not to know what it is that he wants and then talk about how they could accommodate that.
Well, apparently he wanted thousands of troops along both borders. We have that now, and we have a 1-month period of time, I guess, to think about this. Let's remove, to your point, Canada and Mexico for a moment. When Donald Trump talks about zeroing out our trade relationship, finding energy parity, is that something that Justin Trudeau can accomplish? What would it mean for our economies?
No, I think that we have to understand that Canada is an extremely valuable trading partner. It was just nudged out as position number 1 this past year by Mexico, but it's number 2. And millions of jobs are connected to our trade with Canada. In fact, we don't just trade with Canada and Mexico. We make things together. Right. General Motors, for example, this morning is talking about its investment is in Mexico. But what it sends here gets some of the parts here and goes up to Canada. I mean, we are making things together.
That's what Jared Bernstein was talking about. These vehicles cross the border multiple times throughout their assembly, compounding these tariffs to the point where, what, you can't buy any of these cars. Is that right?
No, and he says that the consumers don't pay for it. Excuse me. If I were to buy $100,000 worth of goods, and they came into my port. I think it was Ed Gresser that pointed this out, and there was a 20% tariff. When I pick that up at the port, have to write a check for customs duties. And of course, I'm the purchaser. I pay the duty. I pay the cost of the goods. Those costs are assumed into the price of what I sell to you. Yeah. And so, and since most of our imports are things like shoes and clothing and refrigerators and the pieces for computers, it hits the lowest quintile most painfully.
Well, and the idea that this would impact specifically American consumers is what Canadian Prime Minister Justin Trudeau was attempting to speak to over this weekend when he was talking about the threat of tariffs and the retaliation Canada was prepared to respond with. Here's Trudeau.
First, I want to speak directly to Americans, our closest friends and neighbors. This is a choice that, yes, will harm Canadians, but beyond that, it will have real consequences for you, the American people.
So he's warning of consequences. You were as well. But President Trump contends that we don't actually need these goods from Canada. The idea that they can be replaced by other sources, including by American manufacturing. Where does that line of thinking go wrong?
It's impossible. Some of the largest imports we have come from Canada. Mm-hmm. They're invaluable. even in the petroleum field, we ship, raw petroleum up, and goes back and forth across the border. Cars the same way. There's so many things that we do together, and that create
and the
jobs.
U.S. can't do on its own. You're
Pardon?
saying the U.S. couldn't do that on its own.
No. If you were to find other suppliers, you would run into the same complaints that he's issuing to our number one and number two top trading partners, Mexico and Canada.
So what are companies supposed to do? You mentioned GM. We could mention any number of corporations impacted by this. Hold your breath for a month, because you can't make a plan now, can you?
The uncertainty is enormous, and it has to be enormous also for our trading partners. And with reliability and trustworthiness have been just absolutely demolished.
It's great to have you with us in person.
Particularly, for example, these tariffs that we impose on Mexico violate not only the WTO, the World Trade Organization, that the president doesn't really applaud, but also the agreement, the U.S. Mexico and Canada agreement, I call it the MCA, it violates that. And my goodness, that was negotiated in his first term.
Well, Australian Treasurer Jim Chalmers says Australia is prepared for a global tariff war, but is not immune from escalating trade tensions. Canberra, of course, has deep political ties with Washington, and its direct exports to the US only accounted for 3% of total shipments in 2023. The US has a large trade surplus with Australia, while China remains Australia's biggest trading partner. And Sherry, this is sort of the question as to some of the collateral damage that we could see, right? Not just between the US and some of the countries that it's threatening tariffs and trade action on, but what it means for some of these other trade-reliant nations, the likes of Australia, New Zealand, even Singapore within Asia as well. Let's get some views now from Prudence Gordon, who's the Executive Director at the Australian Centre for International Trade and Investment. Prudence, really great to have you with us. And we sort of pondered this question because we know the downside of what could go wrong if the sort of diplomacy side of things isn't handled correctly. We saw that, in years prior, around the time of the pandemic, and how that sort of came to impact Australia through its alliance with the US, but it's also its trade relationship with China. What do you see as the risks this time around?
Oh, thanks for having me on the show. Look, there are so many risks from this move by President Trump, imposing those 25% tariffs on Canada and Mexico and the 10% tariff on China. It really has created, I think, chaos and a far greater level of uncertainty in markets than we've seen, which is surprising considering the amount of uncertainty that's been in markets for such a long time. But in terms of the key, I guess, dangers with this move, it's really undermined faith in the rules that underpin the system. So now businesses who trade, specifically at the moment, businesses in the US who are trading with Canada and Mexico have no certainty about how they should be dealing with the imports that are coming from those countries. It's just multifaceted problems for these companies, but also companies in Australia and around the world who now lack certainty as to how the US is going to treat imports going forward, and then the knock-on effects of those measures that the US has taken.
There's a lot of direct and indirect impact on economies like Australia, as you say. Broadly, we know that in times of more global trade, economies like Australia and New Zealand benefit, and when that pulls back, you see that sort of detriment as well. Is there a way that Australia can sort of position itself to take advantage, perhaps, of the trade uncertainty with the US by sort of leveraging the fact that, we can put forward Australia as a very stable investment environment?
That's obviously an approach that the Australian government took during the last Trump administration, highlighting that Australia obviously has a trade deficit with the US, that we are a reliable ally, that we are a great place to invest. But at the same time, I'm not sure that they're going to be really persuasive arguments this time. President Bush has come in with a much clearer vision for how he wants to use tariffs to progress other policy initiatives. And I think Australia really needs to be preparing for that 20% universal tariff that President Trump has talked about. Because he said, when he says something, he's doing it. You know, however harmful that might be to US consumers and to the global economy, he's progressing those commitments that he made during the campaign.
Prudence, how difficult of a situation is this for Australia, given that we have seen a lot of other third countries that have had poor relations with the United States, for example, getting these tariff threats lean more towards China. But when it comes to Australia, Australia has had its own issues with Beijing and tariffs.
Absolutely. I think I would be surprised if these moves by the US administration push Australia closer towards Beijing. I think what you will see is what Australia with Japan did under the Comprehensive and Progressive Trans-Pacific Partnership Agreement, and that was where the US had pulled out of the Trans-Pacific Partnership, but Australia and other like-minded countries who see the value in trade rules and open markets came together to continue what they'd started with the TPP. And I think you will see more of that, not necessarily moving towards Beijing, but definitely looking to the European Union, for example, to Japan, to South Korea, to ASEAN countries, to really work together over the next 4 years to try and limit as much as possible the damage done by these really erratic implementation of these huge tariffs.
You mentioned the TPP, and of course that has evolved into a whole different framework already. Are these multilateral settings now a thing of the past, especially with the Trump administration?
I think with the Trump administration, yes, absolutely. And it started under President Obama with the US withholding consensus on the appointment of appellate body members, which really disrupted the World Trade Organization dispute settlement system. But obviously under the Biden administration, the US really only progressed the Indo-Pacific framework agreement rather than any, I guess, usual kinds of trade agreements that we would see the US engaging in prior to President Trump's first administration. So I think for the US, it would be really surprising if they were to re-engage on the free trade agreement kind of negotiation. Obviously, President Trump in his first term renegotiated the US's agreements with South Korea and with Canada and
initial reaction to this idea that the U.S. might have a sovereign wealth fund under this new executive order? What purpose might that serve?
My initial reaction is that I'm going to have to go away and write 1,000 words about it.
Reasonable.
I mean, obviously, there's plenty of other examples of countries that have had a lot of success with sovereign wealth funds. Generally, the people who do that are the countries that have huge capital account surpluses. And because of tariffs, the reason people are talking about tariffs is, of course, because the US doesn't have one of those. So it makes little sense at that level to me. A lot depends on exactly how it's going to be run. If we had a Nikolai Tang and if Knut Schreier, somebody who could run a fund as well as the Norges fund has been run, that the administration can find quickly, then I guess it would be a good idea.
That makes a lot of sense. And I like how you bring it right back to tariffs, because it comes back to those trade deficits and, of course, the overall financing issues that the U.S. has overall. And Donald Trump wants to change that. When it comes to tariffs, and I know that you have a column that says, how stupid is a trade war? Let me count the ways. We know where you stand on this. What is it in particular that has you, I guess, worked up that Trump is targeting Canada and Mexico first, as opposed to some other countries where perhaps the argument has more ground?
Okay. Now, to be clear, the argument I'm making about why this was a particularly dumb manoeuvre to start is not because I'm a free trader and disagree with protectionism, all that kind of thing. We've had this argument about globalization. He's plainly got a mandate to roll back globalization. That's what the election was about. The point I'm the point I want to make is that this is an incredibly dumb place to start because if you're talking about Mexico and Canada, they have by far the most integrated supply chains because, of course, they do. They have two immensely long land borders. They're the only countries that do have land borders with the States. So if you want the countries where you would most maximise the risk of raising prices, like we saw during the pandemic, would be these two. Then you have to look at the fact that both of them actually do buy a lot of stuff from the States. If anybody can hurt the States in retaliation, again, it's these two. I mean, it would be dreadful for all concerned, but they can inflict more pain on the States than most other people. Then you have to look at the fact that fentanyl, which is the alleged reason why we're doing this, I think I said in the piece, if you had to make a list of 100 policies that might help deal with fentanyl, which is obviously a terrible problem for the US, I don't think slapping 25% tariffs on Canada would make the top 100.
Right.
It's just not got anything to do with that particular problem.
Canada and fentanyl seems less like a direct link than Mexico and fentanyl.
Yes, but now if we come to Mexico, there is this fascinating deal which makes it look as though all of this really is a negotiating policy, that this wasn't actually about trade deficits. It's about trying to do something about the border, which, again, no question at all, Trump has a mandate to do something very significant about the border. That's obviously what the people voted for. Moving 10,000 Mexican National Guards to the border, these are not 10,000 new recruits. They're already part. This is a minor redeployment towards a border that is 2,000 miles long. It's an incredibly minor concession to have won for having made such a big and dangerous threat. It still strikes me as not a sensible way to have behaved.
Right, and that's a concession that Claudia Sheinbaum actually made to President Trump in their short conversation on delaying the tariffs by 1 month. And it's something we'll be continuing to watch for. John, thank you so much.
Can we say that tariffs work if they never go into effect?
I think Canada and Mexico had this in their pocket. Trump telegraphed the punch for many, many months. They knew that he wanted to do something on immigration and, of course, fentanyl. I think he tried to base both of those arguments, ground them in national security arguments rather than trade arguments. So crisis seemingly averted for the short term, but Trump was messaging very hard this weekend that he's going to take fentanyl and immigration very seriously.
Well, but are those actually national security issues to the extent that it justifies the use of IEEPA, the International Economic Emergency Powers Act? It's traditionally sanctions related, not import tariffs.
You're right, and President Biden used them for sanctions against Russia the night that they went into Ukraine. So you're exactly right. It's not typically used for this kind of tariff activity. He did do it once when he was in office, the first term, so he's used to going there. I think he thought it was a more straightforward, easier case to make, fewer findings they needed to make under the law. They could simply just determine that this was a threat to national security and enact them very quickly, and that's what they did.
We're spending a lot of time talking about Mexico and Canada because they are our neighbors, not necessarily considered anything other than good trade partners by most people you talk with. That may be a ball that's moving here. But there's China, with 10% tariffs set to take place tomorrow. Was the whole construct here, knowing that a weakened Canada and weakened Mexico could strengthen China, this very end result?
It could strengthen it. I think the Chinese know where they want to retaliate. They've, of course, telegraphed that they want to do something on critical minerals. They've even announced an investigation or two. And I think they'll re-tariff us back. So we'll have a bit of a trade war breaking out soon. There'll be retaliation. And I think this is where President Trump has to begin to really watch what the market reaction will be over a sustained basis. And ultimately, in red Republican districts across the country, if it feels like American workers are losing their jobs or people are getting furloughed because their supply chain doesn't work, I think the heat goes on to the president, and then he'll have to figure a way to back out of it.
Well, but that brings the notion of supply chains to this question around nearshoring, because that's what the U.S. has been trying to achieve, get more production out of China by bringing it closer to U.S. borders like, say, Mexico and Canada. What are all the companies who were nearshoring supposed to do with this kind of volatility around the countries at which they were told it would be safe to bring their supply?
You're right. I mean, it was get out of China, and then over time people went to Vietnam and went to Mexico, and now we're worried that there's been too much circumvention, at least in the Mexico case, of USMCA. And so that will be a top priority of the administration as they begin to renegotiate USMCA this calendar year. Of course, it's not up for renewal until next year around June, but this is a big issue. Circumvention is something they want to achieve via the renegotiations before USMCA is up.
Secretary of State Marco Rubio just got back from Panama, which agreed to withdraw from Belt and Road. Did the real news get snuffed out by this on-again, off-again tariff business?
I think so. This was a successful venture for the senator, the now secretary. He, of course, wants to make a priority out of Latin America. There have been nothing but commentary for years now about China's presence across the hemisphere. So I'm glad that he went there first. I'm glad he scored an early win. I think essentially that's what he's saying and the president are saying when they talk about the Panama Canal so frequently. It's about Chinese presence there. And so I think this is going to be a continued theme from Marco Rubio, who wants to elevate the Western Hemisphere up into the top issues facing the country.
Well, so when we consider that and the questions around Greenland as well, should we expect to see tariffs used as statecraft in these kind of diplomatic conversations? Where's the threat on tariffs on Panama and Greenland and Denmark? I guess we did get those at one point, didn't we, now that I'm saying it out loud?
Well, he wouldn't rule out tariffs or economic measures against Denmark. I had noticed he hasn't said he's going to go there yet. I think people have had, including me and others that are sort of in the national security community, weren't sure what to make of the Greenland thing. And now we realize that he's deadly serious. He wants that territory. I don't know what he'll settle for ultimately. There are other ideas out there short of an outright transfer to the United States. Not that Denmark's going to go there, but there's a lot to talk about when you talk about the Russian influence up in the Arctic Circle. And ultimately, if he's bringing more attention to that and puts more resources toward that area, I think that'll be a national security win.
How does sanctions against the EU help the situation for America?
Well, he's absolutely convinced that they don't treat us fairly, certainly with autos and other items. You remember last time they came over, made some concessions to us on oil and especially natural gas. I think we've already maxed out after the Russia invasion of Ukraine, the natural gas. So it's going to be tough to figure out immediately how the EU can meet our demands to lessen the trade deficit between our two blocks, if you will. And so I think it's going to be tricky going forward. But they're ready, too. Everyone saw the movie last time, and they're ready for retaliation.
I'd like to ask you about another foreign policy issue we're watching today, which is Elon Musk, in his new role at the Department of Government Efficiency, pushing now for the complete dismantling of USAID. And Democratic senators held a press conference about this today. Here's what Maryland Senator Chris Van Hollen had to say about the implications.
This effort by Elon Musk and so-called DOGE to shut down the Agency for International Development is an absolute gift to our adversaries, to Russia, to China, to Iran and others, because AID is an essential instrument of U.S. foreign policy and U.S. national security. This has nothing to do with making the U.S. government more efficient and everything to do with aiding and abetting our adversaries around the world.
So USAID is now getting folded into the State Department. Marco Rubio, I guess, is going to be delegating a review of this. But what's your take on this?
So a lot of foreign policy experts for years have said, why is our aid mechanism all out by itself and not under the State Department? And I think that's a fair question, and we ought to figure out the right answer, because ultimately, if we want to give foreign assistance to other nations, we probably want the State Department diplomats able to have that leverage against foreign countries. But I think what's going on here, obviously, is a debate about the priorities in our foreign policy realm. There are probably things that the USAID does that would not be acceptable broadly to the American people. I think it'll definitely be the task of the DOGE going forward to root out what those are. But ultimately, to me, it's going to be Marco Rubio, who has to begin to negotiate between the sides, the Doge, maybe bring a lot of these issues up to the president and say some of these things need to be preserved because they increase American strength and influence around the globe. And many of these other things, some of the things you saw the White House press secretary bring out today, are probably and should be zeroed out.
Marco Rubio is going to have an interesting job in the coming months as we consider all of this. Just quickly, with our remaining time, Benjamin Netanyahu is in town tomorrow. Speaking of the Secretary of State, will he negotiate a phase 2 peace deal while he's here?
I think he's going to have to talk to the president about this. The president's been absolutely resolute. You better not let this deal go by the wayside. I want the hostages released. I want this issue moved off of my plate. To me, the sleeper issue is what is Netanyahu going to ask of Trump on bombing Iran? Iran is uniquely vulnerable right now because of the collapse of Syria, the collapse of Hezbollah, and all of the destruction of all the Hezbollah arms and radars going across Syria and into Iran. So they're uniquely vulnerable. And it may be that Netanyahu says, Mr. President, this is a unique opportunity for us to knock them out of the box and degrade their nuclear program. So that's going to be the big issue, I think. The sleeper issue discussed tomorrow.
Min Min, what has been announced so far from Beijing?
Well, as you said, that antitrust investigation into Google, as well as a series of tariffs, 10 to 15% on American agricultural machines, as well as oil, coal, LNG. A couple of American companies added to this unreliable entity list, and also export control on tungsten-related materials, materials used for solar panels, semiconductors. Very precise, very targeted measures, although not extensive, but it shows that China is not going to back down without a fight. Now, some analysts had expected that maybe China will not retaliate so quickly, and clearly this is a very highly choreographed move, given that China had waited exactly until after the tariff kicked in at 1:01 p.m. local Beijing time before announcing these series of coordinated measures. And this comes as Trump had said he plans to speak with President Xi within 24 hours. That was several hours ago. And he said that if no deal is reached, that the tariffs could be, quote, very, very substantial. So 10% is just the starting point. It could go up or go down from there, depending on how negotiations go.
Yeah, China and Beijing clearly had a ready-to-bake response, didn't they? Quick, swift and targeted, as you say. Oven-ready response from Beijing. Where do we stand then on those talks between China and the US?
Well, there's really an infinite number of ways that negotiations could go. And one thing that China could do is maybe to return to that starting point of the first trade deal that was struck with President Trump in his first term in office, committing to buy maybe a certain amount of American products in exchange for other things that they want. For instance, more market access into the U.S., or perhaps being able to buy what they want to buy, including advanced semiconductors, for example. President Trump had said that the reason for imposing these tariffs include fentanyl, China producing the ingredients for that. And this is perhaps an off-ramp that could be offered to China, because that is a low-hanging fruit, is something that Beijing could very easily clamp down on if it so chooses to. This is also something that both countries have already began working on. So that's one possible thing. But again, you know, many of these measures, they're not that easy to undo once you're on an entity list. It's not that easy to get off it. So it remains to be seen how those negotiations will go. And, you know, it's a really a trade war that could escalate further, and we'll have to see what happens in the next few days.
We saw huge market gyrations because of these headlines. Will we see the same when we get the Chinese mainland markets opening on Wednesday?
Absolutely. You know, the tariff numbers are actually not small, right? I mean, on a prolonged basis, it will cause pretty devastating damage to Mexico and Canada. And the U.S. economy is not going to be scot-free as well, because we think that if the tariffs were actually prolonged, the U.S. economy would probably see a boost to a core PCE by about 0.4%, and the economy itself in 2025 will take a hit of about close to about 0.8%. So I don't think it was actually in the interest of the U.S. Government to actually have the tariffs actually prolonged, because it was going to cause a lot of pain unnecessarily so. And on top of that, you've seen the market reaction yesterday as well. And, you know, over the night, over the U.S. session itself, the market gyrations were actually very, very large. And I don't think anybody actually benefits from that kind of volatility. And on top of that, a lot of the businesses who are trying to actually increase their capex will probably take a second look at where the situation is and probably delay their capex, and that in turn will likely have a deterring impact on the U.S. economy as well. So we don't think that they will actually prolong this situation. Rather, we think that it's probably more of a bargaining tool, a negotiation tool in that sense.
But the situation is so different when it comes to Beijing, right? I mean, we are expecting that 10% tariff to go into effect in just a few hours. But that's the point as well. 10% is now 25%. Already the Chinese economy relies much less on the U.S., especially after the first Trump administration. And Chinese assets right now have been sold off significantly. How much lower could they go at this point?
Yeah, I mean, you hit the nail on the head. Positioning in the Chinese equities market and even in some of the other asset markets as well is actually a lot lighter today compared to 2018 when we first had the US-China trade escalation in that sense, right? Today, I think I would say that positioning in Chinese equity markets is basically pretty much muted. And you can also say the same for the other Asian markets as well, particularly for Malaysia, Philippines, Thailand, and even Korea to some extent. So I don't think the reaction this time around will be a lot more disorderly than what we had back in 2018. And on top of that, you know, global trade is actually not at its peak compared to the first quarter of 2018. And furthermore, the Federal Reserve is actually not on a hiking cycle. In 2018, we had the Federal Reserve on a hiking cycle as well. So if there is any reaction where the markets are concerned, I think this time around, the markets are likely to be a little bit more orderly and not as chaotic as before. I think back in 2018, we had the MSCI China coming off by close to about 20% as a result of the trade escalation.
Kelvin, does the DeepSeek story change meaningfully the sort of attractiveness of broader Chinese equities?
Not really. We do think that where that is concerned, I mean, on a short-term basis, it will likely act as an overhang until we get further clarity on the demand for computing power, etc. But on a short-term basis, we do think that it actually makes it actually commoditizes the product itself. It makes it more accessible, and that can only be a positive thing on a medium to longer-term basis.
When it comes to currency volatility, are there ways that you would be playing that to try and improve portfolio income?
To a certain extent, yes. We do think that with regards to the Asian currencies, the Korean won, the Malaysian ringgit and the Indonesian rupiah are likely to be a lot more vulnerable to any weakness where the Chinese yuan is concerned. And of course, if the tariffs do kick in and are prolonged, then we do think that the Chinese yuan might actually weaken to about 7.4 and eventually to 7.5 by the end of this year. We think that where the Indian rupee is concerned, that's probably likely to be a lot more defensive compared to the other currencies, given the fact that its yield at this point in time is still a lot higher, notwithstanding the fact that we do think that the central bank will probably have to cut rates in the second or third quarter of this year, given the fact that the Indian economy is actually going through a cyclical slowdown as well. But nonetheless, we do think that the Indian rupee is probably a lot more defensive compared to the other Asian currencies. So we'll probably try to play the currencies where Asia is concerned in that kind of fashion.
Over the past decade, we've seen a more fragmented world. Now, that doesn't necessarily mean globalization will change. Globalization will stay. There are multiple ways to make sure that the world remains globalized.
We may have short-term a little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that.
Live from Bloomberg's brand new Mumbai studio, this is Inside. With me has Linda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian stocks rise as President Trump delays tariffs on Canada and Mexico by a month after they agree to tougher measures against migration and drug trafficking at their borders. Now investors are focusing on how a potential call between Trump and Xi Jinping pans out, and whether China too will get a reprieve as 10% tariffs loom. GQG Partners portfolio manager Brian Cushman joins us with his firm's strategy to deal with the Trump-induced volatility, and we'll talk about their exposure to India as that market falls out of favor with global money managers. And later we're joined exclusively by Indian tycoon Sanjeev Bajaj with his outlook for the country's economy and its financial sector as the government looks to boost consumption. Well, almost as quickly as he announced them, President Trump has now backed off on planned tariffs against Canada and Mexico. The moves avoid a continental trade war in North America, at least for now. Both Canada and Mexico managed to avoid the tariffs until at least March by agreeing to new measures on border security and immigration. Prime Minister Justin Trudeau says Canada will name a fentanyl czar and partner with the U.S. on a new strike force against organized crime, drug trafficking, and money laundering. And Mexican President Claudia Sheinbaum will deploy 10,000 officers to the border to stem the flow of fentanyl and migration into the U.S. Meanwhile, Trump's 10% tariff on Chinese imports is still scheduled to take effect in just a few hours. The White House has told Fox News that there's a plan for Trump to speak with Chinese President Xi Jinping. For more, let's bring in our Chief North Asia correspondent, Stephen Angle, in Hong Kong. Well, Steve, the 10% tariffs was already a boost for China, good news for China. Now there are talks, and that could be further good news.
Yes, so I think a lot of people in Asia Pacific woke up this morning and saw those headlines about a reprieve, at least 30-day reprieve for Mexico and for Canada on their border issues and the tariffs of upwards of 25%, and maybe extrapolated a little bit saying, well, a similar deal might be in the works with China, and it very well could be. But we're hearing that Donald Trump and Xi Jinping will have a phone call, as Donald Trump said a few hours ago, within 24 hours. The problem is the clock is ticking, as you just showed the countdown, less than 2 hours until that deadline is reached, where that 10% tariff is imposed on Chinese goods across the board into the United States. So can they avert it? Well, the markets have been a bit optimistic that they can have a similar result as Canada and Mexico, but the clock is running out of time, essentially. The speculation now perhaps is there will be the tariff enacted, and then there will be negotiation. And the bigger question is, what can Xi Jinping pledge, that would be commensurate with what Justin Trudeau and also the Mexican president were able to give to Donald Trump? Because the fentanyl issue is a sensitive one. I think there's a previous guest in the last hour even said if Xi Jinping wanted to shut down the illegal trade or the illegal manufacturing of those precursors for fentanyl, he could probably do it. But there would have to be an acknowledgement that there is the problem going on in China, and that there is something that the top leadership in China can do about it. So far, in the last couple of days, we've had the Ministry of Foreign Affairs in Beijing essentially put the blame on the Americans' demand for fentanyl. This is what the Ministry of Foreign Affairs spokesperson said in a statement Sunday. The U.S. needs to view and solve its own fentanyl issue in an objective and rational way instead of threatening other countries with arbitrary tariff hikes. State media has been also mimicking a similar message.
Steve, it is a negotiation. You got to wonder how far China is willing to go, given the fact that its economy is still struggling.
Yeah, so, there's going to be multiple responses from the Beijing leadership as they come out of the Lunar New Year holiday. Today is essentially the last day. Markets reopen tomorrow. And there will be some sort of response. We saw that in trade war version 1 in 2018, 2019. There were retaliatory reciprocal tariffs. There were other export curbs on key minerals. And there were other moves, essentially, to try and counter the protectionist, or I should say the trade action from the Trump administration version 1.0. There will be similar ones this time, but the problem is, as you rightfully said, Haslinda, the Chinese economy this time around is on more shaky footing. So you have to be careful how far you punish, that you don't punish your own economy. But we do expect some sort of retaliatory steps, especially if the tariffs from Donald Trump go beyond just the fentanyl issue and target upwards of the 60% that was threatened by Donald Trump because of the imbalance in trade.
Stephen Angle, our Chief North Asia correspondent in Hong Kong. Thank you so much for that. Now, Asian stocks, meantime, enjoying a reprieve after Trump delayed those levies on Canada and Mexico. Avril Hong takes a closer look as a U.S. deadline on China tariffs looms. Well, we're looking at gains pretty much across the board. Avril.
Yeah, that reprieve on Asia markets led by the Hang Seng. The idea that after Canada, Mexico, Colombia got delays, reprieves, that China could experience the same. That optimism is what's fueling the Hang Seng today, which is leading the charge, boosted by the tech names, jumping by the most, the Hang Seng, since October to the highest level since November. And the idea that not only China might get a delay when it comes to tariffs, but also since tariffs have already been announced, that Chinese authorities can bring out the big guns when it comes to stimulus. There's also some of the deep-seek beneficiaries potentially that are rallying, that's fueling the charge. Dollar China, we're seeing it pulling even further away from the 737 levels that we saw a day ago. And all this kind of mirroring the moves, the reversal in the loonie, Mexican peso, dollar, oil. Flip the board, because as we see these risk assets rally, I thought I'd just inject a dose of skepticism here, because we are seeing that flattening in the 2s and 10s on U.S. Treasuries. Indeed, that's been what we're seeing for the past month. Yesterday, a bit of that exacerbation as well. Selling on the short end, given the inflationary concerns, and buying on the long end, given growth concerns. And to some, as long as these trade war concerns linger, that we might not just see further flattening in the curve, maybe inversion as well. That might be a likely outcome, Haas.
Avril, thank you so much for that. Let's get more market perspective from Brian Kirschman, portfolio manager at GQG Partners, which manages over $150 billion in assets. Brian, good to have you with us. So Trump delays the tariffs, but truth of the matter is that tariffs are coming. It is higher for longer. We have a strong dollar. Now that Trump is in office, Brian, does that change the way you trade?
Yeah, well, first of all, thank you very much for having me back. I really enjoy being here. And then, to kind of address the issue, there's a lot of noise going on in the markets at this point in time right now. There's a lot of things that are going on back and forth, and we do see sort of these trade tariffs being announced and sort of recalled back or pulled back, and the negotiations coming through. I think what we need to look at is what are the longer term implications of this, and what's the longer term path in the grand scheme of things. And if you look at it from a Chinese perspective, at least, the U.S. on both sides of the aisle, both the conservative side, the Republicans and the Democrats, are all pushing for more restrictions, possibly fairer trade treatment and things along those lines with China. So I think that is a little bit more of a one-way street, even though you might get some temporary reprieve and sort of back and forth with things along the lines in sort of the medium term there.
You talk about longer-term implications. What are the longer-term implications for emerging markets in particular? Because that's your area of expertise. We've seen an exodus of $54 billion in terms of money getting pulled out of emerging markets. I mean, how do you see this asset class performing?
What's interesting is there's been a couple of times over the last couple of decades almost where emerging markets has been called almost a dead asset class. And she said, okay, well, it's become a sort of uninvestable. You might as well just invest in sort of global assets and have sort of EM be a little bit more of a carve-out allocation. Now, what seems to happen in each one of those periods is you have a new leadership that maybe evolves out of that EM asset class. So we've been in a period over the last several years where China has been taking the lead with a large portion of that growth. But their economic growth has slowed down. They've been, sputtering a little bit from an economic growth standpoint. And, obviously having sort of the U.S. implications back and forth from a trade standpoint hasn't necessarily been as interesting. For us, though, there's several other markets within the EM landscape that look really interesting. You had cited before sort of the preview that India, we still have a strong belief that India continues to chug along very well. And some really interesting things there. So again, some of the things that we're finding very interesting in some of these other markets, even outside of China, within that EM context, there are other things there within EM other than just China.
Isn't it true, though, given valuations at SOI, 25 times PE, 24 thereabouts? I mean, it's still looking pretty expensive, and earnings have yet to catch up when it comes to the Indian market. Why are they still attractive to you? Are there expectations, perhaps, Indian earnings will improve?
So in aggregate, I would say that the Indian market is expensive. And you look at some of the consumer-related items, those consumer-related companies, fast-moving consumer goods, durables, things along those lines. By the way, some of those got some benefit from some of the the budget sort of the agreements or the announcements that have been made over the past weekend. But what other areas that we're seeing are very strong growth are things like infrastructure, utilities, and things along those lines. And yes, there is a higher price tag that you're paying for some of that growth, but the growth is actually coming through in a very strong way. And I think what goes under appreciation is there is a durability or visibility in that growth on a longer term basis. And I think people underappreciate that there is that tail that has a lot of value as well. So structurally, that's going to come with a higher price tag if you have that visibility and durability of growth on a longer term basis.
I want to touch on Adani. Amid the bribery allegations, GQG capped its shares in Adani. I'm just wondering where you are with that. Have you done anything since December?
So in terms of the positioning sizing, we've kind of stayed pat where we were. Obviously, you have something like a DOJ investigation and sort of indictment that is sort of filed against any one of the companies that you're looking at or invested in. That's something you take with a very serious matter over the course of time, and you make sure that you go back and underwrite and understand what the risks are. After doing that due diligence on our side from multiple different angles, we came to the conclusion that this has a very minimal and modest impact on the businesses themselves. And you actually seen that come through in terms of the earnings. Most of the Adani groups, actually all of the Adani group names have actually reported earnings and have had fantastic results. So that's one of the things that we've seen and continue to see over the course of time. And fortunately for us, the timing of sort of the initial investment, we're still largely, in the positive territory by a large margin over the course of time since we first bought these back in 2023.
So would a dip be a buying opportunity for you when it comes to Adani shares?
So in terms of a dip from here, again, we have a fairly large position size in the grand scheme of things for where we feel comfortable where the risk reward is on these particular names. So we're pretty comfortable with the positioning and the sizing that we're at right now. We came in, a decent size. So I think we're comfortable where we are, but I think it's also a context or in context of the broader opportunity set that we see in India. So you are seeing a lot of those infrastructure sort of, growth that's coming through in a lot of different areas. It's not just the Adani Group, although we like that as well. If you look at like a GMR, for example, second largest airport infrastructure company in the entire world on the listed side, 120 million passengers growing at sort of a high single digit plus pace in terms of growth, in terms of, the passenger growth over the course of time at high levels of profitability. The telecom sector, you have finally a consolidated telecom sector with three players, two of which are starting to lead pricing in a bigger way. Mid-teens, growth in terms of pricing on mobile plans, high teens growth in terms of revenue. I mean, these are rate plans. Think of a 5G rate plan costing you $7 a month. This is in USD terms, $7 a month for an unlimited 5G plan. So they have plenty of runway to continue to grow that average revenue per user over the course of time. So we do like Adani. That is just a small portion of the larger allocation that we have within sort of the India sort of investment theme.
Brian, we know that in terms of stocks that you like, they include NVIDIA. You dialed back your holdings on risk management concerns, but you still like the stock, at least when we last spoke. How do you look at NVIDIA right now?
Yeah, it's interesting in the tech landscape. Obviously, you had DeepSeek and sort of the big announcement that happened in terms of their ability to do those models at a substantially lower level of cost or initial investment to sort of train in the equipment and things along those lines using them. The hard part about tech in the grand scheme of things is tech is a very growthy business, but also a very highly disruptible business. You had mentioned we did cut back in tech in general since a very, very hefty allocation earlier last year to being, modestly underweight at this point in time in tech, in the grand scheme of things. Now, there's some pockets that we still like, but I think it all comes with a grain of salt, and there is that disruptability. And kind of going back to that EM landscape, and I think you think about it from a global perspective, what will be one of the better diversifiers away from sort of what we're seeing in the grand sort of tech scheme of things with all of this innovation and disruption coming through? It will be some of these maybe a little bit less loved markets within the emerging market landscape or less loved companies that are still exhibiting really strong earnings growth. So think of like a Brazil that still has high single digit, maybe even low double digit loan growth within their banking system. NPLs, the non-performing loans are coming in better. Credit quality is coming in better. So you are seeing some pockets in some of these other markets where things are very interesting. That will be a really good diversifier to any sort of missteps that may happen within a tech landscape on a long-term basis. I think it's one of the better diversifiers out there, quite frankly, in the grand scheme of all the things you can own globally.
Brian, I want to get back to NVIDIA and take you back to DeepSeek Monday, where NVIDIA slumped 17%, wiped out $600 billion in its market value, was the biggest single-day drop ever in market history. I mean, how do you read something like that? Is that an indication perhaps we've reached tech peak?
So I think you maybe even reached tech peak a little bit before that in terms of NVIDIA. Saw the shares kind of peaking out. Sort of the craze of some of the watch parties that you saw around NVIDIA and things along those lines. With
गाइस क्रूड ऑयल भी साइडवेज चला गया न्यूज नेचुरल गैस के साथ नेचुरल गैस सपोर्ट पे जरूर था 1 बजे आया सपोर्ट पे 5:30 हो गया ऑलमोस्ट 4.5 घंटे से साइडवेज है ना ऊपर जा रहा है ना नीचे आ रहा है इट इज कम्प्लीटली साइडवेज ऑन दिस लेवल कल की तरह क्रूड ऑयल देखोगे एक वीक सपोर्ट था वहां से थोड़ी बहुत बाइंग आई ये भी अटक गया वहीं पर ना ऊपर जा रहा है ना नीचे देखते हैं ऊपर निकलता है तो रेजिस्टेंस है वहां से एक सेलिंग का प्लान रख सकते हैं नीचे आता है तो फिर नीचे सपोर्ट जोन रहेगा हमारे पास डेटा है 8:30 उसका ध्यान रखना लाइक भी करते रहो जिन लोगों ने लाइक नहीं किया कम ऑन गाइस 5:30 हो चुका है 6:30 न्यूयॉर्क सेशन की ओपनिंग उसके बाद थोड़ा बहुत मोमेंटम आप एक्सपेक्ट कर सकते हो और सही हो जाए नेचुरल गैस का नीचे एक और सपोर्ट है अगर वहां पर भी आता है तो वहां पर भी एक बाइंग एक्सपेक्ट करी जाएगी अराउंड 270, 275 के अराउंड। याद रखना क्रूड ऑयल का ये जो लेवल है थोड़ा क्या वीक ही है। ये पहली बार नहीं आ रहा है इस सपोर्ट पे, कल भी बताया था। 4 बार पहले आ चुका है, 5वीं बार सपोर्ट आया था। लास्ट टाइम इसने एक हायर हाई बनाया था तो इस वजह से रुक गया थोड़ा बहुत। यहाँ देखोगे इससे पहले एक बार सपोर्ट लिया था, वहां से एक ये हाई बनाया था, फिर यहाँ आया था, लोअर हाई बनाया था, बट यहाँ से फिर से लोअर हाई बनाने के बाद भी यहाँ पर एक हायर हाई बना दिया था, हायर हाई बनाया, तब इसलिए थोड़ा बहुत यहाँ पर अभी भी रुका हुआ है लास्ट स्विंग की वजह से। नाउ लेट्स सी क्या प्रीवियस स्विंग के ऊपर जाता है या फिर उससे नीचे ही रहता है प्राइस। बाकी नेचुरल गैस में पता नहीं क्या हो रहा है, वॉल्यूम ही डाउन हो जा रहा है इवनिंग पे। लाइक करते रहो गाइस, 30 लाइक्स एटलीस्ट हो जाने चाहिए। 30 people are watching, so don't forget to like the stream, subscribe the channel as well. यस है तो सपोर्ट पे ही पिछले 5 घंटे से नेचुरल गैस, बट मोमेंटम ही नहीं आ रहा है। वॉल्यूम भी देखोगे तो कल से कुछ ज़्यादा ही डाउन हो रहा है, कल भी नहीं था वॉल्यूम, इवनिंग पे आया। लुक एट द वॉल्यूम, अपने मूविंग एवरेज से भी थोड़ा डाउन साइड पे है। लेट्स सी रिकवरी करता है, लास्ट 2 कैंडल पे ठीक ठाक आया तो है। लुक एट दिस, अपने मूविंग एवरेज से भी नीचे चला गया। एक्सपेक्ट करना चाहिए 6:30 के बाद एटलीस्ट न्यूयॉर्क सेशन ओपनिंग हो जाएगी। मॉर्निंग पे मुंबई सेशन में थोड़ा बहुत वॉल्यूम आया था, लंदन सेशन में भी कुछ खास किया नहीं 1:30 के बाद। नाउ न्यूयॉर्क सेशन एंड यूएस मार्केट के बाद ही थोड़ा बहुत वॉल्यूम एक्सपेक्ट है वापस से।
To make sure that the world remains globalized.
Welcome back. You're watching Insight, coming to you live from Bloomberg's brand new studio here in Mumbai. Of course, we're doing a check on Indian markets. Take a look at how those yields are doing. We're also tracking the Indian rupee. Remember, it sank to a new low just yesterday on the back of that mighty dollar story. Some reprieve coming back to the currencies in Asia. But today we're seeing the Indian rupee at 87.19. As we speak, it is higher by about 0.2%. Of course, when it comes to India, Prime Minister Narendra Modi has been invited to meet with President Donald Trump in Washington next week. It is all about those negotiations. Can India escape those tariffs that Trump's imposing to almost all his neighbors, foes, as well as friends? Well, joining us exclusively to talk about India here in the Mumbai studio is Sanjeev Bajaj, Chairman and Managing Director at Bajaj Finserv. Good to have you with us.
Good to be here.
Great starting point is the budget. What are some of the key takeaways? How much of a boost do you think that will provide consumption and the Indian economy?
So firstly, congratulations for the Mumbai studio launch. Great to be here. The budget has been both good and clever. It's recognized the current slowdown, keeping in mind global uncertainties and headwinds. And that's why the income tax benefit to the middle class, the continued infrastructure investment, the additional benefits to states to up their investment focus as well. All this should help to take the economy back to a higher level of growth. At the same time, there is this recognition to build India for the next 5 years, 10 years, and longer. And that's why if you look at the next set of investments that the government focuses on, whether a set of new sectors, toys, leather, these will get support because these are also large employment-driving sectors. That's a big positive as well. The focus on skilling, the focus on AI, agriculture. As we know, a large part of our inflation is food price inflation. And by focusing on some of the staples and increasing production and stabilizing that over the next coming years should help us as well. So that's why I would, and all this while keeping a tight eye on the fiscal deficit. That's why I call it both good and clever.
I want to pick out two things that you highlighted, the creation of jobs as well as upskilling. Some say that not enough is being done to create those new jobs. I mean, we're seeing unemployment at 40%, 30% of grads still don't have jobs, and upskilling not being done enough to put those people in the right places, in the right economies for the future. Your thoughts on that?
You know, in a country with 1.4 billion people, it's never going to be enough, and the left side and the right side is never going to match in the short term. Because if you're a city-state, if you're a state with 100 million people, much easier to do. But if you see the changes that are being driven both by the government and the private sector, one, if there is steady consumption and increase in demand, whether domestic or export-driven, you're going to see private sector investment come in. Second, in the last decade and more, the significant improvement in infrastructure, in supply chain efficiencies, is helping us becoming cost efficient from a global perspective. So that's what the state is allowing us to do or enabling us to do. The third then is matching capabilities on jobs, requirements and skilling. Look at the same students. They graduate from our STEM colleges and they become CEOs of global companies. Look at all the American technology companies. Most of them have Indian CEOs. They've all gone through the same education. But yes, there is fine-tuning required. The world is changing. We're becoming more digital. AI is coming in. So you need to make sure that your skilling keeps pace. And it's not about skilling 1,000, 100,000, a million people. We are talking about skilling and getting ready 20, 25 million Indians that come to the job force every year. So that's a big task, but yes, we have to keep working on it.
Not everyone is buying into the India story right now. If you take a look at how foreign investors have been pulling money out, take a look at where the rupee is trading right now, hovering close to record lows, if not still at record lows. I mean, are we reading too much into it?
I believe we need to differentiate between value and valuation. Valuation, I'm not an expert, but from what I see, markets like India are reasonably at their peak, and that's why there could be an opportunity to take some money off, and you can see domestic funds coming in every time. And this is a big change compared to even 5 years ago, where our stock markets were almost entirely driven by foreign money. Today, the domestic average Indian is putting in enough money into financial savings to be able to balance that. But at the end of the day, you still need the right return for it. So valuation, one can debate. as far as value is concerned, India is one of those few countries that offers you intelligence at very competitive costs. But yes, it's not necessarily the easiest country to do business in. So we have to keep improving. There's a lot of improvement that's happened in the past decade and more. But we have to keep moving because it's a moving target. And that's why you've also seen in the budget a next set of announcements on ease of doing business. We have to see those getting rolled out. It has to be executed. Just talk doesn't take us ahead. But we have seen this government do that time and time again, and we have to work with them to make a difference.
Sanjeev, what does it mean for your business in terms of retail credit, for instance? What kind of increases are you looking at? What positive signs are you seeing?
So, the helping on the income tax side is going to result in greater savings. Part of that, I think, will go into consumption. Part of that will go into financial savings. We are at about $2,700 per capita, but there is an India of 80 million people that earn the same amount of money as Europe. There's an India of 400 million people that earn the same amount of money as Indonesia. These Indians are saving and they are spending. As we keep spurring them and give them confidence that India is growing and this budget ends up supporting that, we should see a lot more consumption. And for us in financial services, when the real economy grows, the financial services sector grows 2 to 3 times that. So I see great years. I believe the next decade is India's golden decade, but we have to just work hard, keep our heads down and get it right.
In terms of your own growth, retail credit for the next 2 to 3 years, realistically, what kind of growth can we anticipate?
Well, on the retail credit, we see the opportunity for us at Bajaj Finance to grow at 20-23% year on year with very good quality growth. And we see ourselves growing across sectors, whether it's retail, whether it's mortgages, whether it's small business. We see that opportunity that the country provides.
We know that the RBI, for instance, I guess, has greater scrutiny on NBFCs. They're concerned about some of the services or how big they've grown. We know that FinServ, for instance, has grown phenomenally in a very short period of time. I'm just wondering whether there is any value in pursuing a full bank license for you.
So one, RBI has been a very mature regulator, and if you see us right through COVID, we're one of those few large countries that came through economically reasonably unscathed. So a large part of the credit goes to them, goes to the government, and the role of the private sector as well. We welcome the additional scrutiny because it also helps us become more robust. All we tell them is, let's provide a roadmap to where you want to take us so that we are not caught by surprise, because we are large organizations. It takes time to change that. The RBI a few years ago categorized NBFCs like ourselves into multiple layers. And we are in the upper layer. There are 15 of us, large ones. Many of us are bigger than many banks, as we know. But this categorization has created a formal recognition for the large NBFCs, distinct from tens of thousands of other smaller NBFCs. I believe with the greater scrutiny that RBI enforces, there will also in times be greater support that will be available to these NBFCs to go and build themselves parallel to what banks are doing. In every line of business that we are in, we compete with the best banks. So you don't need to be a bank now with this kind of support that the enabling regulation provides. There are a few asks. For example, if you're a good quality NBFC, why shouldn't you be given a credit card license with the right security in place? Why should you not have an option into a liquidity line of RBI, again with maybe SLR securities securing that, so that you create confidence in the market? Because at the end of the day, we borrow as well. We have a large liability book and we lend against that. So just some of these things which hopefully will come in the coming years, because I'm very clear that for India to build an Atmanirbhar industry, we first need to build an Atmanirbhar, which is a self-reliant financial services sector. And that can't only happen with banks. Either we need 25 more banks, or you need large NBFCs to play this role.
Right. The thing is, you look like a bank, you act like a bank, you smell like a bank, it is a bank, and it has to be regulated like a bank. That's what most people say. So why not have a full banking license? It would only make sense. Because then you are regulated like a bank.
So that's really something for the regulator to decide. We look at the license that's available to us, and we ensure that we comply with that license. But yes, when we do our business, we compete with the banks, we provide service like the banks, And as you said, we look and smell like the banks.
Any expansion plans? I know that at some point you were interested in expanding, but the RBI put a lid to it. I mean, are plans now being revived?
Yeah, no, what RBI has been doing is it's been monitoring risk and growth across the sector. And that's where a year and a half back, a couple of our products were paused for a few months, but they are on right now. So wherever they see greater risk, they engage, they do that. And again, as we say, engage early enough so that we can take appropriate action so that our customers don't suffer. And I think they understand that. Beyond that, under Bajaj Finserv, not only are we in retail and small business credit, we are also now in mid-sized corporate lending. We have a mortgage business. We have a digital securities business. We have amongst the largest life and non-life insurance companies. We've started our asset management business. So we are very clear that for every average Indian, we will have the products and services across their financial life cycle from Bajaj. And our aim is to provide them in a transparent manner, in an innovative manner, in a cost-effective manner. And we have a huge market ahead of us.
But would you be interested in other markets, like Indonesia, for instance?
Well,
outside of this country?
This is always a debate, and I would say it's probably a question of when rather than if. There is so much opportunity in India right now that when you draw out an Excel sheet for the next 10 years, the rest still seems insignificant. But at some level, it's less about the monetary impact, but more about people and their dreams. So yes, at some point.
Could you shed light on the murmurs out there about Allianz pulling out of the partnership with you? Some say it might happen in March. Could you just give an indication of what is happening there?
So there are no murmurs. We reported to the stock exchange a few months ago that Allianz was actively considering an exit from us, but at the same time they're committed to coming back to India in a position of control. Because you can have only one captain of the ship, and we are the captain of the ship. We've run the ship well. They recognize that as well. But I can understand that if you're a large company like Allianz, probably the largest insurance company in the world, it's a difficult decision. On one hand, you have two great 24-year-old partnerships, which are going very well. But on the other hand, maybe there's a need for control. So there are discussions that are on. If they head in a particular direction, we will naturally at the right time announce it.
Would March be a month to be looking at?
Who knows?
Sanjeev, thank you so much. It's been a pleasure speaking with you. Sanjeev Bajaj, Chairman and Managing Director at Bajaj Finserv. Now, the Tata Motors Group CFO says India's consumer-friendly budget, which includes a record $11.5 billion in tax cuts, should fuel spending and revitalize growth as long as inflation remains in check. I spoke exclusively with PB Balaji for his outlook on India's economy and the auto industry.
This budget has been a very tricky budget because budget is set in a context. The external context we talked about a little while earlier. In that context, we were so keen to see in the budget that we have an additional lever of growth that is there. Because this country always had strong investment-led growth in the last few years in the way the budget has positioned itself. And even in our analyst call, we explicitly said we hope we see a consumption lever also kicking in, because it's good to have that additional degree of freedom in this kind of an environment. Export-led growth may not be the most, you can't bank on that. If it comes, great, but you can't bank on that in this environment. So therefore, to release almost 1 lakh crore of money into the system through tax reductions, while ensuring fiscal deficit comes down further from 4.8 to 4.4, means there's money going in, but that money won't be eaten away by inflation. And therefore, it's actually money in my hand. And that is 1 lakh crore. That's huge money going into the system. That system means that you're going to have multiple effects starting to play out. And with inflation is not going up, consumption will go up. The minute consumption starts going up, my trucks start plying more and more, because we are the largest cargo movers in the country today. So that starts moving out. While it may immediately go and hit maybe more the two-wheeler segment in terms of the put-on price being lower, but it also starts giving the people the aspiration to have the affordability to go for it. The fact that there are I can now take a tax benefit on 2 houses that is there, means more money is in people's pockets. That gives you confidence. More money, more confidence immediately means consumption starts going up across the board. So I think it's an excellent move from that perspective, seen in the context of a continued fiscal consolidation. Both have to be seen together.
So you are convinced, you are confident that consumption will increase.
Yes.
How soon do you think that will trickle down to demand for your cars?
I think the tax changes happen from the beginning of April itself. People will see money in their pocket as of April 1st. Or depending on when they pay their taxes, definitely by June 30th, 15th, they have to pay your advance tax. So you'll get the money in the pocket by then. So, and don't forget, if my statistics are right, majority of the population is in this tax bracket, which has suddenly become tax-free. So there's only about 1 crore of population that's going to pay taxes. The rest of the guys are not paying taxes.
80% of the workforce.
80% of the workforce. That's huge. And these are the people for suddenly credit start improving. So I do expect from Q2 this year, things start, Q2 calendar year this year, that is Q1 for us in the next financial year, we should start seeing demand coming through.
Could you hazard a guess how much demand that may translate to?
2 to 3%.
What are the challenges that you think the company will face this year? I mean, the uncertain environment externally, the macro environment is not looking good, and growth, of course, is slowing from, in excess of 8% to 6.5%.
So I think this budget will give that, getting it back to the 7-8%. If it gets it, I think it would have done a phenomenal job in terms of numbers. And if I look at my opportunity areas before I talk about concern areas, I think we have not had a great year this year. The previous year has not been a great year in terms of demand. But again, we should split it. Commercial vehicles, I think, is more going through its cyclical shifts that are there. But one should expect to see that coming back in the coming year as demand picks up, because investments are still continuing. There's no change as far as investment plans are concerned. And inflation is benign. I would expect to see interest rates to come down. And
as soon as this month?
I do expect an interest rate cut now, because
25%? 25 basis points?
Because you should see that. I would expect to see that. Should is a forceful statement. I would expect to see that, because two things. One is, if global demand is not so great, inflation is not in the horizon, and the country has lived within its budget and actually consolidated further. So why would I not take that additional punt in terms of put that growth, go after growth? It will give you salvation for a lot of other problems that are there. And also the concern, even from the market's perspective, if the FII monies has to come back, there will come a time when they reassess, because their portfolio is now moving towards US. It comes back. If you are a fiscally prudent, growing economy, chances of you attracting investments are much, much higher. So that should come through as well. So, and therefore, from a commercial vehicle perspective, costs are benign, interest rates softening, growth in terms of cargo starting to move, and construct segment, tippers, etc. starting to go, you should expect to see construct coming back again. So that piece of it is how I see it. Passenger vehicles had 2 record years, and therefore maybe it's taking a little bit more time than what one would have expected. But all you had to go is visit the Auto Expo and see the amount of launches that are happening at this point in time. I think the industry will shake itself out of the challenges it finds itself by just innovating and putting the product intensity and offensive going. So it will probably put more energy to get there, and therefore that should also get back into growth. Will it be scorching growth rates? I don't expect as far as PV is concerned, but it's not needed. I'd rather have a steady, consistent growth rate, and with the innovations backing in, it'll also get everybody in the right place.
My exclusive interview with Tata Motors Group CFO, PB Balaji. Now, India's been trading for about 18 minutes now. It is in positive territory, but quite muted. Sensex index up by 0.5% right now. Remember that it dropped yesterday in line with the rest of the region, which was smacked by prospects of tariffs. Those tariffs now being reversed, at least delayed for about a month. Sensex index currently up 0.6%. We're keeping a very close eye on the Indian rupee. 87.03 is the level we're looking at. Of course, the Indian rupee currently up by about 0.2%, still hovering close to record lows. Well, still to come, I sat down with Nita Ambani, India's first female IOC member, to discuss India's ambitions to host the 2036 Olympics. That conversation is coming up next. Keep it here with us. This is Bloomberg. Fujisoft offer to 9,850. Fujisoft currently trading higher by us female IOC member. She told me more about the ambitions bid.
I don't think it's my dream alone. I think it's a dream of 1.4 billion Indians to see the Olympics being held in India. India is a land of yoga, and We have had many ancient sport. Archery and weightlifting are part of our old Indian native sport.
Countries which have hosted the Olympics have always grappled with the issue of infrastructure, for instance. Building it is one thing, maintaining it is another. How can India do it differently?
So I think we're talking about innovation and sustainability. And I think the same holds for holding the Olympics. What if you look at a sustainable model? What if you look at refurbishing old stadiums, reusing what we have? And India has shown how infrastructure has changed in this country and changed cities in a blink of an eye. I mean, what Mumbai was a few years ago, it's completely different now. So I think the move has to be a sustainable move for a bid for Olympics.
Reliance Foundation founder and chair Nita Ambani speaking to us about India's hopes of hosting the 2036 Olympics. And that's just a taste of a wide-ranging conversation. You can catch it in full on the latest episode of Latitude, which premieres on February 13th on Bloomberg Television, of course, on our YouTube channel. Subscribers can also watch on the Bloomberg Terminal. A special episode you do not want to miss. Well, in the markets, a reversal from yesterday's sell-off. Asia in positive territory. MSCI Asia Pac Index up by about 1%. What a rally for the Hang Seng, up by about 2%. Remember, the sell-off on the Hang Seng yesterday went up to as much as 3%, and that's on the back of Trump tariffs. And today we heard
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest developments in a trade war between the U.S. and China. At midnight, the Trump administration imposed a 10% tariff on all Chinese goods. This morning, China is retaliating, and Bloomberg's John Tucker joins us with more. So, John, what is Beijing's response?
Well, Nate, Beijing imposed a 15% tax on some U.S. energy imports and a 10% fee on American oil and agricultural equipment. It also put companies like Calvin Klein owner PVH Corporation and Illumina on a blacklist. Now, China said it's also going to investigate Google for alleged antitrust violations. By targeting a handful of American companies and slapping levies on some U.S. goods, this move is actually designed to avoid escalating tensions. The Chinese tariffs, they're set to kick in February 10th. This potentially leaves room for negotiation, and President Trump did signal a desire to speak with the Chinese leader Xi Jinping before the tariffs take effect. Now, the reaction in markets, that is relatively muted this morning. The offshore yuan was a little changed, up 0.3%, in fact, right now. And the Hang Seng China Enterprises Index of Chinese stocks, this is listed in Hong Kong, that rebounded after initially diving at the news of the tariffs and the Chinese countermeasures. It ended up 3.5%. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. Well, tariffs on China are moving ahead. America's neighbors are getting a reprieve. President Trump says he's delaying 25% tariffs on Canada and Mexico for a month. Those were due to kick in just after midnight this morning. Bloomberg's Derek DeCloth says Canadian Prime Minister Justin Trudeau made a number of concessions on border enforcement.
Canada will appoint a fentanyl czar to monitor and crack down on the trade of that drug, list the Mexican cartels as terrorists, and ensure a 24/7 eyes on the border, which is part of that surveillance, which will include drones and that sort of thing.
Bloomberg's Derek DeCloth reports Canada is also going ahead with a $900 million plan it announced in December to add more resources to border security, including helicopters.
And Karen, Mexico is also getting a 30-day tariff delay. President Trump says he's gotten a similar border security agreement from President Claudia Sheinbaum.
They've agreed to put in 10,000 soldiers permanently, like forever, 10,000 soldiers at their side of the border and stop fentanyl and illegal aliens from coming into our country.
President Trump's deal with Mexico is similar to one from the Biden administration. Mexico also agreed to send 10,000 troops to its own southern border in 2021. President Trump says the U.S. will negotiate with both Mexico and Canada over the next 30 days on a more permanent economic deal.
Well, Nathan, now we turn to the latest developments on the wars overseas. President Trump wants an agreement with Ukraine to access its critical mineral resources in exchange for U.S. aid and its defense against Russia.
We're telling Ukraine they have very valuable rare earth. We want what we put up to go in terms of a guarantee. We want a guarantee. We're handing them money hand over fist. We're giving them equipment. European is not keeping up with us.
And Ukraine has significant reserves of uranium, titanium, lithium, and graphite, which could be worth trillions of dollars. And President Volodymyr Zelensky offered Western allies access to these resources as part of his victory plan last year.
And later today, Karen, President Trump will meet with Israeli Prime Minister Benjamin Netanyahu in Washington. We get a preview from Bloomberg's Amy Morris in the nation's capital.
Israeli Prime Minister Benjamin Netanyahu says being the first world leader to visit the White House and meet with the president since his inauguration sends a strong signal.
I think it's a testimony to the strength of the Israeli-American alliance.
The meeting comes as U.S. and Arab mediators begin brokering the next phase of a ceasefire agreement. Netanyahu plans to discuss with President Trump critical issues facing Israel and the region, including victory over Hamas, achieving the release of the remaining hostages in Gaza, and dealing with the Iranian axis. Amy Morris, Bloomberg Radio.
All right, Amy, thank you. Well, the president has signed an executive action to create a sovereign wealth fund for the U.S. Treasury Secretary Scott Bessent and Commerce Secretary nominee Howard Lutnick will be spearheading the effort. And here's Bessent.
Within the next 12 months, we're going to monetize the asset side of the U.S. balance sheet for the American people. We're going to put the assets to work, and I think it's going to be very exciting. We're going to study best practices as done around the world.
Treasury Secretary Scott Bessent says the fund would be created within the next 12 months and could be used to facilitate the sale of TikTok. Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. Super Bowl 59 in New Orleans. The Chiefs and Eagles met the media for the first time on opening night. Commissioner Roger Goodell had a press conference earlier in the day. He said there had been no formal discussion of moving to an 18-game season. He said the league will review allegations of sexual misconduct against Ravens kicker Justin Tucker. He said the idea that referees favor the Chiefs are ridiculous. Myles Garrett, the longtime pass rusher in Cleveland, wants a trade, says he's sick of losing. The Browns say they're not going to trade him. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
गाइस 6 PM हो चुका है 6:30 न्यूयॉर्क सेशन की ओपनिंग मुझे लग रहा है उसके बाद ही कुछ मूव आएगा भी करते रहो डोंट फॉरगेट टू लाइक दिस स्ट्रीम सो गया मार्केट हाँ कुछ ज़्यादा ही सो गया नेचुरल गैस तो उठने का नाम ही नहीं ले रहा कल भी लेट ही मूव किया था आफ्टर द यूएस मार्केट ओपनिंग आई लग रहा है आज भी ऐसा ही मूव करेगा सेम क्रूड ऑयल का है कोई ट्रिगर पॉइंट नहीं मिल रहा लग रहा है मार्केट को जब तक ट्रिगर पॉइंट मिलेगा नहीं ऐसे ही मूव करता रहेगा जब तक लाइक कर दो गाइस 100 लाइक्स का टारगेट है Don't forget to like the stream and subscribe the channel. शाम को इवनिंग पे एक मूव करता है कल नेचुरल गैस भी लेट ही मूव किया था यहाँ पर काफ़ी देर के बाद वो रेजिस्टेंस एरिया तक पहुँचा वहाँ से एक सेलिंग आई थी बस वही कंटिन्यू कर रखी है मार्केट ने फिलहाल के लिए पर देखो अराउंड 6 PM तो हो ही गया है 1 PM पे आया था 5 घंटे से यहीं पर रुका हुआ है प्राइस मान के चल सकते हैं आधा घंटा और यहीं पर रुकेगा 6:30 एटलीस्ट ऑयल देखोगे क्रूड ऑयल भी स्टक हो गया उसी लेवल पे।
Says investors should brace for a rocky February. Here with the details, markets editor and host of Stocks in Translation, Jared Blakely. Hey, Jared.
Thank you, Maddie. We're going to take a look at the entire year. Since January was positive, we know that that means that the entire year tends to close green, but exactly what path will it take? We're going to take a look at February in particular in just a minute here. Excuse me, but I want to show you what's happened. I have two market maps right here. The first is a median since 1928 when we have the same day of the week. So all the Monday, February 3rds get counted in this white line that's here. And then we have the average, the median since 1990. That's in green. The median since 1990 is pretty steady there, but I want to show you what happens with February. We get kind of a rise into the middle of the month and then a decline here. And we can see in blue, this is what's already happened this year. And with today's decline, we're actually looking down a little bit. So I want to show you, before I get to the February map, what it looks like in the VIX. I use the VIX fear gauge map, and this goes back all the way to 1990, and it's just an average. This is kind of a confirming indicator for what I'm expecting stocks to do. So as a reminder, when the VIX goes up, that usually spells trouble for stocks, means they're going down. What we see here is a spike into mid-February, then a decline, then another spike into March, which just indicates to me that we have some potential headwinds, some potential bearish catalysts on the horizon here, and we might already be seeing some of them with these tariffs. Now, for February itself, this comes via Ryan Dietrich over at Carson Group, and we can see this is kind of what I was talking about in that prior chart where we have this rise in early February, a little bit of a decline here, then we peak mid-month right around Valentine's Day, and then it's a slow, steady decline into the end of the year. And I should mention that these are just tailwinds or headwinds. This isn't what the market has to do. It's just what it has done historically. And we've seen these maps kind of provide a good map over the last few years. So take this with a grain of salt. And then I'm going to finish on what has happened since the inauguration, since that's a key time period that I'm looking at. And this is the sector action as we're seeing it. Healthcare, communication services, which has Meta and Alphabet, and then consumer staples, which is defensive, and then financials. Those are all strongly in the green. We can see financials up about 1.5%. Healthcare has come, it's been a sleeper, come from behind story. That's up 5%. But what has not worked, energy and tech, those are the two big losers since the inauguration, and that's probably where we're going to see continuing the greatest volatility. But we do have a little bit of a defensive setup that we're looking at since the inauguration. So again, healthcare and staples, those are kind of defensive. Those have done well, along with communication services, and then those financials may be on that deregulation tip that we've been talking about so much.
Earlier today, President Donald Trump agreed to pause tariffs on Mexico for a month after a, quote, very friendly conversation with the country's president, Claudia Sheinbaum, resulted in Mexico agreeing to place 10,000 soldiers at the southern border. The president's action sent the market into a tailspin earlier today, but then the Dow clawed back some of its sharpest losses, even briefly turning positive after news of the pause broke. Joining us now, Joseph Lavorgna, SMBC Nikko Securities America Managing Director and former chief economist at the National Economic Council under President Trump. First time around. Joe, it's great to see you. Thank you so much for being here.
Sure, thank you.
You know, we were just having an interesting conversation with Rob Bonner. I don't know if you were listening about tariffs as a tool. And he was last mentioning tariffs as an economic tool, specifically to help industries. That is not what these tariffs right now are, right? There are tariffs as a policy tool. What do you think of tariffs as a policy tool?
So, well, here's the thing. Tariffs could be used really threefold, and everything's kind of interconnected. So you've got tariffs as a potential revenue source. You've got tariffs as a national security cudgel, where you care about the border and you want to get the parties that are involved at the table, and tariffs are a way to do it. And thirdly, you want to help reindustrialize, re-onshore business. Now, the advantage of starting with the national security issues is that IEEPA, the International Emergency Economic Policy Act, I think it is, allows the president, and rightly so, to worry about the border and to try to engage the various parties in a way that is advantageous to the U.S. Moreover, it also sets the groundwork for a very tough negotiation, which over time will aid him in inevitable negotiations with China. So I would not separate these things. The tariff is a tool that can be used a variety of different ways, and in some sense they're all integrated, because I'm going to guess that as President Trump kind of stacks up and gains some of the win, so to speak, although we don't know the deals yet on what will emerge with the U.S. and Mexico, that will help him down the line when he inevitably negotiates with the Europeans and, of course, the Chinese.
So the one that I think is one of these things is not like the other situation is indeed Canada. I mean, most folks who we're talking to say this one doesn't make sense. Like, if you're talking about a national security justification and fentanyl, then the southern border makes sense. The northern border is a very different situation. So what do you think, A, is going to be achieved, but B, is the sort of economic damage that can be done with tariffs against Canada?
But it's the problem. The bigger problem at the moment seems to be the southern border, no question. But we do share a border with Canada, and therefore I think just to look at just Mexico alone and say, well, the northern border isn't really an issue, let's not deal with it. That seems to me to be just, it's only half done. You want to look at everything because we do share a border, and eventually, my guess is these tariffs will be used in other conversations as it relates to economics. In terms of damage, about 80% of Canada's exports come to the U.S. Exports are about almost a third of the Canadian economy. The U.S. is in a far stronger negotiating standpoint vis-a-vis Mexico and Canada. So if there's going to be damage done, it's going to be in Mexico and Canada. It's not going to be in the U.S., and the president, I think, understands that.
Yeah, but Joe, tell that to the National Association of Manufacturers, to the home builders, to generic drug makers, to farmers in the U.S., to automakers, all of whom have said this will be damaging to our industries in the United States, and we don't want you to do tariffs.
Have you seen the small business data? NFIB is small business. Their numbers are booming. As President Trump said, there will be some pain, but the whole point is to reindustrialize. Some of those areas you talked about will be areas potentially ripe for more U.S. production, which will then benefit U.S. labor. So we have to be careful in what we're cherry picking. Right now, this is a negotiation. Let's see how it plays out. But so far, President Trump hasn't given anything and has already gotten something back in return, which is the Mexican government, as you reported, helping secure the border. So we'll see what happens with Canada. But remember, too, when President Trump first made these 25% comments on tariffs, Prime Minister Trudeau quickly went down in Mar-a-Lago to work out a deal. So I understand your concerns, but I have faith that Mr. Trump knows what he's doing.
Let's get more reaction on this. Third Bridge senior analyst Jordan Berger joins us now with more on Palantir's quarterly results. Jordan, the stock soaring here, at least initially in the after hours, but your take on this report, Jordan.
Yeah, thanks for having me today. Well, my first take is if we were to look a year back, Q4 2023, that was an important quarter for them. If you look at U.S. commercial, that's been key to their story for a while now. Of course, Palantir cut their teeth in the government segment. Their pivot to commercial has been a long time coming, and we really saw that come to a head. 1 year ago, the U.S. commercial revenue growth coming in at 70%. I think that was shocking to many onlookers, and they've maintained that momentum since then, perhaps not at the 70% rate. But now coming to Q4 of 2024, are they going to maintain that same type of momentum? And I think with this initial release, we see the answer is yes. They're continuing with that momentum into the next year.
And to your point, just to put some numbers around that, Jordan, we saw sales to the U.S. government up 45% to $343 million. Commercial revenue up 64% to $214 million. So it's still a smaller part of the business, but growing very quickly here. What do you think the sort of resting state of that is in terms of the balance in the business?
Absolutely. They're both, of course, very important segments of the business. The government segment will continue to be an important segment of the business. I think, if anything, underlined by all the recent news flow around DeepSeek, the geopolitical reasons around that, so on and so forth. But the commercial segment's interesting. That when they moved into this market, they had a very services-intensive business. They've been trying to scale that down for years. This is not an easy thing to do. Many software companies try. But from what we've heard from experts, they've been very successful at doing so. And their latest innovations in that regard have been the AIP offering, which is, you could think of almost like a semantic layer to make it easier to sell this very complicated product. That would be their Foundry product, as well as their bootcamp sales model, which we've heard a lot about in the past. This, again, just being a way of identifying an AI use case and drilling down on that one use case quickly to sell quickly. And all this, the point of it is to say they've been hyper-focused on moving into the commercial market and making it easier to sell this historically very challenging product to sell in these shorter-term timeframes. And it seems that we've been seeing that pay off. And now really all eyes will be on how those new lands really start to expand into those massive 7- and 8-figure deals that they're so well known for.
Jordan, who would you consider Palantir's competition?
It's a great question. I think everyone might have a different answer to that. I think historically it might be hard to say they have any direct competitor. Some may have said C3 at some times. I think we're seeing a newer set now, though, of AI tools. And we have, of course, the OpenAIs and Anthropics of the world, which do something a little different, but they are model providers. Those providers are partnering with the hyperscalers like Microsoft, AWS, and Google to provide services and the AI technology together. And that type of enablement is similar to the same type of thing Palantir does. So I think if you were to ask Palantir not to speak for them, I would guess they would say something to the extent of they have no direct competitor, but maybe you could combine enough things together to approximate it, but it's going to be a lot harder. And what we've heard from experts we've spoken to is that may still be the case. There may not be one direct competitor out there today.
So even if all of these things are true, and there is this very optimistic case for the company, most of the folks who are not as positive on the stock have said it's just too expensive. That even if you are looking at the numbers that we see today, that yes, are sending the stock higher, that some of this is already priced in this huge run-up that we've seen in the shares. What would you say to that?
Yeah, it's impossible to ignore the AI hype cycle aspect to this. And certainly Palantir's been front and center of that hype cycle now. To the extent to which that's been overvalued is not something I could comment on. You know, here at Third Bridge, we try to compile as many expert insights as possible, but we don't actually make takes on the valuation. So while I couldn't comment on that, I would agree, of course, there is a huge hype cycle around that. Trying to understand whether they are benefiting from that justly, I agree, is something that remains to be seen. No one really knows quite yet. But as far as execution, which is really what we can talk about right now, it seems from what we've seen and what we've seen today, they continue to execute best in class.
Jordan, there's also questions for investors about DOGE, our new Department of Government Efficiency. I think investors have questions about whether that could actually result in cuts to U.S. military spending, what that would mean for different names, different defense contractors, maybe what that would mean for Palantir. You know, I did ask CEO Alex Karp about that. He said, listen, bottom line, there's going to be new ways of doing business here in America. He said, in aggregate, his words, as long as you're a company that's long America, long the West, like Palantir, you're in a good spot. But I'm just curious how you think about that. Is Is that a risk if you're long Palantir you should be thinking about?
Yeah, I mean, if we think in the 21st century, America's software assets and software companies are some of our really crown jewels of our economy. So to that extent, that would be a tailwind for Palantir. Now, whether cuts might affect certain budgets and certain contracts here and there, I can't say. But if, America is long innovation, certainly Palantir stands to benefit from that.
Jordan, thank you so much. Appreciate your reaction there.
Thank you.
President Donald Trump's sweeping tariff plans are expected to impact consumers and businesses. But what kind of fallout could this have on the investing space more broadly? Here to discuss, we've got Sarah Kuntz. She's the managing director at Clio Capital, which is invested in companies like Hill House Home, Cameo, and Gemini. Sarah, it's great to speak with you. Thanks for coming on. So it's interesting because it feels like the lesson from the past 4 years has been don't fight the idea of a resilient consumer. How do you weigh that against the risk to consumer names and consumer spending more broadly that is presented by tariffs?
I think that only some consumers are resilient, right? So there is certainly a large swath of the population that has been doing very well over the past few years, has really been reaping the gains of a strong economy and a strong stock market. And then there are people who haven't, right? And so when you look at the companies that are going to be impacted, I think particularly in the face of tariffs, it's companies that import a lot from those partners. And so if you're an Amazon out of the Mag 7, it's probably going to hurt you a lot more than it hurts a Meta, although even that might have some impact if it impacts ad spend. And so I think that the question is how many of these consumers are doing well, especially if we start to see factory slowdowns and layoffs and some of the other things that have been predicted to happen in places like automakers relatively quickly.
Sarah, do you consider, I guess at what point do you consider a shift then to your investment strategy when it comes to some of these consumer-facing names?
So I invest in consumer-facing names, and a lot of them who have already been looking at, like most companies, at buying more inventory in advance from countries that could be impacted, which sounds like the EU might be next. And so, in names like Hill House, there's certainly those kinds of companies have very smart CEOs who have been listening to the news over the past handful of months when tariffs have been floated and have been responding accordingly. So I don't think that with venture, we are talking about 10, 15-year timelines. There's a huge shift right away in strategy. If you believe in something, you believe in it. But I do think that smart, good, diligent CEOs who've been, sort of looking at this and knew that it was coming are going to be rewarded much more than those who sort of just were riding on vibes and hoping it would all work out.
As we've been discussing, a roller coaster ride for investors today, with markets closing well off the lows after President Trump delayed the tariffs on Mexico. Joining us now, Alex Morris, FM Investments CEO and CIO. And Alex, as for tariffs on Canada, we don't know. We know that President Trump and Prime Minister Trudeau did have a call, but we don't know what came of it. And as an investor, how are you weighing all of this? It seems like investors were sort of caught off guard to some extent.
Well, certainly investors were caught off guard, and however you were weighing it on Friday was different than Sunday and different than today. So it's really hard to kind of get a measure when political and at times monetary policy is being made by tweet and changing by phone call by phone call. So it's really difficult. And this is where we think investors are really smart to hold on to more liquid names or, really stick to a longer term rebalancing strategy where days like today, when it's all red, you can kind of just shut the screen off and wait to fight again because there is no one way to pull this off. And what worked on Friday just turned itself on its head today.
So your message to investors, Alex, and let's put traders, off the side. Your message to investors would be, I think it's, a worthwhile lesson. I'm sure it's a question folks are asking, Alex, which is, what are you supposed to do? How are you supposed to navigate this on a day like this when you have so many, you have these cross currents, competing headlines, just trying to stay up to it? Is the message I should, I should log online, I should tweak my portfolio, or no, the investor needs to have a goal, have a strategy, and you stick with that?
I think investors definitely need a goal and a strategy. They need to know what's important to them and what are they willing to react to. Most folks really need an asset allocation that changes, less frequently than I think most are willing to admit, a rebalancing strategy that they need to stick to, even when you think you can get away with a few extra points running in your favor. And then someone, and this is why financial advice is such a great field to be in, someone to walk you off the ledge and keep you on that. Well, we think the one thing, though, that investors are underrating in their portfolios is really the impact of inflation. And a lot of the moves we see today from traders, a lot of the fear we hear from investors on what should I do is, what happens if inflation keeps going up? Most of the answers in the market today are pretty bad. And, I think we're going to see a raft of products coming out and advice coming out, including us, to try to help investors take a stab at that and take some of that inflation fear out of their portfolios.
Well, or do they hedge against that inflation fear in some way? And if so, how does one do that?
Well, so there's a lot of ways to do it. And investors have been really hard up to find
गाइस न्यूयॉर्क सेशन ओपन हो चुका है. न्यूयॉर्क सेशन ऑलरेडी ओपन नाउ. थोड़ा वॉल्यूम आ रहा है, दोनों जगह कैंडल ओपन इक्वल टू हाई ऑलमोस्ट बनी है. क्रूड में भी नेचुरल गैस में भी लेट्स सी थोड़ा मोमेंटम अप करता है. नेचुरल गैस थोड़ा नीचे ही आ जाए तो एक बाइंग ही कर लें, या फिर अगर ये थोड़ा सा पुल बैक देगा तो वापस सेलिंग का प्लान करेंगे. है याद रखना 830 पे गोल्ड और सिल्वर के लिए इंपॉर्टेंट रहेगा. क्रूड देखोगे तो फाइनली ये सपोर्ट ब्रेक करना चालू कर चुका है। वेल एंड गुड है, अगर ब्रेक करके सस्टेन करता है तो फिर नीचे बाई करेंगे, वैसे ही वीक लेवल था। हाफ ही टारगेट दिया 55 या 45 48 50 पॉइंट। देखते हैं क्लोजिंग कहाँ पर आती है कैंडल की 15 मिनट में। अगर ये नेचुरल गैस की कैंडल नीचे आ गई तो बाइंग जरूर हो जाएगी, बट अगर ये कैंडल थोड़ा सा अगर ये क्लोजिंग देती है 279 के नीचे, जो कि मुझे लग रहा है कर देगी शायद, वैसे भी 9 मिनट और हैं, अगर करती है तो जहाँ से भी बाइंग बनाई थी वहीं से सेलिंग प्लान कर लेंगे अगर एक कैंडल नीचे क्लोज हुई इन केस। ठीक है, दोनों साइड कहीं पर भी आ जाए, मोमेंटम अच्छा है। सिक्स 6180 के टारगेट के लिए सेल करेंगे। क्रूड मेरे साइड से कोई ट्रेड नहीं चल रहा था सेलिंग का, वो एक सपोर्ट था, रिस्की ट्रेड वहीं से बाइंग का बना था, ऊपर एक रेजिस्टेंस था, वहां से सेलिंग प्लान थी, आया ही नहीं। नीचे आता है तो यहाँ बाइंग का प्लान करेंगे, सेलिंग के लिए थोड़ा वेट करना पड़ेगा। अच्छा, क्रूड का चार्ट है। कैंडल और बन जाए अगर इस तरह की क्रूड में, तब देखा जाएगा सेलिंग के लिए। नेचुरल गैस में बन सकती है सेलिंग अगर एक कैंडल थोड़ी क्लोजिंग आ गई नीचे, जो कि मुझे लग रहा ही जाएगी। 5 मिनट और है बस। 279 के नीचे क्लोजिंग आती है तो पुल बैक में इसमें सेल कर सकते हैं नेचुरल गैस में, या फिर डायरेक्टली नीचे आ जाए तो बाइंग है ही सपोर्ट पे। ऑलमोस्ट 5% डाउन हो गया इंट्राडे नेचुरल गैस MCX। एक्चुअल गैस कैंडल हो गई है क्लोज टू 79 के नीचे। दो पॉसिबिलिटी, या तो नीचे आ जाए डायरेक्टली, ठीक है, नीचे सपोर्ट एरिया से बाइंग कर लेना, पूरा ही सपोर्ट जोन है, ध्यान रखना। 274, या फिर अगर ये हल्का सा पुल बैक देता है तो यहाँ से एक सेलिंग का प्लान इस तरह से रखेंगे। ओके, तो नीचे आए सपोर्ट से बाय, या फिर अगर ऊपर आए, बाकी जितना मुझे लग रहा है नीचे आएगा तो लोअर सर्किट लगा देगा ऑलमोस्ट, क्योंकि 4-4.5% डाउन है, नीचे आया तो लोअर सर्किट पे ही ओपन होगा। अब सीधा यूएस मार्केट की ओपनिंग है, उसके बाद ही मूव होगा। बाकी अगर ये पुल बैक देता है तो यहाँ पर एक वापस छोटा सा ट्रेड प्लान कर सकते हैं इस तरीके से। सीधा नीचे गया तो पहले बाइंग ही आ जाएगी। बाकी क्रूड में नहीं है अभी कुछ भी। क्रूड में नीचे सपोर्ट ही है, वहीं बाइंग कर सकते हैं, या फिर ऊपर यहाँ रेजिस्टेंस है एक, बीच में और कुछ बना ही नहीं है नया लेवल। कोई न्यूज़ वगैरह आई तो ध्यान रखना 8 PM के अराउंड, सडनली बड़ी कैंडल ना बन जाए। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम, सब्सक्राइब द चैनल एज वेल। This is Energy. Welcome once again to the live stream. गोल्ड और सिल्वर में फिलहाल के लिए कुछ लेवल क्रिएट ही नहीं करे मैंने, मार्केट थोड़ा वॉलेटिलिटी में है इसलिए। बाकी ओवरऑल गोल्ड बुलिश ही है, ऑल टाइम हाई को कल ब्रेक किया था, आज फिर से ऑल टाइम हाई के ऊपर निकल चुका है। पिवट का यूज कर सकते हो फॉर नेक्स्ट रेजिस्टेंस एरिया। आई एम गुड, आई एम गुड। बाकी 8:15:30 पे डेटा है, वो इम्पोर्टेंट है, उसका ध्यान रखना। ऊपर कोई नया रेजिस्टेंस नहीं है, पिवट पॉइंट ही है जहाँ पर रुक सकता है थोड़ा बहुत। ओवरऑल व्यू सुपर बुलिश। यहाँ एक सपोर्ट था ऑलरेडी, वो सपोर्ट लेके चला गया 2815। ये कुछ सपोर्ट ले सकते हो गोल्ड में नीचे। यूएस मार्केट ओपन होगा 8 बजे 8 बजे से पहले कोई ओपन पोजीशन होगी तो सिस्टम पे डाल देना है सर डोंट टेक द रिस्क
Good morning from the Asia Pacific. Half an hour to the open of Hong Kong. Mainland markets are still shut for one more day. You're watching the China Show. I'm David Ingles with Rebecca Chung-Loken.
Our top stories today. Asian stocks rise as President Trump delays tariffs on Canada and Mexico by a month after they agree to tougher measures against migration and drug trafficking at their borders.
Attention now turns to China, where they threatened 10% tariff due to come into force today. Trump says he may speak with Chinese officials over the next 24 hours.
Plus, how a potential shutdown of the top US aid agency could create an opening for rivals like China to boost their influence in the developing world.
Right, so markets are, I guess, in many ways dealing with this temporary truce, this opening in the clouds as it pertains to tariffs on Mexico and Canada. It's still a different conversation as it pertains to China, and, we still have about 4 hours left before the 10% tariffs kick in. Who knows, of course, what the next 4 hours might hold. But that being said, though, markets are trading on a relief rally we're seeing across just about all assets right now. Asia Pacific, we're up about 0.8 of 1%. S&P futures are back above, as you can see, that 6,000 handle. Following, of course, that reversal, which actually took place mid-session in the U.S. to close effectively almost flat. That's effectively what we got, in fact, in Hong Kong yesterday as well. A50 futures are pointing to 0.6 of 1% to the upside today. Right. The FX markets are also a very good benchmark for risk appetite right now. So at these absolute levels, we are seeing at about midpoint, if not in some other case, like the Canadian dollar, for example, has retraced almost all the way back to about 72 hours back. That being said, the dollar, as you can see, is again slightly to the upside here at early hours of Tuesday in the Asia Pacific. A lot of notes are coming out here as far as the Chinese exposure is concerned, right? So Maybank, one of them, expects the renminbi to remain weak. Capital Economics think eventually that trade talks will break down between China and the U.S. That actually takes, they think, the exchange rate to 8 against the U.S. dollar. More on that in a moment here. Oil, gold, and some of your major cryptocurrencies, and we're coming off, of course, that massive crash in Ether yesterday, down as much as 27% at one point. We're steady, and we reversed most, if not all, in fact, the losses from this time yesterday. But, yep, as you can see, we're still on tenterhooks, really.
Yeah, I mean, the day really dominated by this sort of risk reversal story. Yeah. We weren't sure whether or not that was indeed going to happen. It looked quite unlikely yesterday. But, of course, now just this big question mark over China. We have that tariff deadline nearing about 1 minute past 1 p.m. Hong Kong time or so. Mainland markets are still shut, but we did have a bit of activity in several sort of Hong Kong Chinese names. One to watch, Greentown. We had a profit warning out from them. Now, the last profit warning that came out was back in 2019. This is a name that has been seen as relatively stable, relatively resilient. But I note, last year, we had analysts warning that the story about Vanke could spread to Greentown. Essentially, this issue, developers been holding back their write-downs. Do we now see that spreading to some of these bigger, more resilient names, such as Greentown? That's one certainly could have keep watching out for that. Elsewhere, Evergrande, new energy vehicles, sort of still struggling, saying it's unsuccessful in securing strategic investors to help alleviate some of those liquidity problems. HKBN, another deal, but this one is perhaps more successful. It says discussions, negotiations with I Squared on this possible offer. They're still ongoing. No deal reached yet, but we're continuing to eye that. And then, to Dave's point about this risk rally coming back, of course, we saw that sell-off in riskier assets yesterday. Keeping an eye on crypto stocks to see what happens through today, Dave.
Yeah, it seems like a different world 24 hours from yesterday, Rebecca. We're having a conversation here. It almost seemed like we were really on the at the edge of the cliff here. In fact, one market coming online right now, also a good proxy for risk appetite, is the TAIEX index, Taiwan. So we're up 1% as far as that market is concerned. All right, let's get the latest here on all the tariff conversations, multiple angles to the story. We had to cover the story covered for you all across the world. In Washington for us, our global economy correspondent, Enda Curran. In Mexico City, we're joined by our bureau chief there, Carolina Milan. And here in Hong Kong, our chief North Asia correspondent, Stephen Engel, joins us right now as well. Enda, we start with you. What triggered this change of heart out of Donald Trump?
So two different agreements today, David. One with Mexico, with President Claudia Sheinbaum, effectively coming to the table to say they're going to put an extra 10,000 troops on the border between the U.S. and Mexico to curb the flow of fentanyl. That was a big takeaway from the agreement with Mexico. And then with Canada, Prime Minister Justin Trudeau making the point that they're going to declare cartels as terrorists. They're going to appoint a fentanyl czar. They're going to put about $1 million on the table for upping the security forces along the border there, plus 10,000 troops. And all of that together was enough for President Trump to step back and say, put a hold on the tariffs for now. But he did say that, in a month from now, those tariffs may yet go into place if they haven't yet worked out a full agreement. So certainly a big change of course today, a lot of relief around Washington, D.C., but the tariff threat hasn't gone away completely.
And, so as you say, temporary reprieve offered here. What happens next?
Well, clearly there's going to be focus and scrutiny in terms of how Mexico and Canada implement this agreement such as it is. Now, there's plenty of skepticism already in terms of what Canada and Mexico have put on the table. There have been observations that some of this has already been announced and done in the past. It's kind of a recycle of that. Nonetheless, there will be close monitoring of that and monitoring commentary as we run up to that deadline in 30 days' time from now. But remember, that's the Mexico-Canada part of it. Those tariffs, the 10% tariffs on the Chinese goods are, as of now, planned to go ahead. There is that call with President Xi supposed to be coming up. And, of course, President Trump has warned he may yet push ahead with tariffs on the European Union and other trading partners. So, yes, we've got a bit of a holding pattern on Mexico-Canada for the next 30-odd days. But going forward, I think the direction of travel in terms of trade policy remains very hawkish.
That's Bloomberg's global economy correspondent, Enda Curran in Washington there for us. And turning to our Mexico City bureau chief, Carolina Milan. Carolina, tell us, what do we know so far about the Sheinbaum-Trump agreement?
Well, I will add to everything that Enda was just saying that it sounds like it was a very productive conversation. Both the leaders outlined that. And so it sounds like the key takeaways are on three different areas: security, migration, and trade. On security, like Enda was mentioning, having troops in the northern border, the border between Mexico and the U.S., will be key for to create more impact in terms of the fentanyl trafficking and also in monitoring migration. And that would mean that the next working group to keep an eye on is the one on trade, where we're still waiting for several U.S. officials to be ratified, which means that discussions can't start right away. But what we're seeing here is that both leaders were able to find the more productive approach to work together on these issues and to kick the can down the road when it comes to the tariffs themselves.
Yeah, Carolina, it's a very good point. It really throws the story forwards. What comes next? Can I trust this truce?
I think what's going to be key for investors to watch is to see what concrete actions happen on these agreements. So certainly we'll all be looking to see when these 10,000 National Guard members are deployed and what impact that actually has in the data. Certainly we'll also be watching the other working groups, whether they lead to concrete agreements on how to proceed on migration, for example, on trade, and on these joint security measures. One win for Mexico certainly was the fact that arms that come from the U.S. into Canada were part of this discussion. This is something that has been a gripe for the country for many years. So if the cooperation is real, there might be a real shot at properly closing the discussion on the tariffs. Time will tell.
Carolina, I suppose this whole episode has also underscored some of the challenges for Mexico when it comes to relying on, a country like the U.S. that has been such an important partner and ally. What has this episode and what does it show about the challenges that are now facing Mexico from an investment point of view?
I think this is a really interesting question because it really has to do with the fact that supply chains shifted in the past couple of years due to the pandemic, due to the many shifts we saw around the world. And so there was this clear narrative that Mexico had a very unique opportunity to take advantage. It's often called nearshoring, right? This idea that companies would move to Mexico to take advantage of the proximity to the US. But I think for many companies and for many investors, that had an underlying assumption. And that assumption was that the three countries would continue to work together under this trade agreement, that these countries wanted to maintain this trade relationship that's very unique. And the reality is that this rhetoric has put all that into question, right? So we have a little more certainty now, but there has been a lot of talk about the USMCA review, the review of the United States-Canada-Mexico agreement in 2026. Some political analysts even say maybe we're moving towards a world where rather than have the agreement be valid for several years, there's going to be revisions every year. And that frankly creates noise for investors or for companies that are looking to invest in the long term. So the key here will be, are there more signals that this multilateral approach to trade will continue? Or are we at a moment where things are really changing tack and countries are looking to go their own way?
Carolina, fantastic. Thank you so much, Carolina Milan there in Mexico City, our Mexico City bureau chief. So Canada, check. Mexico, check. At least for now, things do look better. It's a lot still quite uncertain as it pertains to the China side of the conversation here. President Trump says, well, his team may soon speak with China seeking a deal to avoid that threatened 10% tariffs. We're about 4 hours away from that deadline. Stephen Engel, our Chief North Asia correspondent, is here with us to talk us through this. Any signs, Steve, that these talks are taking place, or any signs that they may actually strike a deal?
Well, the only indication is that Trump says likely to speak with China. I would assume that would be Trump and Xi Jinping speaking in the next 24 hours, and that was a couple of hours ago. White House officials are saying it could happen over the next couple of days. But as you rightfully said, this deadline of 12:01 Eastern time in the United States, which is 1:01 Beijing time or Hong Kong time, so less than 4 hours from now, is coming fast. And is there time to set up a call? I don't know where Xi Jinping is on the last day of the holiday, but I would assume he would be available for a phone call if he wants to avert this. The indications are that this will come into effect, and then they'll have to negotiate or talk on the phone after it comes into effect, unless they can get a phone call going over the next couple of hours. Obviously, they last talked on January 17th. They talked about trade, they talked about fentanyl, and they talked about TikTok, according to Donald Trump, among other things. This is a different situation. A lot of people said, oh, wow, Mexico and Canada have negotiated a 30-day truce, so China could as well, right? Well, yes, they could, but it's a different issue. They have the border issues between Mexico and the United States and Canada and the United States, and there's immigration issues. This 10% tariff on China is related to the production, America's allegations of the production of the precursors of fentanyl. And it's not something that China has necessarily said, yes, that's happening. They've said they'll work with the United States to help combat it, but what can Xi Jinping say in that phone call to basically get the same kind of delay? That's my big question.
I mean, I sort of want to put that question to you, Steve, although I know it's a bit speculative. And I'm asking because it does seem now that President Donald Trump was offering a sort of off-ramp when it came to highlighting, connecting the tariff to the immigration, when it came to Mexico and Canada. Similarly, he seems to be offering this off-ramp to China. Just give us a little bit more context about China and the fentanyl issue. Why is it so hard for Beijing to move on this?
Because it's not officially happening, right? It's not in the public discourse. And keep in mind, when Xi Jinping has to have some political advantages to having the retaliation, the reciprocal moves on the Trump threats of tariffs. And that's something that could come in trade policy, obviously, with tit-for-tat tariffs of their own, as they did in 2018 and 2019. Once those tariffs became enshrined into U.S. law, then China started rolling out the reciprocal tariffs and other actions on curbing key minerals like germanium and gallium and others. This time, what can they pledge to the public of China and to the public of the United States on fentanyl? It's a question I'm asking all the time as well. I think there are words to be said that could perhaps allow Donald Trump to give that reprieve. But again, what is it? That's what we don't know. China, again, is on holiday right now. So I think they're waiting for this to actually happen, and then they will start putting into place some of the steps. But they're going to have to make some serious acknowledgments in that phone call with Donald Trump to get the reprieve on the 10% tariffs because it's tied to fentanyl.
Right, and we're 4 hours and counting down to whenever that deadline comes into place, and then possibly this call. That's Bloomberg's chief North Asia correspondent there for us, Stephen Engel. And we have plenty more ahead on the impact of the tariff turmoil. The Amundi Investment Institute joins us to talk market strategy next. And we're counting down to the open of trade in Hong Kong, the second day back after the Lunar New Year for Hong Kong markets. This is the China Show.
Good morning from the Asia Pacific. Half an hour to the open of Hong Kong. Mainland markets are still shut for one more day. You're watching the China Show. I'm David Ingles with Rebecca Chung. Welcome.
Our top stories today. Asian stocks rise as President Trump delays tariffs on Canada and Mexico by a month after they agreed to tougher measures against migration and drug trafficking at their borders.
Attention now turns to China, where they threatened 10% tariff due to come into force today. Trump says he may speak with Chinese officials over the next 24 hours.
Plus, how a potential shutdown of the top U.S. aid agency could create an opening for rivals like China to boost their influence in the developing world.
Right, so markets are, I guess, in many ways dealing with this temporary truce, this opening in the clouds as it pertains to tariffs on Mexico and Canada. It's still a different conversation as it pertains to China, and, we still have about 4 hours left before the 10% tariffs kick in. Who knows, of course, what the next 4 hours might hold. But that being said, though, markets are trading on a relief rally we're seeing across just about all assets right now. Asia Pacific, we're up about 0.8 of 1%. S&P futures are back above, as you can see, that 6,000 handle. Following, of course, that reversal, which actually took place mid-session in the U.S. to close effectively almost flat. That's effectively what we got, in fact, in Hong Kong yesterday as well. A50 futures are pointing to 0.6 of 1% to the upside today. Right. The FX markets are also a very good benchmark for risk appetite right now. So at these absolute levels, we are seeing at about midpoint, if not in some other cases like the Canadian dollar, for example, has retraced almost all the way back to about 72 hours back. That being said, the dollar, as you can see, is again slightly to the upside here in early hours of Tuesday in the Asia Pacific. A lot of notes are coming out here as far as the Chinese exposure is concerned, right? So Maybank, one of them, expects the renminbi to remain weak. Capital Economics think eventually that trade talks will break down between China and the U.S. That actually takes, they think, the exchange rate to 8 against the U.S. dollar. More on that in a moment here. Oil, gold, and some of your major cryptocurrencies, and we're coming off, of course, that massive crash in Ether yesterday, down as much as 27% at one point. We're steady, and we've reversed most, if not all, in fact, the losses from this time yesterday. But, yep, as you can see, we're still on tenterhooks, really.
Yeah, I mean, the day really dominated by this sort of risk reversal story. Yeah. We weren't sure whether or not that was indeed going to happen. It looked quite unlikely yesterday. But, of course, now just this big question mark over China. We have that tariff deadline nearing about 1 minute past 1 p.m. Hong Kong time or so. Mainland markets are still shut, but we did have a bit of activity in several sort of Hong Kong Chinese names. names. One to watch, Greentown. We had a profit warning out from them. Now, the last profit warning that came out was back in 2019. This is a name that has been seen as relatively stable, relatively resilient. But I note, last year, we had analysts warning that the story about Vanka could spread to Greentown. Essentially, this issue, developers been holding back their write-downs. Do we now see that spreading to some of these bigger, more resilient names, such as Greentown? That's one certainly could have keep watching out for that. Elsewhere, Evergrande, new energy vehicles, sort of still struggling, saying it's unsuccessful in securing strategic investors to help alleviate some of those liquidity problems. HKBN, another deal, but this one is perhaps more successful. Says discussions, negotiations with I-Squared on this possible offer. They're still ongoing. No deal reached yet, but we're continuing to eye that. And then, you know, to Dave's point about this risk rally coming back, of course, we saw that sell-off in riskier assets yesterday. Keeping an eye on crypto stocks to see what happens through today, Dave.
Yeah, it seems like a different world 24 hours from yesterday, Rebecca. You know, we're having a conversation here. It almost seemed like we were really on the at the edge of the cliff here. In fact, one market coming online right now, also a good proxy for risk appetite, is the TAIEX index, Taiwan. So we're up 1% as far as that market is concerned. All right, let's get the latest here on all the tariff conversations, multiple angles to the story. We had to cover the story covered for you all across the world. In Washington for us, our global economy correspondent, Enda Curran. In Mexico City, we're joined by our bureau chief there, Carolina Milan. And here in Hong Kong, our chief North Asia correspondent, Stephen Engel, joins us right now as well. Enda, we start with you. What triggered this change of heart out of Donald Trump?
So two different agreements today, David. One with Mexico, with President Claudia Sheinbaum, effectively coming to the table to say they're going to put an extra 10,000 troops on the border between the U.S. and Mexico to curb the flow of fentanyl. That was a big takeaway from the agreement with Mexico. And then with Canada, Prime Minister Justin Trudeau making the point that they're going to declare cartels as terrorists. They're going to appoint a fentanyl czar. They're going to put about $1 million on the table for upping the security forces along the border there, plus 10,000 troops. And all of that together was enough for President Trump to step back and say, put a hold on the tariffs for now. But he did say that, you know, in a month from now, those tariffs may yet go into place if they haven't yet worked out a full agreement. So certainly a big change, of course, today. A lot of relief around Washington, D.C., but the tariff threat hasn't gone away completely.
And, I mean, so as you say, temporary reprieve offered here. What happens next?
Well, clearly there's going to be focus and scrutiny in terms of how Mexico and Canada implement this agreement such as it is. Now, there's plenty of skepticism already in terms of what Canada and Mexico have put on the table. There have been observations that some of this has already been announced and done in the past. It's kind of a recycle of that. Nonetheless, there will be close monitoring of that and monitoring commentary as we run up to that deadline in a 30 days time from now. But remember, that's the Mexico-Canada part of it. Those tariffs, the 10% tariffs on the Chinese goods are, as of now, planned to go ahead. There is that call with President Xi supposed to be coming up. And, of course, President Trump has warned he may yet push ahead with tariffs on the European Union and other trading partners. So, yes, we've got a bit of a holding pattern on Mexico-Canada for the next 30-odd days. But going forward, I think the direction of travel in terms of trade policy remains very hawkish.
That's Bloomberg's global economy correspondent, Enda Curran in Washington there for us. And turning to our Mexico City bureau chief, Carolina Milan. Carolina, tell us, what do we know so far about the Sheinbaum-Trump agreement?
Well, I will add to everything that Enda was just saying that it sounds like it was a very productive conversation. Both the leaders outlined that. And so it sounds like the key takeaways are on three different areas: security, migration, and trade. On security, like Enda was mentioning, having troops in the northern border, the border between Mexico and the U.S., will be key for to create more impact in terms of the fentanyl trafficking and also in monitoring migration. And that would mean that the next working group to keep an eye on is the one on trade, where we're still waiting for several U.S. officials to be ratified, which means that discussions can't start right away. But what we're seeing here is that both leaders were able to find the more productive approach to work together on these issues and to kick the can down the road when it comes to the tariffs themselves.
Yeah, Carolina, it's a very good point. It really throws the story forwards. What comes next? Can I trust this truce?
I think what's going to be key for investors to watch is to see what concrete actions happen on these agreements. So certainly we'll all be looking to see when these 10,000 National Guard members are deployed and what impact that actually has in the data. Certainly we'll also be watching the other working groups, whether they lead to concrete agreements on how to proceed on migration, for example, on trade, and on these joint security measures. One win for Mexico certainly was the fact that arms that come from the U.S. into Canada were part of this discussion. This is something that has been a gripe for the country for many years. So if the cooperation is real, there might be a real shot at properly closing the discussion on the tariffs. Time will tell.
Carolina, I suppose this whole episode has also underscored some of the challenges for Mexico when it comes to relying on, a country like the U.S. that has been such an important partner and ally. What has this episode and what does it show about the challenges that are now facing Mexico from an investment point of view?
I think this is a really interesting question because it really has to do with the fact that supply chains shifted in the past couple of years due to the pandemic, due to the many shifts we saw around the world. And so there was this clear narrative that Mexico had a very unique opportunity to take advantage. It's often called nearshoring, right? This idea that companies would move to Mexico to take advantage of the proximity to the U.S. But I think for many companies and for many investors, that had an underlying assumption. And that assumption was that the three countries would continue to work together under this trade agreement, that these countries wanted to maintain this trade relationship that's very unique. And the reality is that this rhetoric has put all that into question, right? So we have a little more certainty now, but there has been a lot of talk about the USMCA review, the review of the United States-Canada-Mexico agreement in 2026. Some political analysts even say maybe we're moving towards a world where rather than have the agreement be valid for several years, there's going to be revisions every year. And that, frankly, creates noise for investors or for companies that are looking to invest in the long term. So the key here will be, are there more signals that this multilateral approach to trade will continue? Or are we at a moment where things are really changing tack and countries are looking to go their own way?
Carolina, fantastic. Thank you so much. Carolina Milan there in Mexico City, our Mexico City bureau chief. So Canada, check. Mexico, check. At least for now, things do look better. It's a lot still quite uncertain as it pertains to the China side of the conversation here. President Trump says, his team may soon speak with China seeking a deal to avoid that threatened 10% tariffs. We're just about 4 hours away from that deadline. Stephen Engel, our Chief North Asia correspondent, is here with us to talk us through this. Any signs, Steve, that these talks are taking place, or any signs that they may actually strike a deal?
Well, the only indication is that Trump says likely to speak with China. I would assume that would be Trump and Xi Jinping speaking in the next 24 hours, and that was a couple of hours ago. White House officials are saying it could happen over the next couple of days. But as you rightfully said, this deadline of 12:01 Eastern time in the United States, which is 1:01 Beijing time or Hong Kong time, so less than 4 hours from now, is coming fast. And is there time to set up a call? I don't know where Xi Jinping is on the last day of the holiday, but I would assume he would be available for a phone call if he wants to avert this. The indications are that this will come into effect, and then they'll have to negotiate or talk on the phone after it comes into effect, unless they can get a phone call going over the next couple of hours. Obviously, they last talked on January 17th. They talked about trade, they talked about fentanyl, and they talked about TikTok, according to Donald Trump, among other things. This is a different situation. A lot of people said, oh, wow, Mexico and Canada have negotiated a 30-day truce, so China could as well, right? Well, yes, they could, but it's a different issue. They have the border issues between Mexico and the United States and Canada and the United States, and there's immigration issues. This 10% tariff on China is related to the production, America's allegations of the production of the precursors of fentanyl. And it's not something that China has necessarily said, yes, that's happening. They've said they'll work with the United States to help combat it, but what can Xi Jinping say in that phone call to basically get the same kind of delay? That's my big question.
I mean, I sort of want to put that question to you, Steve, although I know it's a bit speculative. And I'm asking because it does seem now that President Donald Trump was offering a sort of off-ramp when it came to highlighting, connecting the tariff to the immigration, when it came to Mexico and Canada. Similarly, he seems to be offering this off-ramp to China. Just give us a little bit more context about China and the fentanyl issue. Why is it so hard for Beijing to move on this?
Because it's not officially happening, right? It's not in the public discourse. And keep in mind, when Xi Jinping has to have some political advantages to having the retaliation, the reciprocal moves on the Trump threats of tariffs. And that's something that could come in trade policy, obviously, with tit-for-tat tariffs of their own, as they did in 2018 and 2019. Once those tariffs became enshrined into U.S. law, then China started rolling out the reciprocal tariffs and other actions on curbing key minerals like germanium and gallium and others. This time, what can they pledge to the public of China and to the public of the United States on fentanyl? It's a question I'm asking all the time as well. I think there are words to be said that could perhaps allow Donald Trump to give that reprieve. But again, what is it? That's what we don't know. China, again, is on holiday right now. So I think they're waiting for this to actually happen, and then they will start putting into place some of the steps. But they're going to have to make some serious acknowledgments in that phone call with Donald Trump to get the reprieve on the 10% tariffs because it's tied to fentanyl.
Right, and we're 4 hours and counting down to whenever that deadline comes into place and then possibly this call. That's Bloomberg's chief North Asia correspondent there for us, Stephen Engel. And we have plenty more ahead on the impact of the tariff turmoil. The Amundi Investment Institute joins us to talk market strategy next. And we're counting down to the open of trade in Hong Kong, the second day back after the Lunar New Year for Hong Kong markets. This is the China Show.
Good morning from the Asia Pacific. Half an hour to the open of Hong Kong. Mainland markets are still shut for one more day. You're watching the China Show. I'm David Ingles with Rebecca Chung-Loken.
Our top stories today. Asian stocks rise as President Trump delays tariffs on Canada and Mexico by a month after they agreed to tougher measures against migration and drug trafficking at their borders.
Attention now turns to China, where a threatened 10% tariff due to come into force today. Trump says he may speak with Chinese officials over the next 24 hours.
Plus, how a potential shutdown of the top U.S. aid agency could create an opening for rivals like China to boost their influence in the developing world.
Right, so markets are, I guess, in many ways dealing with this temporary truce, this opening in the clouds as it pertains to tariffs on Mexico and Canada. It's still a different conversation as it pertains to China, and, we still have about 4 hours left before the 10% tariffs kick in. Who knows, of course, what the next 4 hours might hold. But that being said, though, markets are trading on a relief rally we're seeing across just about all assets right now. Asia Pacific, we're up about 0.8%. S&P futures are back above, as you can see, that 6,000 handle. Following, of course, the reversal, which actually took place mid-session in the U.S. to close effectively almost flat. That's effectively what we got, in fact, in Hong Kong yesterday as well. A50 futures are pointing to 0.6% to the upside today. Right. The FX markets are also a very good benchmark for risk appetite right now. So at these absolute levels, we are seeing at about midpoint, if not in some other cases, like the Canadian dollar, for example, has retraced almost all the way back to about 72 hours back. That being said, the dollar, as you can see, is again slightly to the upside here, early hours of Tuesday in the Asia Pacific. A lot of notes are coming out here as far as the Chinese exposure is concerned, right? So Maybank, one of them, expects the renminbi to remain weak. Capital Economics think eventually that trade talks will break down between China and the U.S. that actually takes, they think, the exchange rate to 8 against the U.S. dollar. More on that in a moment here. Oil, gold, and some of your major cryptocurrencies that were coming off, of course, that massive crash in Ether yesterday, down as much as 27% at one point. We're steady, and we reversed most, if not all, in fact, the losses from this time yesterday. But, yep, as you can see, we're still on tenterhooks, really.
Yeah, I mean, the day really dominated by this sort of risk reversal story. We weren't sure whether or not that was indeed going to happen. It looked quite unlikely yesterday. But, of course, now just this big question mark over China. We have that tariff deadline nearing about 1 minute past 1 p.m. Hong Kong time or so. Mainland markets are still shut, but we did have a bit of activity in several sort of Hong Kong Chinese names. One to watch, Greentown. We had a profit warning out from them. Now, the last profit warning that came out was back in 2019. This is a name that has been seen as relatively stable, relatively resilient. But I note, last year, we had analysts warning that the story about Vanke could spread to Greentown. Essentially, this issue, developers been holding back their write-downs. Do we now see that spreading to some of these bigger, more resilient names, such as Greentown? That's one certainly could have keep watching out for that. Elsewhere, Evergrande, new energy vehicles, sort of still struggling, saying it's unsuccessful in securing strategic investors to help alleviate some of those liquidity problems. HKBN, another deal, but this one is perhaps more successful. Says discussions, negotiations with I Squared on this possible offer. They're still ongoing. No deal reached yet, but we're continuing to eye that. And then, you know, to Dave's point about this risk rally coming back, of course, we said that sell-off in riskier assets yesterday. Keeping an eye on crypto stocks to see what happens through today, Dave.
Yeah, it seems like a different world 24 hours from yesterday, Rebecca. You know, we're having a conversation here. It almost seemed like we were really on the at the edge of the cliff here. In fact, one market coming online right now, also a good proxy for risk appetite, is the TAIEX index, Taiwan. So we're up 1% as far as that market is concerned. All right, let's get the latest here on all the tariff conversations, multiple angles to the story. We had to cover the story covered for you all across the world. In Washington for us, our global economy correspondent, Enda Kern. In Mexico City, we're joined by our bureau chief there, Carolina Milan. And here in Hong Kong, our chief North Asia correspondent, Stephen Engel, joins us right now as well. Enda, we start with you. What triggered this change of heart out of Donald Trump?
So two different agreements today, David. One with Mexico, with President Claudia Sheinbaum, effectively coming to the table to say they're going to put an extra 10,000 troops on the border between the U.S. and Mexico to curb the flow of fentanyl. That was a big takeaway from the agreement with Mexico. And then with Canada, Prime Minister Justin Trudeau making the point that they're going to declare cartels as terrorists. They're going to appoint a fentanyl czar. They're going to put about $1 million on the table for upping the security forces along the border there, plus 10,000 troops. And all of that together was enough for President Trump to step back and say, put a hold on the tariffs for now. But he did say that, in a month from now, those tariffs may yet go into place if they haven't yet worked out a full agreement. So certainly a big change, of course, today. A lot of relief around Washington, D.C., but the tariff threat hasn't gone away completely.
And, so as you say, temporary reprieve offered here. What happens next?
Well, clearly there's going to be focus and scrutiny in terms of how Mexico and Canada implement this agreement such as it is. Now, there's plenty of skepticism already in terms of what Canada and Mexico have put on the table. There have been observations that some of this has already been announced and done in the past. It's kind of a recycle of that. Nonetheless, there will be close monitoring of that and monitoring commentary as we run up to that deadline in 30 days' time from now. But remember, that's the Mexico-Canada part of it. Those tariffs, the 10% tariffs on the Chinese goods are, as of now, planned to go ahead. There is that call with President Xi supposed to be coming up. And, of course, President Trump has warned he may yet push ahead with tariffs on the European Union and other trading partners. So, yes, we've got a bit of a holding pattern on Mexico-Canada for the next 30-odd days. But going forward, I think the direction of travel in terms of trade policy remains very hawkish.
That's Bloomberg's global economy correspondent, Enda Kern in Washington there for us. And turning to our Mexico City bureau chief, Carolina Milan. Carolina, tell us, what do we know so far about the Sheinbaum-Trump agreement?
Well, I will add to everything that Enda was just saying that it sounds like it was a very productive conversation. Both the leaders outlined that. And so it sounds like the key takeaways are on three different areas: security, migration, and trade. On security, like Enda was mentioning, having troops in the northern border, the border between Mexico and the U.S., will be key for to create more impact in terms of the fentanyl trafficking and also in monitoring migration. And that would mean that the next working group to keep an eye on is the one on trade, where we're still waiting for several U.S. officials to be ratified, which means that discussions can't start right away. But what we're seeing here is that both leaders were able to find the more productive approach to work together on these issues and to kick the can down the road when it comes to the tariffs themselves.
Yeah, Carolina, it's a very good point. It really throws the story forwards. What comes next? Can I trust this truce?
I think what's going to be key for investors to watch is to see what concrete actions happen on these agreements. So certainly we'll all be looking to see when these 10,000 National Guard members are deployed and what impact that actually has in the data. Certainly we'll also be watching the other working groups, whether they lead to concrete agreements on how to proceed on migration, for example, on trade, and on these joint security measures. One win for Mexico certainly was the fact that arms that come from the U.S. into Canada were part of this discussion. This is something that has been a gripe for the country for many years. So if the cooperation is real, there might be a real shot at properly closing the discussion on the tariffs. Time will tell.
Carolina, I suppose this whole episode has also underscored some of the challenges for Mexico when it comes to relying on, a country like the U.S. that has been such an important partner and ally. What has this episode and what does it show about the challenges that are now facing Mexico from an investment point of view?
I think this is a really interesting question because it really has to do with the fact that supply chains shifted in the past couple of years due to the pandemic, due to the many shifts we saw around the world. And so there was this clear narrative that Mexico had a very unique opportunity to take advantage. It's often called nearshoring, right? This idea that companies would move to Mexico to take advantage of the proximity to the U.S. But I think for many companies and for many investors, that had an underlying assumption. And that assumption was that the three countries would continue to work together under this trade agreement, that these countries wanted to maintain this trade relationship that's very unique. And the reality is that this rhetoric has put all that into question, right? So we have a little more certainty now, but there has been a lot of talk about the USMCA review, the review of the United States-Canada-Mexico agreement in 2026. Some political analysts even say maybe we're moving towards a world where rather than have the agreement be valid for several years, there's going to be revisions every year. And that, frankly, creates noise for investors or for companies that are looking to invest in the long term. So the key here will be, are there more signals that this multilateral approach to trade will continue? Or are we at a moment where things are really changing tack and countries are looking to go their own way?
Carolina, fantastic. Thank you so much, Carolina Milan there in Mexico City, our Mexico City bureau chief. So Canada, check. Mexico, check. At least for now, things do look better. It's a lot still quite uncertain as it pertains to the China side of the conversation here. President Trump says, his team may soon speak with China seeking a deal to avoid that threatened 10% tariffs. We're just about 4 hours away from that deadline. Stephen Engel, our Chief North Asia correspondent, is here with us to talk us through this. Any signs, Steve, that these talks are taking place, or any signs that they may actually strike a deal?
Well, the only indication is that Trump says likely to speak with China. I would assume that would be Trump and Xi Jinping speaking in the next 24 hours, and that was a couple of hours ago. White House officials are saying it could happen over the next couple of days. But as you rightfully said, this deadline of 12:01 Eastern time in the United States, which is 1:01 Beijing time or Hong Kong time, so less than 4 hours from now, is coming fast. And is there time to set up a call? I don't know where Xi Jinping is on the last day of the holiday, but I would assume he would be available for a phone call if he wants to avert this. The indications are that this will come into effect, and then they'll have to negotiate or talk on the phone after it comes into effect, unless they can get get a phone call going over the next couple of hours. Obviously, they last talked on January 17th. They talked about trade, they talked about fentanyl, and they talked about TikTok, according to Donald Trump, among other things. This is a different situation. A lot of people said, oh, wow, Mexico and Canada have negotiated a 30-day truce, so China could as well, right? Well, yes, they could, but it's a different issue. They have the border issues between Mexico and the United States and Canada and the United States, and there's immigration issues. This 10% tariff on China is related to the production, America's allegations of the production of the precursors of fentanyl. And it's not something that China has necessarily said, yes, that's happening. They've said they'll work with the United States to help combat it, but what can Xi Jinping say in that phone call to basically get the same kind of delay? That's my big question.
I mean, I sort of want to put that question to you, Steve, although I know it's a bit speculative. And I'm asking because it does seem now that President Donald Trump was offering a sort of off-ramp when it came to highlighting, connecting the tariff to the immigration, when it came to Mexico and Canada. Similarly, he seems to be offering this off-ramp to China. Just give us a little bit more context about China and the fentanyl issue. Why is it so hard for Beijing to move on this?
Because it's not officially happening, right? It's not in the public discourse. And keep in mind, when Xi Jinping has to have some political advantages to having the retaliation, the reciprocal moves on the Trump threats of tariffs. And that's something that could come in trade policy, obviously, with tit-for-tat tariffs of their own, as they did in 2018 and 2019. Once those tariffs became enshrined into U.S. law, then China started rolling out the reciprocal tariffs and other actions on curbing key minerals like germanium and gallium and others. This time, what can they pledge to the public of China and to the public of the United States on fentanyl? It's a question I'm asking all the time as well. I think there are words to be said that could perhaps allow Donald Trump to give that reprieve. But again, what is it? That's what we don't know. China, again, is on holiday right now. So I think they're waiting for this to actually happen, and then they will start putting into place some of the steps. But they're going to have to make some serious acknowledgments in that phone call with Donald Trump to get the reprieve on the 10% tariffs because it's tied to fentanyl.
Right, and we're 4 hours and counting down to whenever that deadline comes into place and then possibly this call. That's Bloomberg's chief North Asia correspondent there for us, Stephen Engel. And we have plenty more ahead on the impact of the tariff turmoil. The Amundi Investment Institute joins us to talk market strategy next. And we're counting down to the open of trade in Hong Kong, the second day back after the Lunar New Year for Hong Kong markets. This is The China Show.
Good morning from the Asia Pacific. Half an hour to the open of Hong Kong. Mainland markets are still shut for one more day. You're watching The China Show. I'm David Ingles with Rebecca Chung. Welcome.
Our top stories today. Asian stocks rise as President Trump delays tariffs on Canada and Mexico by a month after they agreed to tougher measures against migration and drug trafficking at their borders.
Attention now turns to China, with a threatened 10% tariff due to come into force today. Trump says he may speak with Chinese officials over the next 24 hours.
Plus, how a potential shutdown of the top U.S. aid agency could create an opening for rivals like China to boost their influence in the developing world.
Right, so markets are, I guess, in many ways dealing with this temporary truce, this opening in the clouds as it pertains to tariffs on Mexico and Canada. It's still a different conversation as it pertains to China, and, we still have about 4 hours left before the 10% tariffs kick in. Who knows, of course, what the next 4 hours might hold. But that being said, though, markets are trading on a relief rally we're seeing across just about all assets right now. Asia Pacific, we're up about 0.8 of 1%. S&P futures are back above, as you can see, that 6,000 handle. Following, of course, that reversal, which actually took place mid-session in the U.S. to close effectively almost flat. That's effectively what we got, in fact, in Hong Kong yesterday as well. A50 futures are pointing to 0.6 of 1% to the upside today. Right. The FX markets are also a very good benchmark for risk appetite right now. So at these absolute levels, we are seeing at about midpoint, if not in some other cases like the Canadian dollar, for example, has retraced almost all the way back to about 72 hours back. That being said, the dollar, as you can see, is again slightly to the upside here in early hours of Tuesday in the Asia Pacific. A lot of notes are coming out here as far as the Chinese exposure is concerned, right? So Maybank, one of them, expects the renminbi to remain weak. Capital Economics think eventually that trade talks will break down between China and the U.S. That actually takes, they think, the exchange rate to 8 against the U.S. dollar. More on that in a moment here. Oil, gold, and some of your major cryptocurrencies, and we're coming off, of course, that massive crash in Ether yesterday, down as much as 27% at one point. We're steady, and we reversed most, if not all, in fact, the losses from this time yesterday. But, yep, as you can see, we're still on tenterhooks, really.
Yeah, I mean, the day really dominated by this sort of risk reversal story. Yeah. We weren't sure whether or not that was indeed going to happen. It looked quite unlikely yesterday. But, of course, now just this big question mark over China. We have that tariff deadline nearing about 1 minute past 1 p.m. Hong Kong time or so. Mainland markets are still shut, but we did have a bit of activity in several sort of Hong Kong Chinese names. One to watch, Greentown. We had a profit warning out from them. Now, the last profit warning that came out was back in 2019. This is a name that has been seen as relatively stable, relatively resilient. But I note, last year, we had analysts warning that the story about Vanke could spread to Greentown. Essentially, this issue, developers been holding back their write-downs. Do we now see that spreading to some of these bigger, more resilient names, such as Greentown? That's one certainly could have keep watching out for that. Elsewhere, Evergrande, new energy vehicles, sort of still struggling, saying it's unsuccessful in securing strategic investors to help alleviate some of those liquidity problems. HKBN, another deal, but this one is perhaps more successful. Says discussions, negotiations with I Squared on this possible offer. They're still ongoing. No deal reached yet, but we're continuing to eye that. And then, you know, to Dave's point about this risk rally coming back, of course, we saw that sell-off in riskier assets yesterday. Keeping an eye on crypto stocks to see what happens through today, Dave.
Yeah, it seems like a different world 24 hours from yesterday, Rebecca. You know, we're having a conversation here. It almost seemed like we were really on the at the edge of the cliff here. In fact, one market coming online right now, also a good proxy for risk appetite, is the TAIEX index, Taiwan. So we're up 1% as far as that market is concerned. All right, let's get the latest here on all the tariff conversations, multiple angles to the story. We had to cover the story covered for you all across the world. In Washington for us, our global economy correspondent, Enda Kern. In Mexico City, we're joined by our bureau chief there, Carolina Milan. And here in Hong Kong, our chief North Asia correspondent, Stephen Engel, joins us right now as well. Enda, we start with you. What triggered this change of heart out of Donald Trump?
So two different agreements today, David. One with Mexico, with President Claudia Sheinbaum, effectively coming to the table to say they're going to put an extra 10,000 troops on the border between the U.S. and Mexico to curb the flow of fentanyl. That was a big takeaway from the agreement with Mexico. And then with Canada, Prime Minister Justin Trudeau making the point that they're going to declare cartels as terrorists. They're going to appoint a fentanyl czar. They're going to put about $1 million on the table for upping the security forces along the border there, plus 10,000 troops. And all of that together was enough for President Trump to step back and say, put a hold on the tariffs for now. But he did say that, in a month from now, those tariffs may yet go into place if they haven't yet worked out a full agreement. So certainly a big change, of course, today. A lot of relief around Washington, D.C., but the tariff threat hasn't gone away completely.
And, so as you say, temporary reprieve offered here. What happens next?
Well, Clearly, there's going to be focus and scrutiny in terms of how Mexico and Canada implement this agreement, such as it is now. There's plenty of skepticism already in terms of what Canada and Mexico have put on the table. There have been observations that some of this has already been announced and done in the past. It's kind of a recycle of that. Nonetheless, there will be close monitoring of that and monitoring commentary as we run up to that deadline in a 30 days' time from now. But remember, that's the Mexico-Canada part of it. Those tariffs, 10% tariffs on the Chinese goods, are as of now planned to go ahead. There is a call with President Xi supposed to be coming up. And of course, President Trump has warned he may yet push ahead with tariffs on the European Union and other trading partners. So yes, we've got a bit of a holding pattern on Mexico-Canada for the next 30-odd days. But going forward, I think the direction of travel in terms of trade policy remains very hawkish.
That's Bloomberg's global economy correspondent, Enda Curran in Washington there for us. And turning to our Mexico City Bureau Chief, Carolina Milan. Carolina, tell us, what do we know so far about the Sheinbaum-Trump agreement?
Well, I will add to everything that Enda was just saying that it sounds like it was a very productive conversation. Both the leaders outlined that. And so it sounds like the key takeaways are in three different areas: security, migration, and trade. On security, like Enda was mentioning, having troops in the northern border, the border between Mexico and the U.S., will be key for to create more impact in terms of the fentanyl trafficking and also in monitoring migration. And that would mean that the next working group to keep an eye on is the one on trade, where we're still waiting for several U.S. officials to be ratified, which means that discussions can't start right away. But what we're seeing here is that both leaders were able to find the more productive approach to work together on these issues and to kick the can down the road when it comes to the tariffs themselves.
Yeah, Carolina, it's a very good point. It really throws the story forwards. What comes next? Can I trust this truce?
I think what's going to be key for investors to watch is to see what concrete actions happen on these agreements. So certainly we'll all be looking to see when these 10,000 National Guard members are deployed and what impact that actually has in the data. Certainly we'll also be watching the other working groups, whether they lead to concrete agreements on how to proceed on migration, for example, on trade, and on these joint security measures. One win for Mexico certainly was the fact that arms that come from the U.S. into Canada were part of this discussion. This is something that has been a gripe for the country for many years. So if the cooperation is real, there might be a real shot at properly closing the discussion on the tariffs. Time will tell.
Carolina, I suppose this whole episode has also underscored some of the challenges for Mexico when it comes to relying on, a country like the U.S. that has been such an important partner and ally. What has this episode and what does it show about the challenges that are now facing Mexico from an investment point of view?
I think this is a really interesting question because it really has to do with the fact that supply chains shifted in the past couple of years due to the pandemic, due to the many shifts we saw around the world. And so there was this clear narrative that Mexico had a very unique opportunity to take advantage. It's often called nearshoring, right? This idea that companies would move to Mexico to take advantage of the proximity to the U.S. But I think for many companies and for many investors, that had an underlying assumption. And that assumption was that the three countries would continue to work together under this trade agreement, that these countries wanted to maintain this trade relationship that's very unique. And the reality is that this rhetoric has put all that into question, right? So we have a little more certainty now, but there has been a lot of talk about the USMCA review, the review of the United States-Canada-Mexico agreement in 2026. Some political analysts even say maybe we're moving towards a world where rather than have the agreement be valid for several years, there's going to be revisions every year. And that, frankly, creates
इस यूएस मार्केट ओपन होने वाला है, क्रूड सपोर्ट रेंज के आसपास पहुंच चुका है, ठीक है, रुकेगा यहाँ पर 8 PM यूएस मार्केट ओपनिंग। सिल्वर और गोल्ड का व्यू बुलिश ही है, पहले ही बता दिया था। सिल्वर एंड गोल्ड व्यू इज बुलिश ओवरऑल। इस मार्केट ओपन होने वाला है, कोई ओपनिंग पोजीशन है तो एसएल सिस्टम पर डाल दो, ठीक है। 1 मिनट और रह गया यूएस मार्केट की ओपनिंग का, 8 PM यूएस मार्केट ओपन। करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। गोल्ड के लेवल वही बताया था जो पुराने वाले, कुछ चेंज नहीं हुआ है, ऑल टाइम हाई के आसपास चल रहा है। वहाँ कोई रेजिस्टेंस नहीं है, पिवट का यूज़ कर सकते हो। नीचे 2 सपोर्ट बना रखे, एक ऑलरेडी ले चुका है, दूसरा ये है। बाकी सिल्वर को भी देखोगे ओवरऑल तो बुलिश ही है। इसमें भी रेजिस्टेंस है जरूर, बट वहाँ 15 मिनट में लेवल दिखेंगे नहीं एक्चुअली, काफ़ी दूर बना था। और लास्ट रेजिस्टेंस 2024 दिसंबर में, 2 महीने पीछे 15 मिनट की कैंडल जाती नहीं है, तो 15 मिनट में नहीं देख सकते। अगर चाहो तो 1 आवर टाइम फ्रेम पे देख सकते हैं। 15 मिनट में शायद लोअर लेवल वहाँ पर शो नहीं करेंगे। ओके, यूएस मार्केट ओपन। अच्छा, शो कर रहे हैं। यूएस मार्केट हो गया ओपन। एक डेटा भी है 8:30 पे, उसका भी ध्यान रखना। देयर इज अ डेटा शेड्यूल फॉर टुडे। और ऐसे रेजिस्टेंस जोन पर ही है एक सिल्वर ऑन देयर रेजिस्टेंस एरिया, स्मॉल रेजिस्टेंस एरिया, बट है यहाँ पर एक $32 पे। ये तो ऊपर ही तीनों ही रेजिस्टेंस हैं, $32, 32.34 और 32.60। रेंज है वहाँ पर एक पूरी 15 मिनट टाइम फ्रेम। बाकी देखते हैं यूएस मार्केट में क्या मूव करता है, क्रूड और नेचुरल गैस दोनों ही। ग्रेट, थोड़ा सा बुलिश मोमेंटम ही आया है, क्रूड भी सपोर्ट पर और नेचुरल गैस तो मिडिल ऑफ द लेवल है। बड़ी कैंडल ना बनाए अभी ऑलमोस्ट लोअर सर्किट लगता है अगर नीचे और आता है तो ये
We're going to see those earnings after the close. Not quite the advancement over the last few days that we've seen with Meta, but a little bit of a breakout there. You got to think that any earnings beat here would be met with some investor enthusiasm and maybe a final decisive break of this range to the upside, or just get sucked back into the range and trade to the downside. Want to leave you here with Bitcoin because Bitcoin breached 100,000 and it is back under it. So vicissitudes in Bitcoin. That's not a news story, is it, Brad?
Who am I to decide? Jared, I think you're correct, though. It's not a news story here. We're going to continue to see how we hover within that 100K ballpark. Appreciate it, Jared. It's time now for today's strategy session. Our question today, how do you trade a trade war? Joining us now with more, we've got our own Josh Schaefer, resident trade war expert now. Josh,
give us the inside scoop.
What's the trade?
So the trade is, maybe don't trade. We give that sort of advice here often, right? That trading is rather hard. And if you're a long-term investor, maybe steer away from some of these short-term headlines. But I think the last 48 hours has really been a good example of this, guys. So I was looking at something like the QQQ, the Invesco QQQ. That's an ETF that tracks the NASDAQ 100, a popular ticker on Yahoo Finance's website. That was down about 1.7% at the start of yesterday, only down 0.7% by the end of the day as all of these movements continue to happen with tariffs, right? One moment you feel like, oh wow, tariffs are actually coming. Trump's going to go through on 25% tariffs. That was what the market felt like on Sunday night. Fast forward to 10:30, okay, tariffs aren't coming to Mexico. Fast forward to 4:30, tariffs also aren't coming to Canada, at least for the next month. So it's just been really jerky. And I think that's probably been the biggest takeaway for me is we still don't really know anything. And we keep on trying to act like the market is comfortable in one way or another. And I think all we really know right now is the clear read has been more tariffs than expected, or at least the tariffs that Trump has said is viewed as bad for the market. The market is not pricing that in. The market thinks that Trump is using this as a negotiating tool. So less tariffs has been good. What actually happens feels like a total wild card right now, and it feels like there's no real forecast there or real ways to sort of base where you're going. So the real takeaway perhaps being the political uncertainty that we talked about to start 2025, the fog over markets that people have sort of been teasing, it's definitely here, and it's not going away, and this is going to be kind of the theme over the next month.
And I think also the question is, it begs the question of what this means for that rotation trade or what it means for the broadening out, right? Because I think a lot of strategists that we've talked to argue that you need a little bit more certainty, you need a clearer path, especially when it comes to policy, especially when it comes to tariffs, just what that means and how much that maybe handicaps that trade in the short term.
For sure. I mean, look at what we're really only using pre-market action, right? Because the tariff news faded so quickly into the day. But look at the Russell 2000 futures yesterday, right? Russell 2000 futures were down 4% at one point, right? That's a key part of perhaps the broadening out trade. It's a trade on maybe rate cuts. It's also a trade on economic strength, right? And both of those things sort of fade if we get full tariffs. So does probably, to your point, Shauna, when we talk about broadening out and all these other sectors participating, what do strategists usually say when we talk about broadening out? Well, the U.S. economy is strong, right? And the U.S. economy is going to continue to grow. Well, if we get 25% tariffs on Canada and Mexico, most economists would tell you that probably hurts GDP. So it probably does hurt sort of your broadening narrative, at least to some extent, and it certainly puts more uncertainty on all of those businesses and sort of their outlooks, right? And I think that's something we're hearing from companies.
Yeah, and then you briefly touched on it too, but also factoring in the Fed. Yeah. And what this means ultimately for their playbook. We heard Austin Goolsbee yesterday. He was talking about the fact that it could potentially further delay cuts. Obviously, I don't think that came as a surprise to most people. But I think when you try to figure out the timeline of that delay and how big of a factor that is potentially going to be, and whether or not you could even talk about so much about the reflation story that then you're talking about hikes again too. So all this uncertainty obviously very much keeping a lot of people on the sidelines, which is why I think we're getting so much to some of the times our frustration, not clear answers from some of the strategists just in terms of what the next 6 to 12 months could potentially look like.
I think the final thing I'll point out, or perhaps final thing I'll point out, is the strength that we have seen in the market over the last couple of days has been interesting though, right? And Jared was just sort of talking about this, like, a key gauge you look for on, say, the VIX is usually over 20, right? When we get over 20 on the VIX for volatility, that's kind of when people are like, okay, clearly the market's worried. We haven't closed over 20 either of the last 2 days. Then you take a look at the S&P 500. The S&P 500 actually hasn't fallen 1% either Friday or Monday, and so by the close, right? So we're closing relatively strong here, and it seems like there is a bias for still this strength in the market and investors wanting to be in this market, and I guess to some extent perhaps just not believing that we're going to get the full Trump tariff policy here.
Which is kind of incredible when you take into account the headlines that we've gotten since January 1st, when you roll in.
You keep saying it.
It's remarkable that we're still looking at gains for some of these major averages. All right, Josh, thanks. Let's take a look at crypto. Escalating geopolitical tensions weighing on crypto assets this week, with Bitcoin falling as low as $90,000 on President Trump's initial tariff plans for Mexico, Canada, and China. We are seeing a bit of a recovery here today. You're looking at gains of just about 4%, just below that $100,000 level. Later on today, Trump's AI and crypto czar David Sachs, he's expected to address, quote, securing America as a leader in the digital asset ecosystem. Let's talk about what this ultimately means for the crypto trade. For that, we want to bring in Ishwar Prasad. He is Cornell University's professor and author of The Future of Money. And Ishwar, it's great to have you back here on Yahoo Finance. So we're seeing a bit of a bounce back here, recovery in crypto today here. Before we get to what to expect from Sachs, let's just talk about the price action that we've seen over the last 24 hours. What do you make of some of that risk-off sentiment?
So, there was this notion that Bitcoin and other cryptocurrencies might be a hedge against inflation, against market uncertainty. But it's turning out to be the case that Bitcoin is behaving just like any other risky asset. In fact, given that there isn't any clear intrinsic value which would allow for a valuation model to pin down the price of Bitcoin, it's acting like an even riskier asset than any other. So it goes up and down with the market, except that it goes up and down a lot more than other risky assets, especially because there is a lot of uncertainty in terms of policy, but also because market fundamentals are very uncertain at this stage.
How do you expect Bitcoin cryptocurrency to navigate a period where there is that uncertainty around risk assets because of trade tit for tat that we're seeing start to emerge and play out, when these currencies and these assets were in a far different landscape the previous time this was the case?
The landscape seemed to be shifting very much in favor of crypto. Once he was elected, and even before he was elected, Trump changed his tune on Bitcoin and other cryptocurrencies. He used to be a skeptic. He's now become a fierce advocate. And there was a sense that with many of the Trump appointees likely to be very crypto-friendly. This includes Scott Bessent, who's now the Treasury Secretary, Howard Lutnick at the Commerce Department, and the crypto czar, David Sachs, who's expected to be a forceful advocate for the industry. There was a sense that the crypto industry would get exactly what it wanted, which was legitimization from the government, including by the commander-in-chief himself, but not too onerous regulation. So this combination of legitimacy and light-touch regulation is, in a sense, a dream for the cryptocurrency industry. But then, as he usually does, Trump threw a spanner in the works by introducing his own meme coin, which raised questions about the legitimacy about this asset class. So I think even in terms of policy, there is going to be some volatility, but overall, it's going to be a much more crypto-friendly environment. That is the longer-term issue which has driven the price of Bitcoin. But in the short run, many of these fluctuations in economic policies, a lot of the whiplash that we are seeing in trade and other policies is going to affect the price of Bitcoin, especially because it affects the price of risk-free assets, essentially the U.S. Treasury security.
Ishwar, what about the fact that he's flip-flopped so many times just on crypto itself? Does that make you skeptical?
You know, I worry a great deal about people who are, heavily invested in crypto because, having crypto as a small part of your portfolio, if you're willing to roll the dice, is okay. But my concern is that the sort of legitimization we're getting from the government, various authorities, including all the way to the top, could increase the legitimacy for both retail investors and institutional investors. So this poses two types of risks. One, to retail investors who don't really understand the risk they're taking on, but also the fact that the traditional financial system could get more closely connected with the crypto system and all the risks that are entailed. So I think there are some significant risks ahead. None of these might come to pass in the next 3 to 4 years, but we might be setting up for something much bigger.
Ishwar, just really quickly, got 15 seconds here. Is it a net positive or net negative if this sovereign wealth fund that we're hearing is going to be set up by the administration is holders of Bitcoin?
Certainly, the government putting Bitcoin in its reserve, the strategic reserve is going to help Bitcoin. So anything that increases the demand for Bitcoin, given the limited supply, is going to help the price of Bitcoin.
Ishwar, thanks so much for taking the time here with us today. Appreciate it.
Thank you.
Coming up, everyone, healthcare earnings rolling in. We're breaking down the numbers. That's next on Morning Brief.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue.
ओके क्रूड में आई थिंक न्यूज़ की वजह से मोमेंटम काफ़ी बढ़िया आ गया है। चाहो तो प्रॉफिट भी बुक कर सकते हो थोड़ा सा, या फिर वेट करना चाहो ऊपर भी जाने का वेट कर सकते हो। रेजिस्टेंस एरिया थोड़ा सा ऊपर है। यूएस मार्केट ओपन हुआ और मार्केट सडनली अपसाइड मूव किया है। देखना पड़ेगा क्या न्यूज़ थी। जो लोग बाइंग में है, अगर बुक करना चाहो वैसे कर सकते हो। फिर रिपीट कर रहा हूँ, होल्ड करना है तो थोड़ा सा, अगर होल्ड करना चाह रहे हो तो ये ऊपर रेजिस्टेंस जोन है, यहाँ तक होल्ड कर सकते हो। यहाँ से एक सेलिंग का प्लान करेंगे। ठीक है, कोई न्यूज़ आया क्या सर क्रूड ऑयल में? अब पता नहीं न्यूज़ का। अभी यूएस मार्केट तो ओपन हुआ 8 PM पे, इतना पता है। 8 PM यूएस मार्केट की ओपनिंग होती है। कोई अगर डेवलपमेंट हुई होगी तो देखते हैं। अभी फिलहाल के लिए अभी इंस्टेंटली कोई न्यूज़ शो तो नहीं कर रहा है। ये क्रूड में ध्यान रखना, चॉइस आपकी है। प्रॉफिट बुक करना है, थोड़ा सा वेट करना है। ऊपर रेजिस्टेंस जोन है, बाकी बायर्स निकल जाना। यहाँ बीच में कोई रेजिस्टेंस बना ही नहीं है तो यहाँ कहीं सेलिंग कर नहीं सकते। फाइनल टारगेट इस एरिया के आसपास, ये पूरा ही रेजिस्टेंस जोन है। फिर यहाँ से सेलिंग का प्लान करते हैं। मुझे यहाँ तक तो एक्सपेक्टेड था आ जाएगा, बाकी न्यूज़ ने उड़ा दिया लग रहा है। ऐसी कैंडल बननी चाहिए ना सपोर्ट पे। नेचुरल गैस की तरह मरे मरे चल रहा है मार्केट।
Surrounding Gardasil shipments to China.
That's right. So what they did tell us in the earnings call, which is still ongoing right now, is that they've oversupplied China, and they also have a bit of concern with that softness in demand. Not unexpected, though. They did, the executives on the call were saying that this is a market that they knew was going to eventually be saturated, and they're looking at that. We also need to remember that here in the U.S., Gardasil was also approved for men recently, so they're looking at sort of like a balancing act when it comes to
डाउ में प्रॉफिट बुकिंग आ रही है, ऊपर से सेलिंग का प्लान है क्रूड में। selling planned from this crude oil area resistance zone. अब आया ना ठीक है अब निकलना चाहो तो निकल जाओ टारगेट हो गया नीचे जहां तक टारगेट सेलिंग की बात करें क्रूड में दो रख सकते हैं नीचे जहां तक टारगेट की बात है सेलिंग साइड का जो रहेगा वो 6278 ये फर्स्ट टारगेट और वैसे तो ये टारगेट बड़ा है बट ये फर्स्ट टारगेट रहेगा एंड देन फिर नीचे आपका 6230 यूएस मार्केट की कैंडल हो चुकी है क्लोज अब एक डेटा आने वाला है ध्यान रखना 830 पर वो भी इम्पोर्टेंट है छोटा सा ही एसएल है न्यूज़ की वजह से मूव करेगा तो जा भी सकता है ज़्यादा क्वांटिटी नहीं रखेंगे टारगेट बड़ा रखा है इसीलिए नॉर्मल कैंडल है तो डायरेक्टली भी कर सकते हैं बाकी बीच के लेवल को आप कंसिडर मत करना इस वाले लेवल को ठीक है डोंट कंसिडर दिस लेवल एज अ लेवल कोई भी लेवल कंसिडर मत करना इसको क्योंकि इसका ब्रेकडाउन हो चुका है तो अभी काम का नहीं है न्यूज़ का पता नहीं न्यूज़ का दिखाई नहीं रहा सर कहीं पे मैंने चेक कर लिया मैंने ब्लूमबर्ग का टर्मिनल चेक कर लिया सबसे लेटेस्ट उसी में अपडेट होता है वहाँ पर भी नहीं है राउटर्स की वेबसाइट में भी नहीं दिखा रहा है ये सबसे जो फास्ट दिखाता है एक और वेबसाइट है ये भी शो नहीं कर रहा है कुछ भी Amazon is maintained at buy benchmark market charter BP 2 days core and main maintenance overweight UPS CF Chicago अब जब तक न्यूज़ का पता चलेगा तब तक मार्केट ही मूव कर जाता है ना फिर फिलहाल लास्ट 15 मिनट में क्रूड ऑयल से रिलेटेड कोई न्यूज़ तो नहीं दिखा रहा है इसमें यूएसए रेयर अर्थ एंड इन्फ्लेशन पॉइंट एक्विजिशन कॉर्पोरेशन नहीं मैकडोनल्ड इज मेंटेन्ड नो पिछले 1 घंटे में क्रूड ऑयल से रिलेटेड तो कोई न्यूज़ नहीं आई है या फिर होगी तो अपडेट हो जाएगी थोड़ी देर में कहीं नई टैरिफ तो नहीं लगा दी क्रूड पे यूएस का कुछ भरोसा नहीं है ट्रम्प का कुछ भरोसा नहीं है कह सकते हैं बिटकॉइन में कुछ मूव आया है क्या नहीं बिटकॉइन में भी नहीं है Back in the USSR, Putin revived Soviet era Eurovision with new allies. ये एक न्यूज़ कह सकते हो स्टेटमेंट कह सकते हो फिलहाल के लिए ये एक न्यूज़ है इसका शायद मुझे लगता है इम्पैक्ट पड़ सकता है क्रूड पे रशिया के जो प्रेसिडेंट हैं उन्होंने ऑर्डर दिया है कि जो सोवियत यूनियन जब हुआ करता था उस समय का जो यूरोप के रिगार्डिंग उनका विजन था वो लागू किया जाएगा टू डिफीट या फिर कह सकते हो टू काउंटर मॉडर्न वेस्टर्न कल्चर, इसलिए पुतिन ने एक साइन भी किया है शायद आई थिंक कुछ मेमोरेंडम, जिसमें बहुत सारे कल्चरल और ये बाकी और प्रोग्राम्स होंगे मॉस्को में इस साल, जिसमें चाइना, क्यूबा, ब्राज़ील और जितनी फ्रेंडली इंडिया लाइक कंट्रीज़ हैं वो सभी पार्टिसिपेट करेंगी। मेन इसका मोटिव वेस्टर्न कल्चर को पीछे छोड़ना है। ये फिलहाल के लिए एक स्टेटमेंट है, इसके अलावा तो अभी कुछ और ऐसा मेजर स्टेटमेंट या फिर कोई न्यूज़ मुझे नहीं दिखा रहा है। इसको बुक कर लो। बाकी देखो नीचे टारगेट बड़ा लगा रखा है, एसएल छोटा है, सेलर फर्स्ट टारगेट इतना ही है। देखते हैं कितने देर होल्ड करता है रेजिस्टेंस को। नहीं उसको बुक कर सकते हैं। ठीक है, इस लेवल को कंसिडर नहीं कर सकते अब, फर्स्ट टारगेट ही रहेगा 6277 आता है नीचे। हैसल छोटा ही है 17 पॉइंट, नथिंग मच फ्यूचर में। बाकी अगर इसके नीचे सस्टेन करेगा तो सेकंड टारगेट पे 6230 के अराउंड रखेंगे। नहीं ठीक है। बाकी ऊपर फिर एक एफईजी है और फिर एक कल का जो मेजर रेजिस्टेंस था 6550 वाला।
Head to 2025, Spotify CEO Daniel Ek said on the earnings call that it's the year of, quote,
News when you want it with Bloomberg News Now. I'm Nathan Hager. Trading is underway on the first official day of a new trade war between the U.S. and China. That is the sound of the opening bell from the floor of the New York Stock Exchange at the open. Stocks are little changed. The S&P 500 right around 6,000. The Dow Jones Industrial Average also opens little change, just shy of 44,400. And the NASDAQ Composite opens just a bit higher, up about 0.2%. The 10-year Treasury yield is up about a basis point to nearly 4.57%. So a muted reaction from markets after the first shots fired between the U.S. and China on the tariff front. Bloomberg News global trade editor Brendan Murray reports Beijing has targeted about $14 billion in U.S. energy and farm products with tariffs. That's after President Trump slapped 10% duties on all Chinese imports.
China's retaliation is viewed as fairly measured. They launched an antitrust investigation into Google, but Google search services have been unavailable there. So, they kind of sort of a paper tiger response.
Bloomberg's Brendan Murray and the Financial Times is reporting that China is also considering a probe against Intel as it looks for new leverage with President Trump. Looking at Intel shares at the open, they are down about 1%. Now, President Trump has held off on 25% tariffs against Canada and Mexico. Both countries agreed to beef up border security, though they've made similar concessions before. Mexico's defense ministry says it flew nearly 1,000 troops to 3 border cities yesterday. Another 9,000 are set to arrive in 2 separate groups today. A couple of President Trump's embattled cabinet nominees are up for confirmation votes today, but Senate Finance Chair Bill Cassidy isn't saying how he'll vote on Robert F. Kennedy Jr. to lead the U.S. Department of Health and Human Services. Cassidy is a doctor turned politician. Last week, he said he was struggling after Kennedy refused to denounce disproven claims that vaccines cause cancer. Meanwhile, multiple outlets are reporting that the Senate Intelligence Committee will meet behind closed doors today to consider Tulsi Gabbard to be the next director of national intelligence. Maine Republican Susan Collins says she'll vote yes. That leaves one less GOP member in Gabbard's way. Axios is reporting that the White House is nominating meteorologist Neil Jacobs to lead the National Oceanic and Atmospheric Administration. That's after he led the agency on an acting basis during President Trump's first term. Democrats are expressing outrage after Elon Musk's Department of Government Efficiency effectively shut down the agency that oversees foreign aid. Hawaii Senator Brian Schatz calls the move against the U.S. Agency for International Development flatly illegal.
This is about literally, do we uphold the rule of law in the United States?
Democrat Brian Schatz spoke on the Senate floor. Secretary of State Marco Rubio says he's now in charge of USAID. He calls the agency, quote, completely uncooperative. The Treasury Department and Secretary Scott Bessent are facing a lawsuit now for giving Elon Musk's Doge team access to a trove of personal and financial information. The case is led by union groups and the Alliance for Retired Americans. It says Treasury illegally allowed their members' records to be shared with Doge. President Trump says Musk does not have power to stop payments himself, but was given access to those records to monitor government spending. Today, President Trump meets with Israeli Prime Minister Benjamin Netanyahu. It's the first foreign leaders visit since Trump's return to office. Bloomberg's Paul Wallace reports the Gaza ceasefire will be front and center.
We're in, if you like, the middle, or pretty much the middle of phase 1 of the ceasefire, which began last month. And the big question is what happens at the end of it. The ceasefire is up in early March. Does Israel return to war, or do we go to phase 2, which should include negotiations about a permanent end to the war and the rebuilding of Gaza and other big issues like that?
Bloomberg's Paul Wallace in Dubai. Prime Minister Netanyahu and President Trump plan a joint news conference after their meeting. It's set for around 5 p.m. Wall Street time, and we will have it live on Bloomberg Radio and on the Bloomberg Podcasts YouTube page. Looking back at the markets, we're watching shares of Palantir at the open. They are higher by nearly 24%. The AI software maker reported a big beat on its full-year revenue forecast. The CEO says he sees untamed organic growth in demand. A different story at PepsiCo. Those shares are down more than 2%. The maker of Cheetos, Quaker Oats, and Mountain Dew sees customers pulling back this year. Pfizer shares, they are higher by more than 2% after reporting better COVID sales. And Merck is down more than 11% for its biggest drop since March of 2020. Merck is halting shipments of Gardasil cancer vaccine to China for the next several months. That's news when you want it with Bloomberg News.
We're watching this hour.
First up, we'll speak with former Commerce Secretary Wilbur Ross about the status of U.S. trade negotiations.
Plus, we'll break down currency headwinds amid the rise in geopolitical tensions.
And with oil wiping out its year-to-date gains, we'll look at the energy sector as China targets U.S. imports. President Trump's sweeping tariffs against China and the subsequent retaliatory measures may just be the beginning. The president has also threatened to impose steeper tariffs elsewhere, floating the European Union, the UK, and others as possible targets. With us now, we have Wilbur Ross, former U.S. Secretary of Commerce under the first Trump administration and author of Risks and Returns, Celebrating Success in Business and Life. Secretary, great to have you on here with us. Just want to get your take specifically on the tit for tat we are seeing developing with China. Is this the start of a trade war?
I don't really think so. And the reason I don't think so is the other countries, including China, really can't afford a rapidly escalating tariff, my tariff for your tariff. And the reason for that is twofold. One, they all export much more to us than we do to them. So in absolute terms, we can do much more damage than they can do to us. And second, they're all smaller economies. So we will have both more absolute punishment and much more relative punishment than they can administer. That makes it very much a loser's game for them.
Wilbur, do you think this is the start of a new normal here under Trump? Wilbur, can you hear us?
Yes, I can hear you now.
Wilbur, do you think it's the start of a new normal just in terms of the strategy that we're seeing under Trump the second time around during his second presidency and the risk that this poses? Is it the right approach?
I don't think it's that risky, because the worst that will happen is we'll go back to the same trade deficits that we had before. I don't see any set of circumstances under which, even if there were some sort of temporary trade war, I don't see any set of circumstances under which we would end up worse on a trade balance point of view.
I wonder to what extent you think the administration is willing to negotiate with China specifically. We obviously saw negotiations happening with Canada and Mexico, a delay of those tariffs up to 1 month before they are enacted more seriously. But is a negotiation less likely with China given that so many lawmakers across the aisle support a broader decoupling of the U.S. and China?
Well, I think there are several differences. First of all, China has not ever honored the original phase one that was negotiated back in the original Trump administration. So they're actually behind where they had committed to be. So I would be very surprised if he would begin negotiations unless they, as openers, began to live up to the old agreement. In contrast, both Canada and Mexico have adopted new measures dealing with border security and with the fentanyl problem. So they've already made some tangible steps. And my belief is that the waiting period, the 30-day suspension that Trump has agreed to, is really just to formalize those arrangements and to make sure they really put them into effect. But meanwhile, doing away with the de minimis exemption already will affect 66 billion at least of trade, negative trade, from all of those countries, but particularly from China. And I believe that from China, the stated value of $800 per unit or less is probably understated, because the exporters had the ability simply to self-declare the value, and there was no border inspection at all. So, if anything, it's going to affect more than 66 billion, and it will disproportionately affect China because of their online retailers and the large volume that they do. The two big Chinese companies using that exemption probably account for 44 billion out of the 66 billion notional total. So he's already made a move that is very much an anti-China move without so stating.
You know, Wilbur, I'm curious how that could potentially, what that backlash then could look like. And the conversations, I believe you've been able to have some conversations with those within the White House under Trump's administration, specifically Howard Lutnick, just how you see that approach, whether it's more of a continuation of what was done under you and the first Trump administration, or whether or not that rhetoric will then quickly escalate.
Well, if you notice, the retaliation that was threatened by Canada is small relative to the amount of their exports to us that would have been affected by the 25% tariff. So that was already a demonstration that they would be very restrained and not try to accelerate a trade war. If they were interested in accelerating a trade war, they would have imposed retaliatory tariffs on more goods than, or as close to as many goods as we did, and they chose not to do that. They chose to hit a few high spots, liquor, a couple items like that, from politically sensitive states, rather than make a very big number overall. And I think that's further proof that they know that a real trade war where that we go up, they go up, we go up, they go up, it simply does not work from any of the other foreign countries' point of view.
So, Secretary, before we let you go, I want to ask you about a note from J.P. Morgan this week, their chief economist, saying that the totality of policies coming from the Trump administration is starting to tilt into business-unfriendly territory. How true is that from where you sit when you think about the totality of policies coming from the White House thus far?
Well, by and large, the people who are saying that are the same people who, in the first Trump administration, were saying when we imposed the steel and aluminum and other tariffs, they were saying, oh, that'll be the end. It'll destroy the American car industry. It'll destroy the American pleasure boat industry. It'll destroy this and that. And they were wrong then, and they'll be wrong again. The purpose of all this fundamentally is to change corporate behavior and to encourage resourcing back from the U.S. as opposed to the globalization that had been the big mantra of international businesses for years before. So I think behavior modification is the end result, and it's natural that particular industries that may suffer some short-term pain dislike it. But that's always going to be true.
Secretary, what about the consumer? And earlier this morning, I spoke with American Action Forum President Douglas Holtz-Eakin and asked him the biggest risk that he currently right now sees to the U.S. economy. I want to play what he told me and then get your reaction on the other side.
I think the biggest risk goes back to the tariff war. If we get into a real tit for tat with Canada, Mexico, and China, the damage to global growth is going to be significant. The damage to the United States is going to be very real. And it'll come with inflationary pressures. It'll be the worst of all worlds.
You also had well-known economist Mark Zandi taking to Twitter, taking to X, saying that he actually sees global businesses are going to become more cautious in their investment and hiring decisions. It's going to weigh on growth. You don't see any evidence or risk of that?
No, I don't think so at all. Remember, the U.S. for years and years and decades had favorable trade balances in the old days. It was only after World War II when we deliberately started making unilateral concessions to Asian and European and other companies outside the U.S. It was only then that we gradually had our trade surpluses morph into trade deficits. But we were a very strong recipient of foreign direct investment, even when we had the higher tariffs before. So there's no empirical evidence that it is correct that because we take a tougher trade policy, it will adversely affect foreign direct investment here. I don't think there's any historical or conceptual basis for that.
All right, Secretary Ross, thanks so much for taking the time to join us here this morning. President Trump acknowledging Americans could feel some pain in the short term from escalating trade tensions with Canada, Mexico, and China. He also threatened to impose tariffs elsewhere, claiming that the U.S. has been treated, quote, terribly by the likes of the EU and others. With us now, we want to bring in Paul Krugman. He is a Nobel laureate in economics and the author of the Substack, Paul Krugman. Paul, it's great to have you back on the program. We were just talking to Secretary Ross just a moment ago. I have a feeling you're going to have a bit of a different perspective when it comes to tariffs. Let's talk about how you see this playing out, the risk maybe that this potentially poses to the U.S. economy. I know in the past you've called them really, really destructive. I think the question is, to what extent, what is the extent of that harm that we could see if we continue on this path?
Okay. The first thing to understand is that, they could put a gloss on it. There's a lot of pretense, but yesterday, Trump folded. We got essentially nothing substantive from Canada or Mexico. They basically promised to continue doing things they were already doing, and there was really nothing there. So at least for the moment, it appears that Trump and his administration lost their nerve, and we didn't, which is good from my point of view because this was really destructive. The key thing about the Canada and Mexico potential trade war is that the North American economy, three countries, is very, very integrated. I mean, there is really no such thing as U.S. manufacturing or Canadian manufacturing. There's just North American manufacturing. When we make a car, you ask, where was it made? Well, the answer is everywhere. It was, or rather, all across North America. The parts come from different places. The components of the car may cross the border 7 or 8 times before you end up with a final vehicle. And if you put 25% tariffs on everything, that really just totally disrupts that industry. I mean, that's and manufacturing in general. So this would have been extremely costly. It would have made U.S. industry much less competitive against the rest of the world, and would have been, it would have hurt everybody. But what was also, I think, rather remarkable is that we tend to forget that other countries are real. They have their own nationalism. They have their own pride. To use the technical term, Canada and Mexico were extremely pissed at this threat and were prepared to pay the price of imposing retaliatory tariffs. I noticed that Secretary Ross talked about the Canadians who were talking about a phased introduction of retaliatory tariffs. The Mexicans were not. They were saying right away, we will retaliate one for one. And the Canadians were edging towards that position as well. So everybody concerned, I mean, I'm glad to see that somehow or other the U.S. stepped back from the brink and didn't do this. And we'll see whether, what will change in a month. But I think we just dodged a bullet here.
What does that then look like moving forward, especially because right after the election, we saw this huge stock market rally, in part due to this thesis from investors that Trump was going to watch the market as a check on his policies. How true does that become if the market resolves any tariff questions the second a negotiation is mentioned?
Well, it does mean that certainly Trump watches the market. Maybe the only thing that he pays attention to. He certainly isn't listening to economists. And if the market, I mean, actually, I thought the market reaction to the impending tariffs was pretty mild, considering. But maybe the market correctly judged that he was likely to back down. And so at this point, anyway, the market seems to have stopped him from going in that direction. I will say that what strikes me is I see a lot of my fellow economists saying that these tariffs are the biggest threat on policy. They are a big threat, but mass deportations is even bigger. So we have to see what goes on there. But if you would cripple manufacturing if we have a trade war with Mexico and Canada, you will cripple agriculture and construction if we actually have mass deportations. So that's the other thing to keep an eye on.
Real quick, Paul, before we move on to this, and maybe we'll talk a little bit more about the mass deportation threat, but going back to what you just said about the muted market's reaction, then does that almost give President Trump permission to get more aggressive on the trade war front going forward?
Oh, I don't think so. I think that even though the reaction was fairly small on Monday, it was apparently enough. Something. I mean, he folded. Let's not pretend that there was they will try to spin this, but basically he folded. Basically he breathed fire and brimstone and then did nothing. And it's hard to see what could have made that happen, except that the market started to go down. And so that, I think, is probably going to, whatever is the opposite of emboldening, is probably going to mean that he's going to be very cautious. I mean, we're already joking that tariff month may become the Trump 2 equivalent of infrastructure week. Remember how every week we were going to have a serious infrastructure plan, which never came? And maybe the big tariffs are going to be like that. Every month we're going to have, okay, this month we're really going to get serious about tariffs, and it won't happen, which, by the way, from the point of view of the economy, is a good thing, because this stuff was all crazy to begin with.
Since you mentioned it, I do want to talk to you about the labor market, and we're going to talk about this throughout our show, but the job opening labor turnover survey coming out this morning indicating that there are more job openings available, but the quit rate did remain steady. How should folks who are looking for jobs that might be listening to this conversation be thinking about the economic impact of the Trump administration's policies on the labor market? Is there a real sickness starting to happen in hiring in the labor market, or is it just wait and see as companies wait to get clarity on policies?
I think there is. I mean, it's monthly data, JOLTS data are very noisy, and you don't want to read too much into any given month. And there really hasn't been time for Trump policies, especially since not much has happened yet, right? Mostly it's just threats and policies to have much of an impact. But there's no, aside from the tariff and deportation threats, there's no, and what is AI a bubble and all of that, but there's no sort of imminent reason to think that we're going to see any major deterioration in the job market. I mean, it someday will happen, but there's nothing right there in the data to tell you that it's happening already. And so far, it's a funny job market. It's one with very full employment, but kind of low turnover. It's a little bit harder to find jobs than you would expect given the unemployment rate, but it's nothing drastic.
So, Paul, just taking a step further, what do you see as the specific risks or specific effects of some of the proposed policies, including mass deportations?
Well, I think, first of all, we're talking about inflation here, and people have been modeling now 25% tariffs on Canada and Mexico, but it doesn't stop there, because if you do that, then U.S. industry becomes a lot less competitive against Japan and Europe, and so they would sort of almost have to extend the tariffs to the rest of the advanced world. And so it's quite easy to come up with raising consumer prices by 1% or more, just sort of right from the get-go. If we actually go through with this, if it turns out this was just a 30-day pause and then it really happens. And then, again, the thing that strikes me about the deportations is that, if it was just that we had 5 or 6 million undocumented workers spread evenly across the economy, that would be one thing. But they're not. They're very, very concentrated in a handful of pretty key sectors, and sectors that are really important to consumer prices. Again, the agricultural workforce is mainly immigrants, about half of them probably undocumented, but we've already seen that if we have a serious roundup, a lot of people who are legally here will get caught up anyway, or at least will be terrified and will be withdrawing from their jobs. So we're talking about food prices, definitely. Between tariffs and deportations, where do you think we get our groceries from? We get them from immigrant labor in the farms of California and from Mexico. And construction one of the areas where we really have seen inflation outpace wages has been housing. And construction workers, especially the people who actually physically do construction as opposed to people who are employed in construction industry offices, are, again, very, very heavily immigrant. So we're talking about a lot of inflationary pressure if Trump actually follows through with what he said he's going to do.
And a lot of pressure in very important sectors for American households and budgets. Paul, thank you so much for joining us. Appreciate it.
Thank you.
President Donald Trump signed an executive order outlining plans to establish a sovereign wealth fund. Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick and nominee Howard Lutnick have 90 days to come up with plans to establish that fund. But what exactly is a sovereign wealth fund?
A sovereign wealth fund is an investment fund that's owned and managed by the government. The world's largest are typically funded by governments that profit from their own natural resources. Federal government has about $5.7 trillion worth of assets, which could potentially be used to generate some of that longer-term wealth through an investment fund.
And typically, countries start a sovereign wealth fund if they have a budget surplus. It's obviously not the case in the U.S. It's been running a deficit since 2001. Globally, though, there are more than 90 sovereign wealth funds holding over $8 trillion in assets. That's according to the International Forum of Sovereign Wealth Funds. Norway's is the largest, with $1.74 trillion in assets. The fund returned over $200 billion last year, with nearly half of those returns coming from tech stocks.
President Trump saying a fund could potentially be used to buy a stake in TikTok, though that deadline to work out a deal is quickly approaching. President Trump stating back in January that the U.S. should own 50% of the social media platform. Treasury Secretary Scott Bessent saying that he can have a fund ready within 12 months. Well, coming up, we're taking a look at today's top trending tickers. We're going to tell you the news behind some of those moves that's happening right now on Yahoo Finance.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Time now for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session. The Yahoo Finance's trending tickers page. First up, let's take a look at PayPal. It's a top trender here on Yahoo Finance. That stock off just about 9.5%. The fall coming after margins shrank in the fourth quarter, overshadowing the digital payment company's better than expected fourth quarter earnings and revenue. Also, the profit forecast that it did give. The company also announcing a new $15 billion share buyback program. So a lot to unpack here, but when you take a look at these numbers here, Maddie, their car processing business, the growth there is significantly slowing. That's one of the issues they saw highlighted a number of times from analysts on the street here over the last couple of hours. The fact that that slipped to 2% in the fourth quarter, just to give you some perspective, that was down from 29% growth from just about a year ago. So clearly trending in the wrong direction. But we know PayPal has very much taken steps to make a strategic overhaul, I think, of the business, streamline a lot of their operations, working to better position and refocus their business for the future. I think this is all part of this, but clearly the street not satisfied with some of that progress yet.
It sounded like they were trying to put off this idea of we did this on purpose when it comes to the decrease in volume of payments, that they were trying to be more efficient with the way they were charging customers, and they tried to get ahead of that drop down from 29% to just 2% with the volume of payment growth by saying that it was in fact intentional. But obviously the street not believing in that narrative necessarily when you take a look at the degree of the losses that we're seeing in this stock here. Also, that adjusted net income slipping, I think, was another factor that investors are taking a look at. And as you pointed out, Shauna, they are continuing to focus on slimming down the business after a lot of expansion, some acquisitions that were maybe a little bit ahead of themselves when it comes to executive decision making there at PayPal. But at least for now, I think the street is interested in seeing whether or not they can come back from this on a payment volume basis, and also when it comes to net income here. All right, next up, Estee Lauder announcing plans to cut up to 7,000 jobs after reporting declining sales. The cuts are part of a restructuring under the company's new CEO. The cosmetics giant also forecasting third quarter profit below estimates, citing weak demand. And like so many of the retailers that we talk about all the time here, they cite Asia in particular with weak demand. They had better than expected results in the second quarter, but that was not enough to outshine the concerns about that third quarter outlook showing up weaker than expected in retail sales here. JP Morgan saying that investors were warming up to the restructuring plan, and perhaps there is some more excitement following the layoff news that was anticipated, but the cost savings are just too slow to appear, and that is in part why you're seeing such a dip here. That stock off over 18.5%.
Yeah, and you also have to think about tariffs and the challenge that poses here to Estee Lauder, obviously on the heels of some of the developments over the last 24 hours. When you talk about the extent here of these layoffs and the repositioning here of Estee Lauder, I think very much just sheds light onto the vision here of their new CEO. Very much it seems to be the focus, that higher end cosmetics market. Talked a lot about trying to do everything they can to gain some market share there. They talked about the pipeline, bringing new products to shoppers faster, marketing them better, a number of strategic priorities here for the company. Also just planning to expand on that existing turnaround that we've been talking about. And you can see shares have been under pressure pretty significantly over the last year. You're looking at declines of just about 50%. And again, further selling here in today's trading with the stock off just about 19%. So again, laying out what potentially Estee Lauder is going to look like over the next several years. But certainly you can see some of the short-term concerns very much being reflected in the movement that we're seeing today. All right, let's talk about AMD. It's set to report fourth quarter earnings after the close. Investors are going to be closely looking at the chip designer's AI strategy going forward, especially on the heels of some of the AI developments that we've gotten. Clearly, DeepSeek going back to last week, even this morning or last night, when you take a look at Palantir's results, that strong demand for AI kind of reigniting some of the lost excitement surrounding the AI trade. But again, AMD is going to be very much in focus here this afternoon, whether or not it's going to give us any insight in terms of what we could hear from NVIDIA in a couple of weeks. Also, obviously, whether or not they continue to gain some of that market share there from its rival Intel, and how exactly that stacks up given some of those macro headwinds facing the industry.
And another indicator not only of the AI demand picture broadly, but of course NVIDIA, which has been under pressure following some announcements on tariffs from the Trump administration here. It'll be interesting to see what happens with AMD given the pressure that it has been under as well. Some analysts pointing out that the outlook has been exceptionally negative heading into the print from Northland Securities. That's what they're calling it. So potentially there could be an upside surprise following that. However, Wolf Research pointing out that AMD's data center business has been running below expectations overall, and the setup into earnings is difficult for AMD. So it'll be interesting to see whether or not they are able to surprise to the upside, given that they, as you mentioned, Shauna, have been trying to gain market share from Intel, and whether or not that's going to be able to continue and impact their full year forecast for for AI-specific sales for 2025 and beyond. Will be interesting to see heading into that call this evening. Well, coming up, we are discussing how Trump's tariffs and other policies are impacting the dollar and energy prices. Stick around for those conversations.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
The U.S. dollar and Chinese yuan both ticking lower this morning following trade tensions escalating between the two nations following the U.S.'s implementation here of 10% tariffs on China. China here retaliating with a 15% tariff on coal and natural gas, as well as a 10% tariff on oil and farm equipment. For more on these moves, we want to bring in Mark McCormick. He is the global head of FX and emerging market strategy at TD Bank. And Mark, it's great to have you back here on Yahoo Finance. Let's start with the movement that we've seen in the dollar, because certainly when you take a look at today's declines here, obviously very different than what we were talking about just about 24 hours from now. What do you make of the drop that we're seeing today? Very much, I guess, the worst case scenario being priced out at this point.
Yeah, I think a lot of it just comes down to there's been a lot of volatility in markets the last couple of weeks. I'd say there's an elevated level of trade uncertainty. And with that trade uncertainty, we're seeing macroeconomic indicators and macroeconomic sentiment kind of move around a lot. I think a big piece here of why the dollar's kind of moving back and forth has a lot to do with positioning. A lot of the markets have been moving. You've seen the price action basically adjust pretty dramatically since November. So a lot of people have bought into the long dollar trade. And I feel like the number one kind of question we keep getting from people is, do I want to scale back on long dollar positioning, or do I think this can continue for the next couple of months? And do I want to re-engage in what people would call a momentum trade? I think that there's a lot of confusion on kind of the impacts of trade uncertainty, whether or not this reinforces U.S. growth, or whether or not this is bad for U.S. equities, or whether or not it's inflationary. But I think for the most part, if you think about what's driving FX, the fundamentals, the macro story, the carry, the growth story, they're all very favorable for the dollar right now.
When you think about answering that question for clients, where are you getting clarity? Because obviously the policies coming from the White House are changing very quickly depending on negotiation conversations. And I wonder how you're thinking about that when you think about your outlook for the dollar.
Yeah, I think part of the clarity comes through fundamentals, right? There's a lot of noise, and people, will try to trade on headlines and try to focus on headlines. But behind the noise, there's themes and there's factors, and there's a macro story that, again, we kind of highlighted even last year into the election, that the fundamentals were strong enough for the dollar that regardless of who won, the dollar should rally in Q1. If you look at what's happening, like the market's been kind of pricing out Fed cuts for this year for a little bit of time, and a lot of it has to do with the data. The data itself is quite strong in the U.S., and we do a lot of tracking of high-frequency data where we compare all the countries in the world together. And if you take the big three, which would be U.S., Europe, and Asia, particularly China, data is just stronger in the U.S. And again, what you're starting to see is inflation. The disinflation story that was very critical last year is also starting to peter out a bit, which is saying that we could be in a higher for longer environment. So I think at least with the trade uncertainties, this just accelerates some of these trends. It creates more volatility. And again, with the dollar, you're getting a currency that is the world's safe haven, that does well when the market is very volatile. But at the same time, you're getting the yield advantage that comes from U.S. carry, particularly against G10 currencies and emerging market Asia currencies like the renminbi. So, right now, I think these are all just favorable tailwinds, and that's kind of the outlook we're focusing on is kind of the fundamentals.
How does your view on that impact how you're thinking about other currencies in the space? Specifically, if we take a look at the peso and the loonie, for example, there hasn't necessarily been a massive change in value against the U.S. dollar since November 3rd. And I wonder if that tells us something a little bit more sinister, perhaps, that the currency market is not accurately pricing in the impact of tariffs.
Yeah, that's a great question because that is, I think, what we do very well. We do run a lot of tools, a lot of models. We try to break down the decomposition of what's actually driving currencies. In a very simple sense, you'd say there's residual, and the residual would say we are capturing something that we can't really explain. We don't know what it is, but that would tend to be your risk premium related to trade uncertainty. So I'd say the one thing that we noticed is that the euro was the one currency that was trading with a bit of a I guess you would call it a strong residual, saying that there's a bit of value there. I did not see that. Our models did not show that in the Mexican peso, the Canadian dollar, and the currencies that are kind of the most vulnerable to these discussions right now. So that's another thing that we're kind of leaning in towards investors, that this is a reason why you should kind of embrace the strength of the dollar. And even like a moment you're seeing today where this is a dip in the dollar, these are buying opportunities. So I would say there is not a lot of the things that are kind of going on in markets is creating the volatility that's priced into these currencies, which should reinforce dollar strength along with the fundamentals that come through the U.S. growth story, the Fed story, and the general favorable macro outlook you have in the U.S. economy for the next couple of months.
All right, Mark, always great to get your insight, especially following the developments here of the last 48 hours or so. Mark McCormick, we look forward to having you back soon. Oil prices erasing all of 2025 gains after China imposed retaliatory tariffs on U.S. energy imports. Natural gas pricing also dipping this morning, down just about 3%. Joining us now to break it all down, what the geopolitical tensions and Trump's policies, how that's going to impact the energy landscape. We want to bring in Dan Dicker. He's the Energy Word founder, as well as Tamar Essner, Vectus Energy partner principal. Great to have both of you. Dan, let me go to you first, just in terms of the drop that we are seeing today. Obviously, very much a lot of this related to the retaliatory measures that we're getting out of China. What does that downside risk look like from here?
Well, of course, it was a lot more with the Canadian and Mexican threats in the game. I mean, Canadian oil imports about 4 million barrels a day, and there really is no alternative to the northern kind of borders where that oil is used on eastern refineries. The same way with Mexico. The sour crude grades that are used in the Gulf of Mexico are unique to Mexican crude. There's really no alternative to them, and therefore, a lot of the problems with pricing from Mexico and Canada, once that was relieved by the deals that were made with the two countries, obviously took some of the upside pressure off of prices, and I think some of the traders were quite caught long. They didn't think that these tariff threats would disappear so quickly from the northern and southern borders, and I think there's a little bit of bailing on long positions in oil, and we're seeing now prices moderate back to $70.
And Tamar, I want to bring you into the conversation too, because we've been talking about this idea of whether the market is underpricing the risk of potential tariff policies. I wonder which risk you think the market is underpricing more, the risk of tariffs or the risks associated with any unknown geopolitical events that could come out of the tit for tat over tariffs?
Well, yeah, it could go. It could go either way. I mean, I think that it's really impossible to price in how low oil prices can go because it depends how long these trade wars go on, particularly with China, and obviously Europe is next. If what happened with Canada and Mexico is somewhat of a preview, then I guess that the market is sort of right in terms of fading these concerns. Overall, I think the market views Trump as deflationary for oil prices, and he'll sort of look to that as a benchmark of if he's being successful on taking down inflation. So I think that even if the trade wars wrap themselves up pretty quickly, Trump is nothing if not sort of a cause of volatility, and that uncertainty, particularly when the demand situation globally for oil is so precarious right now, should create downside pressure on oil prices.
Tamar, what do you think that the production picture looks like when it comes to Trump's rhetoric, time and time again, talking about the fact that he wants to massively, it seems like, increase production? What does that realistically look like?
Well, increasing.
I'm sorry.
Tamar, go ahead.
Increasing production in the U.S. materially will be very difficult to do at prices in the 70s or in the 60s and beyond. I mean, Trump will try to ease the regulatory burden and sort of at the margin sort of reduce the break-even prices. And so over time, you can see marginally higher production growth. We think that production in the U.S. already at record levels will continue to grow. Most of that will be driven by liquids and natural gas, but crude itself will continue to grow. But I think that he will ultimately find that the landscape is a little bit different now versus when he was president. More production is on private lands. The industry is more consolidated. Overall interest rates are higher. It will be harder for him to regulate higher production growth in the U.S.
And Dan, just to wrap up here, what is the read-through to other energy products, specifically when you think about natural gas in particular was down as much as 5% earlier in the trade, now down just about 3% here. What do you make of the impact there, especially as you view natural gas as an AI play?
Yeah, I mean, this is clear, and it's been well documented and talked about on your network, like every day. But the truth is the long-term trend is away from crude oil and towards these kind of instantaneous energy supplies, electricity that is instantaneous, and that points to natural gas, to a lesser degree to coal and nuclear too. And that trade has been hyped unbelievably, but the long term for investors is to be in those trades and to be in the natural gas trade. That's where the growth will come from. It seems to me that the days of growth from crude oil, as your other guest has pointed out, are pretty much behind us, and that if investors are looking for a long-term growth play, you'll find it in the renewable, sustainable sector and also in natural gas.
All right, Tamar and Dan, thanks so much for joining us. Appreciate it.
Thank you.
As we head to break here, taking a look at shares of healthcare companies, including Moderna, BioNTech, and Sanofi, after Trump's pick for health secretary, RFK Jr., cleared a Senate committee. We will get the full vote later on here, but taking a look at Moderna hitting a session low, down 4.5%. BioNTech also down over 3.5% here, following RFK Jr. again clearing the Senate committee, now heading to a full vote to lead the Health Services Division. We'll have more when we come back on Catalysts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks mostly moving to the upside as investors digest labor market data, tariff updates, and earnings. Palantir shares soaring, leading the Nasdaq higher as artificial intelligence demand spurred what CEO Alex Karp calls, quote, untamed organic growth, allowing the company to issue a strong full-year forecast. Shares are up over 20% today. And Spotify shares jumping after reporting its first annual profit ever. The company's total monthly active users beat expectations, climbing to 675 million in the latest quarter. And PayPal in the red as its shrinking operating margin eclipses an earnings beat and strong full-year forecast. Investors worry the company is losing share to competitors while spending slows. And that is your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code to track the best and worst performing stocks of the session.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, tools, tips, and the tricks that you need to grow your money. Hey, on today's show, we're examining your portfolio. Amid policy uncertainty and tariff back and forth, well, should you be making some adjustments to your investments? We'll discuss that. And alternative assets. One experts break down 3 reasons why Bitcoin is still an attractive investment in 2025. Plus, price check. Is food taking a big chunk of your wallet? We'll discuss best practices and tips for your monthly food budget. All that and much more coming up during today's show. But first, we take a look at some of the market action. We're 90 minutes into the trading day. Stocks mostly higher. Investors weighing the latest global trade developments, with U.S. tariffs on China taking effect as U.S. tariffs on Mexico and Canada are put on pause for now. Joining me now, we've got Ben Gutteridge, who is the Invesco Portfolio Manager of Multi-Asset Strategies. So, Ben, how should investors be managing this policy uncertainty?
Well, nice to be with you. And look, this is clearly a pretty dramatic period for US trade policy, for global trade policy. And no surprises, I guess, that the longer it lingers, the longer it rumbles on, the more difficult I think it will be for stock markets to perform. But look, I still don't think this is the moment to get too defensive. I think we shouldn't forget what a strong hand the US has in these negotiations, and evidence of that is sort of seemingly from the relatively quick concessions we've seen from a couple of the negotiating partners, Mexico and Canada, very recently, but also that the US consumer is still in good shape, and that also on the political front there are some more growth-infusing policies to come, deregulation, tax incentives. So look, on balance, I can well understand the nervousness that investors have, and absolutely steel yourselves for some continued volatility. But on balance, I think there's enough here to maintain a bias towards equities.
Ben, I wonder in this kind of Venn diagram of Trump 1.0 and the tariff talks and the trade war during that time versus Trump 2.0, tariff talks now and tit for tat that's beginning to play out now, if there are any similarities that you're seeing start to formulate here, at least early days, and how investors should be thinking about that.
Well, I think, of course, that is a perfectly reasonable comparison to make. And in that period, we saw that tariffs are a difficult thing for economic growth to deal with, tends to weigh on growth. We saw risk appetite fall. We saw bond yields fall in that environment. But we did see that Trump is a deal maker, wants to get deals done. And I think we're seeing evidence of that play out again, which again promotes the impetus to take risk in portfolios. But one comparison that doesn't sit very neatly for me, and I know this sort of goes against my more sort of balanced, more positive view, is that period was a period of really absent inflation. At the moment, we're still sort of reeling from the lingering effects of a more troubling period for inflation. And I know it's keenly debated whether tariffs are inflationary or not, but in the short term, they certainly put a bit of pressure on upward pricing. And I think the Federal Reserve would be alert to that risk. So I think, trade war, persistent trade wars, yes, we would expect deals to be done, but it could be a difficult period as the Federal Reserve, further communicates that rate cuts are just sort of off the table while this drama plays out.
And so, with this in mind, what strategies would investors be apt to consider to hedge tariff risks?
Well, I think hedging tariff risks is likely done through the bond market and having dollar assets, easier for a European investor like myself, but the bond market should perform well in a period of more troubled growth. But I think investors should be alert to the opportunity that presents should trade tariffs rumble on. I think, of course, the key incentive here is to deliver a better trading platform for US manufacturers. But in the short term, clearly frictions are going to be put in place to try and drive those deals. That's going to weigh on that part of the market, industrials and domestic manufacturers. But on the basis that we think deals can get done, that part of the market should enjoy quite a pop when those deals are struck. So as difficult as it may be, I think in the face of trade tariffs, I think nibbling away at industrials, financials is a good strategy. Domestic actors, but being prepared for volatility, but expecting some upside when things are resolved. But a more practical short-term hedge, I think, is the bond market.
Just lastly, while we have you here, let's talk a little UK equities, because you actually see this as a reasonable diversifier. Why is that?
Well, I think perhaps I would say that as a UK spokesperson. No matter.
I wasn't going to say that, Ben. I wasn't going to say that.
But look, I mean, we cannot applaud enough the quality of businesses in the US stock market, the management, the innovation there. But clearly, the sector biases do present some concentration risk, whereas and potentially some valuation as risk. Wouldn't get too concerned, but they're certainly not outstanding. Don't appear outstandingly cheap. Whereas the UK stock market, diversification of sectors, certainly a greater commodity energy exposure, and some valuation and some dividend tailwinds as well. So I think a reasonable barbell at this moment. Although of course the outstanding growth companies still reside in the US.
Ben, thanks so much for the time. Really appreciate it.
My pleasure.
Now time for some of today's trending tickers that we're tracking. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. Joining me now is my morning brief co-anchor, Shauna Smith. Shauna, good to have you back here on the set. You never left. First up, we got to talk a little health and pharmaceutical stocks. They are selling off this morning. This is after Robert F. Kennedy Jr., President Trump's nominee for health secretary, cleared a key panel vote in the Senate Finance Committee. His nomination will now be brought to a vote before the full Senate. And as we're taking a look at some of those pharma stocks, they are falling across the board right now.
Yeah, and I think this is the exact reaction we were expecting. You talk about the fact that when it was initially announced by President Trump that he was nominating RFK Jr. to run HHS, there was lots of questions just about what this would ultimately mean for some of these vaccine makers. They initially fell on the heels of that news. So here we are with RFK Jr. advancing there to a full Senate vote here. Clearly, it's causing some concern here for the sector at large. Obviously, his past comments when he's been skeptic about vaccines, he has tried to walk that back just a bit during the hearings, talking about that he is encouraging maybe more further testing, more further research when it comes to vaccines. But clearly, the fact that he has been very vocal about some of his stances in the past when it comes to vaccines, the anti-position there. Now, as head of HHS, you're now seeing that clearly some of those concerns send a ripple effect throughout some of these stocks here, and you're seeing many of those names under pressure here this morning.
Yeah, move for Pfizer that we had seen into negative territory as we were taking a look at there, and that company just reported earnings. They were positive to start off today, so you talk about the severity of that move that we're seeing that you were mentioning. Next up, we've got an earnings mover, and it's Ferrari. They're moving pretty fast here, staying resilient amid a broader luxury car slowdown here. Global sales for the fourth quarter rising 14%. Take a look at shares this morning. They are racing, if you will, to the upside to the tune of about 8.25% here. Pun fully intended.
See what you did there. It makes a lot of sense. You're looking at gains of just about 8%. Once again, Ferrari just staying very consistent with some of the trends that we've seen in the past. The fact that they did beat expectations, consistent with that reputation, also raising its guidance is something that's welcomed here from the street. You could see that reflected in the share price here this morning. Lighter shipments. So this is an area that you might take a little bit of issue with. Lighter shipments in China specifically. That could be maybe a bit worrisome, but very much Ferrari offsetting those lighter shipments from strength elsewhere, including including in the U.S. U.S. deliveries outperforming there. That's something that the street was noting here this morning. Looking ahead, there's a lot to like when it comes to Ferrari, some of the demand that we're seeing, resilient demand here for the vehicles. But then looking ahead to the final quarter here of this year, we are expecting their first fully electric car that's in the final quarter. They also announced that they're going to hold a Capital Markets Day on October 9th. So maybe that's when we'll be getting it, or a little bit more details at least. But again, when you take a look at these demand trends, the sales trends, obviously very much that high-end consumer, but they're still spending. That has very much been the story now for quite some time. We're seeing it reflected in results like the ones that we're getting here this morning from Ferrari.
I mentioned in jest when we were talking earlier today, when I was visiting the Diageo website and the investor relations site, that prompts you to put your age in. I feel like the Ferrari investor relations site should prompt you to put in your credit score, but who knows? At the end of the day, strong product mix, growing demand for personalizations, as you mentioned, and robust growth they're anticipating in 2025. Appreciate it, Chana.
Thank you.
The post-pandemic labor market frenzy, it seems to be dying down, which means the days of a quiet quitting trend and somewhat simpler job hunting environment, that could be in the rearview mirror. Job openings declined in the latest data to 7.6 million from 8.1 million the month prior. So, how can job seekers navigate the changing landscape? Joining me now, we've got Corey Staley, who is the Indeed Hiring Lab economist. Great to have you back on the program with us. Just take us into your best evaluation of this JOLTS data that we've seen come in lighter than expected and a decrease versus the month prior.
Yeah, thanks for having me back, Brad. I think what we really saw in this report, again, we saw the overall number of job openings fall off. Some of that can be some of the noise that we tend to see around this. Again, this is a survey of businesses, and they ask you, how many job openings did you have on the last day of December? And so that's the number we're seeing here. So we saw that number fall down a little bit, but I think what's encouraging about today's report, and really the last few reports that we've seen, if we look at more of the LT side, or the labor turnover side of the JOLTS report, we see that the hires and the quitting seem to be moving sideways. They're still pretty low. They're, near decade lows. People aren't quitting their jobs, finding better jobs at the rates they used to. Employers aren't hiring at the rates that they did a couple years ago. But the fact that we're seeing things move sideways, is a potential good sign moving forward that we might be at an inflection point here.
What is the best estimation as to what this all spells out as well on the wage front, as we're pairing the openings with the potential for wage increases, or what that growth figure could look like, especially as we're going to be waiting for ADP's private payrolls numbers this week, as well as the all-important BLS jobs report at the end of the week?
Yeah, when we look at wage growth, again, we've seen the labor market really cooled down since early 2022, and that has translated into wage growth. We saw wage growth up near, on our platform, we often look at the posted wage growth and what employers are offering to new employees. We saw that spiking around 9-10%. That's now sitting at 3.1% at the end of December. But what's interesting is that, as I mentioned, we've seen hiring activity, quitting activity start to stabilize. We've also started seeing some stabilizing in wage growth as well. And so I think those are interesting kind of relationships we're seeing there. And as we start to look towards this report Friday, it's going to be kind of maybe a messy one with the BLS numbers, because there's going to be a lot of revisions, both in the company side of the survey, but also in the household side. So it might be a little bit difficult to parse, but there's also been signs in that survey as well with unemployment staying stable, that things, again, may be at this point where they might be poised for a turnaround in the coming months.
Corey, I love the data that you and your team are able to really sift through here and give us a glimpse of the hiring front, especially as we're trying to think about where there are jobs still coming online, where there might be jobs that are posted with no intention of being filled in the near term, these ghost jobs that we talk about. Have you seen a rise in some of those positions where companies want to look like they are actively hiring and put these positions out there, but might not have any intention on filling them immediately and essentially might equate to a stale listing or a relisting?
Yeah, I think the kind of debate around ghost jobs, is really, at the forefront of a lot of people's minds. And I think this comes from the fact that the labor market has cooled so much, right? So if you're somebody who is out looking for a job, it feels much harder now. And, this kind of term of being ghosted, a lot of times you feel like you're maybe just applying for a job, you're not hearing anything, kind of feels like you're putting resumes into the void. And I think that naturally leads people into thinking, this is ghost jobs. This is employers maybe not even thinking about hiring. But I think the interesting thing is a big part of what we're seeing really is that's a reflection of the cooler labor market and also less employer urgency around hiring people. Again, we're starting to see, especially in kind of more traditionally white collar knowledge worker jobs, there's less demand there, and there are still many candidates for those jobs. And so some of that may also just be a reflection of a shift in urgency and employers saying, we don't need to be so fast to hire for this job. And so maybe in some cases it's not necessarily a ghost job as much as it is employers just taking longer to work through the hiring practice and the hiring process.
As we are, of course, just early in the year, 1 month into the year, and essentially trying to figure out what may potentially set the tone. Is there any trend that you're seeing in the data that you're evaluating that is beginning to formulate a trend that could have a broader implication for the hiring landscape in 2025 and what employees or potential candidates for jobs should be expecting as they're going in to fill out applications and hopefully get some type of offer?
Yeah, there's a lot of trends that we watch. Again, I love all of the data that we have to work with the Indeed platform, because we not only get insights on job seekers, but we get insights on employers. And I think as we look towards 2025, as a job seeker, the things I'd be thinking about are these few trends. Yes, the labor market is cooler than it was a few years ago. Might be a little more difficult to find a job in 2025, but we've also seen trends around employers asking for generative AI skills. Employers are also peeling back on educational requirements, experience requirements. They're opening up doors that have maybe not been opened up to, many Americans in the past. And, that's a reflection of, yes, things have cooled down, but there is still strong demand for workers in certain areas of the economy. A lot of kind of knowledge worker office jobs have pulled back a lot in demand, but healthcare and a lot of in-person jobs still have a lot of opportunities in the market. So I think in 2025, your experience with the labor market is going to depend largely on the type of work it is you're looking to do.
Corey, thanks so much for taking the time here with us today. Really appreciate it. Would love to check back in the future.
Definitely. Thank you again.
Thanks. Coming up, are you crypto curious? Our next guest will give 3 reasons investors should consider buying Bitcoin in 2025. You don't want to miss that.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
In a survey earlier this year, Forbes Advisor found that 59% of people would trust artificial intelligence to invest their money. And whether you're a part of that group or more of a skeptic, it's undeniable that wealth management professionals are using technologies in new ways. Bill Capuzzi, who is here in studio to break down 3 of the biggest trends that he is watching. Bill, we got to start with what we're seeing in extended hours and after hours trading that's transpiring. What are you seeing there?
Yeah, look, probably about now 2 years ago, we started offering the ability for retail investors to trade the after hours, meaning from 8 p.m. to 4 a.m. Most of the activity from a retail perspective came from overseas. Most recently, in the last 2 weeks since the DeepSeek news as it relates to NVIDIA, we started to see a lot of activity here in the States on Sunday night, right? So as that, let's just take what happened with DeepSeek, came out over the weekend, all of a sudden there was a lot of activity, 400% increase in the amount of activity at 8 p.m. that night. It persisted again this past weekend with the news around the tariffs. And the trend there is that retail investors, if you think about, let's make the comparison, you just had guests on around Bitcoin and crypto. Right. Yeah. You can trade crypto all day long, 24 hours a day, 7 days a week. Why in our industry, right, buying or selling equities, why are you stuck between 9:30 and 4 p.m.? Yeah. Right, that trend now, because the tools are there, are providing the ability, especially now for retail investors, to access those markets.
There's another major trend that you're tracking as well, and the relationship between fintech and human advisors here. Where are we seeing that role start to perhaps disrupt itself a little bit? Yeah, so the industry historically, think of it like a barbell, right? You have kind of cutting-edge fintech on the left, right? Think the likes of Robinhood or Webull or SoFi or Stash, and then you have the traditional advisor on the right. And what we're seeing is that technology, specifically around AI, is starting to move fintech from left to right. So they're adding more advice capabilities, so it's not necessarily just a do-it-yourself type of solution. And then on the other side, you have advisors that are now leaning into technology to create more of a hybrid solution, right? To sort of speak more to the younger generation that are looking for something a lot more digital. And so with all this in mind, since we bring up artificial intelligence, how are advisors leveraging AI as well for some of their decision-making and communications with their clients?
Yeah, look, we're in first half of inning number 1 on AI, especially in our industry. And what we're seeing now is like the easy stuff, right? So it's, hey, how do I interact with a client? How do I pull the data out of a CRM and be able to look at the trends within that client? How do I become a little bit more efficient than I have historically, right? Where this is going, the direction of travel for AI is how do you leverage these tools to help individuals make better decisions about their money? Not necessarily just about investing, but about their money, right? So when we just hit, people just got their bonus checks. A lot of people got bonus checks at the end of the year. What do I do with an extra $2,500? Yeah. What's the best use of that money? Tools like AI are helping advisors better help those clients make decisions about their money.
We've seen a couple different phases of the retail trader over the past few years. You can think back to 2021. It's the year of the meme stock or the Reddit social media investor. You could think out to 2023 and what we saw in the year of the AI everything trade. And so now, if you were to kind of look at the early innings of 2025 and pick out and sift through the tea leaves exactly what this year could shape up to be for retail investors, what do you think is starting to emerge?
Yeah, I think there's a couple things. One is better access to investing that was historically always for high net worth individuals. Okay. Right, so things like alternatives, private investments, right? Democratizing. Apex is in the middle of democratizing, provide access to things like alts. 2 is 24-hour access to the markets. That is coming. It's coming in force over the course of this year. And then I think the last part is this notion of direct indexing, right? Which is how do we allow someone to actually customize the portfolio that they want to invest in without it just dumping it into an ETF, right? And so the technology behind all of that is here. It's now quickly getting applied in 2025.
Bill, some really great insights. Thanks so much for stopping in studio with us.
Great to see you.
Appreciate it. Likewise. Before we go to break, this Black History Month, we celebrate the power brokers in business, executives, entrepreneurs, and proven change makers who have advanced economy and society. American Express is a $222 billion market cap company, synonymous with credit cards and consumer spending. But in order to become the company it is today, it needed to leverage technological advancement and navigate the great financial crisis and recessions and 3 presidents and rebound after the 9/11 attacks. Kenneth Chenault was there for it all, a true power broker leading the payments behemoth as chairman and CEO from 2001 to 2018. Despite macroeconomic pressures and numerous black swan events, the stock appreciated over 120% during his tenure. Chenault has held various board positions as well, then left the board of directors at Facebook, get this, after being tapped by Warren Buffett to join the board of Berkshire Hathaway. Talk about being held in high regard in rare air. Chenault is currently the chairman and managing director at General Catalyst and is the co-founder of 110, a coalition which upskills professionals for the future of work. Coming up, is your Chipotle burrito more expensive than it used to be? Well, mine is. We're breaking down how consumers like me and you can maximize their money while going out to eat and dining at home. Plus, how to transform your so-called bad debt into good debt. All that and much more on the other side.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Chipotle reports fourth quarter earnings results after the bell, and they'll have to fight to impress investors with more headwinds hitting the restaurant industry. Here to explain, we've got Yahoo Finance's very own senior reporter, Brooke DePalma. Brooke, you're focusing in on 4 things that investors should be watching here: the new CEO, the launch of a new product, automation, and tariffs as well. How could we forget that?
Right. How could we forget that? It's been in the headline for months now, and now we're finally dialing in. Just to take a step back, Analysts really excited for new CEO Scott Boatwright's first time to set the guidance outlook for 2025. He was officially named CEO during this quarter on November 11th, but he's been with Chipotle for quite some time. He previously was interim CEO after former CEO Brian Niccol left for Starbucks. That announcement back in August, and he's been at Chipotle for 8 years, serving as the chief operations officer since 2017. Previously had a stint at Arby's, and he has this very operations-focused mindset. He told Yahoo Finance back in December that he wants to modernize Chipotle's kitchen, and that comes with automation. Now, we expect that to boost throughput. That's really the speed of service here, and that has Wall Street really, really excited. One analyst saying that throughput is one of the most meaningful multi-year traffic drivers. And what exactly that means is by introducing things like a digital make line to automate digital orders, as well as introduce things like avocado, robot cutting, and produce slicers. That could be good news in terms of just how fast your Chipotle order can get out the door. Another aspect that has Wall Street really excited is the launch of those limited time offerings that tend to do well. Chipotle Honey Kitchen, chicken that is, not kitchen, chicken potentially coming in March. That could also be a growth driver. And all of this while looming in the background, those possibility of a potential tariff hitting the U.S., of course, then hitting Chipotle and in turn some of their key ingredients.
What do you think the implications of tariffs would be on Chipotle?
Yeah. Well, avocados and tomatoes, two of their main ingredients, and that could mean major implications for their avocados. We know, according to TD Cowen analyst Andrew Charles, he estimates that roughly 85% of Chipotle's avocados are imported from Mexico. The company has previously said that they also source their avocados from the U.S., Colombia, Peru, Dominican Republic, but avocados roughly make up 7% to 11% of Chipotle's cost of goods. Also, tomatoes, they make up low single digits of Chipotle's cost of goods, but we know that those are one of the top ingredients, one of the top imports should these tariffs go into effect that will be impacted. So avocados, tomatoes, two key ingredients that analysts hope to hear more of and how Chipotle is sort of preparing for the possibility of tariffs.
Yeah, it's two of the things I'm always asking for.
Key ingredients are your Chipotle bowl, right? You pay extra for the guac?
Yeah, I do.
Wow.
They got
you. They got you good.
They got me. Yeah. Brooke, thanks so much. Appreciate it. Tune in to Yahoo Finance tomorrow, 9:40 a.m. Eastern Time. We'll be speaking to Chipotle CFO Adam Reimer about the company's results. You do not want to miss that. Well, Americans are feeling the pinch of inflation on their dinner plates, especially when they're going out to eat. Food away from home inflation, the category for dining out, is 3.6% higher compared to a year ago, significantly outpacing headline inflation. Here with budgeting tips on how to cut back on your food budget, we've got Tiffany Terzak, who is the founder of Don't Waste the Crumbs, a blog and resource for saving money on groceries. Great to have you here with us. First off, we got to know, how much should folks be spending on food as a percentage of their total budget?
Yeah, thanks for having me, Brad. So the average American should be spending anywhere from 5 to 15% of their gross income on food, but that does include eating out.
Okay, and so as we're thinking about that percentage in itself, it seems like there are examples where people, even if they're going to eat out and kind of weighing, how much they're spending on eating out versus eating at home and cooking at home, how do you kind of strike a good balance there?
I think a lot of it depends on your personal schedule, the activities you have going on. I'm a huge advocate for eating at home just because when you eat out, you do spend more and you don't get quite as much food. So I like the ratio of about 10% of your budget towards groceries from the grocery store and about 5% to come from restaurants.
All right, we want to hit people with some actionable tips here. You have 3 tips for saving money that you talk often about here. What are they?
My first tip is to start with a grocery list. And I know this sounds really obvious, but a lot of families simply walk into the store without a game plan on what they're going to buy. And when you do this, it leads to overspending at the grocery store, but then it also leads to food waste at the end of the week because you don't have a plan for these random things that you put into your grocery cart. So I highly recommend making a list at home and then verifying that you don't already have at home the things you put on your list.
Absolutely. And then you also say pay attention to unit pricing. How do you do that aptly?
Yes, unit pricing is the price per ounce or the price per pound. And most times stores include the unit pricing either on the price tag itself, or if you're purchasing something like meat, the price per pound will be on the package of the meat itself. But it's really important to compare different brands as well as different sizes of the same brand to find the lowest price per ounce, or like the lowest unit pricing. Recently on a shopping trip, my daughter and I were at just the grocery store, and she was buying a box of cereal, and the name brand box of cereal was $4 and change. And she was like, "Mom, wait just a second." And she started looking around, and she found the store brand, same type of cereal, for $3 less. And it was the same size box. So paying attention to unit pricing can really add up.
And then just lastly here, you'd mentioned the bagged versus the kind of loose produce there. What should we be kind of keeping tabs on?
Yeah, when we go grocery shopping, a lot of times we're looking for convenience. We're a busy society, and we're more apt to simply grab the bag of apples or grab the bag of oranges. However, when you compare pricing of the bag of apples to individual apples, sometimes you're actually paying more for that pre-bagged bag of apples. So it's just important to pay attention to the pricing in that regard.
Tiffany, thanks so much for taking the time here with us today. Really appreciate it.
Absolutely. Thanks for having me.
Certainly. In 2024, 48% of Americans carried a balance on their credit card each month. That's traditionally thought of as quote-unquote bad debt. But why is that? And what makes debt good? Luckily, we've got David and John Ottenschneider, the debt-free guys and hosts of the Living Not So Fabulously podcast, here to break it all down. John, what makes a debt bad?
Bad debt is like that cheesy, carby, salty food that we all love, but it can stick to your wallet because of high interest rates and growing balances. So some examples would be credit card debt, which was our junk food of choice at one time, 401k or payday loans, and even payment plans offered by hospitals or medical providers that seem like the antidote at the time, but when you get the bill in the mail and you see the interest rate that you're paying, it might make you more sick.
And so, David, by contrast, how can a debt be good at the end of the day? And can you give us some examples of good debt?
Yeah, so certainly debt can be good. Good debt is kind of like the veggies. I'm going to go with John's analogy here. It's kind of like the protein and veggies for your financial diet. They help you grow stronger over time. It improves your net worth or your credit score. It gives you financial capabilities that you didn't previously had. Some examples of this, when used wisely, might be like a mortgage debt, student loan debt, or business loans when they have a low interest so that you can grow your business.
And so, break this down for us, John. Is this a hard and fast rule?
No, certainly not. As with most things, moderation is key. So too much of anything is a problem, even that extra guac, right? It tastes good at the time, and it's probably a little bit healthy for you, but it can actually stick to your ribs after a while, right? So another example might be the student loan debt. If you can't find a salary that's commensurate with the debt that you've acquired, that student loan investment might have been more of a sinkhole than an investment.
Interesting. All right. David, what are a few tips to transform bad debt into good debt?
Well, bad debt is kind of like those clogged arteries. It's really tough to fix, but not impossible, right? So the key here is to stop feeding the junk, clear out that debt, and to get your finances back in shape. That's something that we help people do with our 5 Freedoms Accelerator at debtfreeguys.com. But really the key here is to educate yourself on your debt, both your good debt and your bad debt, create a debt payment plan, and then prioritize the debt that you're going to pay off so that it doesn't have a negative impact on your life.
John and David, thanks so much for taking the time breaking down good debt and bad debt for us. And everyone can check out and listen to new episodes of Living Not So Fabulously Wednesday at noon. We've got much more on wealth after the break. You're watching Yahoo Finance.
Oh yeah, you're not gonna forget to cancel those free trials this time. Right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, You're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Quick programming note, in this week's special episode of Decoding Retirement, host Bob Powell is joined by Yahoo Finance's Molly Moorhead and Carrie Hannon to discuss the 50-year anniversary of the Employee Retirement Income Security Act. Take a listen.
There are some things that ERISA did, Molly, that I think are really important to note. Most importantly, what ERISA did is create a more stable system so that things like the Studebaker-Packard thing doesn't happen again, or if it does, there are provisions in place to make sure that people get their benefits. So most important to me is that it ensures plan participants receive their benefits.
There's like a government safety net there to protect that money.
One of the enactments, one of the provisions was we created something called the Pension Benefit Guarantee Corporation, which is in essence an insurance company that says if your employer's pension plan goes belly up, goes bankrupt, there is at least an insurance company there that will pay you some % of what your scheduled benefits were.
And you can catch episodes of Decoding Retirement Tuesdays at 12 p.m. Eastern Time on Yahoo Finance or wherever you get your podcasts. Maybe traveling more was one of your 2025 resolutions, or maybe you're looking for a tropical escape from the dull winter weather here in the Northeast. Well, look no further. We've got the tips to help you plan your dream getaway without breaking the bank. Joining me now, we've got Brian Kelly, founder of the travel website The Points Guy, and take a look at this, author of his first book, How to Win at Travel, which is out today. Congratulations on the book. Thanks for joining us in the studio.
I think we all need a getaway this winter. Is this the coldest winter on record?
I mean, did the groundhog see his shadow or anything?
I don't know, but I don't care what he sees, but I'm getting out of here soon.
I'm gone. I'm out. So, all right, what are the tips for finding good, affordable travel right now, especially as you're balancing costs across so many elements of your weekly spending for
Of course. So, I love using Google Flights. They have a feature called Explore. So say you're in New York City and you just need to get to the Caribbean. You can actually go to Google Flights Explore, put in New York, the Caribbean, your dates, or just say, I need to get away for a weekend in March. Yeah. It'll reverse engineer and show you all of the flights. You can look at a map of the Caribbean and choose the cheapest flights. So what I tell people is there's no one day you're going to get the cheapest airfare. It's you have to be flexible and use technology. And then on that note of, we all need to make more value out of our everyday. You may not get a raise, inflation's going up. This is why points are more critical than ever. So many people have points in their accounts that they think are useless, but they're not. So harnessing your points, don't hoard them because there is inflation going on. The airlines keep raising the amount of miles needed. So use your points today, take that money off the table, and put that money towards the things that you love doing, like eating out.
It's amazing what we've heard from the airlines thus far during the earnings season. All of them talking about where they are making a play for the premium traveler right now. Are the assets that premium travelers are experiencing or kind of taking advantage of, are they living up to the expectation? And where do we expect more of that in the experience economy?
Yeah, I think travel's amazing if you're traveling in the front of the plane these days. In my book, I talk about we are in the platinum age of travel. Up front, you get lie flat seats. Delta has a new JFK Delta One Lounge, which is gorgeous. Dining, restaurant-style meals. And so if you're in the front of the plane, things are amazing, especially if you fly the Emirates, unlimited caviar and Dom Perignon, and you can redeem points for those flights. Yeah. So, so many people say flying these days isn't what it used to be. Wrong. You're just traveling in the wrong part of the plane.
Interesting. All right. Well, that's Pinky Up experience all the way from TSA all the way to when you board and deplane, I guess. As we're thinking about where the different dynamics are playing out in accommodations, it seems like there's more capacity being brought online as well here. How do you make sure that not only on the flight side of your trip, you're taking advantage of some of those premium offerings, but also on accommodations, you're finding a good deal?
Absolutely. So many people focus on flights, but hotels are the expensive part. You go to Europe this summer, you have to book in advance. Hotel prices through the roof. So I would still play in hotel loyalty. Hyatt is the best loyalty program out there, in my opinion. You can have your Chase Sapphire points transfer to Hyatt 1-to-1. That can be a great value. Built points also transfer to Hyatt. So playing the hotel loyalty game and really just make sure you're maximizing and booking. When possible, book your hotels direct with the hotel. When you book through online travel agencies, often they'll give you the worst room, you don't earn points, and you don't earn perks. But if you're booking luxury hotels, I highly recommend book through a luxury travel advisor who has a relationship with the hotel. When you book through top-notch luxury travel advisors, they can get you tons of extra upgrades and perks that can be thousands of dollars.
Okay, rapid fire here. I want to kind of go generation by generation. First generation that I'm going to talk about is those that are in college or maybe high school or grade school, and they're looking to get somewhere for spring break. What is the optimal time to book? What are the destinations that spring breakers are traveling to this year?
Yeah, so for domestic travel, 6 weeks to 2 months prior to travel is in general like that sweet spot. For international, you want to be booking 3-4 months in advance. The longer you wait, the more burned you're usually going to get. I recommend the US dollar is so strong now, so go to destinations where the dollar is strong. South America, Central America is a great bargain for budget travelers. Surfing in Nicaragua. I love Guatemala for food and culture. But if you go to Argentina, it can be cheaper to go to Argentina than it can be to Miami because the US dollar is so strong. So leverage that strong dollar to stretch your dollars when traveling.
Okay, what about for families, for households, parents that are looking to plan this summer vacation? How far in advance? And again, where are the best deals for families that are traveling all together?
Yeah, so best deals for families. Cruises can be a really great deal, especially if you're conscious of all your activities are included. If you just want to set and summer cruising in the Caribbean is nice. It's hot, but it's off peak, so you can get amazing pricing all in for the family. And also, leverage, vacation rentals, Verbos, Expedia now has a loyalty program, One Key, for renting on Vrbo. Airbnb doesn't have a loyalty program, but in general, use credit cards that give points for travel. And Capital One points you can redeem for vacation rentals, even the Uber to the airport.
Brian, great to have you here in studio with us. Congratulations on the book as well. Appreciate it.
Thanks for having me.
Certainly. Hey everyone, let's do a final check of the markets here. We're approaching lunchtime Eastern time and taking a look at the Dow, the S&P 500, and the NASDAQ. We're in positive territory across the board, led on a percentage and point basis by the tech-heavy NASDAQ. That's up by about 1.2%. The Dow Jones Industrial Average fractionally higher, 0.1% there. S&P 500 up 0.6%. That's it for Wealth, everyone. I'm Brad Smith. Thank you for watching. You can stay tuned for Market Domination with Julie Hyman and Josh Lipton coming up at 3 p.m. Eastern time.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It is time for Yahoo Finance's Market Minute. Stocks are higher as investors shake off trade tensions. Estee Lauder shares are sinking as the company's new CEO sets the company on a turnaround plan that includes cutting up to 7,000 jobs. The company also issued a forecast for the current quarter that sees net sales falling more than analysts are expecting. Weaker than expected 2025 guidance weighing on Merck shares today. The company reported weaker China sales for its top drug, Gardasil, and plans to pause shipments until mid-year. And Pepsi, also in the red after reporting a decline in its North American volumes. The CEO also giving Yahoo Finance a more cautious view of the year ahead amid uncertainty around tariffs, saying, quote, "We're not immune." And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, you can scan the QR code below to track the best and worst performing stocks of the session.
50 years ago, the world dramatically changed for people saving for retirement. What changed? Well, a landmark law known as ERISA, the Employee Retirement Income Security Act, was enacted. This groundbreaking legislation set new standards for pension protections and redefined employers' role in retirement security. But ERISA's impact didn't stop there. It continues to shape the way we save and invest today. So what does ERISA do? What are its flaws? And most importantly, what can be done to improve it? Hi, I'm your host, Bob Powell, and welcome to a special episode of Decoding Retirement. Joining me to discuss ERISA are Molly Moorhead, a personal finance editor here at Yahoo Finance, and Kerry Hannon, a senior columnist at Yahoo Finance. And this episode is special not only because of the topic, but also because I'm turning over my hosting duties to Molly, and instead of me asking questions, Kerry and I will join forces to discuss everything ERISA. Molly?
Let's start with a brief history of ERISA. When did this law come to be, and what led to it being enacted?
Yeah, so Molly, what happened is, roughly, 5 decades ago, there were some big companies that were starting to sort of abandon their traditional pension plans. And the two big names that kind of stirred this whole thing was, and classic car buffs will get this one, Studebaker and Packard. They merged, and then they eventually went out of business. And thousands of their workers were left without their pension that they had been expecting. So this spurred the law, but as Bob can tell you, it didn't happen that day.
Right. So as many things that happened in the world of securities law, the Studebaker-Packard incident where they terminated the retirement plan for all their hourly workers took place in 1963, Molly. So it took 10 years before legislation was enacted in order to help employees who have pension plans.
Yeah, and the whole idea was really to give workers some kind of retirement security so that they knew that they had something coming from them. And there are a number of things that went into this law to make that a reality. And Bob, do you want to outline? There's a couple of those.
Yeah, I mean, there are some things that ERISA did, Molly, that I think are really important to note. Most importantly, what ERISA did is create a more stable system so that things like the Studebaker-Packard thing doesn't happen again, or if it does, there are provisions in place to make sure that people get their benefits. So most important to me is that it ensures plan participants receive their benefits.
There's like a government safety net there to
right,
protect
so
that money.
One of the enactments, one of the provisions was we created something called the Pension Benefit Guarantee Corporation, which is in essence an insurance company that says if your employer's pension plan goes belly up, goes bankrupt, there is at least an insurance company there that will pay you some percent of what your scheduled benefits were.
Okay.
And Bob, it also added, Molly, they had to have certain funding requirements for these companies in order to have these plans. And then they created eligibility rules for the employees. So it made it more understandable for people. And also, and this is the important one that you like to talk a lot about, the fiduciary aspect of this.
Yeah, so plan sponsors now have to act as fiduciaries for the
And what is it? Tell people what that means.
So in very simple terms, it means that you have someone who's acting in your best interest and not in their best interest.
So if I'm running this account, I'm not going to pick the one that pays the best commission to me. I'm going to pay the one that I think will earn the most money for you down the line.
That's in your best interest.
Yeah. Okay. And then we also talked about funding requirements. That's funding that, meaning the money the company has to put in.
Exactly. It has to shore up to say they actually have the ability to make these payments to their workers. But an important thing there, Molly, too, is the vesting part. That it used to be, there was a long period of time that someone had to work at a company before they were eligible for a traditional retirement plan. And now it's shortened it to roughly 3 years. Is that about right?
Yeah, 3 years or 5 years if it's a graduated vesting program.
Yeah.
So,
and explain what vesting means exactly.
well, vesting means like at what point do you get 100% of the benefits that the company has promised you? So in the case where your vesting schedule might be 3 years and you get 100% of your benefits, if you don't work for the full 3 years before you leave the company, you don't get all of it. But if you work for 3 years plus, you'll get 100% of the scheduled benefits. The other interesting thing about the law is it does require reporting and disclosure now. So for instance, a company now has to report the degree to which they are underfunded or funded or overfunded in their pension plan. And today, many companies, many pension plans are underfunded, but that at least now plan participants know the degree to which their pension plan may be underfunded.
It's not a surprise.
This is a defined pension specifically. We shouldn't, we'll get into the
Correct.
fact that
It should
the
be
old
a defined
401k had
benefit.
not emerged when this law went into place.
Right. And I think always when in doubt, plan participants should go to their employee benefit HR department and find out these things, because these are all made publicly available.
Yeah, good tip. So let's move on to, we talked about what the law was designed to do. Let's talk now about how well it's worked. Bob, earlier you interviewed Marsha Wagner, a nationally recognized ERISA attorney. We have a clip from that conversation, so let's take a look.
ERISA was created to be a win-win-win statute. It was created to be a win for employers who would get great tax deductions if they could benefit their employees. It was a great win for the government because it really helps people retire, and therefore Social Security is not as adversely impacted. And thirdly, it helps employees because they actually get pension and welfare benefits they might not otherwise get.
Bob, that's a lot of winning. Tell us some more about the win.
Well, I think, we've covered many of the wins, right? We've got retirement benefit stability, we've got vesting now, we've got cost reductions and transparency. So those are all big wins for employers to a degree, employees to a degree, and for policymakers. I think some of the interesting things that are losses, flaws perhaps, is the fact—
hold on.
Wait.
Don't turn negative on me yet.
All right.
I want to say one other. I think that it is a positive that out of this situation, the 401k was came along just after this law had been enacted, and it did open the door for a new kind of, and that clause was added a couple of years after the original law was enacted. But it did give employees this avenue that we'll talk more about to really take control of their own retirement savings.
Yeah, and that's sort of like where we get to this notion of what is the flaw of ERISA today, if you want to jump there.
Yeah. Well, we've got another clip from Marsha about some of these shortcomings. So let's listen to that first.
The first main issue that ERISA has, that the pension industry has had to face in the past 50 years, is the increasing complexity of the regulatory, the statutory for one, but even more so the regulatory framework. The regulatory framework is outrageous.
All right, this regulatory framework she's talking about.
Well, she's right. I mean, what happened is when these new regulations and restrictions came on for the companies who had these defined traditional pension plans for their employees, they say, what the heck? We're not doing it. This is too expensive. We're out of here. So a lot of them just shut down their plans. They decided to get out of that traditional pension business, which was really, startling, the sort of exodus from them.
Because nothing in ERISA says you have to provide a pension.
Absolutely not.
Okay.
And so the second thing is that smaller employers, it made it almost inaccessible for them in terms of expenses to start a plan for their employees. And this is an issue that we're still facing today that makes it difficult because of the regulations. And we love that it put guardrails, but it also created an extra hurdle.
Yeah, and I would say that, I'm not going to quote the exact numbers, but prior to ERISA, you might have had 80% of companies offering a defined benefit plan. And then in the wake of ERISA coming along, we've now seen a decline in the number of defined benefit plans being offered. So maybe 15% of the 160 million workers in this country today might have a defined benefit plan. So with the decline of defined benefit plans, we've seen an increase in the number of defined contribution plans. The unfortunate thing is only half of working Americans, call it 80 million people, have access to a defined contribution plan.
Still so many people without any plan.
Right, so we have 50% lack of coverage in the retirement space.
All right, well, we have clearly a lot more of the flaws to get into right after a quick break.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome back to our Decoding Retirement panel. I'm Molly Moorhead here with Bob and Carrie, all of us from Yahoo Finance, speaking about 50 years of ERISA. So we've discussed the history of the law, how it's helped Americans secure their retirement, and we were talking before the break about the gaps in who's covered, what is required. Here's another clip from Marsha Wagner.
Approximately half of working people are not covered by any plan, and that is a problem. I mean, clearly they're covered by, well, if they have more than 40 quarters, they're covered by Social Security, but not everyone gets more than 40 quarters. So you do have a contingent of the working poor that is really outside the purview of the ERISA world, and that is problematic.
All right, Bob, she's talking again about the people who are kind of left behind. I think before the break you said 80 million.
Yeah, that's we have about 160 million workers in America. Only 50% of them are in an employer-sponsored plan through a 401k, a 403b, 457 plan, typically.
Okay.
So those folks are without retirement savings and at risk of not being able to have a standard of living that they desire in retirement.
And then there's always Social Security, but as we all know at this table anyway, Social Security is underfunded. So Carrie, what about those people who only have Social Security to look forward to?
Well, right, and Social Security was really only designed to replace about 40% of someone's pre-retirement income. So it's not, something that many people can find a way. Trust me, people will find a way to make it work if they have to. But you're losing that third, that other leg that you can depend on for income security as you age. And I think it's really critical to make it possible. And one thing, Bob and I don't know, you've talked about this a lot, the idea of getting people enrolled in these even earlier. So the ones that don't have plans, but even the ones that do have plans, there's no, it's just now, up until now, there was an auto enrollment. And people that don't get automatically enrolled in a retirement plan, they don't save. I think it's something like 5% of people will save on their own. Once you have auto enrollment by an employer, it bumps up to 80% or close to that. Is that about the figures you
Yeah, it's 80%. And in addition to auto enrollment, we now have auto escalation. So people might start at 3%, but they're being escalated to 4%, 5%, 6%, 1% a year. So that, is a beneficial thing.
Let me ask something else that neither one of you has mentioned yet. Individual retirement accounts, or otherwise known as IRAs. What did ERISA do with IRAs?
Oh, we forgot that.
That's the big flaw.
That's one of the big flaws we got. Because, they weren't really existing at that point. We didn't have them. And so even today, the IRAs, which IRA accounts have more, there's more funds in those retirement money in the IRAs that are in 401k plans. And there is no fiduciary.
And quick aside for people about IRAs, these are accounts where you save for retirement. They're tax advantaged, but they're not through an employer. You're doing this on your own. And that's why they weren't included in this law, right? And they kind of weren't.
ERISA is all about employers.
Yeah. And yet this is the vehicle so many people are using, and it's kind of the Wild West.
Yeah, exactly. Good way to phrase it. And a lot of it is the rollovers. People who have changed jobs or left their jobs, and they roll over from their 401k or their 403b into an IRA account. And so there's an enormous amount of money moving into these, and there's no regulation there.
So this is one of the big flaws, Molly, which is I have a 401k at work. It operates under ERISA. I decide to roll over my 401k into an IRA. And there is no fiduciary standard on the part of the person who is giving advice to the person who's rolling over their 401k.
Okay.
So ERISA has, through the Employee Benefits Securities Administration, EBSA, has proposed fiduciary rules. But every time there's a new administration, those rules get struck down or reenacted or struck down, or there's a judge to put them on hold. And what's happening is the plan participant is at the now the whim, right? People have said that it's quite possible that older adults and others may be exposed to financial exploitation because there is no fiduciary rule in place when someone's rolling over their money from a 401k to an IRA.
Okay. Carrie, you have written that we have a retirement crisis in America, and that's even after 50 years of these important protections being in place thanks to this legislation. So clearly there's more work to do. What are some changes that you think can be made? Both, updating the law, new law,
The Dow Jones
individual
Industrial
actions, what can be changed?
Yeah, I think there are lots of areas that we can work on. For example, I mean, I will say, for someone who is, fairly highly well paid and so forth, ERISA's quite, we're doing just dandy, but there's a lot of racial disparity here. And women in particular aren't being protected in terms of with that lower pay, with out of the workforce, not having access to retirement plans when they've stepped away from work for a time. There are all kinds of, the deck is kind of stacked against a lot of people in this country in terms of saving for retirement. One thing that I really, and so many workers today are contract workers. I mean, whether you're in your 20s or whether you're, unretired, as I call it, the group of people, have stepped away and they keep going because they're having longer working lives. So what is starting to happen is 17 states have enacted legislation that allows small employers, so this isn't necessarily your contract workers, but small employers to start offering plans to their employees. And they start with like maybe 4% of salary automatically taken and put into a state-administered retirement plan, and they ratchet that up automatically each year to about 10%. Now, employees can opt out of that. They don't have to do this. This is a slow steamer. This thing has just started to roll. But if we could get more states engaged in this sort of helping, it's not huge amounts of money people can even save this way, to be honest with you. But it gets it started. You start the habit. You start the auto-enrollment. And so as more states introduce this kind of legislation, I think we see opportunities for the thousands and millions of workers in small businesses.
Yeah, so I'd like to pick up on something Carrie mentioned about women being at a disadvantage here.
Okay.
So under ERISA, if you have a defined benefit plan and you retire, you have an option of taking the money sometimes as a lump sum, sometimes as a single life annuity, sometimes a joint and survivor annuity. And if you were to choose a single life annuity, which is on my life alone, my spouse would have to sign off on the fact that I'm taking this as a single life. But let's say, for instance, I roll it over to an IRA and I decide to go to a casino. Well, my spouse doesn't have any say in my IRA. It's mine.
Your money to go lose.
It's my money to go lose, to go buy a mobile home if I want to do that, or an RV, or whatever the case may be. So I think of it as ERISA needs to sort of cover all kinds of retirement accounts and protect everyone involved, including beneficiaries. So that might mean right now not all 457 plans are covered, not all 403B plans are covered, IRAs are not covered. So we need to expand ERISA so that we have this sort of uniform retirement security law. Okay. And the second part of that, Molly, would be around the fiduciary rule. So right now we talk about how when laws are enacted, it's in reaction to something, not in anticipation of something. And so we have a fiduciary rule that is scattered. We have a SEC, the Securities and Exchange Commission, has a fiduciary rule for investment advisors. Lawyers have a different fiduciary rule for duties of care and duties of loyalty. But nowhere do we have this fiduciary rule that exists under ERISA for the benefit of plan participants, in which case we already talked about this notion of how can someone act in the plan participant's best interest when they're doing a rollover. And so we need some sort of uniformity. So years ago, there was no such thing as a Roth IRA or a Roth 401k or a health savings account, right? Or a reverse mortgage, or name any product that's been introduced since the ERISA was enacted 5 decades ago. And so it hasn't kept pace with all the new products, all the new research, and all the new trends.
Yeah, in a way, it's great that we have all these different vehicles to save for retirement, but it makes the alphabet soup kind of even harder to make sense of.
Complexity.
For the average person. So ERISA is certainly not the only law on the books that affects how we save for retirement. Every year there are new rules, even new programs from employers that can help people prepare. Carrie, you mentioned the new state systems. What else do people need to know about, starting with Secure 2.0?
Well, I'll just start with the one thing that I think is exciting that started just this year. Just in January, we started, if somebody has been a contract worker for an employer and has worked 500 hours a year for 2 years, consecutive years, employers now have to allow them to enroll in their employer-provided retirement plan. This is hugely helpful to many employees who are long-term contract workers, gig workers. Yeah. I mean, and this is just a start. I hope we can find more ways to get gig workers opportunities to save. But this thing that went into this part of Secure 2.0 that started this year is rather significant. I don't think it's gotten enough attention.
Yeah, and the other thing about it is under Secure 2.0, small employers are now can access a credit to offer a retirement plan in their
A
workplace.
tax credit.
A tax credit.
Okay.
So, and typically it's a small employer that's not offering a plan to their workers.
Because
And
it's so expensive.
It's so expensive, and typically it's a low hourly wage worker that's not getting the benefit of an employer-sponsored plan. So hopefully more small employers will start to offer plans now because of the credit that they'll get. And I think that, that could go a long way. The other thing I think that's really interesting is, as you talk about people sort of needing to keep pace with all the changes, is in the Secure Act 2.0, one of the changes that goes into effect this year is the age 60 to 63 super catch-up contribution.
Okay, I was going to mention catch-up contributions.
I love that, but I got to be a contrarian here. A lot of people don't have extra money to put away.
No, they don't.
Can't even do
It
the
sounds
minimum.
lovely, but
No.
you start saying, and I've talked to so many people who go, oh, that's wonderful, but
If I could do it.
yeah, but in theory, it's great.
On paper, it's a great
It is.
provision.
And we should say that all of these types of accounts have contribution limits. You can only put so much money in a year. For 401k, it's some giant amount that most of us never come close to. And then the older you get, you're allowed to put more aside
50.
if you can.
Yeah.
And so again, if you can, we know a lot of people can't. But there is that old notion too that if it just comes directly out of your paycheck, you don't miss it as much as if you have to kind of pull it out of the bank and put it in this.
It's absolutely true. I mean, I've experienced that. Probably both of you have. I mean, it's so true.
Yeah.
But, what we need is opportunities for people at lower income levels to save, because it's super hard to get started.
And I also think that one of the things that we need to look at is when we look at other countries and where they rank in terms of retirement security, we rank fairly low when you look across the world, right? The Netherlands, Denmark, Australia, other countries do a far much better job of helping their citizens become financially secure in retirement. And we don't get good grades there. So we need, I think, to look at what other countries are doing that we can incorporate here, again, to sort of make it better. Since we've put the onus on regular people to save for their retirement, we should make it easier for them.
I'll do a quick plug for Social Security, though, because even though we're concerned about what the future might be, the fact is this is adjusted for inflation every year. It is the one thing that is really something seniors can count on, in the sense that it does keep pace where most of your investments, there's no guarantee there. This one does increase each year with the inflation, if there is an inflation bump. Not every year, right? I mean, but many years it does. I mean, Bob, wouldn't you say? I mean, it's like an annuity right there.
When you talk to sort of the academicians who study these things, people always say Social Security is the best thing going because of it being inflation adjusted.
So we're about out of time. Bob, I want to ask you to give us your final thoughts. You've said to me before that people have to be their own advocates for saving for retirement, securing their own retirement.
Yeah, I mean, ultimately, you're in charge of your own retirement, Molly, right? Unfortunately, it's not the government, it's not your employer, it's all on you. You have to be your own best advocate when it comes to saving for, investing in retirement. And that means you need to take matters into your own hands. You have to stay abreast of the new laws, the new regulations, the new research, the new products. All those things are on you. Right, and our listeners, right? They have to sort of stay abreast of everything, because no one is going to sort of say, "Hey, you forgot to, check this box when you retired."
Yeah.
So stay current, and then when in doubt, get help from a qualified, competent professional, because sometimes you need a sounding board, and that can go a long way. So that's my final word.
All right. Well, thank you both. Thank you, Bob, for handing over hosting duties to me, and I'll let you close us out.
All right. So that wraps up our special episode of Decoding Retirement. I want to thank Molly for serving as our host today, and Kerry for sharing your knowledge and wisdom with us. And don't forget, for the latest news and expert analysis about retirement, check out yahoofinance.com. If you've got questions about money or retirement, email me at askbob@yahooinc.com, and we'll do our best to answer your questions in a future episode.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
diversifying. While NVIDIA remains the dominant force in semiconductors, competitors are stepping up. Intel's Lunar Lake claims a 40% reduction in power consumption, while AMD's MI350 boasts a 35-time performance boost. But can these challengers actually close the gap on NVIDIA? Our experts weigh in.
Let's talk about NVIDIA plunging as China's AI model DeepSeek sparks a sell-off in the chips sector. The drop on track to erase more than $279 billion from NVIDIA's market cap. That would mark the biggest drop on record for the stock. As we're taking a look at shares this morning, they're down by nearly 12%, and it's leading the NASDAQ composite lower as well. Looks like the NASDAQ is down right now in the futures at least by about 3.5%.
Yeah, certainly. When you take a look at the magnitude of the drop that we're seeing in NVIDIA, that very much just really points to the fact that obviously this is being taken very seriously by Wall Street. Whether or not the reaction is a bit overblown, we just talked to Dan Newman, we just talked to Stacey Raskin, two analysts closely covering the space, and they very much made the point that they actually think the AI investment story is still intact. They see this reaction here this morning as a bit overblown when it comes to some of that panic that we are feeling here from the street. But again, you can't ignore the fact that NVIDIA, that market darling here, over the last couple of years is down 12%, and ultimately the impact, given the size of this company, what the impact is having here on the major averages. NASDAQ 100 futures substantially lower here this morning. You're taking a look at the S&P on track to open off over 2%. You're taking a look at many of those chip-related stocks, many of these names that have been riding on the back of some of that excitement on the tailspins here of NVIDIA. That's actually, they're all pretty substantially. You're looking at Broadcom off just about 11%. You got a name like Marvell off 12%. Energy sector is also caught up in the sell-off that we're seeing here this morning. So again, when you look ahead to the rest of the week, maybe what exactly this tells us about the volatility that we could see, Brad, when we hear from more of those big tech, when we hear from big tech here for the first time here for this earnings season, maybe ultimately what those AI spending plans look like. Any more insight there, especially what we're hearing from Alphabet next week, that's going to give us a better idea just where this all stands.
I mean, we're at what, 7-8 consecutive quarters where NVIDIA has been the barometer for how well earnings season will or will not do. And what NVIDIA says, as to NVIDIA goes, so too goes the market, is what we've seen. But for what we've seen coming into the start of this year, and NVIDIA really leading the chatter to begin things, Jensen Huang at CES, we're not going to hear from NVIDIA again, most likely, until February 26th when they report earnings. So a lot of time between now and then for the market to really try and price in ahead of what those results are, its anticipations for some of the new market entrants in DeepSeek, as well as just the realization that, oh yeah, it's not a zero-sum game, or it's just a one-player game here, regardless of the fact that they've entrenched themselves so much, and whatever chips fall off of their plate typically tend to land on AMD or some of the other semiconductor companies. It's still NVIDIA that this market is gauging its successes and its losses based on.
Yeah, very much. I mean, when you look ahead to the next couple of weeks, big tech earnings is going to be in focus. We're already expecting the slowest profit growth that we have seen in almost 2 years here in the coming days. So you add this layer on top of that, it could be a very tough week, or set up to be a very tough week for some of these larger cap tech names, especially when you take a look at the hyperscalers. Any more info that we're going to get, or insight from names like Meta, insight from names like Microsoft, and ultimately what that AI spending landscape looks like here, given the massive spend that we have heard from these companies over the last several quarters, and given that update that we got from Zuckerberg last Friday. Clearly that is going to be front and center here for investors this week. Stocks plunging at the open. Big question here is whether or not the sell-off is overblown, or if this is the start of a market correction. We want to bring in Seema Shah, Principal Asset Management Chief Global Strategist. Seema, what do you think? How should investors be looking at this?
Hi. Well, look, I think the first thing to say is there's still so many question marks at the moment. A lot of questions that need to be answered before investors can really take an educated decision on how they want to deal with their exposures. Right now, I don't think that we're at that point when we can start talking about correction territory. But I think it has, given where valuations are, we came into 2025 with investors quite rightfully a little bit concerned that things were looking fairly frothy, particularly for those mega cap tech names. And this is a good reminder that, look, global diversification really is key. I think the macro environment at the moment is constructive, which means that there should anyway be a broadening out away from some of those mega cap tech names to other sectors. So it's important right now that investors be looking at what is a broad universe of opportunities, not just in those Mag 7.
For those who were sitting out there and sharpening their pencils for any buy on the dip opportunities, we were mentioning and discussing this earlier. This is that dip. They got their dip. Can they feel comfortable, though, buying? And given some of the question marks that you were raising a moment ago, what answers should they be looking to solidify?
Well, I think the first thing to say is that, there have been a lot of people waiting on the sidelines, waiting for some kind of pullback because they know that the environment is constructive. We still think that earnings growth from a broad level, but also for the tech firms, is going upwards, which is generally it's a good environment for equities to continue rising. But today's pullback, I think, given where the question marks are, it's probably not the time to be dipping straight back in. You want to see, is this company, what is happening with the costs? How much of news can we get in terms of whether the Chinese government has maybe contributed? How sustainable is this? This isn't also the first time that there have been these kind of almost competition scares for some of those big cap, the mega magnificent 7 names in the past. And a lot of those competitions have suddenly withered away. So I think it's still really early days, but I think the thing that investors can hopefully sit back on and enjoy is that, look, if you do have exposure to other sectors such as financials, which benefit from not only having obviously limited exposure to this issue, but actually limited exposure to some of the other factors that are weighing on uncertainty for investors today, including trade tariffs, they can be quite positive that the environment is still for strong growth and at least those names can continue to deliver positive returns.
Stephen, just given the sheer size and scale of big tech, obviously we've been talking a lot about diversifications and broadening out of the markets, especially when it comes to earnings season. But a move like this that we're seeing this morning, it very much points to the fact that just how critical tech is here to this earnings season, the overall health that we're going to get just in terms of those growth rates, and then also just the overall trajectory and the narrative out there in the street right now, right?
I mean, I think it's true. And, I think everyone has become increasingly concerned about how concentrated the market is. And in some ways, you're right that, a lot of the trade has become very much one-sided. What we've seen last year is that, of course, there was always talk about a broadening out, but every time that maybe the mega caps took a bit of a sit back, they came straight back in again, which has continued to draw more and more investors in. As I said, look, the economic environment is still very constructive for earnings across most sectors. That's really key. The other thing to take back from this is that, look, if DeepSeek is everything that they're saying, this is ultimately positive for broad productivity around the world for all sectors. So, there is some good to be taken. Maybe it does put some question marks around those very key tech names, or his key tech name for the US. But it certainly isn't necessarily the end of the story of US exceptionalism and productivity.
As we're evaluating DeepSeek, and that is the of course, conundrum du jour, we also have to think about the Fed and what that decision is going to hold, of course, later on this week as we start to get inclination, or at least can believe in what the Fed is projecting for the rest of this year. What most notably would you be paying attention to in the language that the Fed is using, especially as the markets are weighing that in the balance?
Yeah, sure. And I think the first thing to say is that, we're dealing with uncertainty as investors, but the Fed itself is also dealing with a lot of uncertainty, specifically with regards to what are the inflation pressures that could emerge over the rest of 2025. I think investors be realistic that Powell is unlikely to offer any clear answers at this stage because they need to see what are the policies, what is the implementation, and then after that, what is going to be the impact specifically to inflation expectations and growth. These are all very big question marks, so I actually don't expect us to hear much. We could hear maybe some comments reiterating that rates are quite restrictive, which would give us an indication that at least the bias is still for lower interest rates. But I think the jury is still out, and what we're going to be watching for over the next few weeks is not just Fed speak, but really an extra emphasis on what are the inflation numbers going to be and what are the labor market data going to be. Those are the two things that actually I think are more important even than the news coming out today about DeepSeek.
Seema, appreciate the time just after the opening bell. Thank you.
Thanks.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Stock futures are clawing back some losses this morning. We are mixed among the U.S. major averages. This coming after Monday. China's AI model torpedoed tech giants, namely NVIDIA, and the chip maker shed nearly $600 billion from its market cap in Monday's session, largest loss in market history for the company. And retail investors, they took advantage of the dip, buying more than 550 million in shares. That's the largest amount on record going back to 2014, according to Vanda Research here. But the larger question, too, is off of yesterday's activity, how much of that, and the bounce that we're seeing a little bit here today, how much of that will hold? Are we in the dead cat bounce territory, or is this something that is more pronounced or prolonged? Now, everybody would be right to also look at a longer-term chart. Yesterday's decline included, but then also if you're looking at some of the moving averages, NVIDIA broke through a 200-day moving average. The larger question that I have is, are we going to see, especially extended hours pre-market as we've gotten back above that 200-day moving average, is this a sustained move back above that, or is this the lead to what Ray Dalio is calling out in some of the early setup that is similar to what took place in the dot-com bubble?
Yeah, I think if history is a guide, it is a bit concerning, right? When you take a look at the past, some of the larger sell-offs that we had, specifically with NVIDIA, and going back to the last 8 times, it actually fell more than 17%. The next day, it only closed higher 3 of those times, so far less than half. So we could see potentially a bit of a reversal here as we do wait for the trading day to get underway, and then, of course, throughout the day. The one silver lining, though, I think for investors, and very much has been the focus, it's been in a lot of notes here this morning, is just the concentration of yesterday's sell-off. Yes, we did see a deep sea of red here when you take a look at many of those larger cap names, when you take a look specifically at the NASDAQ, with the NASDAQ closing off just about 3%. Obviously a bit worrisome here when you take a look at a name like NVIDIA, given the size, the magnitude, how important it has been to the market's overall momentum here over the last several months, falling and falling so dramatically. But when you take a look, I say the S&P equal weight index, that was essentially unchanged yesterday. When you take a look at some of that price action, even beyond that, certainly a bit encouraging here. Majority of the S&P stocks actually ended the day higher. You had the advanced decline index, and that measures stocks rising minus those that are falling. That showed a positive reading of 199, even as that benchmark fell just about 1.5%. So again, that puts some of this selling into context. And yes, while there is reason to be concerned, and you see why some of the larger, well-known investors like a Ray Dalio are maybe drawing larger comparisons to what has happened in the past, I think it is a bit reassuring here for investors this morning that you can easily, I think, make the argument that the bull market is still very much intact.
Yeah, the major question that is unanswered at this point is there a crack in the secular trend here? And from the conversation we had yesterday with Stacey Raskin, and then additionally we had Dan Newman on, and in their conversation with us, they said the secular trend remains intact at this juncture. However, UBS out with some research here this morning too, and they also tend to think the magnitude of the moves today will ultimately prove yesterday's reaction to be overdone, though the overhang may persist until those key questions specifically about the secular trend are answered. We're not going to hear from NVIDIA until, at least on the earnings front, until February 26th. Meta is perhaps one of the first instances that will finally get of continued not just AI spending, but also the monetization of that early on, at least with that as the major theme that's driven the markets for the past 2 years. And oh yeah, as a reminder, our conversation with Mohamed El-Arian last week, he reminded that after 2 consecutive years of 20% growth, it's highly unlikely that we would see a third. However, it is still within the realm of possibility that you would still see gains in totality and aggregate here.
Yeah, certainly. And when you take a look at the market's activity this morning compared to what we saw yesterday, it is a bit eerily quiet, at least right now when you take a look at some of the volume.